Kospi too is trading with losses of over 0.5%. So it's a negative start for the Asian markets. And pull up the GIFT Nifty as well, and that will give you an idea of how our own markets are likely to start off. Absolutely flat is what the implied open is suggesting, a 12-point uptick as we speak. But remember, we've recovered almost 1,000 points from last Thursday's low, so some bit of consolidation should not come as any surprise for the market participants. But the handover from Wall Street was a very strong one. All three benchmarks ended higher. The Dow Jones was the outperformer though, surging over 400 points, making a fresh record high for the second day in a row. The S&P 500 and the Nasdaq also ended with broad gains. Bertha Coombs of CNBC gets us a wrap of all the action on Wall Street.
U.S. markets were up across the major indexes on Monday as the Dow hit an all-time high for the second session in a row. The Dow up 440 points. The S&P 500 was up 18, while the tech-heavy Nasdaq gained 51. Department store chain Macy's is delaying its full earnings release as it investigates an employee accounting issue. The retailer says a worker intentionally hid up to $154 million in delivery expenses over several years. Macy's reported weaker than expected sales for the third quarter. The retailer plans to share the full quarterly results by December 11th after it conducts an independent investigation into the accounting issue. The employee is no longer with the company, and Macy's says the hidden expenses do not appear to have had an effect on the company's cash position. Meantime, California's Democratic governor says that the state is going to continue to offer electric vehicle rebates, even if the incoming Trump administration eliminates them on the federal level. Governor Gavin Newsom said the money could come from California's greenhouse gas reduction fund. President-elect Trump has pledged to get rid of the EV tax credits of up to $7,500 per vehicle. That's what's happening here in the U.S. Back over to you in Mumbai.
Staying with the U.S. markets, let us also listen in to what Mark Anderson of UBS Global Wealth Management had to say on the markets and also their target for the index.
I mean, we have U.S. 10-year yields coming down to 4% over the next 6 months. We think that's confirming that with the idea that the U.S. budget deficit is not going to run too far away. On top of it, we do think that the U.S. equity market is very well positioned for the year ahead. We have 6,600 for S&P 500 target at the end of the year. We both see inflation rates coming down, but also AI continuing to be sort of a driver of growth in technology stocks, but also the sectors like financials, utilities performing very well in the year 2025, which we call roaring 20s, the next stage.
And that's all we have on the global market front. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news today. But before Vivek joins in to get all the market cues that you need to watch out for, Vamakshi is here to take us through the stocks that you need to keep an eye out for this morning. Vamakshi, good morning.
Well, good morning, Hormaz. Let me first start off with Power Grid, and that is the stock will be in focus because an LOI for interstate transmission system in Uttar Pradesh and Rajasthan has been signed. Apart from that, keep an eye out on BHEL as well as Hitachi Energy. A consortium of both of these companies have won an order from Power Grid. This is for HVDC link to transmit renewable energy from Gujarat to Maharashtra. Apart from that, keep an eye out on Indigo and SpiceJet, and that is because the October data has come through for the passenger traffic. India's domestic air passenger traffic saw an uptick of 5.3%, and Indigo share has improved from 63% to 63.3%, while SpiceJet's share has improved by 40 basis points from 2% to 2.4%. So both of these counters will be in focus today. Apart from that, HDFC Life says that unknown source has shared certain data fields of the company's customers with malified intent. Investigation is underway in consultation with information security experts to assess the root cause. HUL is another counter we will be watching out for. Board has approved the demerger of the ice cream business. This will be listed as a separate entity. Zomato also on our radar. Sources say that indicative price for the QIP that opens is at 250.62 per share, which is coming in at a 7.6% discount to yesterday's close, and the total offer sizes accounts for nearly 3.8% of the company's equity. KEI Industries, a QIP has been launched, and sources say that the indicative issue size is up to $237 million, with the indicative price at 3,800 per share. Apart from that, keep an eye out on GE GE Vernova, promoter Grid Equipment, is likely to sell 8.38% stake via OFS with the floor price at 1,550 per share. Adani Green and Adani Ports also on our radar. Fitch had put the company on negative rating watch. And lastly, let's focus in on L&T Foods. Saudi Arabia entry is what is the reason why the company is in focus. They will be investing 185 million riyal over the next 5 years, and they're eyeing revenues to the tune of 435 million riyals in the next 5 years.
Kamakshi, plenty of stocks to watch out for. Thanks a lot for that update. Over to Vivek now, who will share with us the market cues that we need to watch out for. Vivek, good morning. What's the setup looking like after a 1,000-point up move in 2 sessions?
Good morning. 1,000-point up move in 2 sessions. Today it's quite a mixed queue, that we're going into, because overnight the kind of cues that we actually received, from global markets was very, very strong. U.S. markets ended higher. The Dow Jones at an all-time high. In fact, the other positive trigger was the fact that oil prices yesterday fell over 2%. Geopolitical tensions are easing as far as Israel is concerned. And on the back of that, you did see, the oil prices cool down, and even today, Brent prices are lower. Now, talking about yesterday's trading session, markets extended Friday's rally, 1,000-point gain, like you mentioned. Yesterday, also aided by the fact that you saw a very large basket buy come in on the back of the MSCI reval falls. And on the back of that, for the first time in many months, you actually saw FII buy figure, largely aided by the one-time MSCI reval impact. Now, talking about sectoral indices, all of the sectoral indices gain in trade. The PSU pack outperformed in yesterday's session. 2 stocks especially, that did see significant moves. Zomato on the back of the Sensex inclusion saw a significant up move. Today will be in focus on the back of the QIP. And also JLW Steel yesterday fell significantly as it was going to be removed from the Sensex. Now talking about Asian markets, slightly lower despite the strong handover you've received from the Dow Jones as well as US markets, and GIFT Nifty indicating a flattish to mild positive start for our own markets.
Flattest start, but the implied open suggesting a 20-point uptick. Vivek, thanks a lot for that. Over to Mangalam now, who would share with us the FNO setup for the day. Mangalam, good morning. Some bit of cooling off from the highs of the day, but I guess nothing to worry about for now.
Nothing really to worry about, Hormaz, like you pointed out, because there were 3 major reasons why the market moved the way it did in yesterday's trading session. The first half belonged to the Maharashtra election verdict-related rally. Then the second half, we had MSCI inflows and short covering coming by in the FNO space itself. So the high, because of the rally that we saw earlier was 24,351. From there, we saw a bit of a sell-off. And then the lower levels at around 24,135, we saw that pickup come by again in the second half of trade, and the markets moved closer to where they were in yesterday's trading session itself. 3 things that stood out. 1, the FIs bought in cash market for the first time in 38 sessions. For the first time since September 26, 2024. Obviously, a large part of this can be attributed to the MSCI-related inflows that came by. But what's more important is to monitor this as we go forward, because the FII selling has actually over the last few trading sessions come down as well. And that was, visible in the strong delivery-based buying that we saw in HDFC Bank, which hit a record high in yesterday's trading session. Also, Reliance, ICICI Bank, Infosys, the top contributors to the Nifty on the way up yesterday, were backed by strong delivery-based buying itself. The second thing that stood out was the FII short covering in index futures continues. So if you look at it, yesterday in index futures, they bought about 3,400 odd crores. They added around 21,000 longs and covered 24,000 short contracts. And this continued for the 5th straight trading session, where the FII net exposure is now down from negative 2 lakh a couple of days ago to about negative 1 lakh itself, and the long exposure is increased from 24% to 37%. In just 2 trading sessions, the FII shorts are down from 75% to 63%. How much more do they go from here is something that we'll be watching out for. This is the expiry week, so 24,300 call and 24,300 put on the Nifty, both equally active for a combined premium of 300 rupees, telling you that the option writers are playing for a range, a broader range of 24,000 at the lower level to about 24,600 at the upper level itself, which again coincides with a couple of technical levels, namely the 20-day moving average on the Nifty as well as the 150-day moving average on the way up. Just keep an eye out on a bunch of stocks. We have Adani Ent, Nalco, Hindustan Copper and IGL, all of them exiting FNO ban in the expiry week.
Keep an eye out on all of these names. Mangalam, thanks a lot for that. Time for a short break. And up next, in what could be a major relief for telecom companies, sources say that the cabinet has agreed to waive off bank guarantees for telecom companies. More on this on the other side. Stay tuned.
на применение американского и британского дальнобойного оружия 21 ноября текущего года российские вооруженные силы нанесли комбинированный удар по одному из объектов оборонно-промышленного комплекса Украины. В боевых условиях было проведено в том числе и испытание одной из новейших российских ракетных систем средней дальности.
From the chair, all I said, you know it more than anyone else. I'm hurt.
The Adani bribery case is affecting the entire country.
Nothing is going on. Khadge,
Sir,
as a very senior parliamentarian and a leader, you are aware that my ruling on this issue has been given. I would seek your earnest cooperation, particularly in the background that matters to you more than anyone else.
Welcome back. Now, sources are telling CNBC-TV18 that the cabinet has waived off bank guarantee requirements for telecom companies for any spectrum purchases made before 2022. Ashmit is joining in with more on this front. Ashmit, good morning. It seems like a big development for these telecom companies.
Indeed, a big relief coming in for the telecom companies. This had been a long-standing demand that they had put forth before the DoT. The DoT, we understand, had placed it before the cabinet, and last evening we understand that the cabinet has approved a bank guarantee waiver for telecom companies as a whole. So it's not any company-specific relief, it's rather for the entire sector. But of course, one of the companies that is likely to benefit greatly is Vodafone Idea. They had been pressing the government for allowing these bank guarantee waivers. So what exactly does it translate into? Well, bear in mind that in 2021, the government had come up with a policy waiving bank guarantees prospectively. So all subsequent auctions that took place, that's 2022, 2024, there were no bank guarantee requirements for those auctions. But the question then arose that if bank guarantee waivers are being given, why not waive the bank guarantees even for the spectrum that was acquired before 2022? That is a decision that the government has taken, that even for the spectrum that has been acquired before 2022, those bank guarantee requirements can also be waived. This will allow, of course, huge relief and will allow huge liquidity to the telecom companies. They had been praying for this relief. The likes of Bharti Airtel, Vodafone Idea, they've all been pressing for that relief. So finally, the cabinet approving that relief, allowing for the entire telecom sector for waiving of bank guarantees entirely for the spectrum acquired even before 2022.
Major developments indeed. We'll keep an eye out on all of these telecom companies. Ashmit, thanks a lot for that update. Now, Amazon India is set to launch its quick commerce service called Tez. Now, sources tell CNBC-TV18 that the platform is likely to be launched within a few weeks. Now, this will mark Amazon's global debut in the quick commerce space, making it the only large e-commerce platform yet to venture into this booming segment. Now, the entry also comes amidst intense competition within India's domestic companies like Flipkart, also recently foraying into the space. Time for a short break. Up next, we get you cues from the commodities market. Stay tuned. We'll be right back. Welcome back. On to the latest from the ongoing West Asian conflict. According to news reports, Israeli officials have confirmed a truce between Israel and Hezbollah that might be approved later today. Israeli Prime Minister Benjamin Netanyahu reportedly states that he has approved the ceasefire, quote-unquote, in principle. Now, the Israeli Security Cabinet is set to meet later today to discuss the finer details of the deal and provide formal approval to the same. The reports also suggest that the talks are progressively moving positively. However, a misstep amid the ongoing clashes can put an end to any potential deal. And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. These latest developments in West Asia have had a bearing on the oil prices, haven't they?
Oh, absolutely. Yes, Armad. The reports of Israel-Hezbollah ceasefire agreement perhaps nearing its yield is something that has weighed onto the market. So 3% of a decline is what we saw in the crude oil prices overnight. Well, in any case, because of all these wars and tensions, we haven't seen oil supplies getting disrupted. But with this, the war premium or the risk premium also goes down. And that is the reason we have seen a decline come in for the crude oil prices. Not just that, the gold and silver prices fell very sharply overnight. Gold fell 3.5%. Silver is down 4% in the overnight markets there. Well, Trump also nominating hedge fund manager Scott Bessent as Treasury Secretary also takes off some uncertainty. While, of course, we will have to see on what kind of steps to taken forward there. But the markets also are now seeing a 56% chance of a U.S. Fed rate cut of 25 basis points in December. That doesn't also augur well for many of these dollar-denominated commodities, especially with the dollar index now trading back above 107. That in turn also seems to be putting pressure on many of these prices.
Manisha, thanks a lot for that update. Some pressure coming in on the precious metals as well. Well, the voters of Maharashtra may have given their verdict, delivering a landslide victory to the Mahayuti alliance. However, the fog over who would be the next chief minister of the state is yet to lift. The top leaders of the Mahayuti are in a close huddle to decide on the state's top post. While Devendra Fadnavis of the BJP is the front-runner, sources have also told Network 18 that the Shiv Sena is pitching for Eknath Shinde to retain the CM's post. Sources also tell Network 18 that the NCP has backed Fadnavis as the Chief Minister of Maharashtra. Ajit Pawar dismissed any talks of any formula for the CM post and said that the alliance would decide on it together. Sources also tell Network 18 that Shiv Sena is pitching for Shinde to retain the CM's post. The party says that the poll trends were in favor of the Mahayuti because of the Ladki Bahin Yojana, Shinde's flagship initiative for women. Shifting focus to the world of sports now, the IPL 2025 mega auction came to an end in Jeddah of Saudi Arabia. The second day of the auction witnessed Indian pacers dominate the proceedings. Bhuvneshwar Kumar was Monday's most expensive buy and was acquired by the RCB for 10.75 crore rupees. Deepak Chahar was the next big buy of the day as Mumbai Indians snapped him up for 9.25 crore rupees. Delhi Capitals welcomed back Mukesh Kumar via an RTM card for 8 crore rupees, and the IPL 2025 mega auction set another record as 13-year-old Vaibhav Suryavanshi became the youngest ever cricketer to bag a deal with an IPL franchise, with the Rajasthan Royals buying him for 1.1 crore rupees. A total of 103 players, including David Warner, Daryl Mitchell and Prithvi Shaw, went unsold across the 2 days of the auction. Well, as we wrap up on Power Breakfast, we leave you with some somber news. Shashi Ruia, the founder of the SR Group, has passed away at the age of 80.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to Bazaar Morning Call. Well, we have plenty to celebrate. The bulls managing to conquer the 24,000 mark on the street. India managing to conquer Australia in Perth. And with me, I have slightly not so new, maybe not so new faces in the studio today. I'm Surabhi Upadhyay, Manglam Malu on my right and Rima Tendulkar on my left. Good morning, guys.
Hi, good morning. You know, as we celebrate what you spoke about, here's a grim reminder that today is 26/11. Yes. It's 16 years since the horrific attacks that shook Mumbai and the nation. A lot of people lost their lives. The city was, you know, in shambles. So
we remember
them. We will always remember them.
We salute the brave hearts. And of course, we remember what the city endured.
We take that, on board, and also know that every time there is such a grim thing that happens, we all bounce back as a nation, as people as well. And that's what, will happen in the markets as well, bounce back. The important part that Surabhi said, yesterday we conquered the 24,000 mark on the Nifty. India went ahead and conquered the Waka. The question is, there is still some business left. For the Nifty, we're still way off all-time highs. And for the series as well, there are still 4 games to go. And three of them, we need to win to qualify for the World Test Championship. So steps in the right direction. Where this goes is what we need to track.
Well, typically what you do is after your first win, you take a bit of a pause, you take a bit of a breath, and maybe that's what our market will want to do today. So let's kickstart with the cues. The cues are not bad, but they're not overwhelmingly sort of positive as well. Let's start with Wall Street first up. And there we had, more of the same. Equity markets continue to rally, and once again, it was the Dow outpacing the Nasdaq on Wall Street. Again, the Nasdaq was up about 0.3-0.4%. The Dow put on another 1%, and that's what's been happening in the U.S. Domestic economy-facing stocks, domestic consumption stocks, they've been doing better, which is why the Dow is catching more of the investors' fancy than the tech-heavy Nasdaq of late. But what are we dealing with this morning? We are dealing with social media posts coming in from the U.S. President-elect Donald Trump. Now, he's speaking about tariffs already, and he's saying that the day he takes office, the inauguration day, 20th of January, he will impose additional 10% tariffs on all goods coming from China. And now he's talking about 25% tariffs on everything that's coming in from Mexico and from Canada. So a lot of this rhetoric / perhaps possible reality tariff talk will continue in the weeks ahead. The market knows that. So it's trying to take it in its stride. If you see the Asian market reaction, when the Chinese markets opened up, they were originally negative, but now they've turned positive. Though some of the other regional markets are still down. Japan, for instance, is still down. But Asia is kind of looking at a lot of this tariff talk and taking time to let it sink in. What's good, however, is the cool-off in the bond yields. That's been pretty dramatic. And this is because of Scott Bessent's announcement as Treasury Secretary. He is someone who is seen as, a bit of a rationalist, someone who believes in fiscal prudence. And that's why the bond market has been celebrating the fact that he will take charge at the Treasury. The yields have cooled off pretty dramatically in the last couple of, days. I mean, from Friday to where we are today, 4.3 on the US 10-year, so that's not bad. Even the dollar cooled off, finally took a bit of a breather after that mega move up to 108. But this morning, if you look at the dollar index, it's around 107.3. So it's not like there's a major fall in the dollar, because in general, dollar strength is something that even Bessent is in favor of. So let's see how this plays out. But for the time being, bit of a pause in the dollar as well. The good headlines from crude. Rima is going to talk about that because there's been a cool off. There is hope that finally, after well over a year, there'll be a ceasefire between Israel and Hamas. So let's see. Just to talk about the positioning over here. Now, the Nifty has had a dramatic recovery, a fantastic recovery from the lows. 23,250 thereabouts. That's the lowest point we've hit in this correction. And over Friday and on Monday, there's a 1,000-point recovery that comes through, which is why I'm saying that maybe today could be a day of slight pause, maybe starting a little cautiously, but cautiously and optimistically. And let's see if the bulls can build on that, because the critical question for this market is the worst of the FBI selling onslaught over? We'll get to the numbers in just a bit. But remember, yesterday's action was also including the MSCI rebalancing. So that kind of plays in. We'll talk about this as we go forward, but the bulls will really hope that from here onwards, at least the FBIs can be a little, they can show some relief and respite, and the bulls can keep building on these steps. We've already conquered the 20 DMA. Let's see.
Indeed. So the FIs were buyers in the cash market after 38 sessions of selling. Of course, aided by the MSCI rebalancing. Then you've got that crude price decline of 3%, Dow closing at a record high level. But the GIFT Nifty, I think, is on the flatter side. Once again, putting the Asian picture on board. So you've got China and Hang Seng in the green. So those markets are rebounding. And the general perception is that the new appointment to the U.S. Treasury Secretary could be seen as, positive for China because he promotes measured tariffs and he's open to negotiations with China. So which is why you've got Hang Seng in China up in the green, but the rest of the Asian markets, so Nikkei has got a cut of more than 1%. Taiwan, Korean markets too under pressure. But really, it's, the fact that Trump is following up on his election rhetoric about trade tariffs, that follow-up, that he's not going to, ease up on it. And I think that is the big breaking story about the, the additional tariffs. The first executive order coming in from Donald Trump on the 20th of January is going to be the 25% tariffs on on Mexico and Canada, which are US's one of the largest economic partners, and then plus additional 10% on China. This is largely because he wants to control the illicit drug, which is coming into US from all these nations. But that's the big breaking story that's coming through. We'll discuss that in greater detail. For Japan in particular, in other global news, the services PPI has risen in the month of October by 2.9%, ahead of street expectation. Crude prices are down 3% overnight and now below the $73 per barrel handle on Brent. Putting the flows picture on board, the DII's net sold 6,900 crore. The FIs bought nearly 9,950, but again skewed by the MSCI picture, and QIPs are continuing.
You made the point on controlling illicit drugs coming into the country. Illicit drugs rarely come tariff and tax paid, but then, let's see. This is going to be an interesting space to watch in the weeks ahead.
It will be, but this week itself, we have the Nifty November series expiry playing out as well. Over the last two trading sessions itself, we've seen nearly 900 points on the Nifty. So the question is, where do we go from here? So just looking at a bunch of triggers that led the market to move the way it did in yesterday's trading session itself. So yesterday's move on the Nifty was actually led by three major things. We had, the Maharashtra election verdict that came by. Then you had the MSCI inflows. And then you had the short covering that took place in F&O itself. So if you just take a look at the Maharashtra election verdict for the first half of trade, the high on the Nifty was made at around that 24,351 mark. Thereafter, we saw some bit of selling. But at the lower levels, those two other factors like the FII buying and FII short covering came by in picture. We've been talking about how the FIIs have been, the first time cash buyers in the last 38 sessions led by MSCI inflows. But remember, if you just take a look at the last time the FIIs bought in the cash market, X of any of this was way back in September 2024 itself, September 26th, 2024. So on a month, a date-to-date basis, it's actually nearly 2 months since the first time the FIIs bought in our cash market. The second part that played out, yesterday's delivery-based buying that we saw in a lot of these index heavyweights. HDFC Bank hit a record high. Reliance did extremely well for the last couple of trading sessions. It's been doing well. ICICI Bank and Infosys as well. All of them saw some delivery-based action. Importantly, the FII short covering continues for the second trade session. So yesterday we have FIIs buying around 3,400 crores in the cash market, covering 24,000 shorts. And if you look at the FII positioning over the last few trading sessions, you would notice that the net exposure is coming down from what? Minus 2.18 lakh to minus 1 lakh. So in just the last 5 sessions, 1 lakh short contracts have been covered, and shorts, which was 75% of the system just about 2 days ago or 2 sessions ago, have now come down to 63% itself. More of that is something we'll be tracking. 24,300, that remains a bit of a fulcrum for the next couple of days because 24,300 call and put are both equally active. Those who are writing both the call and the put are playing for a broad range on the Nifty for expiry between 24,000 and 24,600. And that's where a lot of the technical levels on the Nifty are placed as well. The 20-day moving average is strong support. On the way up, we have the 50 and the 100-day moving averages. We'll be watching out for a bunch of stocks which have come out of F&O ban, namely Adani Enterprises, Nalco. We have a couple of others as well. But 2 sectors I'll be watching out for in particular. One will be the mid-cap, because when the frontline indices consolidate at high levels, the mid-caps typically outperform. And second one will be the FMCG stocks. Why do I say that? Because now the success of populist measures is something that everyone's seeing electorally. that means that, there will be more money in the hands of people. Will they spend it on staples or not is something we'll track. And secondly, overnight, we did see oil prices come down as well. So all these factors doing well for the FMCG sector.
And the FMCG giant HUL will be in focus on the demerger news of the ice cream business. But let's get back to the global markets in the picture. Robert Sorkin, global economist at Citi, is now joining us on the show. Robert, thank you very much for joining in. This is Rima here. So 2 big announcements that we're tracking here. One is Scott Bessent's appointment as the US Treasury Secretary. And 2, Trump posting on the Truth Social platform pledging tariffs on China, Mexico and Canada. Weigh in on what these 2 mean for the global market.
Absolutely. And thank you both all so much for having me. I think on both parts, I'll start with the first one, which, markets have been very excited about because Bessent is seen talking about more fiscal control. So bringing the deficits, which are forecast to be 6% of GDP over the next decade, down to something like 3% over the next several years, targeting 3% U.S. growth, also larger oil supply, and markets have taken that very positively. I think it's a very good choice and also is going to be a very good voice within the administration on economic policy. But it's important to also note that while the Treasury is the most senior economic official, there are many other voices that are going to be at the table, including Trump himself. And there's going to be a very complex process of debating what type of policies. What markets are really trying to figure out is what tariffs are eventually going to look like. And there are different voices within Trump's inner circle that feel more or less strongly about the type of tariffs and how extensive of tariffs he should do. So it's, I think, a very good choice. I think positive, but only going to be one voice of many. And we have to see how the rest of the economic choices evolve in terms of staffing. On the second one with the tweet, I think to me it was a bit of a surprise. I fully expected and have been expecting that Trump would aim to negotiate with trading partners and use tariffs more as a negotiation tool. Even with China, I think there is scope to negotiate. Now, we've seen there's a big difference between the rhetoric that Trump says and what ultimately ends up being pursued policy. We saw that in his first term. So I'm still not convinced from this messaging that we are necessarily going to get tariffs on day one. It may very well be a negotiation tool that he'll use to kind of spark debate with trading partners as he heads into office. So it's a worrying announcement, but I think it's too soon to say if it's actually going to end up being what we see when Trump enters office on day one.
Robert, hi, great to have you on the show, and that makes perfect sense, right? Because with the new administration coming, we really need to figure out who finally does what. I mean, markets are moving on expectations, but whether it's the Treasury Secretary, whether he manages to prevail or not, and whether Mr. Donald Trump indeed goes ahead with severe tariff hikes, we'll need to see. But in the meantime, the equity markets have been having a fantastic run, right? The belief is that it's all about making America great again. And we're seeing that play out. A lot of the more economy and consumer-facing, local-facing stocks, they've started doing really well. Do you think Wall Street will continue moving higher towards the end of the year? And where does that leave emerging markets? Because from markets like India, I mean, there's been an exodus as money moves back home.
Yeah, it's a complex picture. And to your point, equities have been performing very well in the U.S. Part of that, as you said, is because we seem to be having a very strong, resilient economic cycle here, including a very strong, resilient U.S. consumer that just keeps on spending. And we've seen a broadening out of that spending. It used to be that consumers in the U.S. were just increasing their spending on services. We're starting to see that broaden out into goods as well. And our equity strategists really like growth in cyclicals in this environment. Now, our equity strategist is looking for a bit of a pullback from current levels, but that's not baked in the cards. Their bull case for the end of this year is 6,100. So you still could have some more room to run, depending on how the economic picture evolves, and of course, how the policy picture ultimately evolves. If we end up getting extensive tariffs, in the past, that has been a headwind for many companies and their equity prices. So it's really a complex picture of how well the U.S. economy holds up and how well the policy landscape evolves. But I do think there is scope for it to go up from here, as I mentioned, with our equity strategist bull case. Now, for India, it's a complex picture, as you said, but at the same time, I do think over the medium term, India is very well positioned, especially compared to other emerging markets. We've had very strong growth this year, and we're forecasting another very solid performance out of India's economy next year. So I think while there's been some challenges, I think India's economy is very well positioned over the medium term, and over that period, it should attract increased investor flows.
Take that point, Robert. Thank you so much for joining in. We're back to the days where, we're watching Twitter before ticker once again as Donald Trump, takes charge once again. We'll keep an eye out on all the complexities of tariffs and the impact on U.S. stock markets. But the good part is that India, the outlook for the near term is fairly solid, though how much of that is in the price is something that we'll have to, keep an eye out on over the next couple of years. Thank you so much for joining in. With that, let's move on and tell you what corporate interactions we've lined up on the show for you today. At 8:35, we have Karthik Narayanan of Team Lee Services joining in to talk about the employment outlook report. At 9 a.m., he'll be joined by Karan Taurani of Elara Capital as Zomato's 8,500 crore rupee QIP has been launched. At 9:20 a.m., we have Ashwini Agarwal of Demeter Advisors, who will be our market master for the day. At 9:30, we have the management of Shriram Finance, a big mover in yesterday's trading session. They will discuss their second half FY25 outlook with us, followed by B. Bhaskar Rao of Kim's Hospital, who will be talking with us at 9:40 to talk about their outlook for the second half in terms of occupancies and average revenues per bed. And a little later, at 9:50, we have Krishnamurthy Subramaniam of Afcons Infrastructure joining in to discuss infra projects, if they will see any pickup post Maharashtra elections. Towards the end of the show, in our special segment, It's the Economy, Lata will be conversing with a host of experts to discuss if the return of a government leads to a strong majority capex increase in Maharashtra.
Time for a quick break on that note, but on the other side, we have lots of stock-specific action to track today in our special Top 10 segment. We're looking at HUL, telecom companies, Interglobe Aviation, BHEL, Hitachi Energy, Power Grid, Premier Energies, all in the green. So positive news flow for these stocks, and perhaps in the red could be Zomato, GE Vernova, KEI Industries.
В ответ на применение американского и британского дальнобойного оружия 21 ноября текущего года российские вооруженные силы нанесли комбинированный удар по одному из объектов оборонно-промышленного комплекса Украины.
Welcome back. So cues are mixed across Asia. Let's get the implied open up on the screen as well. We've got some of the markets like Nikkei that are under pressure, but some of the others are not that bad. And we are quite flat with a slight positive bias. So let's see if this is how indeed it plays out. Let's talk about stocks, and there are plenty to track this morning as well. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Mangalam told us that FMCG is definitely going to be on the radar this morning for lots of very sensible reasons. So let's start off with the FMCG big boy. No ice creams for Lever, Mangalam.
No ice creams for Lever? Not necessarily. It is a fair amount of ice creams for shareholders of Lever separately. So all those Magnums and Quality Waltz ice creams that you enjoy, you will continue to enjoy it. Instead of it being housed in Hindustan Unilever itself, now it will be listed separately. So, you know, this has been something that has been going on for a very long time. After the end of the second quarter as well, the management said all options are on the table, and now we know which option is the one that they went for. Scheme of demerger will now be placed in front of the board and shareholders early next year. Shareholders will get shares in the ice cream business in proportion to the holdings in HUL itself, so no problems with regards to the shareholding pattern as well. Ice cream business accounted for nearly 2% of their sales and has mid to high single-digit profit margins. Now, in Unilever's scheme of things, 2% of their sales is not as much, but 2% of Unilever's sales also is a fair amount. So, basis the current contribution and growth, the ice cream business could anywhere be between 50 to 60 rupees per share of a Unilever share. Again, not much in terms of Unilever's overall scheme of things, but separately listed Unilever ice cream business could well command a market cap of over 12 to 14,000 crores. Which
it's not
in particular,
sold right now.
It's not sold. It's just
just a separate
listed.
listing.
So yes, ice cream is not going out of Unilever physically, but yes, on the stock exchanges, yes, they are.
Okay, all right. So that's HUL making headlines this morning. Let's get to Zomato as well. Zomato is looking at fundraising. We have Nimesh with all the cues. Nimesh, and you were alerting us about this, many weeks back as well, and now finally the fundraising is on.
Oh, absolutely. So finally they've launched the $1 billion QIP book. The indicative price is 252.62, a nearly 7.5% discount to yesterday's closing price. But do remember, yesterday the stock rallied on the back of the Sensex inclusion. Now the key important point for this $1 billion fundraising is that after this fundraising, the target is that the FI holding will fall below 50%, and then Zomato is likely to request the regulators to cap the FI limit at 49%. This will be very important as far as Blinkit is concerned. So maybe on a pricing front, because of pricing at a discount, you might see a bit of red on the stock, but it looks like it will recover if there is a very strong demand in the QIP of Zomato.
Given the sort of move that we've seen in Zomato already, there will be a fair amount of demand for this, Nimesh. Very interesting news piece out there, but you're also tracking KEI Industries and GE Vernova.
Yes, so as far as KEI is concerned, it was part of my chatter yesterday as well that the QIP book is likely to launch very soon. They've launched last evening, so KEI is raising close to 2,000 crores, $237 million via QIP. The floor price there is 3,800 rupees per share, which is equivalent to close to 5.5% discount to yesterday's closing price. The equity dilution will be close to 5.8%. It was in the works, now it's finally launched. So the company is raising close to 2,000 crores via QIP. So given the discount, might be the stock will react a bit red in the opening trade. And as far as GNT is concerned, again, it was part of my chatter list a few days back. There was an indication that there will be a large block. It is now happening via an OFS. So the promoter entity is selling another 8.3% stake via OFS. The institutional book will open today, and for retail it will open tomorrow. The indicative price there is close to 1550, a meaningful discount to current price of 1900. So the book will get built by the retail investors today, as would happen with other OFSs as well. The interesting part is after this particular stake sale, the promoter holding will come to close to 51%. So further supply is unlikely, but there is a large OFS of 8.3% in GTNT today.
Wow, look at the amount of paper supply hitting the market. There's Zomato, KEI, GETND, NTPC Renewables just closed. Incredible, and all of it being lapped up by the street. Thank you for that, Nimesh. Let's get to Ashmit. The reason we're dialing him this early in the morning is that there could be some good news coming in for telecom companies with respect to some relief on bank guarantees that they're supposed to submit on Spectrum. Ashmit, morning. Good to have you on the show. What are you picking up?
Well, a big relief coming in for the telecom companies, undoubtedly. Every time they buy spectrum, or they had been buying spectrum prior to 2022, they were required to submit bank guarantees along with that, which resulted in a liquidity crunch, especially as far as companies are concerned, especially in recent times. Now, to account for that, in 2021, the government had decided that prospectively for all subsequent auctions, there will be no BG or bank guarantee requirement. So 2022, no bank guarantees given. 2024 auctions, again, no bank guarantees given, which gave rise to the question that why give bank guarantees at all, even for spectrum that was acquired pre-2022, and that was the demand that had been put forth. The DOT certainly saw merit in this demand, had formulated a cabinet note, had placed it before the cabinet for approval. Last evening, we understand the cabinet has granted its nod, and this nod is applicable across the sector. This will be a sector-wide relief, that bank guarantees will be waived for spectrum that was acquired pre-2022. In terms of what the implications are, it comes as a huge relief for Vodafone Idea. Looking at the position that they are in, looking at the position of the financial crunch, the liquidity crunch that they're looking at, this will come as a huge breather for them. The money that was locked in for bank guarantees for spectrum that they had acquired pre-2022 is likely to now get freed up. This is also something that the likes of Bharti Airtel had been pitching for, and will certainly benefit them as well. So clearly, a big relief coming in with the government approving that bank guarantee waiver.
Okay, thank you very much for that. Big relief coming in for the likes of Vodafone Idea. Vamakshi is now with us for the latest on the October passenger air traffic and what the numbers show, and even on BHEL Hitachi Energy. Vamakshi.
Well, good morning, Reema. Let me first start off with Indigo. The stock will be in focus because in the month of October, India's domestic air passenger traffic grew to 1.36 crores as compared to 1.26 crores that we saw in the same month last year. This is an uptick of 5.3%. And out of that, Indigo catered to nearly 86.4 lakh passengers. And with that, its market share stood at 63.3%. Now, I'm going with the green for this counter because the market share for the company seems to have improved from 63% that we saw in September to 63.3%. But apart from that, BHEL and Hitachi Energy, both of these counters are expected to see very strong trading session, and that is because a consortium of both of these companies has received an order from Power Grid. Now, this order is to design and execute 800 kV, 6,000 megawatt and 1,200 kilometers of HVDC terminal stations, which will be transmitting renewable energy from Khavda in Gujarat to Nagpur in Maharashtra. Now, this project is expected to be executed by 2029. Now, going with the green for both of these counters because generally HVDC projects are expected to be huge in terms of the contract value, and therefore bodes well for both of these companies.
All right, we take that point. Vamakshi, thanks a lot for that. Let's go across to Vivek as well. He's watching a couple of stocks. Vivek, what do you have on your list?
Well, good morning. Two stocks on the radar. First one is Power Grid. Now the company has emerged as a successful bidder under the tariff-based competitive bidding process to establish an interstate transmission system. This is for a power evacuation project in Rajasthan. This particular project will be done via the BOOT, which is the Build, Own, Operate and Transfer basis. The second stock on the radar is Premier Energies. Again, the company has received multiple orders, and the total worth of these orders is over 1,080 crore. The order has been received from 2 independent power producers as well as 1 other customer that the company has not specified. So in this particular order win, when you're talking about the breakup, solar modules that is at 964 crore, solar cells at 123 crore. Remember, at the end of Q2, the company's total order book stood at well over 6,200 crore.
All right, Vivek, thank you so much for that. In fact, on that note, we'll thank our entire team for stopping by and giving us their entire list of stocks that they are tracking this morning. In fact, in case you missed it, let's give you a recap of the same. Stocks with positive news flow. We have HUL, the telecom companies. We have Interglobe Aviation, BHEL, Hitachi Energy, Power Grid and Premier Energies. Stocks with negative news flow are the ones which are supplying paper: Zomato, GE Vernova and KEI Industries. Let's go across to Manisha Gupta now for a quick roundup of all the action from the commodity market overnight. Manisha, some cool off in crude?
Oh, yes, it is. And this is because of the reports of Israel-Hezbollah ceasefire agreement. So, yes, we've seen the strength in US dollar and the ceasefire agreement. Both of these things work in sense of bearishness in case of many of these commodities. Though, of course, in the Asian markets right now, the markets are reacting to US plans to raise tariffs by additional 10% on China, 25% on Mexico and Canada goods as well. So we are stuck somewhere in the middle. But yes, most of these commodities still holding on the lower side of the range. Crude oil prices fell 3% overnight. We also hear that the OPEC and allies meeting on 1st of December is going to be an online meeting, and there could be production cuts in place on 1st of Jan as well. So that means there is not going to be more production coming in from OPEC into the international market. The other area which saw huge profit taking has been the precious metal prices. As the safe haven buying kind of eased, we saw gold prices decline 3.5%, silver fell 4%, platinum 3%, palladium 5%. So, well, yes, there was a complete sell-off in the precious metal markets overnight. And same goes for, in some sense, for the base metal prices also. 0.5% to 1.5% of a cut overnight is what we are seeing in industrial metals too.
All right, so some cool off in the commodity complex today. Thank you, Manisha, for that quick wrap up. We will take a break on that note, come back on the other side, and we'll have Amnish Agarwal of Prabhudas Leather joining in. We'll get a couple of fundamental stock ideas going with him. Also in a bit, we chat with Karthik Narayan of Teamly Services to talk about the employment outlook for the second half of this year.
Было проведено в том числе и испытание одной из новейших российских ракетных систем средней дальности.
From the chair, all I said, you know it more than anyone else. I'm hurt.
The Adani bribery case is affecting the entire country.
Nothing is going on. Khadge ji,
sir,
as a very senior parliamentarian and a leader, you are aware that my ruling on this issue has been given. I would seek your earnest cooperation, particularly in the background that matters to you more than anyone else, that we are in the 75th year of adoption of our
Sir, 75th year है, उसमें मेरा भी हिस्सा 54 years है, तो मुझे कोई सिखाने की कहने की बात नहीं।
सही, एक बार आपको अनुरोध करूं।
मैं आपसे
एक सेकंड, no, please take your seat. No, in all humility, from the chair, all I said, you know it more than anyone else. I paid you the highest compliment.
Okay,
still
sir.
You are taking exception.
Thank you very much. Thank you.
No, sir.
Thank you.
I'm hurt. This is hardly an approach. I have commended his contribution.
Thank you.
I have praised it, and the same.
Sir, ये बहुत ही important मसला है.
What to say, sir? Not on 267.
267.
No, my ruling is over.
No, it's a very important, sir.
No, you are questioning ruling of the chair.
Sir, if you suspend today's business, we can explain because.
Welcome back. So just taking stock of Asia once again, the markets where there is a threat of higher tariffs are completely shrugging it off. Hong Kong markets up about 0.5%. Even mainland Chinese markets, the Shanghai Composite is trading higher. But other regional markets are down. So just take that on board. Markets like Singapore, Japan, and even Taiwan lower this morning. So mixed picture across Asia. Let's see which way we basically go. In the meantime, let's get a conversation going with the management at Teamly Services. Now, Teamly's released their employment outlook report for the second half of FY25, according to which 7% workforce growth is expected in the second half of this year. So what will drive this workforce growth, and what are the other trends they're noticing across businesses? Karthik Narayan, CEO at Teamly's, is with us. Karthik, great to have you on. So just give us the highlights. Which are the sectors that could be driving this growth? I think I briefly went through it. And you did mention all the heightened activity in quick commerce, for instance. That could also be contributing positively. So tell us more. Manufacturing, quick commerce, are these the driving forces?
Yeah, hi. So I think, we do this survey twice a year, and, and to give a sense, saying we do this across, 1,300 odd, enterprises across 23 different industries to get a, full view across 20 odd cities. What has come out is, one, like you correctly pointed out, I think the H2 part of, this year, there is expected a 7.1% net employment increase. And if you compare it with last year, same time, it's about 6.3%. So that's a good 12% increase. Now, the important question you ask, which are the drivers which are getting to it. Again, there are two statistics on this entire thing. If you look at industries which are, the large part of the industries, large part of the companies, a part of a particular industry which is kind of growing, in that sense, it is largely, quick commerce, e-commerce, retail, and automotive. But if you look at sheer number of work which is expanding within a particular company, it's largely coming across in logistics. It's coming in EV and EV infra, and it's coming in agriculture and agrochemicals.
All right, logistics, EV infra and agriculture, agrochemical. That's very interesting because, one would have thought that maybe some sort of improvement in the IT space, the traditional guys, BFSI, etc., which was underwhelming. And I also read that you are expecting the food processing industry to lead hiring in the second half as well. If you could give us a sense on these traditional industries and the outlook for the second half.
No, so you're right. I think BFSI has been subdued for a while, and that is since November last year across fintech space, that largely led by I think some of the strictures by RBI on loans, especially unsecured loans. So that is one aspect of it, and we are expecting it to remain like that at least for a period of time. I think there is definitely better monsoons this year as compared to what it was earlier. So we're expecting some sort of a rebound in agriculture and agrochemicals, largely around seed, fertilizer companies, etc., and all that. So that's the other aspect that we are expecting it to grow.
Okay, so just to recap, logistics, EV, agrochemicals, quick commerce, these are some of the areas where you're seeing green shoots. So, Karthik, what does this mean for your business? I mean, as we look at trends going forward, what is your exposure to some of these sectors which are seeing higher workforce addition? Give us some contours of how business is going to be in the second half for you.
Yeah, I think the most important part for us is, as we look at some of this data is that, India continues to grow. And I think that's the more important part. And therefore, the first half, if you look at the EPFO data, there was a 7% net, employment increase. We are expecting similar numbers, going into next year from an overall, macro perspective. For us, we are net beneficiary when there is, overall formalization of workflows, which continues to happen. What we have seen this year as well is that while there are some sectors which are in stress, for example, FMCG due to high input costs, etc., and all that, it is also driving some of these businesses to formalize more. And I think as formalization increases, for various reasons, for reasons that they want to eliminate ghost employees, improve their retention, improve productivity, I think we are net beneficiaries in that particular case. So we are expecting positive momentum going into the next second half as well, because overall we expect, employment to continue, increasing at a steady pace.
Right. So then what does that mean for your second half outlook? Because your overall staffing and allied services grew about 8% in the first half. And in that, the specialized staffing declined by about 1.5% in the first half. For second half, what kind of guidance can you give us when it comes to this vertical?
So we don't provide, forward guidance, but what I can tell you is I think there is definitely, positive momentum, across all, including, our EBITDA margins. In terms of growth. But, specifically given that you called out IT, I think IT has been, a dampener for a little longer than what we expected it to be. But some sort of an offset which is taking place by growth in, GCC businesses. So we're expecting, that to kind of help us out in second half.
You mentioned that, there should be steady growth. Now, just give us, and this is not a question really for only the next 2 quarters, but going forward, as some of the other businesses also pick up and maybe generalized staffing picks up, I don't know, is that going to be further margin dilutive? You're at around 1.2% margin, EBITDA margin as of second quarter. So in terms of margin profile, what should we expect over the next couple of quarters?
I think, volume profits is what, we need to really be looking at, from that particular, business in terms of growth. However, having said that, the industry that we occupy is functionally dependent on, the salary increases that some of our employers give our associates. And hence, as a function of that, it's our, margins don't grow at the same pace, right? So I would say steady state as we speak going into second half.
And the mix between generalized staffing and specialized, what is that likely to settle at?
Yeah, again, difficult to kind of put across specifics for the future, at this point in time. So it'd be difficult for me to comment on that.
How far are you when it comes to your M&A activity? Because you did say that, you are actively in discussions. This was about a couple of months ago. Has that moved further? Are we likely to hear anything close out in this quarter or the next?
Yeah, so we are in active discussions, especially in the, what we call the HCM space. So hopefully within the next 6 months, we are expecting, some closure to happen, which is going to be, net profit accretive for us.
And what's the broad size that we're looking at here? Because the net cash that you have, including free cash, stands at around 550, 560 odd crores.
Yeah, so some of those I'm not able to kind of, share straight away as to what is the size we're looking at. But, hopefully you should get to know as we close it out in this, quarter max.
Okay, short point. Will it be any more than the cash that you already have on the books, or will you have to raise funds?
No, not at this point in time. We're not looking at raising funds.
Right. That answers our question. Thank you so much for joining in, giving us a broad outlook on, the way hiring is likely to pan out over the next couple of quarters, at least the second half of this year. Unfortunately, not being led by traditional industries, but agrichem, EVs as well as quick commerce would be the ones that would lead hiring for you. Margins likely to look better in the next half of this year, not too much beyond the current levels that they are at though. Thank you so much for joining in. Let's move on. We have Amnish Agarwal, Head of Research at Prabhudas Lilladher, joining in now on the market setup, his fundamental calls. Amnish, yesterday we did see some pickup in the FMCG pack, and I ask you about your view on the FMCG, particularly for three reasons. One, the electoral success of the Ladki Bahini scheme tells you that maybe the populist electorate is back, which means more money in the hands of people, positive for staples. We're also in the third quarter, which is seasonally the strongest, and we did see a decline in oil prices overnight. All of this, does this give you enough confidence to go back and buy FMCG staples, or maybe still take a brief pause?
See, hi Mangalam. Actually, the impact on FMCG is not due to, say, one single factor.
Yes.
Now, if you look at, say, some of these welfare schemes, they were earlier also there. And for example, in Maharashtra also, I think it is there from past few months. It was introduced in Jharkhand a few months back. It is there in MP. So some states are having it already from past many months. And going by that logic, there should not have been any pressure. So that is one. Secondly, as per you can say the corporate commentary of various companies, the pressure has been more in urban areas, and that too, I would say it is not at the bottom end of the society. You can say it is more like lower middle class, which has been impacted more by inflation. The third thing on your edible oil prices, if you look at, say, past 6 to 7 months, edible oil prices have been moving up gradually, whether it is palm or the other edible oil stable. Now, just a correction of 1 day or two doesn't mean much. And on top of it, we had seen increase in the import duties by roughly around 20%. So a simple correction of a day or a few days, I think it is not going to change the consumer sentiment significantly. For example, your wheat prices are already at 3,000 rupees per quintal. So I think there is overall some softening when it comes to, say, your fresh vegetable prices and all, which obviously will provide some relief. But as far as your corporate performance is concerned, have we seen the bottom in terms of, say, volume pressure or margins? Maybe yes. But are we in the optimistic phase where people used to be, say, 2 to 3 months back? I think we are still away from that. So it's going to be very, very, I would say, stock-specific approach with slightly longer term in viewpoint, because we should not expect the recovery to be absolutely V-shaped. Because this quarter, we have seen things going down. Before that, everyone was too gung-ho on the sector. And suddenly in 2 months, I think things are not going to take a completely U-turn.
Sure. Okay, so that's a call on the consumer space. Let's talk about engineering, capex, and infrastructure as well, because yesterday this part of the market was absolutely lit up, right? After the Maharashtra outlook. But it's not just the Maharashtra sentiment, Amnish, to be fair. Look at just the order flow announcements from yesterday. Cabinet is announcing almost 8,000 crores of fresh orders for railways. Then we had this big HVDC announcement from Hitachi. They're setting up this connector between Gujarat and Maharashtra for evacuating renewable power. There are announcements from Power Grid. They've won some contracts in Rajasthan. So there's a lot of activity on ground as well. Anything you like, anything that you would be willing to buy now in the capex/power/infrastructure space?
Okay, you see, capital goods and engineering, it's a long-term story. Because if you look at the various plans of the government, ranging from, say, increasing your overall renewable power in the country, whether it is energy transition, setting up, you can say, grids, roads, water, sanitation. So everywhere, I think the capex is going to be humongous. Now, what is happening is that in the first 6 months of this year, the capex actually done by the central government that has gone down because of elections, too much of rains, heat wave earlier, etc. And as we stand today, to meet the annual target of government, we need to grow capex significantly by around 50% on an annual basis for the next 2 quarters. Now, similarly, due to elections at the central level and at the state level, the ordering was also delayed because due to the election code of conduct, in certain phases, you can't give even the fresh orders sometimes. So I think over the next few months, we will see the big announcements coming as far as your entire infra cap goods space is concerned. And I think this is one space where even now your profit as well as top line growth momentum is there. And in this space in particular, you see companies like ABB, Siemens, they are structurally, you can say, great buys, big companies in terms of technology, in terms of where they are placed to capture this entire transition which is happening on the infrastructure side. But in addition to it, I think we like stocks like L&T is there, then Triveni Turbine is there. Okay, but this entire pack, I think it should do well over the next at least 2 to 3 years.
All right, L&T and Triveni Turbine is something that we'll keep an eye out on. Do you have any particular railway stock that you like? Because all of them have seen a correction of anywhere between 30 to 40% from the highs. At one point, they were overheated. But over the last couple of trading sessions, we've seen them come back. They're backed by some of the order wins that we're getting for a few players as well. And this morning, there is news that the cabinet has given a nod for projects worth nearly 8,000 crores for 3 railway projects. Do you think they warrant a fresh look after this correction?
I just missed the initial part. Which stock you are referring to?
The railway stocks.
Okay, you see, railways also, as I said, the order inflow was very poor for the first few months. And in railways also, the plans of the government are to increase the overall connectivity first and improve the, you can say, do a lot of investments on the technology side. So I think the order momentum in railways is also going to pick up significantly as we go along. And many of these railway stocks, first they were overheated, as you said, few months back. Particularly many of these, you can say the EPC railway companies, but post that they have corrected to more reasonable levels. But having said that, I would be very selective in buying that because many of these companies, I think the growth is going to be there. You can easily expect many of these companies to give you 15-20% growth, but I will be very hesitant to go and buy many of these stocks if they are trading at say 40-50 times multiple.
Okay. All right. Amnish, thanks very much for that. We do have to take a quick break. Up next, we'll have our technical experts joining in, Mitesh Thakkar as well as Sachidanand Utrekar, to talk about the market's technical setup and a couple of trading ideas for the day.
Adani, regarding this bribery case, is affecting the entire country.
Nothing is on record.
And
nothing is going on record.
No. Entire
nothing
country.
Is going on record. Nothing is going on record.
Consistently,
nothing is
Modi is supporting him.
Nothing is going on record.
Nothing
is going on record. No, sir.
Modi ji supporting him and दुनिया में
List of matters raised with permission. Srimati J.B. Mather Isam.
Well, death, taxes and changes are the only constants in life, but the other constant in life is the IPL. And while 4,000 miles away in Perth, it was raining runs and wickets, it was raining crores in Jeddah in Saudi Arabia, where the IPL auction is currently underway. The other big constant in the IPL, though, is that the most expensive player tag keeps shifting and raising the bar higher every season. This time around, it was Rishabh Pant, who was bought by the Lucknow Super Giants for a whopping 27 crores. Shreyas Iyer by the Punjab Kings for 26.75. I'll talk about the other Iyer in this list in just a bit, but Punjab Kings also splurged 18 crore for Yuzvendra Chahal, the Indian leg spinner. A lot of talk about foreign players, the big moolah they get, but not playing the full season. This time around was no different. Josh Butler going for 15.7 crore to the Gujarat Titans, and Trent Bolt and Jofra Archer for 12.5 crores each to the Mumbai Indians and to the Rajasthan Royals respectively. Uncapped the big money retentions, of course. I talked about the other Iyer in this list, and that is Venkatesh Iyer, who was retained by the Kolkata Knight Riders for 23.75 crore. Virat Kohli for the RCB for 21, and Arshdeep Singh, the fast bowler, retained by the Punjab Kings for 18 crore. Uncapped players have drawn a lot of attention because of a certain Mahendra Singh Dhoni, but the actual uncapped players who have not played for India received a fair share of bids as well. Rasikdar Dar Salam, the fast bowler from J&K, was bought by RCB for 6 crore. Shashank Singh for the Punjab Kings for 5.5, and Naman Dheer by the Mumbai Indians for 5.25 crores. So, while the Border Gavaskar Trophy is underway in Perth, it is raining crores in Jeddah, and the focus is on the...
Back, you're watching us here on Bazaar Morning Call. Just keep an eye out on Gift Nifty. At the earlier part of the show, it was indicating a mild positive start. Now that seems to be increasing a little bit. That mild has gotten a little more than just mild. It's a 30-point uptick that one can expect at the open itself. The question is, where do we close? And for that, we have Mitesh Thakkar and Sachidanand Utekar for a quick technical check on the market. Mitesh, good morning. Yesterday was a good day of trade. Give and take everything, we still ended about 315 points higher. Over 2 days, nearly 900 points on the frontline index. Where do we go from here?
So, good morning. One, I think, the market texture in the short term has changed. Look at the positions of the moving averages, the indicators on the hourly, the 2-hourly charts, etc. I think this looks like a market which will possibly see further, upward thrust. And the idea is that while this still is not a confirmation of a strong uptrend, starting, but this looks like a pullback, which could extend a bit more, albeit with some volatility, because we've already had about nearly 1,000-point kind of a rally in the last 2 days. So buy on declines remains the idea. 24,150 is the first support pivot on an intraday basis. So I think around those levels, if you get the index today, take long position with a 70-80 point kind of a stop. And on the upside, 24,350 is the first pivot, though I suspect 24,500 is where I think the market will at least go. Maybe beyond that, but that's the logical target of 24,500.
Okay. 24,500 would be the next port of call. Got that, Mitesh. Let's come to Sachidanand as well. Good morning to you. And let's talk about the index strategies first. Would you look at going long today?
Well, absolutely, yes. I think the market has already displayed a very strong comeback. And if you look at yesterday's price action itself, the 24,200 support also looks very decent. So I think the immediate hurdle for the index is to reconquer that 50-day exponential moving average resistance, which is placed somewhere close to around 24,410. Once that particular level is surpassed, we may see this particular rally concluding towards 24,800, 900 kind of a zone during this particular week itself. So we are optimistic on the market, and I think every opportunity is on the buying side. So if you look at the trading setup, I think if you see a positive opening today, the Nifty may see some consolidation within this range of 24,220 on the lower side. And we may see a decline towards 24,180, which would be a good buying opportunity. On the lower side, one can keep a stop loss at 24,140 and expect a move towards 24,460 during the day.
Right. Mitesh, what stocks are you backing today?
Good morning, Mama. I have 3 buys to a sell on the technology pack LTTS, or Larsen & Toubro Technology Services. That's a buy with a stop below 5,400 for targets of or in vicinity of 5,600. A buy on Shree Cement with a stop below 25,000 for targets of 26,400, and a buy on Indus Tower with a stop at 332 for targets of 348, and then maybe even higher levels can be looked at. And one sell call, that's on MCX. Keep a stop at 6180. Look for targets of 6,000.
All right. Indus Towers, LTTS and Shree Cement are buys, and we have a sell call on MCX. Sachi, your thoughts? Individual stocks?
Mangalam, we are liking the setup of Indigo. There is already a good news flow, and we have recommended this particular trade to our clients as well. If you look at the overall setup, we've already seen a strong base, somewhere close to around 4,200. We've already seen an elevated move, and plus, if you look at the overall structure, this looks like an extended pullback towards 4380. Now, there was a gap which was left. I think this move may fill that particular gap setup. So I think one can still, build aggressive long positions here. 4210 should be the stop loss on the trade. The other stock which we are liking is OFSS. Now, after 7 weeks of consolidation, we have seen a strong breakout move. We expect this particular momentum to extend further towards 12,630, and that's why we are recommending building fresh long positions with a stop loss at 11,820 on a closing basis.
Okay, all right, gentlemen, got that. Thank you very much for the trading setup and the ideas for now. We'll come back to you a little closer to market opening. Right now, let's look at some F&O cues as well. We have Sneha Sheth, derivatives research analyst at Angel One, joining in for exactly that. Sneha, morning. How's the setup looking to you? What are the trades today?
Very good morning. If you look at the market, we have seen a sustainable move yesterday. I believe at present, 400, 500 is the resistance zone. And on the lower side, I believe 23,900, 24,000 is the support. So as in, like, unless and until Nifty is sustaining about 24,000 mark, I think one should be trading or using declines to add longs. And any move, any sustainable move above 24,500 would be very interesting for Nifty. As far as individual counters are concerned, I have a 2 buy call. First one is on TVS Motors. This counter has been consolidating, has been taking a good support around 200 is simple moving average on the daily chart. I believe we have seen also a decent unwinding in the call options, at the same time writing in put options, which is very interesting. So I believe we may see this counter heading towards 2,600 levels, and the stop loss which can be maintained around 2,380. Apart from this, we are also liking Federal Bank, which has been doing very good since quite some time. I believe the previous resistance zone should be acting as a support. So 205 is the stop loss, and the upside potential for this counter is around 224.
Right. Federal Bank and TVS Motors are the ones where Sneha is likely to go long. We'll keep an eye out on that. For the markets, of course, the broad range is between 24,000 at the lower level to around 24,500 itself, something that we'll be watching out for. Take a short break, come back. We'll have the pre-opening rates, and also with us will be Karan Durrani of Elara Capital. He'll discuss Zomato's QIP launch and a lot more. Stay with us. Welcome back. This is Open Exchange live from the CNBC-TV18 Motilal Oswal studio. Couple of minutes ahead of the pre-opening grade and 16 minutes into opening. The GIFT Nifty is indicating a positive start for open. We keep an eye on a bunch of stocks. Most notably, the food delivery, quick commerce sort of stocks are ones will be on our radar. Of course, we've been telling you that Zomato has launched its 8,500 crore rupee QIP. The stock ended higher yesterday. The price, the indicator price, is close to around 7% discount to what it was as yesterday's close. So that's something we'll be watching out for. On the other hand, keep an eye on Swiggy as well, because there is an interesting initiating coverage report that is coming from UBS on Swiggy. They've initiated at buy with a target price of 515. Remember, the issue price for Swiggy was close to around 390 odd rupees itself. They say that it is well positioned for growth at a 35% discount to Zomato. Remember, Zomato versus Swiggy, when the issue was launched, it was offered at a near 55 to 60% discount. So they believe that this discount can narrow all the way up to 35%. In the online food delivery business, Swiggy has been catching up to Zomato on both margin as well as scale. Quick commerce, they have a lot more work to do, even as there are encouraging signs. And these are not my words, these are UBS's words. And they are expecting Swiggy's online food delivery GMV to grow pretty much similar to Zomato, which is in low 20s, with adjusted EBITDA margins reaching 2.8% in FY27. Remember, the company has told us that steady state margins, adjusted EBITDA margins for the food business could be all the way up to 5%. So that's something we'll have to watch out for. The most important thing to track, though, is increasing fundraisers and competition in the quick commerce space. Quick commerce will be the growth and the valuation driver for both Swiggy and Zomato, as it has been for others as well. But just look at, what's happening in the quick commerce space. Swiggy itself raised about 4,500 crore via fresh issue in IPO, looking to open a bunch of dark stores, almost 1,500 with the amount that they've earmarked for that. Zomato has launched its 8,500 crore rupee QIP, saying that there is competition, so they'd rather have some cash on their books more than what they already have. It was just last week that Zepto raised another round of funds, $350 million raised from domestic investors. Both Zomato and Zepto looking to increase their proportion of domestic shareholding. And it was just recently that Amazon announced its quick commerce foray as well. So the battle for space is rising in quick commerce, both from a customer standpoint and an investor standpoint, with the kind of money that they've been using. So we'll just keep an eye out on that. But there is important news at the bottom of your screen.
Yes, absolutely. And we hope that this is nothing serious. The RBI governor has been hospitalized. He is in a hospital in Chennai. We are expecting the RBI to issue a formal statement with more details. But this is what is available right now. One just hopes that this is something, nothing very, very serious. Let's see. We will be hearing more from the central bank in a bit. He's under observation. That is what we know as of now. So our eyes on that. We'll connect with Ritu as well the moment there are any further updates on this important piece of news. But for the time being, let's keep it with the quick commerce space. Mangalam was just telling us about a bunch of views that have come in on the street on stocks like Zomato and, of course, Swiggy as well. Plus, Zomato is out there to raise about $1 billion. Karan Taurani, Senior Vice President, Research Analyst, Media, Consumer, Discretionary and Internet at Elara Capital is with us. Karan, great to have you on. Thanks for joining in. We know you've been very positive on Zomato. I think in the last note after the Q2 results, your target is about 320, if I'm not mistaken. But the pitch is getting very interesting, right? Because there's a giant that's about to enter, a giant with plenty of money and muscle power, Amazon Quick Commerce. First thoughts, and then we'll come to individual companies, Swiggy, Zomato, the fundraising, all of that. Opening thoughts.
Hi, Survi. Good morning. So if you look at the quick commerce business, it's very different, compared to the food business. There's a very large target addressable market over here. Potentially, if you look at the quick commerce business today, it's only about 3.5% of India's e-commerce market, right? And there are only certain categories which go very well in terms of quick commerce. Majorly that's FMCG, grocery. Then there is, some categories like, gifting. Then there are other categories in terms of, the apparel accessories which are there, the kids category, the games category, everything put together, beauty, personal care as well. So there are certain categories which will go to, quick commerce in a very rapid manner. And that is why, I think there is ample headroom here for more players to coexist. Unlike in the food business, wherein, the smaller fringe players were, kind of bought out and, Zomato, Swiggy became duopoly, and that's how they're controlling more than 90% of the market today. I think quick commerce is going to pan out in a very different manner because we are very small right now, firstly, in terms of the share. Secondly, we haven't even gone to the non-metro markets, right? So in terms of category penetration, in terms of market penetration, there is still headroom for this business to grow by 50% plus for more 5 years, 7 years, even 8-9 years put together.
Karan,
This is how the non-metro situation pans out.
I completely take your point. Karan, allow me to come in over here. I completely take your point on the fact that there's under-penetration. It's such a long way to go, right? Tier 2, Tier 3, the whole opportunity. But my simple question is this. Last time I ordered something on Swiggy, Instamart, or I think maybe it was food delivery. I don't remember what it was. But I clearly remember the platform fee being 10 rupees. And that, in a huge way, was a big turning point. It was an inflection point when these platforms started charging that fee, right? Now, if Amazon tomorrow comes in, slashes platform charges to some 3 rupees or 2 rupees, I mean, there could be major disruption. You can't rule that out, can you?
Yes, of course. I think there will be disruption. There's no doubt about it. You might even see increased discounting by some of the players. But the good news is that the moat of this business is not about discounting. A customer will not move from one platform to the other just purely basis discount. They would also want the delivery and the good experience within 10 minutes, 15 minutes in terms of lead time. And plus, you have to watch out here in terms of where the stores are located strategically, in terms of dark stores, the locations, the product, the SKU range, everything put together, right? The kind of user experience, the kind of technology, the kind of system that you have on your app in terms of any kind of issues from the customer side. So clearly, it's an end-to-end game. It is not only a purely discounting game. E-commerce was a discounting game 7-8 years back when it took off, but this is not a discounting game. I think people have kind of moved to online now, and now they are really demanding more in terms of online when they want rapid delivery, and they are willing to pay the price for it. So yes, I think some minor discounting can go up, but not in a big manner because that's not the key mode. Secondly, in terms of the larger players like Amazon, I think clearly Zomato strategically is raising money purely for that reason because you have to prepare for a war chest. And I clearly believe that all players will coexist. You can probably see that some kind of growth rates can become lower here and there for other players put together. Some players can kind of gain market share. But because the market growth potential is huge, I think there's opportunity for 3, 4, 5 players to exist in this market, and all of them will grow well for the next 3 to 5 years.
That'll be interesting, 3, 4, 5 players, because most on the street are expecting 2 players to exist with some strong regional players itself. Be that as it may, Karan, like you said, it is a function of not just the discounts, but the assortment availability, the entire overall, edge that every platform has on the other when it comes to execution and the overall experience. Amidst all of this, where do you see your pecking order when it comes to investments? Zomato, do you think, will still continue to lead? Because over the last few months, we've seen Zepto nearly narrow their share when it comes to Zomato in the quick commerce space, and also in some places be market leaders. So on Zomato's Blinkit leadership is something that I want your thoughts on. And secondly, Swiggy as well. What do you think Swiggy should trade at as a sustainable discount to Zomato?
So firstly, I think in terms of the broader quick commerce market, we clearly believe that, Blinkit could sustain their market leadership over the near to medium term. There could be some minor losses of market share, maybe a couple of percentage points whereabouts. But I think the market leadership position will remain with Blinkit, given the kind of SKUs, given the kind of strategic markets that they have, the Delhi NCR market, where they are phenomenally strong, and they are trying to dig deep into the non-Delhi NCR markets as well. So I think there is very low probability that some other player emerges as a market leader. I think the fight is going to be here more with the other players versus the new players which are going to be there. And Blinkit, no matter what, could be able to sustain market share, given the kind of track record we've seen, the SKUs, the execution, everything put together. Now, the second thing is in terms of discount narrowing between, Swiggy, Zomato, which is Swiggy, Instamart versus the Blinkit on the quick commerce side. The big gaps here are clearly take rates and AOV. Right, and AOV is a function clearly in terms of your strategic markets, as I told you, the kind of SKUs you have. The more you move, beyond the FMCG grocery category, AOVs tend to go up, right? So from that standpoint, Swiggy and Instamart need to work a lot more harder in terms of getting AOVs higher. The gap between AOV, between the market leader and the other players is about 25 to 30%. So it's quite a substantial gap. It may take some time, and also it's very tough to execute over there. The second thing is around take rates, right? So if you look at the take rates, I think Blinkit, just like Zomato on the food business side, they've been very proactive in terms of generating ad revenue. So, ad revenue is a function in terms of the customer traffic, in terms of the market share, in terms of orders throughput, which really drives your profitability and your growth as well, and even the take rates for that matter. So I think ad rates, platform fee, these are levers which are there available for the quick commerce business as well. And as you keep going larger, your bargaining power with the brands is going to increase, which means you can even have better take rates versus competitors. So these are clear levers for Blinkit, which will remain. Instamart discount, might converge on all these metrics, but it will take some time for this to happen.
You don't have official coverage, right, on Swiggy, Karan?
We don't have active coverage on Swiggy as of now.
Okay.
All right. And just a final question. Have you penciled in any sort of private labeling coming in for quick commerce? Because some of them have made investments in private labels as well.
Yeah, so I think those are all try and test models. I think those players will also come in. They might even, push discounts to a certain extent. They might try to make inroads, and eventually they might just become acquisition targets by the larger players. So I think the worry is not about fringe players. The worry is about the larger players here. As I told you, because in the food business, you don't have players which could be, kind of bought out. But in the quick commerce business, all these are conglomerates. I mean, Amazon, Flipkart, if they get deep into the quick commerce business, it'll be tough for, buy them and do acquisition. So that's why I think 3, 4, 5 players will coexist in the quick commerce business in the medium to long term.
Right, take that point, Karan. Thank you so much for joining in and giving us your views on the stocks. You believe that Blinkit will still continue its edge despite, the emergence of new players and the others raising funds, etc. as well. This 8,500 crore rupee war chest will only keep them healthier in the fight in the quick commerce place, where you do see about 4 to 5 players exist fairly okay in the next few quarters, at least the next 4 to 5 years, given the sort of penetration that there is, which is at a lower level. And it is, as on cue, 9:10 on the clock. Let's welcome Mitesh once again for his 9:10 calls. Mitesh.
So for 9:10 call, I suggest a buy on LTTS for targets of 5,600.
All right, LTTS for 5,600 is Mitesh's call. From Mitesh, we move on to Nimesh. Nimesh, you have been reading all the brokerage notes that have come by this morning, and the standout one is?
Well, Mangalam, today's standout report is on defense names. A big report from JP Morgan. They've initiated coverage on few names. So they have a buy rating on BEL with a target price of 340. They have initiated buy on HAL as well, Hindustan Aeronautics, with a target price of 51.35. And they have a neutral rating on Mazagon Dock with a target price of 42.48. Now, a decent upside for Mazagon, but a meaningful upside for other two names, which is BEL as well as HAL. Now, why they are bullish on? They believe that the sector represents a long runway of structural as well as value accretive growth on the back of few reasons. One, increasing capex. They estimate $150 billion of capex over the next 5 years versus just $85 billion in the previous 5 years. Second, increasing exports. They see a 46% CAGR over the next 7 years in terms of exports for Indian companies. And also the third reason is a big focus on the domestic manufacturing with high return on capital as well as on high strong cash flows as well. After the recent correction, JP Morgan believes it's a good entry point for new investors to get in, because these companies provide a decent 15 to 17% EPS CAGR as well as an ROE of between 23 to 33% over the next few years. So a big total addressable market is what they're eyeing for. And after the recent correction, a good entry point is what JP Morgan believes. So initiating buy on BEL, HAL and a neutral rating on Mazagon Dock.
Okay, all right. So looking at defense stocks all over again. Got it. That's an interesting call. Nimesh will keep that in mind. All the stocks on our radar as well. Thank you very much. Let's now quickly go across to Abhishek. Now, MFIN, which is a regulatory body for MFI institutions, it has tightened norms for lenders to try and check the rising stress in MFI portfolios. Abhishek is joining in. Abhishek, what are the kind of new regulations and the stricter rules that are coming in place?
Well, in May 2024, we did highlight that, NPAs are rising in the MFI sector, as well as the fact that there are over-leveraging concerns as well, with CREDAC having 6 to 7 loans per customer. So now this has caused a spillover with respect to, over-leveraging, and that is why the regulator has tightened some of the norms. So Citi has written a note wherein they say that exposure to MFI lenders to growth with stress rising during the deleveraging phase, that will continue for them. So MFIN has tightened some of the lending norms. MFIN has capped the number of lenders to 3 from 4 earlier, and they have also capped the maximum indebtedness to about rupees 2 lakh per customer. There will be no lending to any borrower who is overday with more than 60 days of repayment dues, as well as the fact that they seek PAN for at least 50% of the borrowers by FY25. So Citi says that 8 to 10% of AUM, 3 to 4% customers have borrowing from more than 4 lenders, 9% has borrowing from more than 5 lenders, 7% of AUM is exposed to customers with more than rupees 2 lakh of total exposure, and about 4.6% of AUM that is at portfolio at risk of more than 30 days overdue. Back to you.
All right, Abhishek, thanks a lot for that. So these MFI stocks will be in focus on the back of the news and the brokerages that you just spoke about. But we'll go back to Vamakshi to talk about BHEL and Hitachi Energy. Vamakshi.
Well, Mangalam, both of these counters will be in focus today because their consortium has received an award from Power Grid, and in fact this is to design and execute 800 kilowatt, 6000 megawatt, 1200 kilometer HVDC terminal stations to transmit renewable energy from Khavda in Gujarat to Nagpur in Maharashtra. Keep in mind that HVDC projects, generally the contract value is very large, and therefore this bodes well for both of these companies. The project is to be executed by 2029, so good revenue visibility out there for BHEL as well as Hitachi Energy.
Absolutely, and it's from the renewable power space. It just tells us in which direction we're all heading. Well, Makshi, thank you so much for that big project between Gujarat and Maharashtra on evacuating renewable power there. Okay, so I think we are set for at least a positive start. I mean, the GIFT Nifty has been indicating a positive start. The pre-open is 120 points higher as well.
While we wait for the pre-open to settle and, the markets just about 15 seconds in opening, the stocks that really stand out are the telecom stocks. After a big beating that we've seen on Vodafone, that stock with some relief is settling about 10% higher on pre-open. And as a result of which, the ancillary beneficiary of that is Indus Towers, which is up around 4% as well. So those are ones that we'll keep an eye out on. We have the opening bell.
Okay, so about 90 points higher is how we've kicked things off. 24,300 is on the radar. But let's see if it will hold or not. The Bank Nifty is very quiet. Mid-cap index up about, again, 0.3%. It's slipping. It's a bit of a slippery start, one would have to say. Anyway, let's quickly count the gainers for what we have right now. It is telecom, like Mangalam pointed out. So even on the Nifty, Bharti Airtel is your top winner, 1.5% up, because the companies will not have to now provide bank guarantees for spectrum that they acquired before 2022. Aside of that, Lever is reacting quite well, 1% higher. Obviously, the ice cream business is a small part of their business, but nonetheless, it is some value unlocking that's coming through. There's ITC that's up and about. BEL is reacting positively, perhaps, to the JP Morgan report that Nimesh just was talking about. ICICI Bank, TCS, these are some of the early stocks which are managing some traction. Reliance is up about 0.3% as well. So now we've settled to a more quiet, more somber 60-point kind of a gain. Let's see what's not working. Some of the economy-facing / PSU names are cooling off after yesterday's big run. So ONGC, NTPC, L&T, Power Grid, these stocks are taking a bit of a breather. SBI is also flat for the time being. Adani Ports is lower. Remember, a lot of the rating agencies, including Fitch, have been raising concerns on some of the Adani Group companies, given the developments in the US. That's weighing on some of the stocks, at least as of now. So not bad. It opened up with a big pop, but now it's settled to a gain of about 65 to 70 points on the Nifty.
Not bad at all. In fact, we're getting some support from the IT pack, so that's good news, because yesterday it was slightly shy of supporting the index in an otherwise good day. So Infosys is now moved to the top of the table when it comes to Nifty gainers. ICICI Bank doing extremely well as well. Infosys was one of the lone, heavyweights on the index, which underperformed in yesterday's trading session. We spoke about, the telecom stocks, but just keep an eye out on the FMCG stocks as well. Colgate has opened about 1% higher. ITC is about, 0.75% higher as well. So a lot of these FMCG staples doing extremely well. In the broader markets, the stock that, Vamakshi spoke about, BHEL and Hitachi Energy, joint venture has gotten a letter of intent for a Khavda-Nagpur HVDC project coming in from Power Grid. Look at Hitachi Energy, that's up 6% straight off the bat. Transformers and rectifiers, another stock which is doing extremely well. So a bunch of these infra names continue to do well. Zomato, it was likely to open lower largely because of the big discount to its yesterday's price that was on offer when it came to the indicative price of the QIP, but that seems to have been bought into, and the stock is now about 1% higher, telling you that there is strong demand for the paper that Zomato is giving. And it's not just Zomato, Swiggy too is up around 2.5% on the back of that positive note that has come in from UBS. On the stocks which are seeing some bit of profit taking, we have the likes of Raymond, which after a big move in yesterday's trading session is seeing some bit of profit taking. We are seeing Imami also, after a decent move that we've seen yesterday, seeing some bit of profit taking. Gillette as well was up in double digits yesterday, has opened mildly in the red. Dips, whether they get bought into or not, is something we'll watch out for. And in the financials, we do have, REC, which is slightly in the red, Canfin Home slightly in the red, AU Small Finance Bank is the other one that I'm looking at. But by and large, the mid caps are doing a lot better than the big caps. We have nearly 2 stocks advancing for 1 stock which is declining, with the mid cap index itself up around 0.2%.
Absolutely. And by the way, Triveni Turbine, remember the stock? Amnish was talking about it. It was one of his picks in the capex space. That stock's opened up really well, 4.5% up on Triveni Turbine. What else? Hyundai Motors is finding some buyers this morning, 2.5% up on Hyundai Motors. The stars, of course, continue to be the telecom stocks, thanks to the relief on the bank guarantees, as well as Hitachi. Hitachi is still up about 7%. HVDC, Renewable Energy Connect, between 2 states, Gujarat and Maharashtra.
I'm just personally very excited to know what M&M does today, because the stock was doing extremely well yesterday, and then you have the EV launch that comes by today. Yeah. It's slated for, the display to public and the pricing, etc. All of that will come by this evening itself. The stock has done extremely well this month. It's up around 12%. This year, it's, nearly doubled shareholders' value. But ahead of that launch of a new category and prices, etc., we've seen those ads. The car looks fairly snazzy. Does the actual product live up to its hype, or something? Is something we'll watch out for.
With the kind of trust that M&M has built as a brand in the SUV space, can it replicate that and build on that in the EV space? I think that's the biggest question. And a lot of people are waiting to see if the company can transition into being a premium EV player now. Premium SUV/EV player now. So let's see. Interesting one on the radar for sure. Let's take the conversation forward. Market settled with a gain of about 80 points, so not a bad opening at all. We have Ashwini Agarwal, founder and partner at Demeter Advisors, with us. Ashwini, great to have you on as always. We're living in very, very interesting times. We wake up to new tariff announcements, new geopolitical news and announcements, and so much more, right? But what do you think? I mean, it's been about 2 months of cooling off. November is now drawing to a close, October, November. Sobering months for the Indian market. What lies ahead? How do you think we'll end the year?
If you think about it, what's happened over the last couple of months, it's been, multiple things that have come together. On the fundamental front, the consumer demand environment has been weak, which has led to a significant earnings miss in aggregate for corporate India. In addition to that, there has been a significant supply of paper, both from the IPO markets as well as from FII. So, purely from a demand supply perspective, the demand from the mutual funds, while it has been robust, has been struggling to cope with the supply. So how do I see things going forward? I mean, I think, the narrative right now in the short run appears to be that US remains one of the most interesting places to invest. And that's obviously taking the shine of, markets like India in the short run. I think in the longer run, the economy and the earnings will rebound. My sense is first half was a little bit unusual because, we had a lot of slowdown in government spending. You had truant weather, excessive heat during the summer, followed by excessive rain, and a wedding season getting shifted to the second half of this financial year for some Hindu calendar reasons. I'm not very clear how that works, but that is how I'm told it is. And I see some demand rebound happening in H2, but I think because the starting point of the valuations were high and the earnings disappointment has set in, the market will wait to see an earnings recovery before it takes a big leap upward. We found some sort of support at about 10% below the highs for Nifty, for example. But I think, this is similar to what we saw in September 21 to March 23 period, or more specifically September 21 to June 22 period, where we may hang around here with plus minus 5% on the Nifty for some time.
All right, earnings looking to rebound should come as a bit of a relief, but what comes as a bigger relief, and our ticker team will just speak about that. Moments ago we did get that flash that the RBI Governor Shaktikanta Das has been admitted to Chennai's Apollo Hospital. Now we have the RBI official statement in saying that he did experience some acidity and was admitted to the hospital for observation. He's doing absolutely fine and will be discharged in the next 2 to 3 hours. So that is some relief coming in on, there were fears when the news did come by. So this is fairly good news, and we wish the RBI governor very, very good health as well. But let's come back to the market. As we were speaking, the Nifty's piled on some of the gains. It was up around 70 points. Now it's about 100 points on the up move, with decent traction seen on names like BEL and further pickup in the IT pack as well. LTTS was one of, Mitesh's picks on the long side today, and that stock too is continuing to do well. LTI, Mindtree, Tech Mahindra, Infosys, all of them also picking some pace. Ashwini, I remember you saying that some sort of correction was expected. The correction has come by. You did like a couple of tobacco names in the past as well. We've been talking about the FMCG staple space. How are you positioned on the market right now with this decline? Did you add on to some of the names?
So Mangalam, yes, I did put some cash to work, but my approach has been very bottom up, and that's how at least I'm looking at things. So I'm looking for companies where I see high visibility of earnings over the next 2 to 3 years and reasonable entry point on valuations. By reasonable, it's very subjective, so it depends on the sector and the industry. But I'm definitely looking for earnings growth. So I continue to find earnings growth on a bottom-up basis in pharmaceuticals and some auto components and some chemical companies, in financial services selectively. Though I think, the MFI space will continue to provide headwinds, to the overall banking and financial services space. So we'll see how that pans out. So, those are some of the areas that I'm looking at. Some textiles exporters, for example, are talking about very robust order book indications from their customers in the US. So exporters as a basket, especially US-oriented exporters, should do very well. So, those are some of the areas where one can look for ideas, and that's what I've been doing.
So exporters as a basket, could you get a little more specific when it comes to, the categories here? Because you did speak about pharmaceutical, you spoke about textile, but there are a lot of infra names as well which are looking to export to the US. Are you in the camp of any of those?
Yeah, you could. I mean, there are companies. So I don't want to take any individual names for obvious reasons, but there are companies that are exporting. And if exports is a substantial part of the revenue, then you will see tailwinds. And there again, last couple of quarters, you saw significant delays to shipping because of the Red Sea crisis and higher shipping rates. And some of that has started to normalize. And the working capital cycle has also normalized. So that benefit will also feed through. So yes, I would say if the exports is a significant number or as a percentage of the total revenue, then it makes sense. But in infra, the only caveat I would have is that most infra companies in India have a significant government exposure, and valuations are not easy to digest. So, for an investor like me, those don't work. But yeah, that's an area you could look at if you can address the concerns around valuations, exposure to government, etc.
Speaking of exposure to government, what about government itself? I mean, the companies that are run by it. There's a debate out there, Ashwini, whether some PSU stocks, maybe defense or railways, whether they deserve a bit of a relook now that prices have cooled off 25 to 50%. In some cases. JP Morgan today put out a note, for instance. They're rallying behind stocks like, Hindustan Aeronautics, BEL, and a bunch of others. What's your view?
Okay, so great question, Survi. Thank you for giving me that cue. What I really like in the PSU space are the PSU banks. I think the PSU banks will do reasonably well over the next couple of years at least, because they will continue to experience very muted credit costs because they've been late to the cycle of the cleaning up. So the recovery cycle for them will continue to feed through to lower credit costs over the next couple of years. Also, what you're seeing with them is that as government expenditure increases and some of the new investments in India come through, you'll probably see an improvement in the loan growth as well. And on the deposits front, they're very well placed, and valuations are still quite reasonable. So that's one space that I like. And you're right, in some cases, in the defense or electronics manufacturing areas, stock prices have taken a huge beating, and now they might be approaching, some sensible valuations. I haven't, dabbled in that area yet, but yes, it does look interesting. You're right.
All right. What about, the non-PSU infra names? The street believes that post Maharashtra elections, there would be a fresh impetus to capex once again. We've seen a couple of these decisions that came by overnight. The cabinet has approved close to around 8,000 crore worth projects in the railway space itself. So what do you think of the rail stocks and some of the other infra names?
So, Mangalam, like I mentioned, I'm very sensitive to entry price and entry valuations. So if the valuations at the upfront are expensive, then I don't want to go in there, because then what happens is you need everything to go right for you to make money, because otherwise you have an earnings miss and a PE derating, and it's a very powerful combination. Unfortunately, for a lot of the infrastructure names in the area that you mentioned, in railways in particular, starting point valuations continue to be quite expensive for my taste. So that's one challenge. The other one is that while that problem has historically not been there for rail, domestic infrastructure companies have significant exposure to government, and government payments and government disputes, in the past have derailed many such stocks. So, I continue to be a little bit wary. Yes, there might be opportunities out there. I'm not denying it. But, the way I think about it is that there are other areas where I can find better risk-adjusted returns. So why bother?
Ashwini, we haven't touched upon the mind and the might of the consumer at all so far. And I think this remains one of the most interesting aspects in the market today, right? Whether there is a slowdown, not slowdown. Is rural better? Is metro, urban consumption slowing down? And then the channels themselves. There's just too much going on. Yes. Do you like anything over here, whether the platform companies or the traditional retailers or the guys who are making all the products, FMCG? What are your thoughts on consumption, and what part of it would you play, if at all?
Okay, great question again. So I think, the debate is really whether the slowdown is structural or cyclical. My view at this point in time is that it is a little bit of cyclical more than structural. And therefore, I'm hoping to see some recovery or rebound in the second half. Now, whether it is rear-ended or it is front-ended, I don't know. Coming to which areas that I'm looking at, I'm typically focusing on the top end of the consumption pyramid. I think that's where the sweet spot is, and that continues to be where I tend to focus on. So, there are several players out there. There are people who retail, expensive products, whether it is watches or it is saris or it is cars or so on and so forth. So, some of those things could be interesting if you can convince yourself that there is a moat around the business. So, and that's a very key thing, because like you mentioned, there's a lot of disruption taking place in retail. And if your business, if you're looking at a business that is prone to a disruption or is or can or may not exist 5 years down the line, then you have to be careful about what you pay. So that's one area that I'm looking at. The other one I would talk about is real estate. In my mind, real estate cycles tend to be very long ones, typically lasting between 5 to 8 years on the upside and 10 years on the downside. That's at least been the experience for the last 3 decades. And we are relatively early into the real estate cycle. So I think, real estate stocks may continue to do well. Yes, they've had a massive run, and, we are seeing some slowdown of demand, but I don't expect that real estate will let up anytime soon. That's my personal view.
Ashwini, thank you very much for joining in. Just yesterday, we had one guest giving us this data point that in 2000, 87% of the household money was spent on essentials. That number came down to 79% in 2022, and it's expected to further decline to 61% by 2030, just basically indicating that discretionary spending has picked up in a big way. But thank you very much for joining in. Now let's turn our attention to the auto financiers, which have been under stress for most of For most of them, in fact, the AUM growth, disbursements, net interest margins have witnessed a decline. So is the pain cropping up, and till when will the slowdown last for auto financiers? To discuss this and the way forward, Umesh Revankar, Executive Vice Chairman at Shriram Finance, is with us on the show now. Thank you very much, sir, for joining in. First, if you could talk about, have you seen a slowdown at your end, and what is the outlook now for the second half of the year in terms of AUMs, disbursements and growth?
Yeah, good morning. We have not really seen any slowdown in the credit demand. The credit demand has been steady for us, and I feel even the festive demand was quite good across the urban and rural. So two-wheeler or tractor or even passenger car demand has been reasonably good. So we feel that we'll continue with what we have done in the first half of the year, that is around 17 to 18% growth. Minimum of that is possible because the second half looks a little more better in the rural, because rural there has been some buoyancy with the crop being output being higher, agri output being higher, and MSP definitely has helped.
Right. You know, we've spoken to a bunch of credit rating companies, etc. as well, and a lot of the other auto financiers who did say that there was some pressure on disbursements and they did see a decline in their AUM growth rate. But maybe that has to do a lot with fresh cars as against used CVs. So I just wanted to understand a couple of things from you. How have the prices in used CVs trended over the last couple of months? How are they expected to move going forward? Because a large part of your AUM growth has also come in from the price increase as against, just volumes.
Yeah, the price increase over the last year, if you see, it has been quite good. See, like over the 3 years, if you look at prices on an average has increased by 30-35%. That has really helped us in our volume growth. But at the same time, the further increase in price in last 6 months has not happened. That means the inflation and the technology upgradation that actually increase the price, it will no more help going forward in the next year. Next year, the numbers have to go up. So I believe that there will be good demand as the government spend increases. Because right now, in the last 6 months, one thing that has been a little muted is the government spent on the infrastructure. Once that happens, there will be a much bigger movement of goods.
So the 17 to 18% growth that you foresee in the second half, how much of that would be price-led? How much of that would be volume-led?
It will be mostly price-led. This advantage will be there for this full year for us.
Okay. So Mr. Revankar, we've discussed growth. I want to spend a couple of minutes now understanding what your view is on the whole worry surrounding potential asset quality issues building up. Right now, it's an MFI. We've seen what MFIN is doing. They're talking about, making lending norms more prudent, and it's great to hear that. They're looking at limiting the number of lenders a borrower can have, or the number of loans one can have. Now, while, of course, CV is a big part for you, you do have exposure to the MSME space, to personal loans. Incrementally, do you see any sign of distress, any delay in payments building up? So far, till the second quarter, your asset quality has been absolutely pristine.
I don't see any kind of deterioration in the MSME lending. It has been doing well. And all our MSME lending, most of them are against the collateral. So we don't really see that kind of a situation. But personal loan, our portfolio is very small. We have not seen any kind of deterioration there because we lend to our existing customer only who have repaid. That means I don't have the customer has a track record with us, and they're not new to us. So to that extent, we are safeguarded on personal loan. But overall, if you see, wherever there is an inflationary tendency, the personal loan over the period get deteriorated because people borrow more for consumption, and that will get into a challenge if further borrowing becomes a challenge. So that's a natural, wherever there is an inflationary tendency, that personal consumption loan can get into problem if the further getting loan becomes difficult. So that is a situation probably there in certain markets, but not exactly in all market. In few geographical location only we see this tendency.
No, the worry, sir, was that, if someone, borrowers are spread across different institutions, right? And even if there's an MFI borrower or a rural borrower who's taken multiple loans, maybe personal loans, maybe even an MFI loan, and also a CV loan from you for a two-wheeler, etc., and whether, it's a domino chain, whether it starts impacting the system across the board. So you're saying no such issues. So just some guidance on credit costs, on asset quality. I mean, as of the second quarter, you were at about 5.32 gross NPA. How do you expect to close the year, credit costs and asset quality?
And let me make it very clear that people who take loan from the microfinance are never the customer with us, because person who takes loan on asset, buying a two-wheeler or a vehicle loan, he will never have additional loan from a microfinance company. That's not the case, because they are two different set of customers. However, I should say we are confident of improving on our credit cost. Already our credit cost is around 1.87, and we are quite confident that we'll be able to maintain it below 2 throughout the year.
Okay. So you are, hopeful to maintain your credit costs below that. You've been also slowing down, sir, on gold loans. How do you, and even personal loans, how do you expect the growth rate for gold loans and personal loans to pan out from here?
Now, we are very confident that gold loan will grow in our book, because we are making more branches to do the gold loan, because we need to build a branch with some kind of a safety standards for making the gold loan. So we are actually adding more number of branches to gold loan. So therefore, we are confident of increasing our gold loan portfolio. Same may not be the case with the personal loan, because since we lend to only our existing customer, it may not really grow. Last year it grew because it was from a low base, but this year onwards it may not really grow in a big way.
Right. So is there any guidance that you can give on gold loans at least? You're saying it's going to grow. Are we looking at low single digits, high single digits?
No, it will be definitely double-digit growth.
Double-digit growth.
All right, double-digit growth. Just a two-part question. One, since you lend only to your existing customers itself, I wonder if you've done any analysis on how the indebtedness of your customers has changed over the last couple of quarters. Are they more leveraged now versus earlier, or the level is the same? Just that is one. And secondly, going forward, what are the kind of margins that you would make on the loans that you would give? Because you've been doing well as against everyone else in the industry. What is it that you do differently?
See, basically, when we look at credit bureau, credit bureau reporting, we do see some of our customers having gold loan outside beyond Shira. Otherwise, we don't see them borrowing from any microfinance company. Definitely not the vehicle customer, whether it's a two-wheeler or the commercial vehicle owners. So the indebtedness is limited to gold loan, which is a short period loan, and which definitely get repaid within 3 months to 6 months. And the multiple loans, which we try to factor in the first-time borrower, that probably would have borrowed from the informal sector, which we may not get reported, but that we try to do with a credit check by visiting their home and see whether he has borrowed from any other source. And normally we make it doubly sure that he doesn't have any other loan outside, and then we lend. So generally, we are very clear that customer is not has not taken any other loan before taking a loan from us.
So finally, okay, so your point on asset quality, checking the sort of, the health of the borrower, all very well taken. Finally, two big numbers, FY25, AUM growth expectations and margins, net interest margins. Where do you think you'll hold them?
The growth would be around 17-18% AUM growth. And margin, we would be able to retain at a particular level. We were trying to be at the present level, which is around 8.79. And we should be able to hold it for the full financial year.
All right, take that point. Thank you so much for joining in and giving us the outlook on the year going ahead. That is Shriram Finance, not as perturbed as some of its other peers in the vehicle financing and overall, business lending space itself. And that explains why, the stock has also moved higher as the management sees no near-term concerns, maintained their AUM growth guidance as well as their credit cost improvement, along with NIMs being at around that 8.8% mark itself. The stock, after being among the top Nifty gainers yesterday, has now moved higher, up around 1.5% post the management commentary as well. Let's move on and let's talk about Krishna Institute of Medical Sciences now. The stock has seen a good year with a near 50% surge in their stock price, but the management plans to add about 1,800 beds in the next 2 years. How's the business momentum shaping up? What's the outlook for the second half? R. Bhaskar Rao, who's Chairman and Managing Director at KIMS, joins us now. Thanks a lot, Mr. Bhaskar Rao, for joining in. The second quarter, we did see occupancy come down as a proportion, but that's largely because the base increased as well. The third quarter, seasonally weak for the hospital industry. In light of that, what kind of occupancies should we expect in Q3 and Q4? And what is the expected, average revenue per occupied bed here?
So actually, whatever we have done in the quarter two, even though quarter three is a weak, but we are still expecting the same growth because of the new facilities that we are adding. And we are confident the ARPOPs also will definitely better than the existing because of the highly complicated cases which we are taking in a quaternary care. Definitely that will be able to help. Even though as you mentioned, the occupancy is not a number that ALOS, if operational efficiency improves, the average length of stay will come down. That will be able to improve the available of beds for more patients.
So would you like to put some numbers, sir, on the occupancy? The occupancy rate as of Q2 was 49.7. What could it average in the second half of the year, Q3 and Q4? And even the average revenue per occupied bed, which has been on an uptrend, currently stands at 38,200, 250, 260 thereabout. Can we hit 40,000 very soon?
So the important thing here is the occupancy will definitely, if you're able to take the existing beds, it may increase a little bit. But if you take the consolidated where we have put this QNRI and Nasik is operationalized, and if you take on the whole, it may be same or maybe a little less. So as on today, existing beds, definitely there will be an improvement, both the quarters in the moving forward. That's what we are expecting, even though it is a lean period. And the average revenue per operating bed also will increase to 30, maybe 40 we can able to touch.
All right. Some of the things that keep you stronger than some of the other players is your oncology and renal business, which is the specialization. So as a proportion of your overall sales, how much will that continue to grow at going forward in the next couple of quarters and as new facilities come on board?
See, basically what happened from day one when we started from the inception, we have been concentrating on 6 specialties. That is the cardiac sciences and the renal sciences, gastro sciences and orthopedics and neurosciences. Then initially the oncology was not there. Out of all these 5 things, and then what happened, all those things are equally growing. Whatever is the percentage that was going, nearly cardiac sciences were around 20%, neuro was around 10%, gastro was around 5-6%, and the renal was also 80%. Later on, when the diseases is increasing and the aging is increasing, we added oncology. As of now, we have in 2 units only oncology is running. There is in another 14 units we are going to add the oncology facilities. And the beginning, it was not, the women and child was not there. That also added about 3-4 years back. Women and child is also in multi-specialties is picking up. The growth from women and child and oncology will be much more than when compared to the other.
But in spite of growing these two things, the dilution will not come into the other specialties. They also keep growing in the same pace. These are all the 5-7 branches where we are being very, very confident that these will continuously to grow. Wherever we go and we are opening up the new branches in other areas, and definitely we are focusing all these areas.
Just a word on the ARPOBs, you said they will touch 40,000 by when?
Maybe in the couple of quarters. See, this is not a predicted one. It all depends upon how the complicated cases that comes and moving forward. Now we are being more caring of the quaternary care. I am very confident because the oncology is going to take up in a big way in the next 2-3 quarters. And women and child also we are adding in few branches that also will take up. That's why the growth will come from there. The ARPOBs will increase.
Sir, you are commencing 2 hospitals in Kerala in the current quarter, and then in Q4 you'll operationalize beds in Thane and the Bengaluru hospital. So there will be an increase in the overhead costs. Will you be able to maintain margins at 27 to 28%?
See, as of now, all of them have been boarded, most of them, and in spite maybe a little more we can able to add. I think we should able to maintain the margins.
Just a final question before we let you go, sir, and this is not on KIMS, but this is on another holding that you have, which is on the bourses. It's called Somdutt Finance Corporation, where you hold about 64% stake. The company, announced a rights issue with their second quarter results as well. I wanted your thoughts on what the plan for this business is going ahead. And this is at a time when a lot of these NBFCs or microfinance institutions are facing some sort of stress. So do you have an outlook on that?
See, basically the Somdutt Finance, what we have been, even before also we have been commented that one of my relative wants to start because he basically needs funding where to be able to help them. But that I may not be a very totally involved in that, and we have been put the right professionals there. They will grow on its own slowly, and also sometimes it may also if there is a requirement for the subsidiaries required funding, that also some bill discounting and other things may also help, but there is nothing to do with me full time I can able to spend on that.
All right,
it's just like an investment.
All right, we take
I know it is according to you, it is a stressed sector, but still the young people will be able to grow slowly. The stress will come. I always believe if you're able to understand the sector better and if you are not able to overstretch and you understand what is the NPAs and other things, as I was seeing on the before also. Right. And I don't think any business will have any problems. When most of the times we cannot able to say a sector is good, provided if you're able to do not be too greedy or should not expand too fast. That is the way we will be. Yeah.
Take that point. Thank you so much, sir, for giving us an outlook on your own business and your personal investment, which happens to be on the listed space itself. We wish you good luck for the next couple of quarters and also the expansion that you've embarked upon with a higher share of revenue coming in from women and child going forward. We take a short break. On the other side, we do have Krishnamurthy Subramaniam of Afcon's Infrastructure joining in to discuss infra projects, whether they will see any pickup post Maharashtra elections and their second quarter numbers.
Well, death, taxes and changes are the only constants in life, but the other constant in life is the IPL. And while 4,000 miles away in Perth, it was raining runs and wickets, it was raining crores in Jeddah in Saudi Arabia, where the IPL auction is currently underway. The other big constant in the IPL, though, is that the most expensive player tag keeps shifting and raising the bar higher every season. This time around, it was Rishabh Pant who was bought by the Lucknow Super Giants for a whopping 27 crores. Shreyas Iyer by the Punjab Kings for 26.75. I'll talk about the other Iyer in this list in just a bit, but Punjab Kings also splurged 18 crore for Yuzvendra Chahal, the Indian leg spinner. A lot of talk about foreign players, the big moolah they get, but not playing the full season. This time around was no different. Josh Butler going for 15.7 crore to the Gujarat Titans, and Trent Bolt and Jofra Archer for 12.5 crores each.
Welcome back. Well, we are putting the spotlight on the infrastructure space all over again. Now, the BJP-led Mahayuti win in Maharashtra is expected to provide a big boost, a fillip to infrastructure in the state itself. And of course, perhaps it will have a sway on the way policy evolves and more orders are given out even at the center level. So what would this mean for a lot of the companies in the sector? How is the second half looking like? To address all of these questions and issues, we have with us Krishnamurthy Subramanian, Executive Chairman and Executive Vice Chairman, and Ramesh Jha, CFO at Afcons Infrastructure. Gentlemen, great to have you on. Thank you so much for joining in. And there's so much to talk about in terms of your own business in particular and what Maharashtra really means, what this win means for the hopes of infrastructure in the state. So, Mr. Subramaniam, if I could start with you, your total order book, including the L1, I think is running into over 40,000 crores, 43, 44, if I remember correctly. What is your exposure, the exposure to Maharashtra as a percentage of the order book?
Maharashtra would be around 20,000 crores in this.
Okay. So when you talk about infrastructure-related policies, what would your ask be? What would you like to see here? And which are the major projects, if any, that perhaps went into a bit of a cold storage because the state went into election mode? How's the pipeline looking like in terms of big projects in Maharashtra?
The pipeline is pretty good. There was a small lull because of the elections, but now there will be continuous award of contracts with Mahayuti going to be in place. So it's going to be a very comfortable situation.
And which are these major projects? If you could tell us a little bit, some more color on which are the marquee, Maharashtra projects that would interest perhaps you, that in general would be big projects for the state and the country, the upcoming ones.
We had a couple of water supply projects for Bombay Municipal Corporation and two major road projects from MSRDC. And a couple of, road and bridge projects for MMRDA. These are the marquee projects, and some more projects are expected to be bid subsequently. And that's how it's.
Jha, what would be the size of these projects that are upcoming in Maharashtra that you would be interested in? Could you put a number to that? And even the overall pipeline. Yeah, go ahead.
Sorry. Most of the projects we bid are 1,500 crores plus. That's the range in which we operate. So that's the size.
No, sir, in terms of okay, so each project is about 1,500, but on a consolidated basis, say in the second half of the year, what would be the overall size of projects that are coming up for bidding, which you are interested in Maharashtra and even on an overall basis?
See, up to September itself, including L1, 19,000 crores order booking has been done by Afcons. So another 5,000 crores we are targeting in the balance period. So here we are expected to do around 25,000 crores as against our guidance of 20,000 crores for the year.
Okay. Now, I think, let me come to Mr. Jha as well. Mr. Jha, I think the number that we were also trying to get at was from a total opportunity perspective, I mean, for Afcons, for all infrastructure companies. What is that big number, if you have a rough number, which could be the Maharashtra infrastructure opportunity, projects that are going to come up for bidding, say, over the next 12 to 18 months. So would you have a rough estimate?
In Maharashtra, last 1 year or so, they have already done bidding in the range of, say, 60 to 70,000 crores. And that's where our executive vice chairman was talking about that we have already backed close to, say, 8 to 10,000 crores, where we have already received the order or we are L1. And some of the projects, the bids were not opened. So going forward, we expect those bids to get opened. And the state government is quite bullish on building the infrastructure. So, and with a stable government, I think we don't have any number per se from the Maharashtra because they have already awarded sizable amount. But if we talk about a medium term, the company is looking at, we have got a total addressable market of, say, around 3.2 lakh crores. including Maharashtra, India, and overseas market where we are interested. So that's a very sizable market we are looking at. And if we talk about Indian market per se, in India, the central government and state governments put together, they have talked about some 11 lakh crore project. And the markets where we are interested, like neighboring countries, there are a lot of projects upcoming.
Right.
In Middle Eastern market, where we are interested in Saudi Arabia and some of the select projects, that market is also going to grow at a much larger pace than some of the other markets. We are also looking at projects in Africa. We are looking at projects in Eastern European countries. So those are the markets where we are interested, and we are looking at a very, very sizable market.
Right. Just to further that point, you said typically there are 70 to 80,000 crore worth bids that annually take place in Maharashtra. Of that, how much have you been winning in terms of market share, if you could give us a sense?
No, you want to answer?
So, see, what we have already received, we have received close to 8,000 to 9,000 crores worth of order in Maharashtra already we have received. And I don't think, on an annual basis, the state government is going to incur 60 to 70,000 crore of project. So these are long gestation projects, and they would also like to see how the execution and projects are progressing. And then they will look at some new projects upcoming. So we have already got of that 70,000 crores of they have awarded, we have already received in the range of 8,000 to 10,000 crores.
Okay, let's talk about some company-specific details as well. The opportunity size is massive, like you mentioned, right? India and some of the overseas markets put together. But I think the street wants to see more execution as well. You've already guided for FY25 to be slightly sluggish. So just run us through the pace of execution as well. Can we expect at least H2 to be a little better than H1? Or will this be a completely flat year in terms of revenue? And then what do we expect in FY26 and onwards?
This year is expected to be a flat year. There could be a marginal improvement in FY25. FY26, we expect a 20 to 25% growth with a probability towards the higher end of the spectrum.
Right. Okay, so historical growth rate has been about 15% for you, but you're saying in FY26, growth would be higher at 20-25%. And what about margins in H2 and next year? Can you do margins of 15% plus?
We have been giving a guidance of 11% plus EBITDA. And that's
Sorry, 11%.
been our guidance. Yeah, although we have achieved more, but our guidance is 11% plus.
So just a word on metro, because you do a lot of metro work, right? Underground as well as elevated. And I did notice a lot of that has happened for the Delhi metro. I don't know how active you've been with the Mumbai metro, and whether the metro in the city and in other parts of the state, whether that is going to be a big opportunity for you. Just kind of give us some color on the breakup as well. I remember last time when we spoke, you mentioned, for instance, marine and hydro, underwater, these are the higher margin contracts for you. So as you look at the bidding intensity going forward, between marine, metro, roads, what are the kind of projects that you will chase more aggressively?
Metro projects will continue to be a priority for us, particularly underground metro, where the margins are expected to be better and where the technology plays a key component. And Maharashtra, we are only working on few metro projects because of our overexposure to metro projects in other parts of the country. But in future, whenever the other phases of metro comes in Maharashtra, we would very actively participate in that.
Right. Final question then on your net working capital days. You said that you sustain between 60 to 70 days. They were 63 when we last spoke. And your domestic export ratio, which has historically been 70 to 30, this time around exports came down to 26. Where do both these numbers settle going forward?
See, usually the net working capital in the Q1 and Q2 remains at an elevated level. And these are numbers which needs to be looked at on annual basis only. So at the moment, these are still at the elevated level, despite the order mix undergoing change, domestic and overseas. But our project selection plays a very key role. So at the year end, the kind of guidance we have given will be landing in those ranges only on the net working capital side.
And Ramesh, just a final, some tentative guidance also on the order book. Right now, you are at, I think, around 34,000 crores. If I exclude the L1, how are you likely to end the year? And sir was talking about, more interest in metro projects. I don't know, is there anything coming up for bidding in Maharashtra metro?
So in Maharashtra, at the moment, we are not looking at any metro in the near term, but we'll have to see how it pans out. But as far as order book is concerned, you have rightly said September ending, we were around 34,152 crores. Subsequent to that period, we have backed a couple of projects, LOI has been received. With those orders, we are somewhere around 38,000 crore, to be very precise, 37,900 crores. And we are L1 at the moment in 7,400 crores. So we are somewhere around, if we include L1, we are somewhere around 45,000 crore. And as we expect, we will close the year with a confirmed order booking of somewhere around 40,000 crore, 42,000 crores.
To be executed over how many years? Is that a 2-year execution cycle, 3 years? It covers you for how long?
Normally, our book to build ratio varies from 2.5 to 3.5. So take an average of 3. So the existing orders would be lasting over a period of 3 years. Of course, there will be fresh orders in the subsequent years, which will be increasing the amount further.
All right, sir. Thank you. Thank you very much for joining in. Wish you all the very best. And thank you for laying out the picture for us over the next 18 months. Back to the market technicals. Flat, but with a positive bias now on the Nifty and the Sensex. Mitesh is back with us. Mitesh, your thoughts in the first hour and how would you approach trade? What would you do?
Yeah. So I think there was some pullback, but I think, as I said, this choppiness will continue. 24,350 is the pivot on this spot. And yesterday, the Nifty, had a high of around 24,351, and today also the high was 24,343. So 24,350 is an important level. Till then, I think it will do a range of 24,150, 350. I think try to buy it at lower levels and try to take profits around 24,320. That's the way we'll approach it. And on the stock side, I have a buy on granules with a stop just below levels of 574 for targets of 610. And City Union Bank, I think, it's given a good pullback and now is again looking up. So buy here with a stop at 174 for targets of 182.
Okay. Thank you very much for that. Get into a break. On the other side, Manisha Gupta will be joining in to talk about commodities. Stay tuned.
And to the Rajasthan Royals respectively. Uncapped the big money retentions, of course. I talked about the other Iyer in this list, and that is Venkatesh Iyer, who was retained by the Kolkata Knight Riders for 23.75 crore. Virat Kohli for the RCB for 21, and Arshdeep Singh, the fast bowler, retained by the Punjab Kings for 18 crore. Uncapped players have drawn a lot of attention because of a certain Mahendra Singh Dhoni, but the actual uncapped players who have not played for India received a fair share of bids as well. Rasikdar Dar Salam, the fast bowler from J&K, was bought by RCB for 6 crore. Shashank Singh for the Punjab Kings for 5.5, and Naman Dheer by the Mumbai Indians for 5.25 crores. So, while the Border Gavaskar Trophy is underway in Perth, it is raining crores in Jeddah, and the focus is on the IPL as well.
Welcome back. Well, the equity markets have been holding up. Let's figure out what's happening with the commodities. We've got Manisha Gupta joining in. Manisha, hi again. You were earlier telling us that there's, in general, a bit of a cool-off happening. What's catching your attention right now?
Well, I'm looking at the crude oil prices because $2 shaved off overnight, and we're looking at some resistance, some buying on the lower side at this point in time. You know, it was 3% of decline on Monday, and this is after 5% of gain in the previous week. It is as volatile as it can get. The strength in US dollar index is yet another thing that's weighing onto the markets. We are back above 107 onto that one. Well, the street is looking at Trump planning to raise tariffs by additional 10% on Chinese goods, 20 to 25% on goods from Mexico and Canada as well. That would mean inflation. That would also mean higher prices. But what would it do to demand is something that the streets really seems to be analyzing at this point in time. Also, reports of Israel and Hezbollah ceasefire agreement have taken the premium off the prices. Markets, though, are keeping an eye on the escalation of war between Ukraine and Russia. Apart from that, Iran also has announced plans to expand nuclear fuel production, and this could bring more sanctions from US on Iran. So that's also a developing story there. The other thing is really about OPEC and allies, which have a meeting on 1st of December. This meeting now has been turned online. They wouldn't be going to Vienna in person there. And the fact is that you could be looking at production increase being postponed yet again in the month of January. This could go on for Feb and March as well. This is yet another thing that's taken some prices off there. Well, apart from that, the Trump transition team could approve export permits for new LNG projects, increase oil drilling. We have seen issues on offshore and onshore because of that. So if that starts to come in as well, that would mean more oil supplies from US. Even at this point in time, at 13 million barrels per day, the US crude production is near record highs. The UBS, in the meanwhile, says that the Brent crude prices will continue to trade within this range. $75 per barrel is an average that they see for the rest of 2024. For the markets, it's going to be a truncated week. Remember, Thursday is a holiday for US. Friday closes early. So most of the action is expected today and tomorrow. And within that as well, it continues to be quite volatile is the expectation.
All right, we take that point, Manisha. The good part is that the OPEC meeting, which usually happens in Vienna, now happens online. So you won't feel that bad not being in Vienna and reporting from the studio itself. But for the market, we've given up some of the gains. So you have the Nifty just about holding in the green. The decliners have mainly been HDFC Bank. So that's the one that, stands out in terms of a downtick. And a lot of these two-wheelers. So the top losers on the index are Bajaj Auto at the low point. We have Eicher Motors, which is at the low point. We also have M&M and Maruti Suzuki. So it's more auto-led on the downside that we're looking at. And a bunch of these pharmaceutical names as well, Ipca and Lupin at the low point. But a bunch of stocks which are doing well belong to the defense space. And Nimesh alerted about those stocks earlier in his standout brokerage report. Let's revisit them. Nimesh, you pointed this out, and the stocks are actually moving out.
Well, yeah, so now all the defense names are buzzing in trade today, largely on the back of a big report from JP Morgan. They've initiated coverage on few names. So they have a buy rating on BEL with a target price of 340. They've initiated a buy on Hindustan Aeronautics as well with a target price of 51.35. And a neutral rating on Mazgaon Dock with a target price there of 42 to 48. Now, for the sector, they believe that the sector represents a very long runway of structural as well as value accretive growth, largely on the back of few reasons. First being increasing capex. They foresee $150 billion of capex over the next 5 years versus $85 billion in the previous 5 years. That's a big trigger. Second being the increasing exports. They see a 46% CAGR over the next 7 years as far as export opportunity is concerned for the Indian companies. And third, a big focus on the domestic manufacturing, high ROCs, as well as strong cash flows. Now, all these stocks have corrected. So after the correction, JP Morgan believes it's a good entry point to get into these incumbents, largely because they provide a 15 to 17% EPS CAGR, as well as an ROE between 23 to 33%. So stocks have corrected, so the good entry point as per JP Morgan, and hence initiating buy on BEL as well as in HAL.
Okay, all right, got that. Nimesh, thanks very much. Those stocks indeed reacting favorably to some of those comments coming in from JP Morgan. We have to take a quick break right now, but on the other side, it's going to be time for our special segment. It's the economy. Lata today is going to be speaking to a whole host of experts on whether a return of a stable government with a strong majority in Maharashtra will provide a capex boost to the state.
Well, death, taxes and changes are the only constants in life, but the other constant in life is the IPL. And while 4,000 miles away in Perth, it was raining runs and wickets, it was raining crores in Jeddah in Saudi Arabia, where the IPL auction is currently underway. The other big constant in the IPL, though, is that the most expensive player tag keeps shifting and raising the bar higher every season. This time around, it was Rishabh Pant, who was bought by the Lucknow Super Giants for a whopping 27 crores. Shreyas Iyer by the Punjab Kings for 26.75. I'll talk about the other Iyer in this list in just a bit, but Punjab Kings also splurged 18 crore for Yuzvendra Chahal, the Indian leg spinner. A lot of talk about foreign players, the big moolah they get, but not playing the full season. This time around was no different. Josh Butler going for 15.7 crore to the Gujarat Titans, and Trent Bolt and Jofra Archer for 12.5 crores each to the Mumbai Indians and to the Rajasthan Royals respectively. Uncapped the big money retentions, of course. I talked about the other Iyer in this list, and that is Venkatesh Iyer, who was retained by the Kolkata Knight Riders for 23.75 crore. Virat Kohli for the RCB for 21, and Arshdeep Singh, the fast bowler, retained by the Punjab Kings for 18 crore. Uncapped players have drawn a lot of attention because of a certain Mahendra Singh Dhoni, but the actual uncapped players who have not played for India received a fair share of bids as well. Rasikdar Dar Salam, the fast bowler from J&K, was bought by RCB for 6 crore. Shashank Singh for the Punjab Kings for 5.5, and Naman Dheer by the Mumbai Indians for 5.25 crores. So, while the Border Gavaskar Trophy is underway in Perth, it is raining crores in Jeddah, and the focus is on the IPL as well.
Welcome to It's the Economy. It's a special show, this one. Maharashtra, India's largest industrialized state, saw two sets of governments in the last term of the state assembly, first led by Uddhav Thackeray's Sena and then by Eknath Shinde's Sena. Did the state lose out on investments? Now, with the state having a government with a stable majority, as also the same party as the centre, will investments increase? Joining me to discuss the state of the state capex in India in general and in Maharashtra in particular are Mahesh Vyas, Managing Director and CEO at the CMI, Centre for Monitoring the Indian Economy, Rajshri Murkute, the Senior Director at Carriage Ratings, and Anil Yadav, Director Investor Relations and former Group CFO at IRB Infrastructure. Gentlemen and Rajshri, thank you very much indeed for joining us. Let me start with you, Mahesh. You're the high priest of any data on capital expansion. What was the performance of Maharashtra? Did it do better than other states? Did it do better than its own previous record in the last 5 years when we thought we had a kind of a mishmash government?
Well, Maharashtra has always been one of the better performers on the capex front. It has a lot of investments in manufacturing, and it competes with states like Tamil Nadu. But Maharashtra has been on top, and it hasn't lost that position much, really. There's competition from Gujarat and from Tamil Nadu, but Maharashtra has done well. It continues to do well. It is the top state in terms of attracting investments, in spite of the political upheavals, ups and downs. And by the same measure, one can say as investments in the country are not doing too good, Maharashtra takes a hit because of that as well.
Okay. Well, we were just playing the data from CMI on projects completed and projects I think new proposals and projects completed. New proposals, Maharashtra continues to go up with 21% of the share, but in projects completed, it has fallen year on year. FY23 was 21.69, according to CMI data, fallen about 10 percentage points to 13.69. So was completion hit, you think, or are these ups and downs common, Mahesh?
Yeah, that's not a big deal. You will see a lot of investments coming through in 24-25, in the first half of 24-25. So I think Maharashtra did very well in 21-22. It did come down a bit. One cannot expect the graph to keep on rising continuously in these projects because many of them are very clunky projects. You know, they are big projects. So one shouldn't read too much into the fall in 23-24. I see a little pickup in 24-25.
Okay, good. Let me get Mr. Anil Yadav, the man who's actually on the ground on this issue. Mr. Yadav, was there any delays in completion because of, it took time. The government was preoccupied with other things or perhaps did not have such a stable majority. Did you have any slowdown in decision making in the previous 2-3 years?
I think if you look at the last 3 to 5 years, largely the capex on the road sector was funded by the government, either through EPC or HAM project. And we are not bidding for the EPC and HAM. Accordingly, it will not be appropriate to comment on that side. We have few projects in Maharashtra, that is Mumbai, Pune, and plus 3 more BOT projects. But in terms of the traffic growth, it was, if you talk about last 6 or 8 months, it was muted because typically we have seen during the general election, the activity is on the lower side. And I think with a stable government and now clear mandate in Maharashtra, we should see a growth in the traffic in the coming quarters.
Okay. You know, you have a lot of projects in Maharashtra. Many of them are funded by NHAI, but some are funded by the state government. For instance, the Atal Bridge was funded, I believe, by the state government. It was not an NHAI project. Is there any difference in terms of speed of permissions when you handle a central government project and a state government project in Maharashtra?
The Atal project, Atal Setu project, which you are talking about, again, it was an EPC project, and we were not party. We predominantly bid for the BOT and the TOT projects.
Okay. Thanks for that. Rajshri, I know you all look at a large amount of data, but largely national capex like the CMI. What has been Maharashtra's record in the past 5 years, you think, compared to itself and compared to other states?
Thanks, Lata, for having me on the show. So, CAPEX trends are something that have been pretty central and a very important indicator for economic development. And we at Care Ratings also do track this data pretty closely. So in recent, just early this month, when we published, a report on the CAPEX, what has come to our notice is, like in the previous years, Maharashtra continues to remain at the, front end in terms of project announcements, basically in terms of investments announced in the state, as well as in terms of completions. More pronounced, if I have to pick up for first half this year, the first half of FY25, the number of projects which have been announced in state of Maharashtra that have increased to close to about 35% of the overall investment projects announced, amongst all the 20 major states. Vis-a-vis at FY24, this number would have been closer to about 20%. So to a large extent, it does indicate that, the investment rigor and the focus continues to remain strong in the state. Secondly, when we look at the other important metric, as you also mentioned some time back, in terms of the project completions. So there as well, we do notice that in H1 FY25, Maharashtra continues to remain leading the pack in terms of project completions, close to about 19% of the overall 20 major states that we have been tracking. This number was close to about 14% for FY24. So all in all, what we observe for Maharashtra is not just the manufacturing sector. Infra has been a fair bit of central focus for the state, and the recent big marquee projects which have been announced, that should bolster some additional activity in the state for some more time.
Okay. So in short, do I understand that Maharashtra has done well, and done well even in the last 6 months when supposedly it was a lame duck government? So that's a very big takeaway. Mr. Yadav, therefore, would you say that state governments don't play a very active role? I know you're not interested in EPC, but more generally in your experience, the decision-making happens because of the bureaucracy, and it's not really stalled too much by state governments. Would that be a fair assumption?
Yes, definitely. Typically the large portion of the infra project comes from the center, and that activity typically continues. And this time the central election and the gap between the central election and Maharashtra election was only 6 months. So there was a lower activity as far as central awarding agency is concerned. But in terms of the Maharashtra government, we have seen the award activity even pre-election as well, though those were the EPC project, but there were award from the Maharashtra government.
Okay. No, I mean, there is very clear data even from the government to show that the first half of the current year, there has been a year-on-year fall in capex, both at the center and at the state level. Mahesh, what is your assessment of the capex cycle itself? If you take everyone, central PSUs, private sector, as well as government-owned like NHAI kind of projects, where is the capex cycle? Has it picked up? How does it compare, say, to the previous 10 years, say from 2010 to 2019, pre-COVID?
Okay, we ain't doing very well. So we began the year, this fiscal year, with the elections, and therefore the new investment proposals slowed down understandably, and so did completions. Since a lot of the capex movement in the recent past has been government-driven, one could understand that elections and restrictions around that period leads to a slowdown or a substantial slowdown in the announcements and in the completions. But what is disappointing is that September quarter also turned out to be bad. It is quite low in terms of new investment proposals and completions both. The quarter was better than the June quarter, but still it was quite low compared to all other quarters since the pandemic. So the pandemic was, of course, a meltdown, and this second quarter was not very enthusiastic, was not very enthusing. And we pushed the envelope a little and see what's happening in October, and in October it turns out to be even worse. So the new investment proposals, for example, is less than $1 trillion, when the average is much higher, like 6 trillion, so 2 trillion in a month approximately, and we are seeing like it was 0.53, so maybe revised up to 0.7 later on. But new investment proposals are very low, and the completions also are largely delayed. So one could blame the central government elections first, then one can blame the Jammu and Kashmir and Haryana elections, then one can blame the Maharashtra and Jharkhand elections, but you can't keep blaming this, and investment should not be so captivated by the political cycles.
Okay. Yeah, so it's something more. It's probably animal spirits. It is possibly the capacity of the economy to absorb more investments. Maybe we have to worry about those things. A quick last word from you at CareEdge, Rajshri. Would you agree that the capex cycle is not as robust as we have seen in previous cycles?
Sure, Lata. In fact, that's where we also concur pretty closely in terms of the capex cycle. Both central as well as the state capex, both have kind of faltered from the previous achievements which we have seen in the past. Adding to the first quarter, which was largely a meltdown or a restriction which we noticed from the general elections. Q2 saw some green shoots in the central capex, but on an overall basis for H1, we've observed that there is a contraction in the central as well as state capex by about 15 to 10.5% on a YOY basis. So hopefully this now should kind of rest, but yes, we are still short in terms of our achievement.
I take your point. The CareEdge data very clearly says that both center and state capex is down about around 30%, 28% from year-ago levels. Sorry, I think 10.5% for the center from year-ago levels. And likewise, central public sector units are also contracted their capex by about 10.8%. Thank you very much, Mahesh, Rajshri and Mr. Yadav. The key takeaways are that the state government, neither the previous innings nor the expectations of a strong majority have got much to do with capex. Maharashtra continued to do well even in the previous system and is expected to continue to do well. But overall Indian capex has a spot of bother for our experts. We'll wrap up on Bazaar on that note. Stay tuned. Chartbusters is coming up.
Vodafone Idea up 17% after sources suggest that the Union Cabinet has approved a waiver of bank guarantees for telecom companies, which is expected to reduce the financial burden on a lot of the companies, including Vodafone Idea.
BHEL is up nearly 2%, while Hitachi Energy surges nearly 7% after their consortium secures an interstate power transmission project. Brokerage Nuvama also issues a bullish note on Hitachi Energy.
Power transmission firm GET&D is down 5% as promoter Grid Equipment says it will divest 8.38% stake via an offer for sale.
Defense stocks are buzzing after JP Morgan initiates coverage. The brokerage issues buy calls on Bharat Electronics and Hindustan Aeronautics, and a neutral rating for Mazagon Dock Shipbuilder says the recent correction in these stocks provides an attractive entry point.
MKR Pharma up nearly 8%. Kotak Securities turns bullish on the stock, upgrades the stock to a buy with a target price of nearly 1,700 rupees. You're watching us here on Chartbusters. I'm Mangla Malu. With me today is Vivek Iyer. The markets have given up their opening gains right now. The Nifty is sitting with a cut of almost 35 odd points, taking a cut of almost 120 points from the highs. What's good is that the mid-cap index is still outperforming. We still have more number of stocks advancing than the number of stocks which are declining. It's the Nifty Bank and the auto stocks which have taken the overall frontline index lower from the highs. So we'll keep an eye out on how they pan out from here on itself. Vivek, we're down, not out, after a 900-point rally that we've seen in the last two trading sessions.
900-point rally. And today morning, in the 7:30 show, you did mention about a couple of points that actually aided the rally. A few of those points, like the MSCI selling today, it won't be there. So that particular one-off trigger, not there today. Other than that, today pharma stocks are seeing quite a bit of a sell-off. A lot of pharma names under significant selling pressure today. And this is continuing for the last 2 to 3 trading sessions. Now, moving on, let's welcome Shilpa Rao of Prabhudas Leeladhar for a technical check on the market. Good morning. How are you doing? And first up, what is your view as far as the Nifty is concerned? Do you see resistance at these current levels?
Good morning, Manglam and Vivek, and thank you for having me on the show. Talking about the view for the indices, of course, we saw a very strong rally yesterday. So some sort of profit booking was expected, and it is happening as on cards. So from here, I believe intraday Nifty should find support around 24,100 to 24,000 zones. And from here, again, a rally towards 24,500 can be expected. But yes, little consolidation can happen for a couple of days. And then again, that rally should be seen on the upside. For Bank Nifty, we see that, the support should come around 51,800 to 51,500 zones. Not much of a downside for Bank Nifty. And again, rally towards 52,500, 53,000 can be expected. Of course, that rally yesterday is what we are seeing that, some sort of profit booking happening today.
All right. So what do you do when it comes to individual stocks then? And what are the levels that you're looking at as supports on the frontline indices?
I have two buys. The first one would be a buy in BPCL. BPCL has a good support around 280 zones. So as long as we're trading above that, we can see levels of 320 to 340 in coming sessions. So BPCL is one buy there. A little positional, but I guess the risk reward is very favorable. The other one would be a buy in Godrej CP. The FMCG pack has been showing some robust strength. And I believe, with the support at around 1,200 zones, Godrej CP can see 1,280 to 1,300 in this series likely.
Okay, Shilpa, thank you so much for that. Just looking at some of the metal names, have a look at names like Hindalco, Nalco, even a name like Vedanta. Those stocks are moving higher. Some reports indicate that one of the global majors has actually gone ahead and cut its output. And some of these names today, look at Nalco, near the day's highest point, doing quite well. But moving on, we'll shift focus to our special segment where we will get you a few ideas for profit from Money Control Pro. Jitendra Gupta of moneycontrol.com joins us now to talk us about a stock that he is tracking closely.
I think NTPC, which is aggressively building renewable energy, should do well. The company plans to expand its capacity to 130,000 megawatt by 2032, with renewables playing a key role. In the first half of FY25, NTPC's capex surged standalone by 76% and group level at 32.3% on a year-on-year basis, highlighting its commitment towards growth. It added 2,619 megawatt of new capacity during Q2 FY25, focusing on solar and wind projects. And of course, it aims to increase renewable capacity from 4,000 megawatt to 19,000 megawatt by FY27. While Q2 FY25 result performance was subdued because we saw 2% year-on-year decline in gross generation, and there was a dip in EBITDA margin, which but despite that, the net profit rose by 14% on a year-on-year basis, and that was driven by lower coal prices and contribution from the group companies. NTPC's diversification into nuclear power to JVs and exploration of advanced technologies like small modular reactors reflects its forward-looking strategy, with the rupees 22,700 crore capex plan for FY25, and of course a robust execution capability. NTPC is well positioned for its sustainable growth in the future. For investor, NTPC corrected recently, and at current level it is offering good value. Further listing of NTPC Green, which will help in better execution and availability of funds, should provide required support to its stock.
All right, Jitendra, thanks a lot for that. We take a short break, come back on the other side. We get you more on the market, stock-specific action, perhaps get your management as well. Stay tuned, stay with us.
ответ на применение американского и британского дальнобойного оружия 21 ноября текущего года российские вооруженные силы нанесли комбинированный удар по одному из объектов оборонно-промышленного комплекса Украины. В боевых условиях было проведено в том числе и испытание одной из новейших российских ракетных систем средней дальности.
From the chair, all I said, you know it more than anyone else. I'm hurt.
The Adani bribery case is affecting the entire country.
Nothing is going on at all. Khadgeji,
sir,
as a very senior parliamentarian and a leader, you are aware that my ruling on this issue has been given. I would seek your earnest cooperation, particularly in the background that matters to you more than anyone else, that we are in the 75th year of adoption.
Welcome back. You're watching Chartbusters. Well, one particular set of stocks that are doing quite well are actually the capital goods plays. BHEL is up nearly 2%, while Hitachi Energy surges nearly 7%. This is after securing an important project from Power Grid. Vamakshi joins us with more details.
Well, Vivek, yes, it's an important order coming in from Power Grid, and in fact, this had been, the street was waiting for it since a very long time. The consortium of Hitachi Energy and BHEL has received this order, and this is for designing and executing 800 kilowatt, 6000 megawatt, 1200 kilometer HVDC terminal stations, and these stations will transmit renewable energy from Khavda in Gujarat to Nagpur in Maharashtra, and this project is expected to be executed by 2029. Now, just to give you an idea about how the quantum for this project would actually shape up, there's actually a note that came in from Novama. They're expecting project value, the entire project, that is the entire Khavda project value, to be at 25,000 crores, out of which they're expecting Hitachi Energy's share of ordering inflow to be somewhere around 4,000 to 6,000 crores. And in fact, they further highlight that the company is already sitting on a record high order book of 8,910 crores, and this in turn provides very strong revenue visibility for the company over the next 24 to 26 months. Now, keep in mind that there are many such HVDC projects lined up. In fact, this is first of the many that have been ordered out, and this is to meet the renewable energy evacuation target of nearly 500 gigawatts by 2030. So lots more to come Hitachi Energy's way. So overall, this bodes well for both of these companies, BHEL as well as Hitachi Energy.
All right, we'll take that point, Vamakshi. Thanks a lot for that. While we are seeing some sell-off in a couple of these pharmaceutical names, just look at a few of them which are outperforming in this wobbly market. Cipla has actually moved to the high point of trade, and giving it company on the way up is Dr. Reddy's too. And we are seeing some pickup in staples. So we have, Colgate, which has been doing well for 2 days in a row right now, currently at the high point of trade. Bata is the other one which is now seeing some increased traction. Volumes are higher on that stock as well. That stock has moved to the high point of trade. And from the frontline end, we are seeing some purchase in names like Nestle as well as Asian Paints. Remember, these stocks have taken a big knock from their highs on account of weak second quarter results. Any sort of recovery out here is something that the street will eye. Take a short break. On the other side, we have the management of Tips. Kumar Taurani, who's the chairman and managing director, joins in to discuss their recent partnership with TikTok and much more.
Well, death, taxes and changes are the only constants in life, but the other constant in life is the IPL. And while 4,000 miles away in Perth, it was raining runs and wickets, it was raining crores in Jeddah in Saudi Arabia, where the IPL auction is currently underway. The other big constant in the IPL, though, is that the most expensive player tag keeps shifting and raising the bar higher every season. This time around, it was Rishabh Pant, who was bought by the Lucknow Super Giants for a whopping 27 crores. Shreyas Iyer by the Punjab Kings for 26.75. I'll talk about the other Iyer in this list in just a bit, but Punjab Kings also splurged 18 crore for Yuzvendra Chahal, the Indian leg spinner. A lot of talk about foreign players, the big moolah they get, but not playing the full season. This time around was no different. Josh Butler going for 15.7 crore to the Gujarat Titans, and Trent Bolt and Jofra Archer for 12.5 crores each to the Mumbai Indians and to the Rajasthan Royals respectively. Uncapped the big money retentions, of course. I talked about the other Iyer in this list, and that is Venkatesh Iyer, who was retained by the Kolkata Knight Riders for 23.75 crore. Virat Kohli for the RCB for 21, and Arshdeep Singh, the fast bowler, retained by the Punjab Kings for 18 crore. Uncapped players have drawn a lot of attention because of a certain Mahendra Singh Dhoni, but the actual uncapped players who have not played for India received a fair share of bids as well. Rasikdar Salam, the fast bowler from J&K, was bought by RCB for 6 crore. Shashank Singh for the Punjab Kings for 5.5, and Naman Dheer by the Mumbai Indians for 5.25 crores. So, while the Border Gavaskar Trophy is underway in Perth, it is raining crores in Jeddah, and the focus is on the IPL as well.
Welcome back. Now, the stock in yesterday's trading session, which was in focus, was Tips Music. We'll keep an eye out on that. It's announced a new partnership with social media platform TikTok to expand its reach to global audiences as well. Now, we have with us Kumar Torani, who's the chairman and managing director at Tips Industries and Tips Music, to join in to discuss this recent partnership and the outlook for this business ahead itself. You know, Mr. Torani, over the last many months, you've been tying up with a lot of these global distribution platforms, be it Meta, Spotify. You had some tie-ups come by with other players as well. In light of that, how big is this Tips TikTok tie-up, and what does it mean for monetization of your content? How much could the incremental revenue be from here?
Namaste. I think it will help us definitely. This short format content is really doing well. And TikTok, as you know, is not available in India and China. But this partnership will help us in other parts of the world. So I feel it's a good tie-up. Revenue size will be, I'm not sure what that will be. I'm not expecting a huge revenues out of this. Mid-size revenue we are expecting. But main is this will give us this will help us to audience, the fans and the music lovers will go to other platforms and listen our music. And our streaming and YouTube views will increase, and from there our revenue will increase.
Have they given an MG? A minimum guarantee?
Yeah, it's not an MG, it's an advanced kind of a deal we have. We have some money, we have got some money, yeah.
Could you give us how much money that is? A broad range. I'm not asking for specifics here.
It's a small money, not a big money.
Okay. How much is small money?
Few crores.
Few crores, all right.
Okay. Thank you so much for joining us first up. Talk to us about this partnership. Is it in any way connected to the existing licensing agreement that you have signed with Warner earlier? Will there be any conflict, or are you free to go ahead and do as many types as you want?
See, a few months back, Mr. Hari Nair, CEO, has joined us Tips Music, and he was ex-Reso. So when we are doing a deal with Reso ByteDance, this TikTok company, and when we are doing a deal with Warner Music, so he said, I will do this deal directly and we will have a direct approach, will be better for us. So we have told Warner we are keeping TikTok aside and rest you can take. So it's no conflict with Warner anyway.
All right. And if I had to ask you, say, of the revenue that you generate from all these new platforms, there is YouTube, there is Meta, there is Spotify. Now there is TikTok, which you said is very small. There is Savan as well. I'm sure there is Apple Music somewhere out there too. So in your overall scheme of things, how much of your revenue comes from these new online verticals? And if you could break that down in terms of how much comes in from each of these platforms?
See, around 75% comes from this digital entire internet services.
Got it.
And from 75%, you can easily, it's around 60% is YouTube and 20% Spotify, and rest other all put together.
Okay, so 75% of total revenue comes in from the digital business, of which majority, of course, like you explained, comes in from YouTube. What is the growth rate that you're seeing year on year, especially as far as the digital arm of the business is concerned? And give us some trends that you are witnessing as far as market share is concerned, both in Savan, in Spotify, and these digital businesses.
See, I'm expecting, and our target is for last 4 or 5 years, and even going ahead, we should achieve 30% on top line and 30% on bottom line. And touchwood, last 1-2 years, we are achieving that. And this year also, our target is that much only. We will definitely achieve that. And we are in the third quarter of this year. I'm seeing the numbers, and I feel we will achieve that number. As far as what was your another question, you were saying something else also.
Market share in terms of Savan, in terms of the digital businesses, are you seeing increased market share?
Yeah, I think Tips is growing, and our target is I think at present we are on around 8% market share, but target is to at least grow double digit. So we are really working very, very hard on that. We are working on new content, all that. And I think this numbers you must be knowing Tips has a policy of writing off 100% of their content cost in the same quarter, even if we have released only one song. So that's a very tough policy. Nobody has that in worldwide, I guess. So we are maintaining that, and we are working, we are doing this for last many years. So we are still very, very positive, and we will maintain that for future years as well.
Okay, can you quantify a few numbers for us? Number one, you've given a 30% top line, bottom line guidance as far as FY25 is concerned. Are you sticking to that? Also, can you give us an outlook and hopefully quantify it in terms of subscription revenue, ad revenue, as well as music licensing fees that you expect to garner over FY25 and FY26?
25, I am very sure about 30% we are doing. And for 26, we will see in the last quarter. But our target is we will do that much. We will work hard, and we have doing something else also. We are focusing too much on content. We have very quality content, and our budget will also increase. Last 2-3 years, we were working on we should have a content in place, but we were not achieving our targets to invest monies, expense. To do that much expense. So, but I feel next year onwards, we have already content in place. So that content will really help us to achieve that growth, what we are projecting or what we are achieving, we are trying to achieve. I think it will happen.
So let's talk about content itself. You had a target to release 300, 350 songs this year. You've done about 222. In the remainder of this year, what are the songs, or how many songs are you likely to release, and what will the content cost be?
I think around this year it will be less. I think content cost will be around in the range of 22 and 25%. But still, 4 months still there, 4 months ahead of us. Right. I think maybe we will get one film, or we can achieve that kind of a target what we have decided earlier. So we are still waiting for that.
Okay, just a final question before we let you go, and this is just for the understanding of the business that you have. Of your current content, how many songs do you have in your library? And the revenue that you get, how much of that comes in from content which was made, say, in the last year and the last 2 years? How much of that comes in from, content that was prior to that, legacy content? And your expense of content is basically in that particular year itself, right?
Yeah, I think we our target is to achieve 30% new content, and we project content is new for 5 years now. Earlier, the time of IPO, we used to write off our content costs within 2-3 months, but now we write off same quarter or same month. But our internal working is we should recover whatever content we are acquiring. We should recover our cost in 4-5 years. And we are working on that formula. And at present also, I feel 80-85% we are doing our library business. Whatever earlier years content we do that business. And actually, if you see the 90s content, whatever content we have, it's selling very well. The main our growth is from that also.
Understood. Thank you so much, Mr. Taurani, for joining us, telling us about the partnership with TikTok and also the way forward as far as tips is concerned. Wish you all the best for a strong H2. But with that, it's a wrap on Chartbusters. Stay tuned. Trading Hour comes up next.
Good morning. Welcome to Monday's Trading Hour. I'm Reema Tendulkar. With me is Sonal Bhutra in the red now for the Nifty and the Sensex, but absolutely flat actually, you would say. The Nifty is just above that 24,200 mark. The Sensex is down 330 odd points. Autos, pharma dragging their feet, while IT is on the front foot. Nifty IT is up more than 1%. PSU banks are seeing some buying. And the story is in the broader markets. The mid-cap index and small-cap index up nearly about 0.5% with a positive advance decline ratio.
You're still getting Monday blues, right?
I said Monday.
Okay.
So it's Tuesday trading hour.
No worries. I think we all are in that zone now. But so is the Nifty today, right? So after that rally that we saw yesterday, today also we started in the green, but we have come off from the highs of the day. Absolutely flat. Nifty is back again in the green. Mid caps are doing well. It's the Nifty royalty pack that continues to do well. It was a big gainer yesterday. Today as well, we are seeing some gains come by. So 1.2% higher on Nifty royalty. That continues to be in focus. Nifty IT is contributing or at least supporting gains on the Nifty for now. So be it Infosys, be it the other tech names, all of them higher in trade as we speak. While the mid caps are doing well, small caps are outperforming mid caps. So 0.7% of a gain is what we are seeing on the small cap. The FMCG and the consumption pack doing well as well. But overall, we've come off from the opening highs. We'll have to see whether we continue that momentum or we see some add-on buying on this. But this is what the market is looking like at 11 a.m. today. But let's move on and talk about an important story. Sources to CNBC-TV18 suggest that FDI cap on insurance sector will likely be raised to 100% from the earlier 74%. Sapna Das is joining us with all those important details. Sapna, what are you picking up?
Yeah, hi. So that's exactly what you have pointed out. There is a full plan on the part of the government, along, of course, with the regulators. A lot of consultations happen on this front. So the sense that we have is that most likely this cap is being proposed to be raised to a full 100%. And it's quite likely that, the insurance law amendments, whatever bill changes that will be required to facilitate this, probably the bill amendments, could be tabled in the ongoing winter session of the parliament. That's basically the aim of the government. So that's one, of course, the FCI 100% cap is one. The second aspect, of course, is also the fact that, since a pretty long time, the regulator, along with the government and various other stakeholders, they have been talking about composite licensing for the insurance players, both general and life insurance players. So that would basically enable, companies to basically diversify their product portfolio. A life insurer can do health insurance as well, and maybe likely vice versa. Of course, there'll be a lot of terms and conditions for that what could be the capital adequacy norms, all of that. So that remains to be seen, but that also is likely to be a part of the proposal, the overall raising of the FDI cap to 100%. Last but not least, also insurance agents, intermediaries, the cap is already 100%. The government had done this quite some time back. However, there's a cap that they are not able to sell policies, multiple policies, like basically, selling policies only of one life insurer and probably of one general insurer. So I think that is also going to be done away with. There will be other delegated legislation that will follow once the law amendments have been cleared by the parliament. So we have to wait and watch for this.
Thank you very much for that. In fact, Debashish Panda, the chairman of the insurance regulator IRDAI, had spoken to us just a few days back and given an inkling, the possibility that the FDI cap will be raised to 100% from the current 74%, because the sector per se needs a lot of capital, and bringing in increased FDI also brings in the global expertise and technology. Listen in to what Mr. Panda had to tell us earlier.
If we depend only on the domestic resources, then the crowding out effect will play out. So therefore, we have to perhaps look at FDI also. And if 100% FDI is allowed, along with the growth capital or the required capital, it will also bring in global expertise. It will bring in, capacity, technology. So all of that will definitely bound to happen. So perhaps this has become the opportune time for having 100% FDI. So what will help potentially to the 100% is that it will play out in the sense now the players will come with 100% FDI. They can plan their business independently. They can decide on their growth plan. They can decide what kind of business they want to write. They can infuse the capital very promptly and easily because they don't need to depend upon their domestic partner. So all of this will also be a concomitant benefit which will accrue. and therefore, we need to perhaps think about. But however, I'm sure that the government will take a decision on this at the appropriate time.
Chairperson, sir, you've been doing a lot of roadshows overseas as well. When you speak to a lot of these foreign investors and insurance companies, what do they have to say? A couple of things that they have to say in terms of what could a 100% FDI give it to them, which let's say a 74% didn't.
No, that's what I just mentioned. They can plan their businesses independently. So you don't need to search for a domestic partner who would match their expectations. Then they would decide what will be the growth plan. They would bring in the capital as per their own plan and design. So all of that flexibility will come in, and they will be able to grow the manner in which they intend to grow. So that will help by allowing 100% FDI.
Okay, that is an important story that we are tracking, and we'll keep getting you more updates on this one. So that's about the insurance sector. But let's also talk about the microfinance institutions. There are some updates there. There is tightening of the lending norms as well. Abhishek is joining us with all the details.
Well, we did highlight about, the pace of growth slowing down for microfinance institutions, as well as the fact that their NPAs are cropping up, and, there are over-leveraging by lenders happening over there in May of 2024. Now we have a microfinance industry network, that is MFIN, which has taken additional measure to ensure strengthening of MFI operation and also responsible lending by the lenders. So MFI sector at present caters to the financial needs of nearly 8 crore low-income people in the country. So microfinance institution has tightened lending norms for its members, wherein they have capped the number of lenders to a customer to 3 from earlier 4 that were there, and they have capped maximum indebtedness of rupees 2 lakh per customer. So no lending to any borrower who is overdue of more than 60 days past due for any lender, and they seek PAN, that is the PAN accreditation for at least 50% of their borrowers by the end of FY25. Interest rates will be closely monitored and reviewed by the board of the members regularly. So these measures will come into effect from 1st of Jan 2025. Measures have been pertaining to facilitate responsible lending in the space and prioritizing customer protection, as well as promoting a steady and calibrated growth for the sector. Back to you.
Thank you very much for that. Moving on now to the news from the telecom space. Now, Vodafone Idea is surging after the Union Cabinet has approved a waiver of bank guarantees for telecom companies. Ashmit is here joining in with the details. Ashmit.
Right, so a big relief coming in for the telecom companies, especially for the likes of Vodafone Idea, which were looking at large liquidity issues on account of these bank guarantee requirements. Now, here's the crux of the story. In 2021, the government had decided to exempt bank guarantee, had to waive bank guarantee requirements for spectrum that was acquired in auctions in 2022, 2024, and so on. The demand that came from the industry is that if the government is open to the idea of waiving bank guarantees, then why not also waive bank guarantees for spectrum that was acquired previously, before 2022. And that is the concern, which in fact found some merit with the DoT. The DoT had considered this request, had placed it before Cabinet, and what we've learned from sources is that late last evening, the Cabinet has granted its approval for waiving off of bank guarantees. So the bank guarantees that were submitted on account of spectrum acquired pre-2022 can now be claimed back by the telecom companies. That's the meat and substance of this is a relief that has come by way. A couple of clarifications. Number one, this is not company specific. This is across the board for the entire sector, number one. Number two, while the Cabinet has granted its approval, it is yet to be formalized, so we'll have to see the format in which this gets actioned. And number three, this, in terms of takeaways, this will largely impact Vodafone Idea, which has outstanding bank guarantees to the extent of somewhere in the neighborhood of 25,000 crore rupees. So that will, Vodafone Idea is likely to be a huge beneficiary. Bank guarantees submitted by Bharti Airtel and Jio, of course, will also stand to benefit on account of this decision by the Cabinet. Back to you.
Oh, yes. Thank you so much for joining us with all those details, Ashmit. Vodafone Idea, clear gainer, 13% higher on that stock, though it has come off from the highs. At a point in time, it was up around 17%. We'll do one thing. We'll slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned.
It's the bottom end of the urban, which is dragging possibly from the retail credit slowdown. And on rural, we are feeling quite confident about a rural recovery after a very long time. After almost 2 or 3 years, we think that production is likely going to be okay. That is why we have a view that inflation, food inflation will come down, and that will boost real incomes in the rural segment. And you're already seeing a little bit of transfer payments happening at the state government level, not so much the central government, but the state government level. Multiple states are making transfer payments, especially towards women, which should boost rural incomes a little bit.
There's nothing to believe that their selling could abate even now, because they have been selling across emerging markets. It's not one market preference over the other. It is basically money going to the US, and thanks to the change in regime in the US, you would see that massive outflows are happening from across emerging markets. It was so surprising to see Friday, you had a net negative figure from the FIs, in spite of very strong pullback and a short covering. Infrastructure companies, etc., which have corrected 25-30% could be looked into. Still wary of the capital goods, power, infra, because they could be more sentimentally driven. But having said that, if you have hardcore numbers come through in terms of government spending, then obviously there could be a change in.
Welcome back. You're still tuned into Trading Hour. It's time to talk all about commodities now. Manisha Gupta is joining us as always. And today it's all about gold. Is it sparkling or lower, Manisha?
Well, it has come off its highs. Remember, last week we saw gold prices gain up by 5%. It was the best weekly gain in 2 years. But overnight on Monday, we've seen prices come off by nearly 3%. Silver fell by 3.5% as well. Platinum was down by 3%. Palladium fell by 5%. So it has been a very sharp decline. But in the markets right now, we saw some buying on the lower side here, and that is one because of the US meeting minutes that get released today. And then apart from that, US pledging higher tariffs on products not just from China but Mexico and Canada as well mean higher inflation, and that in turn seem to be supporting gold and silver prices. Having said that, there are way many factors which have continued to weigh onto the prices. To begin with, Israel and Hezbollah, now nearing a ceasefire agreement, has taken some safe haven buying off these markets. The second thing is about Trump nominating the hedge fund manager Stock Besant as Treasury Secretary also has has taken some uncertainty off the markets, and Scott is seen as a strong one when it comes to interest rates, which also the markets feel will not be cut at the pace that the street was anticipating earlier. Actually, when you look at the CME Fed tool, it says that there is just about a 56% probability that you could be looking at a 25 basis point rate cut in the month of December. That also seems to be weighing onto the markets there. So where we stand right now, it does look like it's going to be a range for the gold prices. Remember, the all-time high has been at around 27.90. We are far away from that, but a recent low of 25.30 also seems far away. So it really is going to be a range of around 26 to 2700. Within that, the gold prices could trade for the rest of 2024.
Okay, thank you very much for that. We will slip into a very short break on that note. We'll come back and talk technicals. Mitesh Thakkar will join in on the other side. Stay tuned.
I think valuations mostly are still quite prohibitive on the defense, PSC, railways, infra, capital goods, so to speak. And the other sectors where I think there could be a significant outperformance, and we are talking all relative numbers out here, could be your pharma, CDMO, your IT services coming out of a low cycle, and spending is likely to pick up given that the US regime change would mean corporate tax cuts and more spending on technology. Those would be helpful for the IT services, and obviously banking. These would be the preferred areas.
It's a very special week for us this week. I'm here celebrating our 20th anniversary in India. India is such an important part of AMD. When we look across our, all of our, global portfolio, every aspect of our product line goes through our design center here in India. And so I had a great time this morning with our team. And when I look back at the last 10 years, it's kind of interesting that we had met each other 10 years ago. It's been a remarkable experience. I mean, if you think about all of the things that have changed over the last 10 years, I say that, semiconductors have now gone from, something that was, kind of behind the scenes, under the covers, to today. Everybody's talking about semiconductors, and semiconductors are essential to, every business, every country, every profession. So I think that feels very good. And then from an AMD standpoint, standpoint, I think we've also had a very good 10 years in terms of, taking our business from what was, into.
Welcome back. The Adani Group stocks continue to remain under pressure. So Adani Green is down 6.5% today. Adani Energy is down 4%. Enterprises and Adani Ports down about 2.5%. And even Adani Power and Total Gas are reeling under cuts with close to about 1.5%. So the entire basket is a bit subdued in trade again. But Emcure Pharma is surging, and that's on the back of a Kotak upgrade. So why has Kotak Institutional Equities upgraded Emcure Pharma? What's driving that? We have Vamakshi joining in with the details.
Well, Reema, this upgrade has come on the back of better prospects for the company. Now, keep in mind that Emcure had a decent first half, but going into the second half of the financial year 25, Kotak Institutional Equities is expecting a pickup to come through. Now, organic growth in the first half was somewhere around 6%, and this is estimated to rise to 9% in the second half. And this growth would largely be driven by upbeat prospects in India, Canada, as well as the rest of the world. Now, organic growth coupled with the in-licensing deal with Sanofi, consolidation of Mantra, and with the legal challenges likely behind them, they are expecting a 13% overall sales CAGR from FY24 to 27. In fact, in the same period, they're expecting 18% EBITDA CAGR and 29% EPS CAGR, and this would largely be driven by improved productivity as well as higher utilization of their facilities. Now, from the recent highs, the stock has seen a fair bit of a correction, and Kotak Institutional Equity says that post this recent correction, they find the valuations to be attractive, and given that, they've gone ahead and upgraded the stock to buy from add. However, they've maintained their target price at 1,680 per share, so they see roughly around a 20% upside from the current levels.
Okay, 20% upside from current levels. The stock is out 5% already. Thank you so much for joining us, Vamakshi, with all those important details. Let's now focus on the defense stocks. They're buzzing in trade. Nimish highlighted these stocks in his standout brokerage report of the day. Let's revisit them. Nimish, over to you.
Well, both the stocks are buzzing in trade, largely on the back of a big report from JPM. So they've initiated coverage on the stocks with a buy rating on BEL with a target price of 340. And a buy on Hindustan Aeronautics with a target price of 51.35. So meaningful upsides from current levels. They also have a neutral rating on Mazgaon Dock and with a target price of 40 to 48. Now, the key reason for initiating and being bullish on the defense sector largely because they believe that the sector represents a long runway of structural and value accretive growth, and for multiple reasons. The first reason being the increasing capex. So they forecast $150 billion of capex in the next 5 years versus $85 billion in the previous 5 years. Second, they see a large export market as well. So they expect a 46% CAGR over the next 7 years for as an export opportunity for the Indian defense companies. And third, the focus seems to be on domestic manufacturing with high ROCs as well as strong cash flows. So after the recent correction, JPM believes that it's a good entry point to get into this incumbent Indian players, because they see a 15 to 17% EPS CAGR as well as high ROE between 23 to 33% for the Indian defense companies. So a buy rating on BEL and HAL and a neutral rating on Mazgaon Dock.
Okay, thank you very much for that. And Nimesh, congratulations. Just recently you were telling us about GE Vernova, and that's down by nearly about 5%. Fill us in with the details.
Well, so obviously, the stock is reacting a negative 5% because the promoters have announced an OFS. So the promoter entity is looking to sell 8.3% stake via OFS. So the floor price is set at 1550, a much lower than yesterday's closing price of around 1900. The book will get built for the institutional investors today, and for retail investors, it will open tomorrow. Today, the pricing will be quite interesting as to at what price the institutional investors bids come in. Normally, that happens in the last 15-20 minutes of today's market. So that needs to be tracked very closely. On back of that, the cutoff for the retail investors will be set for tomorrow. The more other important thing is after this stake sale of 8.3%, the promoter entity will be left with 51%. So the further supply looks unlikely. This has been the second tranche that they've sold in this calendar year. They sold a large chunk a couple of quarters back, and now they're selling another 8.3% via OFS. So today, last half an hour will be quite interesting to see as to where the cutoff price comes in. But yes, it's a large block of 8.3% where the promoters are selling out in GT&D.
Okay, all right. Thank you so much, Nimesh, for joining us with those important details. Those are some stocks which are on our radar, but it's a good time to get a technical check on the markets. Mitesh Thakkar is joining us just for that. Mitesh, good morning. Thank you for joining in. Well, we've come up from the highs. We are absolutely flat, I would say, with some negative bias. What are the next important levels? Do you think this dip could get bought and we'll see higher levels by the end of this trading session?
Yeah. My understanding is that, the Nifty is going through a pullback process, and 24,350, which is where a couple of averages also placed, has emerged as an important pivot. So yesterday's high was 24,351. Today we got 24,343. So I think after rallying by nearly about 1,000 plus points, I think the Nifty might do some consolidation before it continues with the pullback, because the hourly and the 2-hourly averages are still pointing on the upside. So decline should be bought into, but at what levels? 150, 120 on the spot, which is roughly about 50-70 points lower from here, is my buying zone. I think that will be a good level to buy and keep a 70-odd point stop loss. And on the upside, 24,350 is the first target, with 24,500 as the next area.
What about stocks, Mitesh?
Yeah. So on the stock side also, I have buy calls. I have buy on Reliance. Disclaimer, we have recommended it to our clients, so there's investor interest. Reliance has a buy with a stop at 1274 for targets of 1320, and that could, in theory, also help the Nifty propel or move up higher. And the second buy call is on IOC, which I would recommend buying with a stop at 135.5 for targets of 141.
Okay, all right. Right. These are the two technical picks that Mitesh has. Reliance otherwise as well. Fundamentally, a lot of upgrades have been coming in from different brokerages as well. So that stock is on our radar. But we'll do one thing. We'll slip into a short break. Up next, we'll discuss the market fundamentals with Christy Mathai from Quantum AMC and the top sectoral bets as well.
We're about a $4 billion company, and this year will be north of $25 billion. So there's been a lot of growth in there.
There has been a lot of growth, and I'll address the growth in just a second. But I want to double down on your bet on India. And you have committed $400 million to 2028, and you've just been here to inaugurate the last phase of this campus. Why the decision to make India the home for your largest R&D facility?
Well, we actually look at it in a very logical way. When you think about our business, it's all about having the most talented people around the globe. We run a very global team, and we did make a bet on India. We made a bet that we could build an end-to-end design capability here. So hardware, software, systems. It's an extremely talented team, and with the investments, nothing comes overnight. It comes after literally 20 years. I think 20 years ago we started with maybe 100 people. Yeah. Now we have 8,000 people in India across all of our product portfolio, and I think the bet has really paid off. We wanted to have a major site in India, and we wanted to grow that skill set across the board. And I'm very happy to say that this is our largest team outside of the U.S. This is our largest design center here in Bangalore. So it is a very special place.
Well, I'm glad to hear that from you, Lisa. I also want to link this to the larger semiconductor story that's now starting to play out in India. You met with the Prime Minister in September when he was in the US for his visit. India is aspiring now to become a manufacturing hub of semiconductors as well. How do you see that playing itself out, and what do you believe will be some of the things that we need to be mindful of as we grow this ecosystem in this industry here?
Well, I have to say, I have a very, very high regard for Prime Minister Modi and his strong vision on technology across semiconductors, both the Make in India, semiconductor manufacturing, design, as well as all the focus on AI. I think every aspect of that is truly important as we go forward, and especially around semiconductor manufacturing. What I admire is the very concrete, pragmatic steps that have been taken to to both, attract global companies here, as well as, building the local infrastructure and ecosystem. And I think, the one thing is, these ecosystems take time. They don't come overnight. But I would say, lots of, very strong progress. And, we continue to invest in India because we really believe that this will be one of the most important markets and regions going forward, as well as a wonderful infrastructure and ecosystem for the type of development that we do.
So I bet you were looking at the Swiggy IPO very, very closely. What was going on in your head as you saw the listing, which got off to a slow start and then sort of shot through the roof on day one?
Yeah, I think it's great. It's huge kudos to what Harsha and the team have pulled off, and I think it's great for the ecosystem. I think we should.
Welcome back. You're still tuned into Trading Hour. It's time to talk about market fundamentals now. Christy Mathai from Quantum AMC is joining us now to discuss that. Christy, good morning. Thank you so much for joining in. Well, a lot has happened in the month gone by, or in November itself. We've seen geopolitical tensions emerging. Then we had the Trump election. Then we had our own earnings, which saw big downgrades coming in as well. What's your take on the markets right now? Do you think we'll see more consolidation? And what's your take on Nifty earnings for FY25? Have you seen some, or are you looking at some more downgrades come by? What is the rest of the fiscal looking like?
Right. Thanks for having me. So I'll just start with the earnings bit. If you want to look at, how the earnings season has been, just for the last quarter, what we've seen is a fair bit of downgrades across the board, and it is more prevalent in the mid and small cap universe as it is. Now, I think there are 2-3 reasons for that. One, of course, is, last year we had a fair bit of tailwind in terms of margin pressures, the commodity pricing going down. There was a fair bit of growth, which resulted in some operating leverage, and, the margin expanded, resulting in, growth across the board. But most of those parameters are sort of absent this particular, year and this particular quarter in particular. So our sense is that would continue even going forward. Only caveat is, last year we had the festive seasons being bunched up, as opposed to this particular quarter where it is more spread out. So the weakness that we saw in 2Q may not give you an accurate picture in terms of the broader economic outlook or product earning directly. So, we'll get a more color on that as we progress into the 3Q. But that aside, if we look at the valuation per se and how the stocks have, performed, so we've had close to about 6 to 7% drawdown from the peaks that we saw, about a month back. Against that, if you still see the YTD and longer term returns, YTD returns for Nifty Sensex is close to about 11%, and you look at the smaller and mid, it is in the vicinity of 23 to 24%. So those numbers are still, pretty good if you were to look at within the context of earning downgrade that we have had. So our sense is this would be still again a period where we could see, that sort of a consolidation, and, earnings downgrade also perhaps may continue, maybe at not the degree that we have seen in, the past quarter.
So Christy, on that subject, almost 2 months of this quarter are done now. What's been the feedback from corporates about Q3?
Right. So across the board, if you were to see, because it's too short of a period to gauge, but we have seen across some of the channel checks that we have done and what we have been hearing, that demand is broadly picking up. The clear picture would emerge end of November as to, how the festival season. So far, things have been on track. There are some concerns with respect to specific segments. If you talk about the banking segment, there's the whole MFI pressure, which will not go away in a hurry, which might continue for some time because there have been more regulatory scrutiny that have been put up. So, the pain would perhaps continue for some more time before things show up. You look at autos, we have seen fair bit of inventory absorption that has happened during the festive period. Again, there are subsegments like two-wheelers which have done well. The CV part, as well as the passenger vehicles, are still recovering. So the inventory has kind of come down. You move broadly to the consumption space. Again, what we are seeing is some bit of improvement that we have witnessed in the festive period, and hopefully, second half should be better than what we have seen in first half, because they were marred by a lot of one-offs, including election. The bad monsoon period, the strong monsoon period, which caused a lot of upheaval in certain states, and the festive periods being a bit different from last year.
Okay, so second half could be better than the first half. In that case, are you finding any pockets where you think it could be the right time to invest, or are you waiting for further correction?
Right. So as of now, the current, given where the valuations are, we are not aggressively deploying whatever cash that we have left, in our funds. We are being very cautious in that sense, because our sense is the valuation still continues to be on the higher side. If you were just were to look at the bank, Nifty index or any larger index and just strip out the banking and financial services, which have not done for some time, the valuations across the board remains on the higher side. So selectively, we are adding in some saving related themes within the financial umbrella, be it in insurance. We have been adding some portion to the banks, again, private sector banks, where in a way we see, the crisis that is happening within the unsecured and the MFN, microfinance. Most of these banks are a bit immune to that, because either they are, very small in the larger scheme of things, or they are not much exposure. And we are seeing some of the quality franchising being differentiated, mostly in the private sector front. And also, we have kept our allocation to IT services as it is, which remains on the higher side. Given, relative to the market, the IT services are still a better place, and the commentary that we are hearing now is better than what we had heard the last time, and we are seeing some of those pipeline numbers also looking good. And we have seen some of those US centric factors go away in this particular quarter. So things should look up from that perspective.
Okay, thank you. Thank you, Christy, for joining in. Get into a break. On the other side, we'll chatting with the management of Lakshmi Organic Industries to discuss their FY25 outlook.
В ответ на применение американского и британского дальнобойного оружия 21 ноября текущего года российские вооруженные силы нанесли комбинированный удар по одному из объектов оборонно-промышленного комплекса Украины. В боевых условиях было проведено в том числе и испытание одной из новейших российских ракетных систем средней дальности.
From the chair, all I said, you know it more than anyone else. I'm hurt.
The Adani bribery case is affecting the entire country.
Nothing is going on at all. Khadge ji,
sir,
as a very senior parliamentarian and a leader, you are aware that my ruling on this issue has been given. I would seek your earnest cooperation, particularly in the background that matters to you more than anyone else, that we are in the 75th year of adoption of our
country. Sir, 75th year है, उसमें मेरा भी हिस्सा 54 years है, तो मुझे कोई सिखाने की कहने की बात नहीं।
सही, एक बार आपको अनुरोध करूं।
मैं आपसे
एक सेकंड।
Welcome back. So Asian Paints is the top Nifty gainer today. It's up 2.3%, benefiting from the decline in crude prices. Generally, FMCG is on the front foot. Whether it's Britannia or Nestle, they're seeing gains of 1.5%. So these stocks are higher on expectation that the welfare schemes has proven and perhaps it will continue. There is more money in the hands of women, which will result in essentials being consumed and purchased. So these stocks are higher. IT didn't outperform yesterday relatively, but today there is buying emerging in IT names. And IT, I think the Nifty IT index is up more than 1% with names like Infosys, Tech Mahindra on the front foot, and BEL. There was a JP Morgan note, upbeat on the entire defense pack. BEL is one of the big notable winners. Heavyweights like Reliance Industries continue on the upside. But let's get you some opinion that we got earlier today. This was opinion that we got from Ashwini Agarwal, founder and partner at Demeter Advisors. Listen in.
I'm looking for companies where I see high visibility of earnings over the next 2 to 3 years and reasonable entry point on valuations. Some textiles exporters, for example, are talking about very robust order book indications from their customers in the US. So exporters as a basket, especially US oriented exporters, should do very well. So, those are some of the areas where one can look for ideas, and that's what I've been doing. PSU banks will do reasonably well over the next couple of years at least, because they will continue to experience very muted credit costs because, they've been late to the cycle of the cleaning up. So the recovery cycle for them will continue to feed through to lower credit costs over the next couple of years. The defense or electronics manufacturing areas, stock prices have taken a huge beating, and now they might be approaching, some sensible valuations. I haven't, dabbled in that area yet, but yes, it does look interesting. The debate is really whether the slowdown is structural or cyclical. My view at this point in time is that it is a little bit of cyclical more than structural. And therefore, I'm hoping to see some recovery or rebound in the second half. Now, there's a lot of disruption taking place in retail. And if you're looking at a business that is prone to a disruption or is or may not exist 5 years down the line, then you have to be careful about what you pay.
Okay, that is a market opinion coming in, but it's time for a short break. Management of Lakshmi Organic Industries will join in to discuss the FY25 outlook. Stay tuned.
Please take your seat. No. In all humility, from the chair, all I said, you know it more than anyone else. I paid you the highest compliment.
Okay,
Still
sir.
You are taking exception.
Thank you very much. Thank you.
No, sir.
Thank you.
I'm hurt. This is hardly an approach. I have commended his contribution.
Thank you.
I have praised it. And the same...
Sir, ये बहुत ही important मसला
What
है.
to say, sir? Not on 267.
267.
No, my ruling is over.
No, it's a very important, sir. देखिए,
No,
ये
you are questioning ruling of the chair.
Sir, if you suspend today's business, we can explain because the Adani
1 second, sir.
regarding this bribery case is affecting the entire country.
Nothing is on record.
And
nothing is going on record.
No. Entire
nothing
country.
Is going on record. Nothing is going on record.
Consistently,
nothing is
Modi is supporting him.
Nothing is going on record. Nothing is going on record. No, sir.
Modi is supporting him. And दुनिया में
List of matters raised with permission. Srimati J.B. Mather Isam.
Well, death, taxes and changes are the only constants in life, but the other constant in life is the IPL. And while 4,000 miles away in Perth, it was raining runs and wickets, it was raining crores in Jeddah in Saudi Arabia, where the IPL auction is currently underway. The other big constant in the IPL, though, is that the most expensive player tag keeps shifting and raising the bar higher every season. This time around, it was Rishabh Pant, who was bought by the Lucknow Super Giants for a whopping 27 crores. Shreyas Iyer by the Punjab Kings for 26.75. I'll talk about the other Iyer in this list in just a bit, but Punjab Kings also splurged 18 crore for Yuzvendra Chahal, the Indian leg spinner. A lot of talk about foreign players, the big moolah they get, but not playing the full season. This time around was no different. Josh Butler going for 15.7 crore to the Gujarat Titans, and Trent Bolt and Jofra Archer for 12.5 crores each to the Mumbai Indians and to the Rajasthan Royals respectively. Uncapped the big money retentions, of course. I talked about the other Iyer in this list, and that is Venkatesh Iyer, who was retained by the Kolkata Knight Riders for 23.75 crore. Virat Kohli for the RCB for 21, and Arshdeep Singh, the fast bowler, retained by the Punjab Kings for 18 crore. Uncapped players have drawn a lot of attention because of a certain Mahendra Singh Dhoni, but the actual uncapped players who have not played for India received a fair share of bids as well. Rasikdar Salam, the fast bowler from J&K, was bought by RCB for 6 crore. Shashank Singh for the Punjab Kings for 5.5, and Naman Dheer by the Mumbai Indians for 5.25 crores. So, while the Border Gavaskar Trophy is underway in Perth, it is raining crores in Jeddah, and the focus is on the IPL as well.
Welcome back. You're still tuned into Trading Hour. Let's get the conversation going with Lakshmi Organics. Rajan Venkatesh, the Managing Director and the CEO of the company, is joining us on the show now. Rajan, good morning. Thank you so much for joining in. Will you end it first half on a strong note? It's been better than what we saw in the last couple of financial years because of the weakness we had been seeing in the chemical markets as well. Can you do better than what you did in the first half? 8% is the revenue growth. You've done margins of around 10%. What is second half looking like? What will you end the year with in terms of revenue growth and margins?
So thank you first and foremost for having Lakshmi Organic and myself on the show. I think what we've given as a guidance is for FY25, we will strive to deliver profitable volume growth. You've seen that performance exhibit in the first half. Quarter one, we had our scheduled turnaround in the essentials part of our portfolio. That's where you saw the volumes being lower. But we saw in quarter two that we have rebounded strongly. Quarter three, we had a scheduled turnaround for our specialty units. And thereafter also, everything has happened smoothly and we are back on track. So focus remains for FY25 to deliver profitable volume growth.
Would you like to put a number to that?
No, at this point of time, I would like to be a bit coy about it. I hope you can understand.
Okay. And what about margins?
Margins, I think on our specialty portfolio, the way we have been always steering is we're focusing on EBITDA. For our specialty portfolio, that has to be in the range of 20 to 25%. We closed out last financial around 24% in our specialty basket. This first half and also quarter two, we were in a similar ballpark. So that's the robustness we want to keep going also into the remainder of this year. On the essentials, you've heard this from various quarters. This is more the commodity part of our portfolio, and the sort of spreads have been on the bottom quartile, and we are navigating through, I would say, smartly at this point in time, but we have to acknowledge the fact that margins and spreads are in the bottom quartile for the essentials part of the portfolio.
Okay. You know, the other segment that is high margin business is the fluoro intermediates. The plant is expected to come on stream in the second half. You've been very bullish on this segment in general. By when do you expect the commercialization to happen? What will the initial capacity utilization be? And at peak, what kind of revenues will this particular segment see?
So we've called that out in the past. So peak revenues from that asset base that we have bought into India is 200 crores. We have said that in this financial year, so quarter 4, we will achieve about 10 to 15% of that peak revenues. In the next financial, that is in FY26, we strive to achieve about 40 to 50% of the peak revenues. And in FY27 is where we will strive to achieve those peak revenues.
And once you achieve those revenues, and this is also a high margin business, right? 25%, 20 to 25%, that's the bracket. What does it do to your margin profile then? Because right now you are in high single digits or maybe around that 10% mark.
Right. So I think one, again, we are looking at it from an EBITDA lens. So the fluoro part of our portfolio is also nestled under our specialty vertical. And the focus remains to deliver EBITDA in the range of 20 to 25%. And I think this is also something that will deliver the same level of EBITDA. That remains our key focus. Because again, in specialty, very different to our essentials basket, it is always about what product can you produce in the multi-purpose asset that gives you the best bang for the buck. So that remains our focus.
So you're basically targeting essential EBITDA to increase by 3x and specialties EBITDA to increase by 2x by FY28. Right. What would be the drivers for it, and even for your capex? Because you know businesses do go through cycles. So what are the projections that you've made on current pricing?
Right. So let's first tackle business by business. So in the essentials basket, we closed out EBITDA about for the essentials basket in FY24. We closed out about 4%. Certainly below the 8 to 12% guidance we have given, but we have always said essentials is a business to be looked at over the cycle. And we remain confident to achieve that. And the reasons, one of the few triggers we have taken is also 2 levers. One is broader. That means we are introducing newer products. We announced the capex for a world-scale butyl acetate asset to be coming up in Dahej in the course of the next financial year. So those are having better margin profiles as compared to ethyl acetate. And also we have launched a new product of N-propyl acetate, which is going to the similar basket of customers and also having a slightly better margin profile as compared to ethyl acetate. So we will be de-risking at both an enterprise level and essentials basket our overexposure to ethyl acetate. So just to keep it in perspective, in FY24, ethyl acetate accounted for about 60% at an enterprise level when we talk about revenues. By FY28, this is anticipated to be in around the 40% range. So those are the efforts we are taking on essentials. We are continuously focusing on our operational excellence journey. That is where you're seeing the volume year on year and quarter on quarter improvement into our performance. Specialties, as I called it out, again, with the doubling of our capability at Dahej for our diketene derivatives, that is what gives us the confidence. We will be top 3 globally, including players in China, and we have a good, diverse portfolio of products and customers, which keep us in good state.
So, Rajan, these projections that you've made, where you will see doubling of revenues, the EBITDA growing as well, what if the cycle turns for the worse? What happens then? What are these projections made on? What pricing? Is it the current pricing, or you're already conservative in these projections?
So for where it has a large bearing is on the essentials part, and there we have been conservative. So we have certainly taken out the COVID peaks, and we have been actually looking at the quarter where we are at the bottom quartile or slightly in that ballpark. So we are very conservative, and the downside from this on spreads, I think the probability is lower as compared to the upside.
Okay, and last question before we let you go. How much is your dependence on China right now? What's the raw material availability looking like? Is it largely for your essential portfolio only? If you can give us some sense.
So from a raw material purchasing, we're depending about 30 to 40% of our raw material buy comes in from China. And I think we see no qualms in acquiring those raw materials. We are well hedged between multinational companies which are operating outside China and China. And I think at this point of time, we have long-term contracts in place. So that allows me to sleep well.
Okay, all right. Rajan, it was a pleasure speaking with you. Thank you so much for joining in today. Mostly chemical companies have not been sleeping well because what's been happening in China and globally. But let's see, better days ahead for the industry maybe. Thank you for your thoughts today.
Thank you for having Lakshmi on your show.
Okay, all right. With that, we'll take your leave on this edition of Trading Hour. But stay tuned. A lot of action lined up on Halftime Report up next.
Stocks drift lower after a strong start as Trump lifts the spectre on tariffs and domestic growth concerns linger. Realty and IT stocks gain while auto, utilities and healthcare are the big drags.
CNBC-TV18 learns that Cabinet has given its assent to waiving bank guarantees for spectrum awarded before 2022. This move is a significant relief for Voda Idea and a positive for Bharti Airtel. Telecom stocks gain.
The board of Hindustan Unilever has approved the demerger of its ice cream business into a separate listed entity. The move follows a similar plan by its parent company Unilever after it reportedly shelved a move to sell the business to a private equity buyer.
Food delivery to QCOM major Zomato floats $1 billion QIP to beef up its cash reserves as competition heats up. The offer is indicatively priced at a significant discount to the current price.
And CNBC-TV18 learns the government is aiming to raise the FDI cap in insurance to 100% from 74% currently and may also introduce amendments to the insurance bill in this session of Parliament to permit composite licenses.
Good morning, good afternoon rather. You're watching us here on Halftime Report. I'm Mangla Malu. With me is Hormaz Fatakia. Well, the reason why we call it a morning and no difference between the afternoon is that if you slept till late and just got up, you wouldn't have missed much in the frontline index. The Nifty is down about 26 odd points. The Sensex down about 100 points. Remember, the frontline indices have seen big gains over the last two trading sessions. So some consolidation wasn't ruled out of the way, and that's exactly how it's played out. What's good, however, is that in this consolidation, the broader markets are doing a lot better. So we have the mid-cap index, which is up around 0.4% on an index level, and broader markets as well. We have 1,500 stocks advancing for about 900 stocks which are declining. And a couple of the sectors are actually picking up pace once again. This morning we had identified FMCG as one such because of populist measures doing well electorally and perhaps some sort of expected improvement in the space as we see in the second half of this year post-festive season, an overnight decline in commodity prices as well. So Asian Paints, Britannia, we have Nestle, which is higher. And from the broader markets, in the FMCG pack itself, Colgate is doing well, Marico, and we're also seeing some traction in names like Bata and Jubilant Foods. So a lot happening beneath the surface, Hormaz.
A lot happening beneath the surface indeed. And, apart from these crude sensitives, right, the one sector that I wanted to point out, though, was the real estate index. And that is continuing to move higher irrespective of the market. It's the 7th straight day of gains for the Nifty Realty Index, now trading with gains of close to 1%, slightly off the highs of the day, but well above the mark of 1,000 now for the third straight session, and it has grown. It's done very well in these last 7 sessions with gains of over 7.5%. But the subject that we want to focus on at the start of the show are microfinance institutions, and because they are tightening their lending norms, Abhishek is joining in with more on that.
Well, Microfinance Industry Network, that is MFIN, has tightened norm for the lenders with respect to strengthening the MFI operations as well as responsible lending from them. So MFI sector at present caters to financial needs of nearly 8 crore low-income people. So MFIN has tightened lending norms for its members, capped the number of lenders to a single client to be at 3 from the 4 that they had earlier, capped a maximum indebtedness of about ₹2 lakh per customer. No lending to any borrower who is overdue of more than 60 days from his or her due date. So seek PAN for at least 50% of the borrowers for by FY25, and interest rate will be closely reviewed by the board members of the regulated entities. So these measures will come into effect from 1st of Jan 2025. Measures pertain to facilitating a responsible lending as well as prioritizing customer protection and promoting a steady as well as calibrated growth for the sector that is aimed by MFIN for the lenders.
All right, Abhishek, thanks a lot for that. We'll, carry forward this discussion with Alok Mishra, and you can join in on that one as well. He is the CEO and director at Microfinance Industry Network itself. Thanks a lot, Mr. Mishra, for joining in. Of these additional measures that you've announced, could you tell us currently what proportion of borrowers have for lenders, what proportion of borrowers have their indebtedness above 2 lakh rupees, and what proportion of borrowers have more than 60 days, per day, 60 days overdue indebtedness?
Yeah. So good afternoon, and thank you for having me here. So number one, the first point, data point is ready in my head, so I can answer that. So number of customers as per the credit bureau data, those who have more than 3, or that is 4 or more lenders, is roughly around 5.9%. You can round it off to 6%. Now, number of clients having loans above 2 lakhs of all microfinance loans put together is also marginal into the similar range. Now, when you talk about portfolio at risk more than 60 days default, that is, we typically will take 60 to 180. That would be somewhere in the range of 3 to 3.5%.
Mr. Mishra, Abhishek here, will the reduction in loan growth not impact the borrowers because their flow will get impacted and it will be tough for them with respect to repaying their debts as well? And another one, if there is a cap with respect to lending from the organized segment, will they return to unorganized segment?
Well, very good question, Abhishek. So 2 things. Let me put things in perspective and allow me some time. Number 1, when we are talking about not lending beyond 2 lakhs and not more than 3 microfinance lenders, we are talking basically about somewhere around 5 to 5.5% clients. And there also, we are not saying not lend. We are saying if the borrower has 4 relationships, for an example, if the borrower reduces 1 relationship and comes to 3 lenders, average ticket size in microfinance today is somewhere around 50,000. Around 1,50,000 loan from 3 lenders or 1,75,000 loans he is still able to get. So that's not much of a liquidity constraint. Only it is returning back to a little bit of higher credit discipline. And second part of your question is more interesting, that will they seek more informal sector loans? So, well, hypothetically, yes, but practically, no. Why practically no? Because when we go to the field and when we talk to the borrowers, after 15, 20 years, that is what microfinance has done in India, having touching 8 crore low-income clients, and if we take their household members, it goes to almost 35, 40 crores. It has demonstrated to them that formalized, legalized, regulated services at doorstep can be delivered with proper respect and proper client protection measures. And I don't think for reducing 1 lender relationship, they will go back to the informal finance. That is not our intention also. And practically, the gains which they have seen being associated with microfinance will make them come back to the sector by reducing their maybe exposure a bit. But I think they will not go back to the informal sector.
Well, how will you make sure that, the guidelines are followed by lenders with respecting, the cap or the, amount to be followed? Because at current levels, even with income of rupees 14, 15,000 per customer, the end use is not monitored. And I hear from lenders that, the money is being used to buy iPhone 16 Pro Max as well as other vehicles, which is not in productive cases, right? So the end use is actually a consumption loan and it's not been used to reproduce or be able to guarantee a repayment to lenders?
Well, Abhishek, if you must have been tracking the sector for quite some time, and there is an age-old practice and a term which we use in the sector which we call as LUC, loan utilization check. Generally, after 30 to 40 days after the loan is disbursed, the field officer is supposed to check that the loan is being used for the purpose for which it has been taken. And there can be some weakening in some cases. Plus, also, the LUC might not be, I cannot say that it is 100% foolproof. Even then, there can be some commingling of funds for other purposes. But let me assure you, by and large, these funds are used to invest in their livelihood businesses. But in case of emergency, if somebody has used 10,000 of rupees to pay for some medical emergency, I cannot completely rule that out. Maybe we are trying to strengthen the practice of LUC more. That is one. And the second part of your question, I think you asked about, I think I am missing that question. Other than the LUC, the loan utilization check, you said for consumption. And there was a second question also from the side.
No, how will you ensure or try to ensure
sure.
productive,
no, that's a very
productive use of the loans?
Yeah, productive. See, there are 2 parts to it. Now I get it. You said one is productive use. That is for the institutions to do a loan utilization check and ensure that it is used for the purpose for which the loan is given. And the second question which you asked in the start was relating to how will this adherence be ensured. So let me tell you that we don't, the sector body and SRO, we don't believe in just merely issuing guidelines and leaving it there. So we have various checks. We do data checks from credit information companies on disbursement. We do third-party evaluations of the member institutions. And all these things are captured, that are you adhering to the guardrails which have been prescribed or not. And let me tell you that in July, we had issued one set of guardrails, and the adherence has been quite positive from the sector. That is what our checks reveal. And these are data checks, empirical data checks.
So then, Mr. Mishra, the guardrails that you have put in place, do you think that it will ensure that the second half sees some improvement in the sector in general? Because the second quarter itself was a very painful one for a lot of these microfinance companies. What is the sense that you're picking up on the ground now that we are done with the better part of the third quarter, and do you see it improving going forward as we end FY25?
Yeah. Anecdote data, the final data which comes in from the Bureau is still to come in. I have only data till September. But what I speak to the lenders who are in the field and they get field reports, they say that November is better and there is some signs of stabilization. And what we read in the newspapers today, that the Kharif output has been a bumper Kharif output. The Rabi sowing has also started in full swing. And we hope that with this normalization and a kickstart in the rural economy, things should stabilize by January.
All right, things should stabilize by January. Two-part question then, Mr. Mishra. The first one, of course, is that you've given us data. You've said that, 3.5% of the MFI loans are more than 60 days overdue. So the overall extent of the problem should not be more than 3.5% as of the data that you have right now. I just wanted to understand from individual players, who would be the ones who would be most vulnerable to this, where their exposure is more than the industry-wide 3.5%, because I'm sure some would be above this 3.5% mean and some would be below that. So I would like you to call out some specific companies out here. And the second major worry is that while you're saying that things will improve from January, the street is worried about, is it too little too late?
Well, I would only say that some of the persons who follow the sector say it is too much too early. So and somebody is saying too little too late. So we have to strike a balance that we don't pull the strings too hard and at the same time ensure that the discipline returns back. Now, when you quoted me as 3.5%, I just gave a rough figure. That is between overdue between 60 to 180 days. It may be plus or minus 0.5%. I don't have the ready data with me. I could have given it to you. Second part is when you say that there can be ranges. Some institutions might be higher, some might be lower. So that is for individual institutions to tackle. But for us as a sector body, we don't see any such major deviation which is a cause of concern. Individual institutions are taking steps. And as we discussed with these new measures and as well as tighter underwriting norms, and generally, when we issue these guidelines, the focus shifts to lenders and all these things. But the other things which have been done along with that, that also needs to be taken into account, because the identification of client is a primary issue where overlending can happen. So that's why, because Aadhaar can't be used by the industry or the CIC, we have said that the voter ID, which remains as the primary ID for fetching the records, should be validated from the EPIC, that is the Election Commission data source. Right. And secondly, the sector has also decided to take on a mission mode, the seeding of PAN numbers with the client profiles. And today's newspaper said that now the government has also refined changes in the PAN number, wherein QR code and more authentic it will be. So with voter ID identified and that, we are also tackling other measures of the piece so that the sand doesn't keep moving and we are able to identify the client properly and dedupe it properly.
All right, Mr. Mishra, thank you so much for sparing time and joining us to take us through your views on the sector and the road ahead as well. That was Alok Mishra joining us on the show. Time for a short break. On the other side, Sudarshan will be here to talk about the Vahan registration data and whether there has been a slowdown in auto retail sales. Stay tuned, we'll be right back.
It's the bottom end of the urban, which is dragging possibly from the retail credit slowdown. And on rural, we are feeling quite confident about a rural recovery after a very long time. After almost 2 or 3 years, we think that production is likely going to be okay. That is why we have a view that inflation, food inflation will come down, and that will boost real incomes in the rural segment. And you're already seeing a little bit of transfer payments happening at the state government level, not so much the central government, but the state government level. Multiple states are making transfer payments, especially towards women, which should boost rural incomes a little bit.
There's nothing to believe that their selling could abate even now, because they have been selling across emerging markets. It's not one market preference over the other. It is basically money going to the US, and thanks to the change in regime in the US, you would see that massive outflows are happening from across emerging markets. It was so surprising to see Friday, you had a net negative figure from the FIs, in spite of very strong pullback and a short covering. Infrastructure companies, etc., which have corrected 25-30 odd percent, could be looked into. Still wary of the capital goods, power, infra, because they could be more sentimentally driven. But having said that, if you have hardcore numbers come through in terms of government spending, then obviously there could be a change in sentiments towards that. But I think valuations mostly are still quite prohibitive on the defense, PSC, railways, infra, capital goods, so to speak. And the other sectors where I think there could be a significant outperformance, and we are talking all relative numbers out here, could be your pharma, CDMO, your IT services coming out of a low cycle, and spending is likely to pick up, given that the US regime change would mean corporate tax cuts and more spending on technology. Those would be helpful for the IT services, and obviously banking.
Welcome back. Now, mixed signals are coming in from the auto sector in November, with two-wheeler sales growing strongly while passenger vehicle sales remain under pressure. Sudarshan is here with the details of the retail sales data for November so far. Sudarshan.
So it's the Vahan registration data, the all-important numbers that all the companies have been talking about. If you remember, after the Q2 results, most companies in their commentary did mention about that more than wholesales, the numbers that matter the most are retail sales. And taking the cues from there, we have here tried to analyze the Vahan registration data for the month of November. Let's see what those numbers indicate. In a nutshell, on the demand perspective, it's a continuation of what we saw in the month of October. Two-wheelers remain the biggest outperformer, followed by tractors, whereas demand for passenger and commercial vehicles remains muted. Now let's come to the numbers, and before we talk about that, do remember the comparison numbers are for the entire month, whereas for this month the data is for 25 days so far. So starting with two-wheelers, the pickup in rural demand seems to be reflecting in the numbers of Hero MotoCorp. Total registrations for Hero MotoCorp have already surpassed the numbers of October and are just 3% lower than November 2023. For TVS Motor and Bajaj too, the registration details are looking healthy, and the numbers are already at par with what we saw last month and are down just 4% and 11% respectively against November 2023. Royal Enfield, while it's currently underperformer amongst two-wheelers, but the data of last few months indicates that Royal Enfield sees a surge in registrations during the last few days of the month. The next in the list are tractor segment. Here too, registration trends are looking healthy with 5 days to go in this month. For M&M tractor, registrations are down less than 10% both month on month and year on year. And for Escorts, the decline is slightly steeper in comparison to M&M. It's down in the range of 15 to 17%. Shifting to the segments where demand concerns remain are passenger and commercial vehicles. With only 5 days to go this month, most companies are seeing sharply lower registrations. The numbers are down in the range of 40 to 52% month on month and are down 21 to 40% year-on-year, with Maruti and Tata Motors looking the weakest. Before ending, it's important to remember that the comparison numbers both month-on-month and year-on-year cover the full month, while the current data for November represents only 25 days. This gap means significant changes could still occur in the remaining days of the month.
That point, Sudarshan, thanks a lot for that. Auto retail sales, are they slowing down or not is the big question. We'll keep an eye out on that as we progress through the end of November and then obviously the last month, which is seasonally the weakest for auto sales itself. Take a short break, come back on the other side. We focus on the primary market action. We'll get you excerpts of the conversation with the management of Suraksha Diagnostics ahead of their IPO.
areas.
It's a very special week for us this week. I'm here celebrating our 20th anniversary in India. India is such an important part of AMD. When we look across our, all of our, global portfolio, every aspect of our product line goes through our design center here in India. And so I had a great time this morning with our team. And when I look back at the last 10 years, it's kind of interesting that we had met each other 10 years ago. It's been a remarkable experience. I mean, if you think about all of the things that have changed over the last 10 years, I say that, semiconductors have now gone from, something that was, kind of behind the scenes, under the covers to today. Everybody's talking about semiconductors, and semiconductors are essential to, every business, every country, every profession. So I think that feels very good. And then from an AMD standpoint, I think we've also had a very good 10 years in terms of, taking our business from what was, in 2015, we were about a $4 billion company, and this year we'll be north of $25 billion. So there's been a lot of growth in there.
There has been a lot of growth, and I'll address the growth in just a second. But I want to double down on your bet on India. And you have committed $400 million to 2028, and you've just been here to inaugurate the last phase of this campus. Why the decision to make India the home for your largest R&D facility?
Well, we actually look at it in a very logical way. When you think about our business, it's all about having the most talented people around the globe. We run a very global team, and we did make a bet on India. We made a bet that we could build an end-to-end design capability here. So hard.
Welcome back. You're watching us here on Halftime Report. A bunch of stocks. Now, the market's cut has actually deepened to about 70 points, and that cut has been led largely by a couple of these heavyweights. So pull up something like an L&T, which is at the low point of trade. We've been talking about how, some of these auto stocks, Sudarshan just spoke about how the sales have weakened. The stocks have weakened too. Tata Motors is at the low point. We're seeing some weakness in names like Bajaj Auto and Hero MotoCorp as well. And Trent, after seeing some traction on the upside yesterday, is seeing some profit making today. So it's currently at the low point of trade. We'll watch out for all these stocks. But amidst this, the broader markets are doing a lot better. And Emcure Pharma is one of the stocks which is higher in today's trading session after a brokerage upgrade. Vamakshi joins in with more details.
Well, Mangalam, the stock is surging on the back of a brokerage note that came in from Kotak Institutional Equities. They say that the company had a decent first half of the financial year 25, and they're expecting a pickup in the second half, especially the organic growth. So largely what they're saying is that they're expecting 9% year-on-year growth in the second half as compared to 6% that they saw in the first half, and this growth will largely be driven by an upbeat prospects across India, Canada, as well as the rest of the world. Now, this organic growth coupled with the in-licensing deal with Sanofi, consolidation of Mantra, as well as with most of their legal challenges now behind them, they are expecting overall sales CAGR of nearly 13% from FY24 to 27. In fact, over the same period, they're expecting 18% EBITDA CAGR as well as 29% EPS CAGR, and this would largely be driven by improved productivity as well as better utilization of their new facilities. Now, the stock has seen a fair bit of correction from recent highs, and post that they've gone ahead and upgraded their rating on this counter from add to buy. They've given a target price of 1,680 rupees per share, which implies roughly an upside potential of somewhere around 20%.
Vamakshi, thanks a lot for that. But two other stocks that are in focus, which is BHEL and Hitachi Energy, both of them are surging in today's session after securing the Khavda-Nagpur project from Power Grid. Tell us more on that.
Well, absolutely, Hormaz. This was an order win that was really anticipated by the street. The street was waiting for this order win to come in, and therefore we're seeing both of these counters surging in trade. Let me quickly take you through the details. Now, this is a consortium of Hitachi Energy as well as BHEL that has won an order from Power Grid. This order is to design and execute 800 kilowatt, 6,000 megawatt, 1,200 kilometer HVDC terminal stations, which will transmit renewable energy from Khavda in Gujarat to Nagpur in Maharashtra. And this project is expected to be executed by 2029. In fact, there's a note that came in from Nuvama, especially on Hitachi Energy. Overall, they estimate the project cost to be somewhere around 25,000 crores, and out of this, nearly 4,000 to 6,000 crores of order inflows are expected for Hitachi Energy from this project alone. In fact, the company is also sitting on its highest ever order book of 8,910 crores, and this in turn provides revenue visibility of somewhere around 24 to 26 months. Now, keep in mind that there are several more HVDC projects that are lined up, given that the government has a target to meet 500 gigawatts of renewable energy evacuation by 2030. So this bodes well for Hitachi Energy as well as BHEL. For now, Nuvama has a buy rating on this counter, target price of 16,500, implying a 33% upside. But this order win, very big for BHEL as well as Hitachi Energy.
All right, we take that point, and that's why Hitachi Energy is up around 6.5%, BHEL up around 1.2%. The overall order book scheme of things, it is a bigger contribution to Hitachi as against BHEL, even though, the share is not what we know about right now. Suraksha Diagnostic, let's talk about that one. A full service and integrated diagnostic chain headquartered in East India will launch its IPO on November 29th. The price band for the IPO has been set at 420 to 441 rupees per share. And they're looking to raise about 840 crores via an offer for sale, where the promoters will bring down their holding to 50%. Rima caught up with Somnath Chatterjee, who is the joint managing director, and Ritu Mittal, who's the joint managing director as well and CEO of Suraksha Diagnostics, began by asking them about the promoter pledge post-IPO. Listen in.
So this is the first opportunity for long-term investors to have some monetization. They've been invested in the company for 32 years now, and also for a private equity fund, which is OrbiMed, to dilute their stake. They will still continue to hold 10%.
Okay.
And Dr. Chatterjee and myself, we had borrowed some money to buy more shares of Suraksha. So we want to pay off that debt. That is one of the conditions. In a liquidity event, Suraksha, we have to pay off the debt.
So the pledge today is what percentage?
is around 40%.
40%. And with this, the fundraise that the promoters are doing, the pledge comes down to zero?
Absolutely.
Okay, fantastic. And what about the debt and the cash in the books right now? Because there is no fresh issue.
So there's any negligible debt in the book?
Single digit?
Yes.
Okay. And the cash?
Cash is around 50 crores.
50 crores. And every year, say in FY24, what is the kind of cash that you've generated?
FY24 would be around 45 crores.
45 crores, okay. Now let's talk about the kind of growth rate. Now, if I look at it from FY22 to FY24, there is a drop in your revenues, but that's because FY22 had the benefit of COVID. If I strip out the non-COVID revenues for you, have seen a growth of 21%
Yes.
from FY22 to FY24. Is that sustainable, sir?
That is highly sustainable, and we believe that going ahead, we will be able to maintain this rate of growth, if not better it, because there is a growing idea amongst people. If you look at the figures, then the rate of growth in the organized sector of diagnostics is growing very fast. One of the principal reasons is post-COVID, people have become a little more sensitive to branded diagnostics. So we believe this is not only sustainable, but this can even increase ahead.
Okay, so you're confident about maintaining the 20% kind of revenue growth, if not better it. What about margins? Margins for the company have also expanded. 29% in FY22, scaled up to 33% in FY24, and further to 35% in Q1. What is driving that?
It is basically the economies of scale that is driving it. So as we are expanding, our margins are getting better because the fixed costs are just getting divided.
Okay. But so how much more can you expand your margins from here on?
So we think we can go up to 40 to 42% EBITDA margins.
40 to 42%. Okay, fair enough. You spoke about market share. I think your market share in East India is 1.15 to 1.3%. Who are your large competitors in the region, and what is the headroom for growth in terms of a market share?
So when we talk about the market share, East India is a pretty huge market, and we are present in a very concentrated geography. If we were to look at our market share in those geographies, it would be much higher than 1.5%.
Okay.
And we have a huge runway to grow because there is hardly any competition in the geography that we serve.
So in West Bengal, what would be, which is your core market, what would be your market share?
I think it would be around 10 to 12%.
10 to 12%. Incredible. Okay. But you also have plans. I was reading your July 16th, the strategy board meeting which took place, has spoken about strengthening position in the core geography of Kolkata and the rest of West Bengal. And secondly, expand beyond the core market in adjacent geographies of Eastern and Northeastern India. So today you have 49 diagnostic centers. What would you like to take this number up to, and what are your expansion plans?
So we would like to take this number from 49 to around 100 in the next 3 years. We would definitely be focusing on West Bengal because there are still some districts which are uncovered. We would like to set up a hub and spoke centers in these districts while catering to the rural population through our channel network. And we would like to expand to Northeast India first because that is very underpenetrated and underserved. So that's the plan that Suraksha has in future. And then we would, of course, expand to places like Bihar, Orissa, and Jharkhand.
Okay, if you look at it, then you will find that Eastern India has the lowest number of NABL accredited labs. It also has the lowest number of NABH accredited hospitals, though it has 28% of the country's population. So the headroom for growth in East is enormous. And the paying capacity in diagnostics, if we compare, matches with the premium segment. East and West pays the maximum, South being lowest and North coming after that.
And what will be the kind of investment you will need for this?
So typically the investment every year that we have calculated is around 70 crores.
Okay.
And it'll all come from internal accruals.
In expansion, we would also look at acquisitions. If acquisitions can be made in newer emerging verticals. Also, acquisitions, if they come at a healthy price line, then Suraksha is open to acquire diagnostic centers in the east.
Are you evaluating any
Yes, we
options?
are. We are definitely evaluating.
I think the last acquisition was in 2020. So do you think the next one could happen in the next 12 months? I mean, how close are we?
We are very close.
Very close.
We are very close.
Okay. And you don't need funds for this. Your internal accruals are.
We'll
So
take
typically when you go ahead and acquire, say the last acquisition, what is the kind of money that you spend to acquire a center, a branded center or trusted center?
So I think we acquired 2 centers at a cost of around 4 crores.
Okay. So it's not very...
it's not, yes.
You know, one of the challenges, because we have a few listed players now in the markets, and one of the core challenges for diagnostic companies has been, the inability to raise prices due to competition from online players. Can you tell us what your experience has been and what is the kind of competition that you face from online players?
Well, there was a lot of talk about online players. We haven't actually faced on the ground any competition from them. Neither have we lost our dominant position to any one of them.
I read somewhere, and I'm not sure if it's true, but for the industry per se, the average selling price has been stagnant for the last 3 or 4 years. Is that true?
No, for Suraksha, we raise our prices around 3 to 4% every alternate year.
Alternate year, okay.
Yes.
So this year also you've done a price hike?
We typically do it in December.
Okay.
So we will be doing it again in December.
Okay.
Suraksha Diagnostics, they're heading to the primary markets. Time for a short break. Up next, Vinay Rajani of HDFC Securities joins in with some trading strategies and a chart check on the market. Stay tuned, we'll be right back.
ответ на применение американского и британского дальнобойного оружия 21 ноября текущего года российские вооруженные силы нанесли комбинированный удар по одному из объектов оборонно-промышленного комплекса Украины. В боевых условиях было проведено в том числе и испытание одной из новейших российских ракетных систем средней дальности.
From the chair, all I said, you know it more than anyone else. I'm hurt.
The Adani bribery case is affecting the entire country.
Nothing is going on at all. Khadge ji,
sir,
as a very senior parliamentarian and a leader, you are aware that my ruling on this issue has been given. I would seek your earnest cooperation, particularly in the background that matters to you more than anyone else, that we are in the 75th year of adoption of our
Sir, 75th year है, उसमें मेरा भी हिस्सा 54 years है, तो मुझे कोई सिखाने की कहने की बात नहीं।
सही, एक बार आपको अनुरोध करूं।
मैं आपसे
एक सेकंड। No, please take your seat. No, in all humility.
Welcome back, and let's get you a quick chart check on the markets now. Vinay Rajani of HDFC Securities is joining us on the show. Vinay, good afternoon. Thank you so much for joining in. What are your views on the index now that we are seeing some bit of consolidation after this two-day up move that you're seeing? Would you stay on the sidelines or use this up move to reduce positions? What's your view here? And couple that with your stock recommendations as well for the afternoon.
Yeah, good afternoon and thanks for having me on the show. So yes, from the low of 21st November, Nifty has risen more than 1,000 points. And for last two trading sessions, we have been witnessing some consolidation happening. And this consolidation is happening because of some technical reasons also. Yesterday's high and today's high is almost same, and it is around its 50 days exponential moving average resistance. And there has been some call writing happening at 24,400 to 24,500. So after a positive news, markets are trying to consolidate. And yesterday we witnessed a gap up opening in the Nifty, and that gap range is placed in the range of 23,950 to 24,100. So it might happen that for the time being Nifty here consolidates or correct a bit. So we can expect a correction towards 2400, 24,100 could be a lower support, and which is a gap support also. So I'm expecting markets to consolidate here, and stock specific action could be seen in the mid cap and small cap space. So for a time being, I'm expecting some running correction towards 24,000, but again at that level market will remain attractive, and at that time one can initiate fresh long position. So at dips I'm recommending to go long in Nifty, and the dip support level is around 24,000. As far as stock recommendation is concerned, we are bullish specifically in Chola Finance. So Chola Finance has started moving up and has got some momentum back into it. So the Chola Finance is trading at 1260. So there has been some positive divergence, and stock has seen a healthy correction from the recent swing highs, and it looks attractive technically. So Chola Finance can be bought at 1260. I'm recommending a trading stop loss at 1240. On the higher side, I'm expecting a target of 1290. The second pick I would like to take is from the defense space, Bharat Electronics, that is looking very strong. So Bharat Electronics 298 is the price, 293 is the stop loss. On the higher side, 308 should be the target.
All right. Thank you so much, Vinay, for joining in and giving us your views on the markets as well as individual stocks. We'll wrap our equity coverage on that note, take a short break, come back on the other side. Manisha Gupta joins in, and she'll be discussing the bullion and jewelry space with Surendra Mehta, who is of the India Bullion and Jewelry Association. Stay tuned.
All I said, you know it more than anyone else. I paid you the highest compliment.
Okay,
Still
sir.
you are taking exception.
Thank you very much. Thank you.
No, sir.
Thank you.
I'm hurt. This is hardly an approach. I have commended his contribution.
Thank you.
I have praised it in the same
Sir, ये बहुत ही important मसला
What I
है.
have to say, sir, not on 267.
267.
No, that my ruling is over.
No, it's a very important, sir. ये देखिए,
No,
ये
you are questioning ruling of
Sir,
the chair.
if you suspend today's business, we can explain, because the Adani
1 second, sir.
regarding this bribery case is affecting the entire country.
Nothing is going on record.
And
nothing is going on record.
No, entire
Nothing
country.
is going on record. Nothing is going on record.
Consistently,
Nothing is
Modi ji is supporting him.
Nothing is going on record. Nothing is going on record. No, sir.
Modi ji supporting him. and दुनिया में
List of matters raised with permission. Srimati J.B. Mather Isam.
Well, death, taxes and changes are the only constants in life, but the other constant in life is the IPL. And while 4,000 miles away in Perth, it was raining runs and wickets, it was raining crores in Jeddah in Saudi Arabia, where the IPL auction is currently underway. The other big constant in the IPL, though, is that the most expensive player tag keeps shifting and raising the bar higher every season. This time around, it was Rishabh Pant, who was bought by the Lucknow Super Giants for a whopping 27 crores. Shreyas Iyer by the Punjab Kings for 26.75. I'll talk about the other Iyer in this list in just a bit, but Punjab Kings also splurged 18 crore for Yuzvendra Chahal, the Indian leg spinner. A lot of talk about foreign players, the big moolah they get, but not playing the full season. This time around was no different. Josh Butler going for 15.7 crore to the Gujarat Titans, and Trent Bolt and Jofra Archer for 12.5 crores each to the Mumbai Indians and to the Rajasthan Royals respectively. Uncapped the big money retentions, of course. I talked about the other Iyer in this list, and that is Venkatesh Iyer, who was retained by the Kolkata Knight Riders for 23.75 crore. Virat Kohli for the RCB for 21, and Arshdeep Singh, the fast bowler, retained by the Punjab Kings for 18 crore. Uncapped players have drawn a lot of attention because of a certain Mahendra Singh Dhoni, but the actual uncapped players who have not played for India received a fair share of bids as well. Rasikdar Dar Salam, the fast bowler from J&K, was bought by RCB for 6 crore. Shashank Singh for the Punjab Kings for 5.5, and Naman Dheer by the Mumbai Indians for 5.25 crores. So, while the Border Gavaskar Trophy is underway in Perth, it is raining crores in Jeddah, and the focus is on the IPL as well.
Joining us on the show now is Surendra Mehta, Secretary at the India Bullion Jewelers and Association. Mr. Mehta, thank you so much for joining us. And it gets as volatile as it can with the gold prices. 5% of gains in the previous week and 3% down overnight. One, how do you read this? We do understand that it's day-to-day events which really seem to be impacting gold. But what does it really mean for an average investor or a trader?
Well, Manisha, absolutely roller coaster ride. In last 1 month, from $2,790 in the spot market to $2,536, then back to $2,721, and now almost down to $2,600 dollars. This is only because of as usual, we have seen whenever Trump gets elected, he flashes some news, and that creates the absolute roller coaster ride in the gold market. And this we are now witnessing in last 1 month, and this would continue till he joins. And even after he joins, I don't know what best he can do, because he talks of cutting the interest, cutting the tax rates. He's talking of sanctions. He's talking of tariff on China's import. So the current look at the current debt to GDP ratio in US, it is 125%, and some experts believe that it can reach out to 200% in some times. What happens? The average American is shouldered with a burden of $108,000 debt. Now, this is that kind of a situation exists in US. And yes, the gold prices can move in a little bearish mode for about a month or so. It can go down to $2,595 first support level, and second support level to $2,524 in the spot market. But overall, I see gold will remain bullish, because if the sanctions are placed on China's will start buying gold, because their manufacturing facility will suffer. If the US debt to GDP ratio keeps rising, then even US will have to start buying. The central bank in other countries will start buying it. So I think gold for a longer term remains bullish.
All right. So as you said, near-term supports are in place. If those hold on, then long-term trend is still on the bullish side. Mr. Mehta, what's the buying trend like in the Indian markets? I mean, we have wedding season ongoing, which will continue for the month of June as well. What kind of numbers are we looking at, one? And two, what's your sense on the imports into India for gold at this year?
Well, I think because of the falling gold prices, and the wedding season, we have almost 65% population which is below the age of 35, and at least 50% population which is below the age of 25. So there will be a lot more weddings in our country, at least for the next 10-15 years. So gold, as usual, Indians buy gold during wedding season and any other festivals. So this year also we are seeing a phenomenal rise in the gold buying especially in the last 1 month, and this would continue, and I believe that we will be crossing 750 tons of last year import in the current.
All right, Mr. Mehta, thank you so much for joining in and sharing with us your thoughts on the road ahead for the gold prices and for precious metals as well. Manisha, thanks a lot for joining in. Time for a short break. More on the markets and specific stocks on the other side. Welcome back. Some selling pressure coming in for the index at the higher levels. The Nifty is now down significantly from the highs of the day. It's down almost 160 points. The dip is now getting bought into, at least slightly, as we speak. It's a slight recovery from the lows of the day as well. The Nifty Bank 2 down 400 points from the lows, but it remains to be seen whether this dip that has come in gets bought into on a sustained basis. We'll pull up some stocks as well that are doing well in today's session. The PSUs, JP Morgan came out with a note today on BEL and HAL, both with an overweight recommendation. Both are off the highs of the day, but still trading with gains of around about 2% each. BEL is up 2%. The 340 rupee target, HAL 2 up 2%, is a 5135 target, which is below its record high. And also pull up Garden Reach Shipbuilders. That one is continuing to move higher, was up around 8 to 9% yesterday, is up another 7% in today's trading session as well. 1550 now for Garden Reach. But with that, it's a wrap on this edition of Halftime Report. Business Lunch comes up next.
It's the bottom end of the urban, which is dragging possibly from the retail credit slowdown. And on rural, we are feeling quite confident about a rural recovery after a very long time. after almost 2 or 3 years, we think that production.
Stocks drift lower after strong start as Trump lifts. The specter of tariffs and domestic growth concerns linger. Realty and IT stocks gain, while auto, utilities and healthcare drag. CNBC-TV18 learns that the cabinet has given its assent to waiving bank guarantees for spectrum awarded before 2022. The move is a significant relief for Voda Idea and a positive for Bharti Airtel. Telecom stocks gain. Food delivery to QCOM major Zomato floats $1 billion QIP to beef up its cash reserves as competition heats up. The offer is indicatively priced at a significant discount to the current price. CNBC-TV18 learns the government is aiming to raise the FDI cap in insurance to 100% from 74% and may introduce amendments to the insurance bill in this session of the parliament to permit composite licenses. Eknath Shinde resigns as the Maharashtra Chief Minister to continue as the caretaker CM until a government is sworn in. Suspense continues over who will be the next Chief Minister of Maharashtra. Hello and welcome to Business Lunch. I'm Sonal Bhutra and those are the top headlines that we are tracking for you at lunch hour. For the markets, it's a sharp fall from the highs that we have seen. Closer to the day's low, the Nifty is down around 53 points. We do have the mid-caps which are outperforming, but overall the markets have treaded down from the highs that we opened today as well. Couple of stocks which are on our radar, we'll discuss that in greater detail during the course of the show. But the Nifty, it's down almost around 170 points from the highs of the day. Banking index is the one which is leading to those losses to some extent. So that index is down around 80 points as we speak. The other laggards that we are seeing in the trade today, the pharma index, the energy space and the auto space. The private banking index is also lower, and these were some of the big movers yesterday. The PSU banking index, for instance, that was doing well yesterday, but today it has come in for some cuts in the trading day. But with that, let's move on to the first story that we are tracking. Sources to CNBC-TV18 suggest FDI cap on insurance sector will likely be raised to 100% from the earlier 74%. Sapna Das is joining us with the details. Sapna?
Well, it is likely the government, may like to bring some amendments to the insurance bill, and that would be in relationship to the raising of the FDI cap from the current 74% to the 100%. Now, these are proposals that have been discussed in the past as well, and it may just be feasible that the ongoing winter session of the Parliament may see some action on this front. Having said that, the sense that we are being given is that probably global investors would be interested in coming in with a full 100% ownership, maybe even singly. So keeping that in mind, I think there would be a bit of messaging on the part of the government also in terms of giving a boost to the entire insurance sector. Second aspect, of course, could be possible that the insurance amendment bill may also incorporate proposal of composite licensing for the insurance companies. Now, there has been a lot of discussion on this in the past as well. 2 odd years, the regulator also has played a very important role on this front. So that might also see some light of the day. Last but not the least, insurance agents or intermediaries, where the FDI cap already has been raised, but they are unable to sell multiple policies or multiple companies, probably that relaxation will also come in. Of course, we need to wait and watch and see what other delegated legislation could follow once the amendments have been cleared by the cabinet and the bill has been brought to the parliament. But this is what the position is as of now.
All right, Sapna, thank you so much for joining us with all those details. But what does the insurance amendment bill bring? And why is it the boldest reform in India's insurance sector? Yash is joining us with more details. Yash?
Well, Sonal, certainly the boldest reform in the history of insurance sector in India. That's because it just changes the dynamics of how the sector has been operating all these years. There are 5 key changes which the insurance amendment bill brings, if at all it gets approved in the winter session of the parliament. The first one, as Sapna was also pointing out, composite insurance license. Now, composite insurance license allows cross-entry of insurers into each other's space. Essentially, life insurance companies being allowed to sell health insurance products or any other general insurance category products like motor insurance. At the same time, general or health insurance companies being allowed to sell life insurance products. The second one is distribution of other financial products. Insurance companies being allowed to sell or distribute other financial products like mutual funds, like bank deposits, FDs, loans. This opens up new streams of revenue in terms of fee income or commission income for insurance companies. The third one is reduction of minimum capital to start an insurance business. Currently, if any entity wants to start an insurance business, it has to bring an initial capital of 100 crore and 200 crore for reinsurance business. That could be reduced. It could be different for different insurance companies, different entities, depending on the size of the business that they want to start. The fourth one is captive insurance licenses. Now, this is for conglomerates. If they want to start their own captive insurance business for their own employees or the entities or the employees of their subsidiaries, they could do so with this particular license. Fifth one is relaxing investment regulations. Insurance companies right now are only allowed to invest up to 15% of their AUM into equity market. Now the call could be with the regulator in terms of allowing request of increasing the equity investments or investment in any other categories on a case-to-case basis.
Okay, all right. Thank you so much, Yash, for joining in and explaining what this would mean if it actually comes by. That's about the insurance space. The stocks are on our radar today. But let's move on. The Union Cabinet has approved a waiver of bank guarantees for telcos, which is expected to reduce the financial burden for these companies. Ashmit is joining us with more details on this one. Ashmit.
Well, big relief coming in for all telecom players. Cabinet approving the decision to grant a waiver for all bank guarantee requirements. A big relief coming in for all telecom players, for Vodafone Idea to be specific. So what is this relief that has been granted? What does it translate into? Well, bear in mind that in 2021, the government had made a decision that for all subsequent auctions, there would be no requirement by telecom companies to furnish a bank guarantee. So whether that's 2022 spectrum auctions, 2024 spectrum auctions, no bank guarantees were required. Now, subsequently, a demand fell from the industry that if the government was open to the idea of waiving off of bank guarantees, why not waive it entirely, even for pre-2022 spectrum auctions? And that is something that in fact found traction with the DoT. The DoT had prepared a cabinet note, sent it, placed it before the cabinet, and late last evening, we understand, the cabinet has granted its approval for waiving off of bank guarantee requirements even for pre-2022 spectrum. Now, this comes as a huge relief, especially for players like Vodafone Idea, that were looking at bank guarantees north of 25,000 crore rupees, looking at liquidity issues. They're able to get relief on that. But just to clarify, this is not a company-specific measure. This relief that has been granted is across the sector for all players. Jio as well as Bharti Airtel also likely to benefit, but not as much as, of course, Vodafone Idea.
Okay, yes, big move on Vodafone Idea, though it has come off from the highs of the day. But thank you so much, Ashmit, for joining in with all these details. Moving on from insurance to telecom, now let's talk about the auto sector, because we are getting mixed signals coming in the month of November, with two-wheeler sales growing strongly while passenger vehicle sales remain under pressure. So Darshan is here with the breakdown and the summary of retail sales data for November so far.
So it's the Vahan registration data, the all-important numbers that all the companies have been talking about. If you remember, after the Q2 results, most companies in their commentary did mention about that more than wholesales, the numbers that matter the most are retail sales. And taking the cues from there, we have here tried to analyze the Vahan registration data for the month of November. Let's see what those numbers indicate. In a nutshell, on the demand perspective, it's a continuation of what we saw in the month of October. Two-wheelers remain the biggest outperformer, followed by tractors, whereas demand for passenger and commercial vehicles remains muted. Now let's come to the numbers, and before we talk about that, do remember the comparison numbers are for the entire month, whereas for this month the data is for 25 days so far. So starting with two-wheelers, the pickup in rural demand seems to be reflecting in the numbers of Hero MotoCorp. Total registrations for Hero MotoCorp have already surpassed the numbers of October and are just 3% lower than November 2023. For TVS Motor and Bajaj too, the registration details are looking healthy, And the numbers are already at par with what we saw last month and are down just 4% and 11% respectively against November 2023. Royal Enfield, while it's currently underperformer amongst two-wheelers, but the data of last few months indicates that Royal Enfield sees a surge in registrations during the last few days of the month. The next in the list are tractor segment. Here too, registration trends are looking healthy with 5 days to go in this month. For M&M tractor, registrations are down less than 10% both month-on-month and year-on-year. And for Escorts, the decline is slightly steeper in comparison to M&M. It's down in the range of 15 to 17%. Shifting to the segments where demand concerns remain are passenger and commercial vehicles. With only 5 days to go this month, most companies are seeing sharply lower registrations. The numbers are down in the range of 40 to 52% month-on-month and are down 21 to 40% year-on-year, with Maruti and Tata Motors looking the weakest. Before ending, it's important to remember that the comparison numbers both month-on-month and year-on-year cover the full month, while the current data for November represents only 25 days. This gap means significant changes could still occur in the remaining days of the month.
All right, Sudarshan, thank you so much for explaining what is happening in the auto industry in the month of November. With that, we'll slip into a break now. Eknath Shinde resigns as the Maharashtra Chief Minister. There's a suspense over who the next CM will be. That continues. We get you more updates on the other side.
ответ на применение американского и британского дальнобойного оружия 21 ноября текущего года российские вооруженные силы нанесли комбинированный удар по одному из объектов оборонно-промышленного комплекса Украины. В боевых условиях было проведено в том числе и испытание одной из новейших российских ракетных систем средней дальности.
From the chair, all I said, you know it more than anyone else. I'm hurt.
The Adani bribery case is affecting the entire country.
Nothing is going on at all. Khadge ji,
sir,
as a very senior parliamentarian and a leader, you are aware that my ruling on this issue has been given. I would seek your earnest cooperation, particularly in the background that matters to you more than anyone else. that we are in the 75th year of adoption of our
Sir, 75th year है, उसमें मेरा भी हिस्सा 54 years है, तो मुझे कोई सिखाने की कहने की बात नहीं।
सही, एक बार आपको अनुरोध करूं।
मैं यहाँ
एक सेकंड, no, please take your seat. No, in all humility.
Welcome back. You're still tuned into Business Lunch on CNBC-TV18. Let's now bring you some news from the government formation process in Maharashtra. Chief Minister Eknath Shinde, along with his deputies Devendra Fadnavis and Ajit Pawar, they have reached the Raj Bhavan in Mumbai to submit their resignation. Sandhya is joining us now with more details on what happened, what's next. A lot of suspense here. Sandhya.
See, Sonal, we all knew that if the mandate wasn't as decisive as it is right now, this was bound to happen. But with such a decisive mandate and with a clear majority to a single party, this kind of confusion, this can only happen in Maharashtra. So the results were out on 23rd of November. Right now we are outside Raj Bhavan, and today morning both the DCMs along with the CM of the state, they came here and they tendered their resignation, because today is the day when the term of Maharashtra's assembly ends. So as per the procedure, it was the routine procedure, all the three stakeholders here, the CM and both the DCMs, they tendered their resignation. Now ideally the swearing in ceremony for the new government should happen as soon as possible, because remember, as per the procedure, after the term of assembly ends, it's the president rule, that's the next step. But because this time the confusion is not as massive as it was in 2019, so in all likelihood more time will be borrowed. So the possibility of president rule is not as high as it was in 2019, but the confusion prevails. Now what has happened is Mahayuti, which has received a clear mandate, and that too BJP, which has emerged as the single largest party once again. BJP and RSS, obviously they both want the next CM to be from BJP. Devendra Fadnavis is the front runner. But at the same time, Eknath Shinde, who was the chief minister for the last 2.5 years, as per the sources, he is not ready to withdraw his claims as the chief minister. But on the other hand, Ajit Pawar has agreed to Devendra Fadnavis' name as the next CM of Maharashtra. What exactly is going to happen? We might have to wait for some more days. It is expected that all the three stakeholders once again will go to Delhi. The decision will be taken in Delhi. In fact, yesterday both Devendra Fadnavis and Eknath Shinde went to Delhi. A meeting happened. Now, when will all these three parties announce the next CM? That remains to be seen. But the term of Maharashtra's assembly ended today.
Okay, yes, that is the big story that we are tracking. Thank you, Sandhya, for bringing us all those details. We'll keep coming back to you for more, because right now there's suspense, but soon we'll know who will be the Chief Minister of Maharashtra. That's about India. Let's talk about international updates now. President-elect Trump has decided to double down on old foes, Mexico and Canada, with new trade tariffs of 25% on all products coming into the US, while also sticking true to his campaign pledge. Threatening China with higher tariffs hikes, the president-elect posted the announcement on his social media platform, Truth Social, pledging to keep it into effect to address the drug trafficking and border crossing issue from Mexico and Canada, while he threatens China with a 10% hike on current tariffs to curtail goods coming into the United States. All right, so this is an important international story. We'll keep tracking that for you for more updates. But we'll slip into a break now. When we return, Israel and Lebanon are set to reach a ceasefire deal today. Updates follow after the break.
Here, all I said, you know it more than anyone else. I paid you the highest compliment.
Okay,
Still
sir.
you are taking exception.
Thank you very much. Thank you.
No, sir.
Thank you.
I'm hurt. This is hardly an approach. I have commended his contribution.
Thank you.
I have praised it, and the same.
Sir, ये बहुत ही important मसला
What
है.
to say, sir? Not on 267.
267.
No, my ruling is over.
No, it's a very important, sir.
No, you are questioning ruling of the chair.
If you suspend today's business, we can explain because the Adani regarding this bribery case is affecting the entire country.
Nothing is on record.
And
nothing is going on record.
No. Entire
nothing
country.
Is going on record. Nothing is going on record.
Consistently,
nothing is
Modi is supporting him.
Nothing is going on record. Nothing is going on record. No, sir.
Modi is supporting him. And दुनिया में
List of matters raised with permission. Srimati J.B. Mather Isam.
Well, death, taxes and changes are the only constants in life, but the other constant in life is the IPL. And while 4,000 miles away in Perth, it was raining runs and wickets, it was raining crores in Jeddah in Saudi Arabia, where the IPL auction is currently underway. The other big constant in the IPL, though, is that the most expensive player tag keeps shifting and raising the bar higher every season. This time around, it was Rishabh Pant, who was bought by the Lucknow Super Giants for a whopping 27 crores. Shreyas Iyer by the Punjab Kings for 26.75. I'll talk about the other Iyer in this list in just a bit, but Punjab Kings also splurged 18 crore for Yuzvendra Chahal, the Indian leg spinner. A lot of talk about foreign players, the big moolah they get, but not playing the full season. This time around was no different. Josh Butler going for 15.7 crore to the Gujarat Titans, and Trent Bolt and Jofra Archer for 12.5 crores each to the Mumbai Indians and to the Rajasthan Royals respectively. Uncapped the big money retentions, of course. I talked about the other Iyer in this list, and that is Venkatesh Iyer, who was retained by the Kolkata Knight Riders for 23.75 crore. Virat Kohli for the RCB for 21, and Arshdeep Singh, the fast bowler, retained by the Punjab Kings for 18 crore. Uncapped players have drawn a lot of attention because of a certain Mahendra Singh Dhoni, but the actual uncapped players who have not played for India received a fair share of bids as well. Rasikdar Dar Salam, the fast bowler from J&K, was bought by RCB for 6 crore. Shashank Singh for the Punjab Kings for 5.5, and Naman Dheer by the Mumbai Indians for 5.25 crores. So, while the Border Gavaskar Trophy is underway in Perth, it is raining crores in Jeddah, and the focus is on the IPL as well.
Welcome back. You're still tuned into Business Lunch. Well, the Indian Parliament today marked the 75th year of Constitution. President Draupadi Murmu addressed a joint sitting of both houses at the Central Hall of the old Parliament building. She also released translated versions of the Constitution in Sanskrit and Maithili. In her address, she called the Constitution a live, progressive document that continues to guide the nation. Let's move on now to the latest from the ongoing West Asia conflict. Israel's cabinet is expected to vote on a Lebanon ceasefire deal today. This is a plan that has been approved by Israeli Prime Minister Benjamin Netanyahu in principle. Israeli Security Cabinet is set to meet later today to discuss the finer details of the deal and provide formal approval. But Israel and Hezbollah continue to exchange rocket fires on a daily basis, and Israel maintains its goal of eradicating Hezbollah. Okay, those are some international updates. But as we wrap on this edition of Business Lunch, we leave you with visuals from New York, where Indian stars strut the red carpet of the 52nd Annual International Emmys. Actor and comedian Veer Das charts history as the first Indian to host the Emmy Awards, while actor Aditya Roy Kapoor was spotted on the red carpet after drama series The Night Manager was nominated for Best Drama Series.
Well, good afternoon and welcome to Midcap Radar. I'm Vivek Iyer, and with me today for a change is Manglam Malam. Good afternoon, Manglam. It's been a session, where the early morning gains have been given up and Nifty is struggling to keep up pace as far as the bulls are concerned. Especially in the last hour of trade, you've seen selling pressure intensify, especially within the pharma pack, with the Nifty Pharma Index now trading near the day's lowest point. Look at some of the names like Lupin, look at Aurobindo Pharma, Cipla. All of these stocks today are struggling under pressure.
Well, Vivek, you joined me at 10:30 today, so I thought I'll return the favor by joining you at 1:30 as well. But the market was markedly different at 10:30 than what it is right now, though the only good part is the mid-caps are outperforming. A couple of these Adani Group stocks also are coming in for some bit of selling, so watch out for that. Adani End down 5%, Adani Ports down about 3.5% as well. So these are a bunch of these nifty stocks which are under pressure. We'll talk about all of that as we take stock of all the headlines which are in focus this afternoon. Stocks drift lower even after a strong start as Trump lifts the spectre on tariffs and domestic growth concerns linger. Realty and FMCG stocks gain, while pharma and healthcare drag. Mid-caps relatively perform better.
Different stocks are buzzing after JP Morgan initiates coverage. The brokerage issues buy calls on Hindustan Aeronautics and a neutral rating for Mazgaon Dock Shipbuilders. Says the recent correction in these stocks provides an attractive entry point.
MCure Pharma is up 8% after Kotak Securities turns bullish on the stock, upgrades the stock to a buy with a target price of 1680.
Hitachi Energy surges nearly 7% after its consortium with BHEL secures an interstate power transmission project. Brokerage Nuvama also issues a bullish note on Hitachi Energy.
Pharmaceutical stocks, they underperform and come under big selling pressure. Index loses nearly 1%. Names like Zydus, Aurobindo Pharma and Ipca Labs lose between 1 to 3%. Well, so like I was pointing out, a couple of these Adani Group stocks, they should come up for you on the screen. Adani Ent is down about 4% I'm just looking at some of the other names as well. Adani Ports, for instance, too, down about 3.5%. And if you look at some of the other names as well, Adani Green, for instance, was lower. And then we did see some traction on the downside on a lot of these other group companies as well. So Adani Green down about 7%, Adani Ent down 5%, Adani Ports down 4% as well. But another stock which is actually declining from the broader markets right now is BSE. BSE was slightly under pressure in yesterday's trading session as well. Currently down about 5% at the low point of trade. A lot of mid caps actually moving around. We have Hormas to take us through all of those stocks which are moving.
Some bit of moves coming in the broader markets as well. We start off with the gainers in today's trading session, and some of them are based on the news flows that have come in. Vodafone Idea at one point was up 15%, still holding on to some gains of around 11%. Triveni Turbines up for another second day of gains there, 13% higher. Tata Tele 2 seeing gains of around 11%, and Hitachi Energy, after the order win, is building on to the 126% gains that it has already had this year. The PSU stocks, as you were mentioning, they are the ones that are doing well in today's session. Shipbuilders in particular, Mazgaon Dock after the JP Morgan initiation, Cochin Shipyard, another upper circuit for the stock, and Garden Reach too seeing healthy gains of around 6.5%. Stocks that are doing well on the back of strong volumes in today's trading session. MCure Pharma, after the upgrade from Kotak, is doing well. Sonata Software is at the highest point of the day, 7% higher there. Piramal Enterprises and KFin too gaining on strong volumes. And lastly, some stocks that are underperforming in today's trading session. Poly Medicure was up yesterday, seeing some profit booking today. Adani Green, as you just mentioned, is down for the 6th day running today. BSC and GE Vernova, after the QIP launch, is locked in a lower circuit. Back to you guys.
Thank you so much for that, Hormas. Quite a few movers as far as the broader end of the markets are concerned. Well, while the pharma pack is under pressure, a couple of stocks within the pharma pack, are doing quite well. In fact, trading near the day's highest point. Look at names like Lotus Labs, Biocon, and Granules. All these three stocks, from the broader end as far as the pharma pack is concerned, are doing quite well. In fact, Lotus, up near the day's highest point. Moving on, let's welcome Shrikant Chauhan from Kotak Securities for a technical check on the market. Good afternoon, Shrikant. Thank you so much for joining us. First up, what is your view as far as the indices are concerned, and any view as far as some of the auto names are concerned, seeing quite a bit of selling pressure today?
Good afternoon, Vivek. Good afternoon, Mangalam. I think, this market is rallied to the extreme levels in a very short span of time. It was around 23,200 levels. From there, all the way, it went to the levels of 24,300, 350. And now it is consolidating. So I am of the view that it is going to spend some more time within the range of maybe 24,000 324,000 on the downside. As it's a spectacular rally that and it was like broad base. I'm of the view that in case if there is any correction, then close to 24,100, 24,000, we should look for initiating long positions on the market on indices. Again, we can see the levels of 24,500. That's the view. For Bank Nifty, there also 52,500 is the level above which we can expect a breakout, and then the Bank Nifty can move to the levels of 53,000 or 53,200. So one thing is very clear, that if we see any correction in the market, then the strategy should be to buy on dips initially, and we should look for focusing more and more on banks, IT, as well as commodities.
Okay, so what are your stock picks then? Banks, IT and commodities, what are you bullish on here?
Yeah, Mangalam. I think, from the bank space, most of the stocks are trading at their resistance level. So in case if there is any correction, then certainly we should look for adding them. But at current levels, there are like few other stocks which are into news like Zomato, which is currently trading around 277, 278. It is forming some reversal formation, and based on it, the stock can move to the levels of 300 or maybe 350. So at this level, it's very it's attractive buy with a stop loss close to 264 if there is any trading position. If there is like a medium to long term view, then certainly we should look for adding this stock at current levels. And the other stock which we like is Piramal Enterprises, which is currently trading around 1160, 1180. And the base part of this particular Piramal Enterprises is that it has spent nearly a year within the range of this 1150, 1175 on the high side and 950, 900 on the downside. So after a very long time, the stock has given a breakout. The stock can move to the levels of at least 1300 in next maybe few days or weeks. So Piramal Enterprise is also a buy at current levels, and if there is any trading position, then we are advising stop loss at 1130.
Okay, so Zomato and Piramal Enterprises on your radar today. Thank you so much for joining us, Srikanth. Well, let's now slip into a short break. Harsha from IndiGrid and Srini Nagarajan from BII join us next on the other side of the break to talk about their partnership for a battery storage platform, EnerGrid.
ответ на применение американского и британского дальнобойного оружия 21 ноября текущего года российские вооруженные силы нанесли комбинированный удар по одному из объектов оборонно-промышленного комплекса Украины. В боевых условиях было проведено в том числе и испытание одной из новейших российских ракетных систем средней дальности.
from the chair, all I said, you know it more than anyone else. I'm hurt.
The Adani bribery case is affecting the entire country.
Nothing is going on at all. Khadge ji,
sir,
as a very senior parliamentarian and a leader, you are aware that my ruling on this issue has been given. I would seek your earnest cooperation, particularly in the background that matters to you more than anyone else, that we are in the 75th year of adoption of our
sir, 75th year है, उसमें मेरा भी हिस्सा 54 years है, तो मुझे कोई सिखाने की कहने की बात नहीं।
सही, एक बार आपको अनुरोध करूं।
मैं
एक सेकंड, no, please take your seat. No, in all humility, from the chair, all I said, you know it more than anyone else. I paid you the highest compliment.
Okay,
still
sir.
You are taking exception.
Welcome back to Midcap Radar. Well, as promised, let's focus on the energy space now. IndiGrid, British International Investment and Norfund have come together to form a $300 million platform known as EnerGrid to develop greenfield transmission as well as battery energy storage projects in India. To discuss more on this development, Harsha, CEO at IndiGrid, and Srini Nagarajan, Managing Director and Head of Asia at BII, join us now. Good afternoon, gentlemen. Thank you so much for joining us. Harsh, you're a regular, so let me start with you. The first thing, when we speak about IndiGrid is most of the investors know this particular company as a company that actually onboards mature transmission projects and post which, using the cash flow, get dividend. So why is there a deviation, with this particular platform of getting into a slightly different business compared to the core business? And what is the kind of opportunity you're seeing as far as the battery energy space is concerned?
Thank you, first of all, for having us here today. I think the first thing I would like to clarify is that battery energy storage is not really something new. It is the need of the hour for the Indian transmission system today. Considering the renewable energy expansion that is happening in the country and actually across the world, battery energy storage is a very, very important part of the grid, which plays the role of stabilizing the grid as well as the power requirement. It's new for India. However, it's not new for the rest of the world. And several of our current investors, including GIC and KKR, owns sizable amount of battery capacities across the world in different investments. So while it is first time for IndiGrid in India, but for our shareholders, it has been done several times over at a much bigger scale in the rest of the world. So we derive a lot of comfort on that. Battery energy storage projects are just like transmission, provides a predictable, stable take-or-pay contracts. So it fits right in the alley for us, our business. And therefore, while we have started some of the first two projects to be done on our own, we are partnering with BII and Norfund in EnerGrid to create a bigger pipeline of development assets, which on its own, IndiGrid would not be able to do.
Got that. So, just before we go to Srini, one more regulation question we need to ask you is that it's a $300 million, investment between three partners, of which everyone's doing about $100 million each. And by the end of it all, it will be acquired by IndiGrid at a pre-agreed enterprise value. What is this pre-agreed enterprise value, and where are you getting this $100 million at the start to fund this from? And if you could give us this exit route for everyone else, what is this value?
Sure. So first of all, why is IndiGrid doing this? IndiGrid is doing it to have an access to a predictable pipeline of operating assets to grow, right? For being predictable, what IndiGrid is providing to EnerGrid is a confirmed value at which it will acquire different assets, as and when it is bidded out. So there is no fixed number, but the contract will be signed before the bid to ensure that the EnerGrid has a visibility at which IndiGrid will buy, and IndiGrid has a visibility that at which price it will buy from EnerGrid. So it is to create predictability between both platforms. So the price will get decided bid by bid, but it will be agreed upfront between EnerGrid and IndiGrid, along with BII and Norfund. So that's the framework under which we are operating. 100 million, you got to look at it in perspective of scale. IndiGrid's AUM today is $3.5 billion. So this is just about, give or take, 3 to 3.5% of its AUM. So it's not a significant size in terms of capital commitment, especially when this commitment will be made over the next couple of years as we win projects. Again, where it will come from, IndiGrid itself right now has more cash balance or substantially more cash balance than 100 million. So it's not that we need to do anything creative to get this. This capital is already available with IndiGrid based on all the cash accruals and capital raises that has been done till now.
Okay, got that. Mr. Ragarajan, good afternoon and thank you so much for joining us. First up, BII, even in its earlier avatar, has actually been ahead of the curve in identifying opportunities across Indian markets and Indian equity markets, as well as, some of the unlisted players where you have investments. What made you choose, the battery energy storage solutions as an investment option? And number one, what is the kind of opportunity that you see? We understand that, you've already tied up the exit given the fact that IndiGrid will be buying it. And secondly, why chose IndiGrid for this particular, foray?
Thank you. I think, first of all, I must say that we are extraordinarily delighted to be a part of IndiGrid and to create this platform, which was announced back in COP29. Just as a background, we are a UK government-owned DFI, and we want to deliver the climate finance, particularly in the regions where our capital is much more required and in areas where the commercial capital is slightly nervous of coming. India is a very important market for us. We have investments in excess of $2.4 billion, and we've been around for the last 35 years. The other objective is to make sure that we don't crowd out mainstream investors so that we are being additional in every investment we make. I'm giving you this genesis because this is very important as a background to why we invested here. As you know, the lack of transmission infrastructure in India is actually a critical bottleneck for achieving India's whole target of 500 gigawatts by 2030. So what we have done in IndiGrid is to take the early stage development risk, which might be too high for the commercial investors. And this partnership will develop this critical infrastructure, thereby improving the grid efficiency and the whole renewable energy integration, really. And the structure will also help mobilize, other commercial investors into this particular platform. So, I just have to say that why did we do this? IndiGrid is an extraordinary company. First of all, I must say that look, it's been created by great partners who are already ahead in this whole transaction. And I think the more important thing for us is to fundamentally ensure that our the launch of this whole platform definitely demonstrates how BII is trying to pioneer its investment in the area of climate finance.
Mr. Nagarajan, one question. We understand that in this particular investment that you're making, you will get an exit because IndiGrid will be buying this. Now, typically, what is the hurdle rate of return for you when you invest in such projects? So what is it that you're looking at? You don't need to give an exact number, at least the internal hurdle rate that you'll work with.
See, fundamentally, there are multiple routes for exiting from, as far as BII is concerned. As you know, returns in infrastructure are not going to be particularly the same as what private equity style investment, in the overall investments will make. Considering that BII will be investing at this high risk phase of the project during the whole development and the overall, the project itself, the risk-adjusted return in our investment will have to be commensurate to that. Our target return will be based on multiple factors, including the complexity of the project, the competitive dynamics in the bids, etc. So we anticipate that the overall portfolio returns will be somewhere around mid to high teens.
Okay, mid to high teens.
Harsh, one more question from our end. Given the fact that, like Sir just mentioned, that, initially these are very risky infra assets, would you be a little worried about, actually getting all of the required approvals, both internally as well as, from shareholders, while you're going ahead and acquiring these assets back, once they reach a slightly more mature stage? And number two, what is it that you're doing in order to go ahead and increase the AUM?
Sure, certainly. So I think to answer your first question, that's why we are forming IndiGrid in partnership with BII and Norfund. On its own, IndiGrid would not be contributing $300 million size of capital to develop these kind of projects. So we are partnering to have a multiplier impact. With the capital that we are putting in, about 100 million, and with BII and Norfund another 200, put together we'll be able to do around $1.2 billion of projects, which IndiGrid would not have done it on its own standalone. So that has a multiplier impact. While transmission remains a difficult sector to be in at a development stage. It's evolved substantially over the last 10 years. And we think that with land compensation going up, landowners are getting fair compensation at the link to market value of the land, which has been always the big trigger, and which makes it relatively easier in terms of execution, or rather, I would say fair in terms of execution of projects. Approval processes in general has improved substantially over the last 10 years, whether it's forest clearance or other clearance that's taken. High amount of transparency has come into place. Having said so, we still not would have done $1.2 billion on our own. Partnering with Energrid in this regard with BI and Norfund allows us to do a multiplier of much larger assets. To your second question, this is exactly, we are adding $1.2 billion of assets, which is give or take, I would say 10,000 crores in the coming 2 to 3 years in our balance sheet. So this will be a significant part of our pipeline at IndiGrid that we'll look to grow with. We'll continue to do M&A in renewable space and transmission space, but this will be an additional, more predictable line of business for us to grow our portfolio in the coming years.
Got that, Harsh, and thank you so much, Mr. Nagarajan, as well joining. We'll have a much longer conversation with you next time around. But moving on, let's slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Well, death, taxes and changes are the only constants in life, but the other constant in life is the IPL. And while 4,000 miles away in Perth, it was raining runs and wickets, it was raining crores in Jeddah in Saudi Arabia, where the IPL auction is currently underway. The other big constant in the IPL, though, is that the most expensive player tag keeps shifting and raising the bar higher every season. This time around, it was Rishabh Pant, who was bought by the Lucknow Super Giants for a whopping 27 crores. Shreyas Iyer by the Punjab Kings for 26.75. I'll talk about the other Iyer in this list in just a bit, but Punjab Kings also splurged 18 crore for Yuzvendra Chahal, the Indian leg spinner. A lot of talk about foreign players, the big moolah they get, but not playing the full season. This time around was no different. Josh Butler going for 15.7 crore to the Gujarat Titans, and Trent Bolt and Jofra Archer for 12.5 crores each to the Mumbai Indians and to the Rajasthan Royals respectively. Uncapped the big money retentions, of course. I talked about the other Iyer in this list, and that is Venkatesh Iyer, who was retained by the Kolkata Knight Riders for 23.75 crore. Virat Kohli for the RCB for 21, and Arshdeep Singh, the fast bowler, retained by the Punjab Kings for 18 crore. Uncapped players have drawn a lot of attention because of a certain Mahendra Singh Dhoni, but the actual uncapped players who have not played for India received a fair share of bids as well. Rasikdar Dar Salam, the fast bowler from J&K, was bought by RCB for 6 crore. Shashank Singh for the Punjab Kings for 5.5, and Naman Dheer by the Mumbai Indians for 5.25 crores. So, while the Border Gavaskar Trophy is underway in Perth, it is raining crores in Jeddah, and the focus is on the IPL as well.
Welcome back. A bunch of stocks doing extremely well, even as the frontline indices are contained at lower levels. Shriram Finance, we had positive commentary from the management this morning that stocks moved to the high point of trade after a 5% up move yesterday as well. Currently sitting with a gain of almost 3%. We have Piramal Enterprises that extends its gains in an otherwise wobbly day for pharmaceutical stocks. Biocon is the other one which has moved to the high point of trade as well, and giving it company at the top is Laurus Labs. So a bunch of stocks doing well, more stocks advancing than the number of stocks which are declining. With that, it's a wrap on this edition of Midcap Radar. MF Corner when we return.
Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio, and today we'll focus on investing in exchange-traded funds. To understand what the ETF market in India is like, how do the ETFs in India compare with global ETF markets, what is the risk associated here, what are the growth levers going forward, we have Siddharth Srivastav, Head ETF Products and Fund Manager at Mirae Asset Investment Managers, and Tarun Birani, the founder and CEO at TBNG Capital Advisors, joining us now on the show. Gentlemen, good afternoon. Thank you so much for joining in. Well, ETF, there have been a lot of changes that we've seen recently. It's the big buzzing word as well. So let's try and understand that first up. Tarun, let me begin with you. How big is the ETF asset class size in India? How does it compare with global ETF markets?
Good afternoon, Sonal, and thank you for having me on this show. And just to give you a quick background about the Indian ETF market, this is growing significantly with ETF or indexing constitutes now almost 13% of almost mutual fund industry AUM, approximately like 10 lakh crores right now as we talk. However, compared to the global ETF market, which has surpassed almost like $10 trillion in AUM, Indian ETF is still, I would say, is at a nascent stage. Again, this disparity highlights the enormous potential of the growth as Indian investors increasingly adopt cost-effective indexing and ETF ideas and building a more diversified exposure in the markets.
Okay, all right. So that is what the difference is looking like. Siddharth, welcome to the show. You tell us, how has it evolved? What have we seen in terms of growth? How is it comparing? Because we are still at a nascent stage, I believe.
Yeah, absolutely true. Like Tarun mentioned, globally, ETF industry is around $14.4 trillion. We saw inflow of around $1.4 trillion in last year itself, both from a usage point of view and products point of view. ETF industry has evolved significantly globally. In fact, right now, the share of passive in US market is almost 50%. It's more than the active funds in terms of AUM. What we are seeing in India is it's pretty nascent stages. We are still developing. For example, out of 8.27 lakh crores, which is the ETF AUM, majority is into Nifty 50, Sensex ETF, and gold and silver ETF. Almost 60% of the market share is sort of cornered by these four products. This is down from 66% 3 years back, but still significantly that is the segment where you see most of the AUM and volume. But interestingly, in last 2 years especially, we are seeing significant traction in smart beta products. If I add ETFs and index fund, a lot of products have come out in smart beta space, almost 79. The total AUM is almost north of 35,000 crores, with almost 28,000 crores inflows in last 3 years. Also, we are seeing some bit of thematic products, popularity of niche thematic products, which are not there in the active side, which are finding popularity like defense, tourism, electric vehicles, etc. So I think now what we are seeing is that apart from active versus passive debate, people are also looking forward to passive because a lot of innovation is happening on the passive side. Since we all know that because of recategorization of schemes, very few innovation can be done on the active side.
That's an interesting point, actually. More than active and passive, it's becoming a different debate altogether. That only means how deeper the market is getting, right, when it comes to different asset classes and availability for investors as well. Tarun, coming to you, we talk about ETFs seeing that growth, but is there a specific category or which amongst the ETF basket is seeing the highest traction? Are we seeing better traction in commodities, or is it still the equity ETFs that people are looking at?
So I think as an asset allocation strategy, we have 3-4 asset classes: equity, debt, gold, right? But if I look at from a indexing and ETF, I think equity is driving the growth in the indexing market or the ETF market because it is considered to be more cost effective and again ease of access to diversified equity exposure. So from that point of view, equity is the first. Then gold is also getting a lot of traction. It has given a great vehicle to a lot of investors. Instead of buying physical gold, you can actually build exposure through gold ETFs. And I think debt ETF, I would say, still gaining traction, but it is still very, very nascent in India. And times will tell if we can find this category has become large. But globally, debt is also a very, very large category in ETF. So I think equity continues to be the highest in the traction right now, if I talk about.
Okay, so equities, that continues to be the big focus point. Siddharth, we have the smart beta investing, which is picking up as well. Is that seeing traction in the ETF space? What's been your take, the way folios have risen in the last couple of years?
Yeah, so like I mentioned that if we look at both index funds and ETFs, we have seen significant number of new products catering to these very specific strategies on momentum, low volatility, quality, equal weighing, etc. There are almost 79, 80 products right now in this space, providing a lot of options to the investors. So someone who's looking for a high risk, high reward strategy can go towards momentum and alpha based funds. Someone who's looking for a risk averse investment in equity can go towards low volatility based fund. And we are seeing reasonable traction in each of these categories depending on the risk profile of the investor. For example, as I mentioned that now very quickly this category has risen. 4 or 5 years back, there was just 200, 400 crores in terms of AUM. Right now, it's somewhere around 35,000, 38,000 crores with almost 27,000 crores of inflow coming in last 3 years. So this is a very evolving field. And like I mentioned that with new themes coming out, especially in new age automotive, tourism, defense, etc., the usage of ETF and passive products have evolved. People are looking forward towards using ETFs as a portfolio completion tool or as a way to target a certain very focused segment. And if we even look from a trading point of view, ETF trading has grown significantly. For example, now on a daily basis, 1,400 crores of ETF trades on an average. If you are only looking at equity, that number is somewhere around 400-500 crores. So you are seeing traction not only in terms of folios but also increase in trading on the exchange.
Okay, so there are different use cases that we are seeing with ETFs right now. Whenever we talk about returns, we have to talk about taxation, and like we have said, globally ETFs have more traction than what we are seeing in India. So in terms of taxation, Tarun, let me come to you. There is a difference in US ETFs and Indian ETFs. How does it work? We have some withholding tax. There's something on dividends as well, if you can explain that.
Right. So let me first come to Indian ETF, and I think that's pretty straightforward. If you pick up Indian ETF or Indian index funds, the long-term capital gains are more than 12 months is 12.5%. Again, you have exemption limit has been increased to 1.25 lakh rupees now. Again, short-term capital gains are similar like direct equity, which is 20%, up from 15% in the last budget. Again, coming to non-equity oriented ETF like gold, international and all, the long-term capital gain more than 24 months is taxed at 12.5% with no indexation benefit available now there. And again, on the short-term capital gain, it is taxed at the marginal tax rate of the investor. Now, let's come to the US ETF. Again, Indian investor can pick up US ETF through two mechanisms. One is through a LRS route, which is subject to $2.5 lakh dollars per year per account can be invested, which is again subject to TCS of almost 20% deducted at the time of investment. But there, in that structure, you have a long-term capital gain, which is for more than 24 months is taxed at 12.5%, and short-term capital gain, it is applicable at the slab rate. Again, there is one very unique structure, and again, dividends is subject to 25% withholding tax in US, offset against the Indian tax liability under the DTAA, subject to the country we are investing. And coming to another mechanism which Indian investor can use to invest in, let's say, US equities or US index funds is through fund of funds. So we have a lot of funds mirroring the NASDAQ, S&P 500 and many such structures. And these funds, more than 2 years is available at 12.5% in tax rate. So according to me, these are very good structures for Indian investors, and that could be optimized for them. Yeah.
Okay, all right. So that's about the taxation bit. Let's come to you, Siddharth, because we've spoken about what are we seeing in India. But how have ETFs grown globally? Can we put some spotlight on that? How does it compare with what we've seen in India in terms of growth as well?
Yeah, so from a product point of view, obviously passive started as a very simple mechanism to replicate indices like S&P 500, Nasdaq, etc. Like in India, we started with replicating indices like Nifty 50. Now globally, we are seeing a lot of product innovation. For example, the smart beta story started globally in around 2010 itself, around 10-15 years back. Then we saw a lot of theme-based products getting popular because there were a lot of new disruptive themes which are emerging like AI, EV-based investments, blockchain, etc. And now we are seeing sorts of two categories which are getting very popular globally. One is derivative-based ETFs. So you have inverse and leverage-based ETF, which can allow you to take bearish or bullish call on the market. You have covered call and buffer ETFs. Then also one more category of ETF, which is gaining significant traction globally, is an active ETF. Almost $1 trillion of money has flown into active ETF, which basically is somewhat hybrid of active fund management in an ETF vehicle. So that is something which is very interesting, which is happening globally. In fact, you'll be surprised to know that in GIFT City, within the regulation, active ETFs are allowed. So we might very well see active ETFs in India also. When it comes to India, as I mentioned that we are a bit behind in terms of product innovation. People are still understanding how to use ETF and passive products in their portfolio, Nifty 50, Sensex, etc. in their core portfolio, smart beta and thematic products in their satellite portfolio or for tactical allocation. So we have some way to go, but I hope that we'll also see such innovative products in India pretty soon.
Okay, active ETFs, that'll be interesting to watch out for, and the way there have been newer products, there's so much for an investor to look at and invest in as well. So interesting times ahead. Gentlemen, a very interesting chat, but we have to slip into a quick break. On the other side, we'll continue our discussion, everything about ETF investing and more. Stay tuned.
it's the bottom end of the urban which is dragging.
Welcome back to MF Corner. We still have with us Siddharth Srivastav of Mirae Asset Investment Managers India and Tarun Birani of TBNG Capital Advisors to continue our discussion on investing in ETFs. Siddharth, we have spoken about what's working for ETFs, but are there some risks associated with this asset class? Why are investors still not warming up so much to this idea?
That's a great question. So first of all, ETF mitigates only active fund manager risk. The market risk remain. So investors should be very cautious about the passive product he or she is investing in, and the investment objective of the product should align with the investment objective of the investor. For example, there can be some niche ETFs which might be more risky than the active fund because they cater to a very specific market segment or strategy. For example, a momentum or an alpha strategy based fund on a mid cap will be obviously more risky, will have higher drawdowns than a mid cap 150 ETF. So investor needs to look at the method, needs to look on how the portfolio is created and whether the method aligns with what he or she is expecting and whether the risk profile also aligns with his risk profile. So that is the most important thing. And also, since so many product innovation is happening, we have 232 ETFs in India right now, 260 index funds. These nuances matter, and hence one should look into the portfolio creation method and the typical performance cycle and risk profile of an passive fund also. Now, when it comes to obviously ETF buying and selling, I think people are now warming up to the idea. As I mentioned that we have seen 4 times increase in ETF trading on exchange in last 5 years. If we look at equity ETFs, almost 570 crores of ETF trade on an exchange on a daily basis. The folio number has risen to almost 2.3 crores, which is significant. But I think where the issue is that liquidity should actually increase more. There should be more buyers and sellers. And we have actually seen in several volatile days that ETFs struggle to track the market on a continuous basis, and that is one risk which investors are seeing and one risk because of which ETF market has not grown significantly. What we advise investor is to check the real-time net asset value of the ETF. It is published on almost all AMC's website. It is also published on stock exchanges. Just look at that real-time net asset value before placing buy or sell order. And while you're placing buy or sell order, also place it with a limit price. So if you exercise these 2-3 very simple steps, your experience of buying and selling ETF will be much better.
Okay, take that point, and that's important for investors to understand as well. Tarun, come in on this, the same question, some of the risks that you think are there with this asset class, and how much should ETFs be a part of the portfolio?
So I think the first question Siddharth clarified very clearly, and I will just summarize those. First is market risk. Again, underlying asset and market movements risk continues with ETFs. Tracking error, I think difference between the ETF returns and the benchmark index performance. And the third one is the liquidity risk. I think Indian market is still at a nascent stage and many ETFs currently doesn't have the adequate liquidity. So in times of correction or markets turmoil, at that point of time, we have seen liquidity becomes a challenge. So I think investors should take a very, very informed decision whenever they look at that. Another way to manage this is to go through an index fund route. The index fund route, you don't have a problem of liquidity because there, I think the fund actually buys and sells from you. So there, it's like a normal mutual fund. So again, investor hesitation often stems from lack of awareness about ETF as well as traditional preference for active fund. So that has been the big reason. Now, I think on your question about how much ETF should be part of investor portfolio, I think I will go a little deeper in this and go more from a financial planning perspective. I feel it can be 100%. Indexing or ETF can be 100% of your portfolio. Why 5%? Why 10%? I think it can, because you actually have all the asset classes available, right? From debt, equity, gold, all the real estate. Also, I think innovations are happening there. So actually, I think indexing or ETFs can actually take care of the entire portfolio for the client. I think from a objective basis, again, it can be core allocation for diversification. Again, cost efficiency is there, flexibility in portfolio design. But let me start with a conservative portfolio. If anybody wants to build a conservative portfolio with capital preservation with moderate growth, I think bond ETF, balance ETF can be picked up, because that will give them the conservative approach. For a growth oriented investor, you have indexes and ETFs which can track equity, sector thematic indexes, international ETF. Again, this can be like 50 to 70% of the portfolio. For retirement planning perspective, again, these indexes and ETF can be used for income generation, and equity indexes can be used for inflation adjusted growth that can help build sustainable corpus. Again, for short term goals, bond, money market, index, ETFs and all that, which again is a nascent stage in India. But as the time will come, in US, you are seeing a lot of traction there. Again, the big advantage of ETF or indexes in financial planning, when I look at for my client, is transparency, liquidity, rebalancing, flexibility. Again, in active fund manager keeps leaving jobs. Again, here you don't have any problem. You are buying the market. So it gives me a lot of visibility for portfolio growth. Yeah.
Okay, take that point. That explains your insights as well. So that would have asked you the same question, but we are completely out of time. But keeping it for the next time. Thank you so much, gentlemen, for joining in today and giving us all those insights and expertise on what's happening with the ETF market. With that, we'll take your leave on this edition of MF Corner, but stay tuned for Closing Bell to take you through the last hour of trade.
Retail credit slowdown. And on rural, we are feeling quite confident about a rural recovery after a very long time. After almost 2 or 3 years, we think that production is likely going to be okay. That is why we have a view that food inflation will come down, and that will boost real incomes in the rural segment. And you're already seeing a little bit of transfer payments happening at the state government level, not so much the central government, but the state government level. Multiple states are making transfer payments, especially towards women, which should boost rural incomes a little bit.
There's nothing to believe that their selling could abate even now, because they have been selling across emerging markets. It's not one market preference over the other. It is basically money going to the US, and thanks to the change in regime in the US, you would see that massive outflows are happening from across emerging markets. It was so surprising to see Friday, you had a net negative figure from the FIs, in spite of very strong pullback and a short covering. Infrastructure companies, etc., which have corrected 25-30% could be looked into. Still wary of the capital goods, power, infra, because they could be more sentimentally driven. But having said that, if you have hardcore numbers come through in terms of government spending, then obviously there could be a change in sentiments towards that. But I think valuations mostly are still quite prohibitive on the defense, PSC, railways, infra, capital goods, so to speak. And the other sectors where I think there could be a significant outperformance, and we are talking all relative numbers out here, could be your pharma, CDMO, your IT services coming out of a low cycle, and spending is likely to pick up, given that the US regime change would mean corporate tax cuts and more spending on technology. Those would be helpful for the IT services, and obviously banking. These would be the preferred areas.
The losses are coming in from Japan, where the Nikkei is down over 1.5% as we speak.
The cabinet has approved a bank guarantee waiver for telecom companies as a whole.
Bulls will really hope that from here onwards, at least the FBIs can be a little, they can show some relief and respite.
Markets are really trying to figure out is what tariffs are eventually going to look like.
Finally, they've launched the $1 billion QIP book. The indicative price is 252.62, a nearly 7.5% discount to yesterday's closing price.
Okay, so about 90 points higher is how we've kicked things off. 24,300 is on the radar. But let's see if it will hold or not.
The Nifty is just above that 24,200 mark. The Sensex is down 330 odd points. Autos, pharma dragging their feet, while IT is on the front foot.
Quite likely that the insurance law amendment, whatever bill changes that we required to facilitate this, probably the bill amendments, could be tabled in the ongoing winter session of the Parliament.
So, number of customers, as per the Credit Bureau data, those who have more than 3, or that is 4 or more lenders, is roughly around 5.9%. You can round it off to 6%.
Nifty is struggling to keep up pace as far as the bulls are concerned, especially in the last hour of trade. You've seen selling pressure intensify, especially within the pharma pack.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far, and markets are taking it a little easy. It's pretty quiet out there with a 30 or 40 point cut on the Nifty. Broader market, there is a lot happening. Lots of sectors are up 1%. At least 2 or 3 sectors are down 1% as well. So it's a pretty vibrant market out there. We'll, of course, strike the last hour for you. I'm Prashant. With me, my colleague Surabhi and Rima. Guys, hi, good afternoon.
Hi. Afternoon. By the way, Europe is on the back foot today. So the CAC is down close to about 1%. The FTSE is down nearly 0.5%. And the DAX too is giving up, down 0.8%. So that's the market which is not looking good or supporting us.
But I guess not too many will be complaining, because after a 1,000-point rebound from the lows, maybe this was a pause that was pretty much expected. That's what we've got. And, beyond the Nifty, beyond the headline indices, I think there's still a lot of traction in the market. The advanced decline ratio is positive. So beneath the surface, I guess there's still plenty of activity.
Absolutely. And we got the first of Mr. Trump's tweets right? On the tariffs. And
many to come, perhaps.
Many to come. It's interesting. I remember Chris Wood, and not the last interview at our Global Leadership Summit, but the one before that. He said he called Mr. Trump intrinsically transactional and unpredictable. That is so. And, I was talking to somebody in the electronics and manufacturing space in India, one of the larger companies, and I was asking him what happens because of tariffs, etc. He said, I don't know whether it'll be good or bad, but it's going to be very uncertain next 5 years. Yeah. That was his takeaway. So, I think we'll have to, see what he does and how many times he does it, right? He does something, changes it up, and then does something else. And it'll have an impact on trade and sentiment and everything else as well. But, we'll talk more about that as we go along. We're down, 40 points, so it's not much at all. It's largely actually flattish. But, and the levels have not changed. So, they should come up on your screen. And we put these out yesterday as well. They're the same, largely the same. So there was a bit of an overshoot above this level yesterday at the day's high, and then the market closed under it. That's a 40-day, 24,340 is that level. Now, of course, we are clearly below it, but not very far, 150 odd points away. The Nifty 20 days, you can take that as a support, 24,020. So that's on the downside, the support area. Or you can look at yesterday's highest point, which is around 24,000, 23,950 or so, because there's a big gap. Day before yesterday's high, beg your pardon, that's a big gap, and that should not be filled. So roughly about 24,000 is the number that you're looking at on the downside. Bank Nifty, the resistance zone is between 52,680 to 52,817. And we'll see if we're able to get up to it. And the support area is again that gap, 51,271, and then to about 51,774 on the downside. As I said, lots of sectors are moving. Defense is making a bit of a comeback, and we'll have Nimesh join us in just a bit. IT, FMCG, these are the other two areas which are doing well. On the downside, it's autos which is taking a hit, and Sud will explain and tell us more. Pharma and energy are some of the other areas which are under pressure. Dima.
And the entire Adani Group basket is weak in trade. So there's news surrounding Adani Wilmar, where from agencies Bloomberg, we've picked up that Adani Wilmar is all set to defer the stake sale, and they will seek time from SEBI for the mandatory stake sale to bring it down to 70. They need to bring it down to 75% by February 2025. But given the market conditions right now and the news flow surrounding Adani, it appears they have chosen to defer the stake sale. That stock is down close to about 2%. But the rest of the pack is also weak, led by Adani Green, that's down 6%, Enterprises, Energy Solutions, Ports, Total Gas, all down about 2 to 3%.
Yeah, so there is some cool off in the Adani Group for sure. But look at the mid-cap screen, and that's what I was talking about earlier. You've got so much of excitement on individual names today. So Hitachi is a stock that we'll discuss as we go along because of this major HVDC project that they have going for renewable energy and lifting of power, connecting power between Maharashtra and Gujarat. So that has worked very well for that stock since morning. Vodafone Idea, obviously because of the fact that now companies don't have to give bank guarantees on spectrum that they acquired before 2022. So that's worked very well for Vodafone. But beyond the newsmakers, look at Brainbees, 6.5% on first cry. Look at a stock like Triveni Turbine. And incidentally, Triveni Turbine was an idea shared by Amnish Agarwal of Prabhudas Leather this morning on Bazaar. He said this is one of the ways that he'll play CapEx. The stock has had a phenomenal day today. And there are more names. Look at EMS, for instance. It's up and about. Some of the defense plays like Garden Reach, Shipbuilders, they're doing really well. So there's a fair amount of traction and a good amount of green on the screen as well. So not looking too bad as long as the Nifty doesn't have a sort of major sell-off in this next 1 hour that we have in front of us. So let's get started then. What should be the trading strategies? What should be the ideas you can perhaps work with? We have our experts now joining in. Mitesh is with us. Mitesh, so it's quiet, but like we've been tracking the individual level stock action, it's not too bad. Index, any trades for the last hour?
Good afternoon, Surabhi. So, we have taken some mild long positions on the index, not yet completed the full because we're still waiting for some kind of, one more crossover happening on the 30-minute chart. But the good thing is that I think Prashant was highlighting this big gap which happened on the on Monday, which is yesterday. And I think that gap has support between 24,120 to about 23,950. So I think anything around 24,150 should be, an area where you would want to buy something and maybe add more if you get a 50-point further decline, and then keep 23,950 as your stop. I've highlighted the importance of 24,350, so that remains the first target. And once we cross that, 24,500, I think, could be the next level to watch on the upside. So the immediate bias is on the long side, is on the upside, and therefore, the short-term texture is to use any declines to add on to your index positions.
What would be the stock calls for the last 1 hour, Mitesh?
Yeah. So I have a buy on Biocon. I think that's giving a good price volume breakout today. Keep a stop below levels of 345 here. Look for target of 370. And the other one which is on my list is TCS, which I would recommend buying with a stop below 43.20 for targets of 44.10.
Okay, all right, got it. So those are some of the individual names that are coming up. By the way, Shriram Finance is a stock in focus, and we'll try and play out some of the sound bites from our morning call with the management today. The management sounding extremely optimistic on all factors of the business, really, at a time when a lot of other lenders are looking at either slow growth or asset quality issues. This one's really standing tall, and the highlights really are that they're expecting steady growth with steady margins and credit costs being very well contained. So more on Shriram Finance in just a bit. Big Nifty mover, second day in a row. But for the time being, let's talk about the standout brokerage report of the day. Remember, in the morning, Nimesh alerted us on this JP Morgan call. JP Morgan sounding quite optimistic on some of the defense names after the recent correction. Nimesh, the stocks have really taken note. So let's go back and look at what JPM is saying.
Yes, sir. So all the defense stocks are buzzing in trade today, and JP Morgan actually put out an initiating report. It's a long report on the defense names. Within that, they have a initiating buy on BEL with a target price of 340, a buy on Hindustan Aeronautics with a target price of 5135, a meaningful upside for both these names from current levels as well, and a neutral rating on Mazgaon Dock with a target price of 42.48. Now, for the sector, they believe that the sector presents a very long runway of structural as well as value accretive growth on back of a couple of reasons. The first reason is increasing capex. So, JP Morgan estimates $150 billion of capex over the next 5 years versus just $85 billion of capex in the previous 5 years. So that's going to go up for domestic names. The second is the export opportunity. JP Morgan sees a very large export opportunity as well for all the Indian companies. So they are penciling in a nearly 46% CAGR over the next 7 years for the Indian defense companies as far as the export opportunity is concerned. And the third is that there is a big focus on the domestic production, which and on top of it, high ROCs as well as on strong cash flows as well. So given the recent correction in all these names, most of the stocks are down almost 30-40% from the recent peaks. They believe that it's a good entry point to get into these incumbent players, largely because all these companies provide a good 15 to 17% EPS CAGR as well as a strong ROE of between 23 to 33%. So that's the reason why they've turned bullish on some of the defense names and have initiated a buy on BEL as well as on Hindustan Aeronautics.
Thank you, Nimesh, for that. We'll come back to you for more stocks like Zomato that you've been looking at. But for now, let's invite Gurmeet Chadda from Complete Circle. Gurmeet, would you concur? Is it attractive enough, the current levels, BEL, HEL?
Yeah, I don't know. There's some problem. I've been trying to do it.
Okay. Gurmeet, can you hear us?
Yeah. Sorry, there was some overlap. Yeah. So, I think, so we have HAL in the portfolio amongst PSUs and BEL. HAL, if you see, I think by the end of Q2, you should have about 1.2, 1.3 lakh crores of order, which is roughly about 3.5 times FY24 revenue. So the near-term visibility looks good. Quite a diversified order mix also. So almost 100 LCAs, then about 150 combat, light combat helicopters. Then they have the trainer aircrafts, which are used for extensive army training. And most of the contracts have variable pricing, which gives you some protection on margin in case, because these are long gestation products. And more than 60% comes from repairs and maintenance. So it looks solid. The stock is also corrected from 5,500 levels. We have solar industries, Pinaka rockets. If you see, they have recently supplied to Armenia and Vietnam. France seems to be interested. So in guided Pinaka rockets, they have 100% market share, and the others, they are the L1 bidder. So this opportunity could be 15,000-20,000 crores over the next 3-4 years. It's a high margin business, and the current defense mix is just 20%. That can go up to 30-40%. So that's another one in our portfolio. And then we have Zen Technologies. Zen is mainly an IP defense tech, more into counter drone and simulators. They've just got their 20th patent now, amongst the highest patent holders in India. Expensive stock, but it's something which relies on innovation. So these are the few names we hold, and using any dips to basically add on it.
Okay, let's get to, the Zomatos and the Swiggies of the world. Swiggy, by the way, is also higher by nearly 5.5% today. This is after UBS initiated coverage with a buy target price at 515. They say that Swiggy will lag Zomato on profitability, but being the second largest player in delivery and quick commerce, it will benefit from the rapid growth in both the segments. They have lost market share last year to Zomato, but according to their channel checks, the company has addressed the fundamental issues, and therefore they will be able to arrest their market share and at least stabilize it. Swiggy trades at a 35 to 40% discount to Zomato, and that should narrow as the market share stabilizes. So that's Swiggy, and that stock is inching up 5.5% higher on that. But let's get to Zomato, which is also surging in trade post the QIP launch. Nimesh is here with the details. Nimesh.
Hi, Rima. So first on the news part, which is the QIP, that got launched last evening. They're looking to raise $1 billion, which was part of our story as well. And the indicative price is much lower at 252, but I understand because of the strong demand, the stock is actually in the green and up to 1%. Now, this would mean an equity dilution of close to 3.5% on the floor price. So that's a rough calculation. Now the impact part, why it is important and how it's going to impact the MSCI angle as well. One, when we broke the story, it was very clear to us that this fundraising is essentially been done to reduce the FI holding below 50%. Currently, the FI holding is close to 51, and after this QIP, which is largely going to be dominated by domestic funds, the expectation is that the FI holding will fall below 50%. What I understand, even when we broke the story a month back, the feedback was that after this QIP issue gets done, the company is likely to write to RBI requesting for an FDI cap of 49%. Now, this is going to be quite interesting, right? And Jeffries actually, has written about it a month back when we did the story. And they very clearly said that if indeed this is the case that the company asked for a cap of FI limit at 49%, it will help the e-com business, and that's the whole idea of doing this QIP. But this could also mean that eventually, the stock gets deleted from MSCI. So that's the next level to track as far as the MSCI angle is concerned. Well, Jeffries do believe that it will take some time for these adjustments to happen. So it may not happen very immediately as per the Jeffries note. The other thing to watch, and which is part of my chatter yesterday as well, that after the QIP issue, there is a very high possibility of another large block where one of the strategic investors could see a clean out trade. So that's the next thing to watch out for as far as Zomato is concerned. But for today, as far as the QIP is concerned, I understand there's a very strong demand, and hence the stock is recovered from the lows as well.
Okay, all right, got that, Nimesh. Thanks. So that's a lot of Zomato paper hitting the market. $1 billion of QIP, and then maybe another investor looking to sell a portion of their equity, as Nimesh is pointing out. Thanks for that, Nimesh. Indeed, there's appetite for food delivery and quick commerce, and the stock has recovered from the lows of the day. Thank you for that. Let's go to Gurmeet and get in a word. Gurmeet, hi, good afternoon. Hope you can hear us fine now. So Zomato, what's the sense? There's just too much happening in quick commerce, right? There are also brokerages now that are pointing out that perhaps Swiggy's, you play the same story at a more attractive price. I don't know if you believe that or not. Then there is the upcoming threat from Amazon. Your thoughts, quick commerce, and whether Zomato makes the cut for you?
It does. It's been part of the portfolio now for a while. We got lucky. We were also one of the few players who were very keen on unlisted space in Swiggy. Started doing this at around 300 levels, right up to 350. So far, even that looks good. I think the play is more on quick commerce now. I think various estimates are there. I think this could be a 60, 70, $80 billion market in next 4 or 5 years. And so there is a lot of potential here. Currently, the number is 2,000 crores for Zomato on a monthly basis. This number can become 4, 5x, which means that is going to drive delivery. And so if you see, reason quick commerce is successful in India, not as much in the West, is our distribution network, our retail outlets, etc. Our reach is 3-4 times of any developed market for most FMCG and other companies. And the digital adoption and the pace at which it's picked up eventually is getting reflected here. So I think the call is basically there. If any estimates go wrong, then I think the valuations will take a bit of a knock. But I think it's a short candidate. And also I think their district app, where they're now trying to demarcate out-of-home consumption, which is your ticketing business, dining out business, could also be the one to watch out for. That can probably add a little bit more to the tailwind it has. So pretty constructive there. Only in this space the issue is the winner takes all, and it's heating up now. Zepto has actually launched Zepto Cafe, where they can deliver food in 10 minutes now. So and then you have Big Basket and others also coming in. So usually winner takes all. So you got to put one bet on the winner, and then maybe to have protected blind spot, have a couple of more, maybe a Swiggy, maybe something else. So dominantly Zomato, and just to cover the blind spot, maybe Swiggy or maybe one other name.
Gurmeet, you said Swiggy, you guys have been picking up the unlisted space from 300 to 350.
Yes. The market was very hot, Prashant, almost 3 to 6 months before the hike.
Yeah, no, absolutely. And so you guys are already sitting on nice profits. So congratulations. Now, I just want to make two sort of news points here. One is with regards to Adani Wilmar. So there was this news from Bloomberg that Adani Wilmar is set to defer stake sale. They basically needed to sell down stake to meet the mandatory minimum public float requirement. And they have time, and they've asked SEBI for an extension. They've sought time from SEBI to meet this mandatory requirement. So the deadline is February of 2025, and they've reached out to SEBI, according to Bloomberg, that they should be given more time. Just one more name I want to look at is Reliance Power, if you can put that up. And this also came through, and the stock is up about 5%. The Delhi High Court has granted a stay on Solar Energy Corporation of India's notice of debarment against the company, including all its subsidiaries, including Reliance NU BESS. There you go. That's a stock on your screen. That is also, I think, moved up starting the middle of the day, and that is now, I think, almost at the high point of trade out there. So that's the picture right now. So market, by the way, the Nifty came back into the green, and now we're actually trending absolutely flat, 4-5 points lower, 24,200 or so is where we find ourselves at this stage. Just a quick word, Gurmeet, any sort of, do you have names like Gokuldas Exports, etc., apparel makers in your portfolio?
Yes, we have, Prashant. So if you see, you may not make too much money on the commoditized business of textile, which is, let's say, weaving, spinning, which is a low margin business. But let's say home textiles and garment exports is a huge business. I mean, our share is for 2% versus, let's say, Bangladesh in double digit and China, etc., being very high. I have a lot of local clients in Delhi NCR who are not listed, but they have been upping up their limits. One of them recently took a enhanced packing credit limit, which is in foreign currency. To he does 80 crores, he's expecting about 110 crores this year. So there's pickup there, and I think the opportunity size is big. Gokuldas is largely US. It does your Superdry, Puma, Adidas, American Navy, all those brands. And now the inquiries are coming from Europe since they acquired a company in Africa, because there's a 12% duty on Indian garment exports, which Bangladesh doesn't have. So I think with a lag of 1 or 2 quarters, you will see the likes of Gokuldas and some of the integrated names like KP Arments doing very well. I think this is one opportunity. Also, it's a huge employer. 90% of the staff is women, right? So it's politically also, makes sense. And I think India has a lot of potential here. So we are very gung-ho here, both in Gokuldas and KP Arments.
Okay, all right. There was a news report, I think 2 days back. Gap, which is a US retailer, raised their guidance significantly. Stock was up some 14-15%. And Gokuldas does work with players like Gap and other large retailers in the US, etc. as well. So, I mean, order books for till the end of the year seems reasonably strong. And of course, generally sentiment in the US is looking up and up. Gurmeet, thank you very much for your time. Great speaking with you. Appreciate it. We're going to take a quick commercial break here. Our first on the show here. We come back with Mithun Ashwath of Kiva Advisors on the other side. Conversation follows with him on market. Stay with us.
It's a very special week for us this week. I'm here celebrating our 20th anniversary in India. India is such an important part of AMD. When we look across our, all of our, global portfolio, every aspect of our product line goes through our design center here in India. And so I had a great time this morning with our team. And when I look back at the last 10 years, it's kind of interesting that we had met each other 10 years ago. It's been a remarkable experience. I mean, if you think about all of the things that have changed over the last 10 years, I say that, semiconductors have now gone from, something that was, kind of behind the scenes, under the covers, to today. Everybody's talking about semiconductors, and semiconductors are essential to, every business, every country, every profession. So I think that feels very good. And then from an AMD standpoint, I think we've also had a very good 10 years in terms of, taking our business from what was, in 2015, we were about a $4 billion company, and this year we'll be north of 25 billion. So there's been a lot of growth in there.
There has been a lot of growth, and I'll address the growth in just a second. But I want to double down on your bet on India. And you have committed $400 million to 2028, and you've just been here to inaugurate the last phase of this campus. Why the decision to make India the home for your largest R&D facility?
Well, we actually look at it in a very logical way. When you think about our business, it's all about having the most talented people around the globe. We run a very global team, and we did make a bet on India. We made a bet that we could build an end-to-end design capability here. So hardware, software, systems. It's an extremely talented team, and with the investments, nothing comes overnight. It comes after literally 20 years. I think 20 years ago we started with maybe 100 people. Now we have 8,000 people in India across all of our product portfolio, and I think the bet has really paid off. We wanted to have a major site in India, and we wanted to grow that skill set across the board, and I'm very happy to say.
Okay, welcome back. We got the market, which is actually absolutely flat. It's like a traffic light, blinking red and green, nothing. Half a point, 1 point change, 24,219 as we get into the last sort of 30-40 minutes of trade. Mithun Aswath is with us, managing partner at Kiva Advisors. Mithun, good to have you with us here. Thank you for your time. Do you own any defense names, PSU defense names, Mithun, in your portfolio? And what's the view there? There's that JP Morgan upgrade on the sector. Stocks have come off. I mean, of course, you look at something like an HUL, it is up 10 times in the last 4 years, and it's come off about 30-35% from the top. But, and of course, I can sort of name others as well. Just your thoughts here on the space. It's getting more coverage and maybe a little better prices as compared to 6-7 months back.
Yeah, afternoon, Prashant. I think on the defense space, we do have some selective opportunities which we continue to hold. They are PSU companies as well. But we also like, power capital goods, which are, public sector companies. We think that opportunity is also kind of a secular opportunity. They're coming off, maybe 4 or 5 years where, these companies were not even making profits. And they're way off their, highs in terms of revenues. But on the defense side, I think, there is secular growth opportunity. Valuations in some of them had got, exaggerated. I think that correction has happened. I think one needs to disconnect the opportunity size and the valuation. Now, the opportunity size, I think, is very large. I think we are still touching the surface. There are private sector companies also which will benefit from this. Even there, the valuations have gone up quite a bit. But I think one needs to look at this space with a longer term point of view. And whenever these deep corrections do occur, one can obviously take some positions.
Mithun, hi, afternoon, Rima here. What about on food delivery, quick commerce, Zomato versus Swiggy? Both, neither, or one of the two?
Afternoon, Rima. Honestly, we've not invested directly. We hold a holding company across our client portfolios. So we played it like that because I think at that stage, we were still not sure of how this will evolve in terms of profitability. And so we continue to do it indirectly by holding the holding company of Zomato.
Okay. All right. So that's the take on quick commerce. So, Ashwath, I mean, what's the sense? Have you made any major changes in the portfolios in the last 2 months while we've been in this, slight cool-off and correction? Because the market's also gone through a churn, and suddenly the narrative is now coming back to capex stocks, which have fallen, defense, capex, etc., which have fallen the most in this cool-off period. What's your stance here?
So I think, Surabhi, there is lack of growth, and that is why markets corrected. Especially in Q1 and Q2, you didn't see too much of appreciable growth in a number of spaces, and that's why you saw a market correction. You saw it across the board. But if you say capital goods, defense, these companies continue to have strong order books, and growth is not really an issue. It's about execution now. If these companies are able to execute, they will still deliver growth. The pockets where there is concern, I think, are more sectors which are consumer-oriented. These have also corrected. We need to see maybe Q3, Q4, is there a rebound in the rural economy, which will again help demand perk up. We also have a wedding season, which has started in Q3. So there will be pockets where, even there will be growth. So I think the market is distinguishing between where there is some visibility of growth and where there is a lack of it.
Okay, by the way, a lot of ratings actions over Adani Group companies in the last couple of days, and the latest one is also coming in. So that's kind of completing the trio, S&P, Fitch, and now we also have Moody's taking specific actions on different group companies. And we'll flash out some of the specific lines that are being spoken of. And we've seen other commentary as well, from Total to, of course, a couple of state governments that have been a little cautious on future contracts or immediate work with the Adani Group. So outlook has gone to negative on 7 of the group companies, and the stocks are noting that they are under pressure today. Okay, Mithun, just wanted to get your sense on financials. Before I ask that question, actually, let's just run through some of the commentary that we got from Shriram Finance. And this is a stock that's actually been doing very well. It's up almost 8% in the last 2 trading sessions, 5% yesterday. 4% today. Now it's cooling off a little bit, but the momentum has been fairly good in the past few trading sessions. What did the management tell us today, this morning on Bazaar? We had them on. One is that they are not seeing any slowdown in demand for vehicle financing. It's going on a very, very steady clip. 2, this whole threat of whether whatever is happening in MFI, could there be any kind of second or third degree spillover impacts? I mean, if there's one borrower which is defaulting on a bunch of loans, could there be any interconnectedness even in things like used CV financing, used two-wheeler financing? The clear answer to that was a no from the management. They in fact went on to say that the credit cost, which is around 1.8% right now, will max go up to 2% and no higher than that. Quite optimistic on growth, saying about 18% growth is possible this year. And most interestingly, they also promised steady margins. They're not expecting any kind of a major compression in NIMs this year. So all around positive commentary coming in from Shriram Finance. Now, Mithun, comment on this. Shriram has been a bit of an outlier. Some of these companies, some of these NBFCs, a bit of an outlier, because otherwise either growth has fallen because you're going slow on the higher yield business, which is personal loans, etc., or there is a bit of a pressure on margins, or there are issues on asset quality. It's a combination of 1, 2, or 3 for many other lenders. How are you looking at financials?
Yeah, to be honest with you, I think, Surabhi, you have seen concerns on the unsecured and personal loan side of the books of most, banks and financial institutions. Obviously, MFIs have borne the brunt of this. But I think there are a few names like the one you mentioned, as well as, the Murukaba Group finance company, where, we've not seen too much of impact on asset quality as of now. So I think you need to focus now maybe on players who are good at risk management, because in the good times, everybody grows the balance sheet, but in terms of risk management and controlling credit costs is what is going to distinguish the companies. So I think that is where one needs to really focus their energies on, because you can just do growth, and then if credit costs balloon, then you've seen what's happened on the MFI side.
Okay, all right, Mithun, we'll leave it there. Thank you very much for joining us. It's a pleasure. Thank you for taking out the time and being here. I just want to quickly mention one name here, and MFIs, that is microfinance lenders, and there's a story we will address. But I was just looking at credit access, which has come up about 100 rupees from the lows. The absolute low was about 860. This is 3 days ago. Stock's at about 960 right now. So. Of course, it's fallen a long way. It's essentially halved in value, but that is seeing some amount of interest starting to come back. So keep an eye out on this one. Now, mixed signals are coming in from the auto space, the auto sector in November, with two-wheeler sales growing strongly while passenger vehicle sales remaining under pressure. Sudarshan is here with the retail sales data for November so far. So over to you.
So it's the Vahan registration data, the all-important numbers that all the companies have been talking about. If you remember, after the Q2 results, most companies in their commentary did mention about that more than wholesales, the numbers that matter the most are retail sales. And taking the cues from there, we have here tried to analyze the Vahan registration data for the month of November. Let's see what those numbers indicate. In a nutshell, on the demand perspective, it's a continuation of what we saw in the month of October. Two-wheelers remain the biggest outperformer, followed by tractors, whereas demand for passenger and commercial vehicles remains muted. Now let's come to the numbers, and before we talk about that, do remember the comparison numbers are for the entire month, whereas for this month, the data is for 25 days so far. So starting with two-wheelers, the pickup in rural demand seems to be reflecting in the numbers of Hero MotoCorp. Total registrations for Hero MotoCorp have already surpassed the numbers of October and are just 3% lower than November 2023. For TVS Motor and Bajaj too, the registration details are looking healthy, and the numbers are already at par with what we saw last month and are down just 4% and 11% respectively against November 2023. Royal Enfield, while it's currently underperformer amongst two-wheelers, but the data of last few months indicates that Royal Enfield sees a surge in registrations during the last few days of the month. The next in the list are tractor segment. Here too, registration trends are looking healthy with 5 days to go in this month. For M&M tractor, registrations are down less than 10% both month on month and year on year. And for Escorts, the decline is slightly steeper in comparison to M&M. It's down in the range of 15 to 17%. Shifting to the segments where demand concerns remain are passenger and commercial vehicles. With only 5 days to go this month, most companies are seeing sharply lower registrations. The numbers are down in the range of 40 to 52% month on month and are down 21 to 40% year-on-year, with Maruti and Tata Motors looking the weakest. Before ending, it's important to remember that the comparison numbers both month-on-month and year-on-year cover the full month, while the current data for November represents only 25 days. This gap means significant changes could still occur in the remaining days of the month.
Okay, so two-wheelers revved up and passenger vehicles not such a great month from the looks of it. Thank you very much for that, Sud. Let's quickly move on. Madhya Pradesh Chief Minister Mohan Yadav is on a state visit to the United Kingdom. The minister visited the King's Cross redevelopment project and interacted with the Indian diaspora during his visit. He pitched the central Indian state as an upcoming investment destination for overseas Indians. He urged NRIs to focus beyond Indore, which is considered the state's commercial hub, and sought more support for the tourism and medical sector in the state. The visit underscores Madhya Pradesh government's commitment to fostering industrial development and building meaningful partnerships beyond investments. Okay, on that note, we'll take a break. Back with more in just a bit. Back with the markets in just a moment.
This is our largest team outside of the US. This is our largest design center here in Bangalore. So it is a very special place.
Well, you know, I'm glad to hear that from you, Disa. I also want to link this to the larger semiconductor story that's now starting to play out in India. You met with the Prime Minister in September when he was in the US for his visit. India is aspiring now to become a manufacturing hub of semiconductors as well. How do you see that playing itself out, and what do you believe will be some of the things that we need to be mindful of as we grow this ecosystem in this industry here?
Well, I have to say, I have a very, very high regard for Prime Minister Modi and his strong vision on technology across semiconductors, both the Make in India, semiconductor manufacturing, design, as well as all the focus on AI. I think every aspect of that is truly important as we go forward, and especially around semiconductor manufacturing. What I admire is the very concrete, pragmatic steps that have been taken to both attract global companies here, as well as building the local infrastructure and ecosystem. And I think the one thing is these ecosystems take time. They don't come overnight, but I would say lots of very strong progress. And we continue to invest in India because we really believe that this will be one of the most important markets and regions going forward, as well as a wonderful infrastructure and ecosystem for the type of development that we do.
So I bet you were looking at the Swiggy IPO very, very closely. What was going on in your head as you saw the listing, which got off to a slow start and then sort of shot through the roof on day one?
Yeah, I think it's great. It's huge kudos to what Harsha and the team have pulled off, and I think it's great for the ecosystem. I mean, I think we should, one of the last things I mentioned, Shireen, is that we should be celebrating this. This is Indian technology, like quick commerce, and Swiggy's IPO, I think it's fair to say, largely powered by excitement about quick commerce, right? Zomato's performance, largely powered by excitement in quick commerce. I think that's not a controversial thing to say, it's a consensus view. We should be celebrating quick commerce. This is good for the country. This is Indian technology, Indian innovation. This hasn't worked anywhere else in the world. And it's real infrastructure for ordinary people. Like, this is not for like the top 0.1% of India, right? These are people who now realize the scale they were getting to. This is impacting ordinary people's lives at scale and now going from metro cities to beyond. But the way that I look at it is we should be celebrating the fact that today, because of Indian infrastructure, Indian technology, there's a mom in Noida who's able to take a part-time job because her life has become easier because of quick commerce. It's exactly like setting up a metro station, right? So, we look at this as Indian technology, Indian innovation. Nobody else in the world has been able to do that.
We don't know what the government intends to do, whether the government acts, how it chooses to act, how it chooses to respond to the charges that Kate has put on the table, and whether there's going to be any change in regulation or not. But welcome back. So back to the markets, getting some news from Angel One. The AMC has gotten the approval of the regulator to start a mutual fund business. So one more joining the mutual fund bandwagon there. Angel One stock's also doing well, up about 4.5% right now. Big spike coming in over there. The market obviously absolutely loves all capital market facing businesses, whether it's broking, whether it's something like wealth management. And in this case, it is an AMC that is being set up. So that's Angel One. We'll talk about that stock in a bit as we go forward. Right now, let's move to D Street Chatter. Nimesh is back with us, so let's see what he's picking up. Nimesh, a slightly quieter day, market pausing for breath after a big pullback. What are you picking up?
Yeah, yes, extremely range bound and been choppy as well. And in fact, the Nifty has been managing to consolidate around that 24,200 level. So that's an important technical level as well to watch out for. Having said that, the FIs again continue to be better sellers. So again, the feedback today is the buy sell ratio is close to 1:2 on the sell side. So yesterday what we saw was only because of the MSCI rebalancing a very large FI number. From a broader market point of view, that's where the traction seems to be. There are a lot of individual names which are buzzing in trade today, and in general, the flow seems to be quite positive in the broader market stocks. For second day running, the feedback is that there is some bit of interest back in select PSU names from the larger FIs. So that's one space which has been well bid. The other sector which has done well today is the consumption names. So a lot of consumer-facing stocks have done well today, largely in anticipation of a strong second half. So some renewed buying in that sector, but broadly from a Nifty point of view, the feedback is the FIs continue to be better sellers.
And what about stocks? What have you picked up in terms of chatter?
Well, as I said, there is a lot of interest in the broader market names, Rima, and that's why most of the names today are part of the broader market stocks. So the first name is Carnex Micro, a small stock and even thinly traded, so we don't talk much about it, but that's been buzzing off late, and I understand the company is likely to bag a very large order soon. So that's the reason why that's part of my list today. The second name is BEL. I spoke about the JP Morgan note and the fact that all the different names are buzzing in trade, but BEL stands out also in back of very strong buy flows. Expect high delivery volumes in BEL, and looks like some FI interest is back in that particular name. The third name is Muthoot Micro. Again, a small company, been buzzing off late. Even today, the stock is up on good volumes. Interestingly, after a very long time, some FI interest seems to be back in that name. So that's why it's part of my list today. Some bit of FI interest is back in Muthoot Micro. And the last is Akum Drugs. Again, the stock has seen a big derating in the last couple of months. Looks like the selling from the private equity investor is largely over. There is a small buying interest from larger FIs today. So that's Akum Drugs. After a big correction, some bit of interest seems to be back.
Okay, thank you very much for that. There was also news on Akum Drugs where they've done some partnership to launch a particular beverage. So that came out earlier today. Mitesh is now back with us for a few BTST calls. Mitesh.
Yeah, I think I have a BTST on Syngene with a stop at about 904 for targets of 925, and the other one is Federal Bank, which I would recommend taking a BTST position with a stop at 212.4 for targets of 216.
Just a few other names I want to highlight. Thanks very much, Mitesh, for that. Look at Sagility, which is the recent listing. That's a player which works with insurers and essentially works in the insurance ecosystem in the US, and it's up 10%. So it's a large move on Sagility which is coming through. We'll have that up for you. K Fintech is another one which I saw, which is up. There you go. That's Sagility, and that's a big one-day move after listing. I think we've not had a 10% move in this one. It was a very muted listing as well. K Fintech is something else which is looking up about 5.5%. Sonata Software is coming up with decent sized gains, so that's looking up. Ola Electric, the promoter and the CEO, MD Bhavish Agarwal, put out a tweet on a battery, a new introduction of a new battery in the market. I mean, they've opened sort of bookings, etc. for it. The stock's up about 5.5% right now, but I think it's been strong since the morning. And of course, there is Swiggy, which is also looking pretty good. Actually, I spent a minute or two on Swiggy. UBS, of course, initiated coverage earlier with a buy rating. Mangalam is here with the rationale and what they're saying. Mangalam, over to you.
Well, the rationale that UBS has for Swiggy is that of, settling or narrowing discount with Zomato. They say that it's well positioned for growth and trading at 35% discount to Zomato as against, the current price, which indicates that it's at a near 50-55% discount to Zomato itself. On online food delivery, they believe that it's catching up to Zomato on margins and scale. Quick commerce, while there are encouraging signs, there is still more work to do. They expect both Zomato and Swiggy's online food delivery GMV to grow in low 20s itself, but adjusted EBITDA margin for Swiggy's food delivery business would go to about 2.8% by FY27. Remember, the company itself has said in the past that it can, once the industry matures, settle at around 5% itself. So they have a target price of 515 rupees on the stock. However, apart from that, the key to track for quick commerce going forward would be increasing fundraisers and competition in the quick commerce space. Nimesh has been talking about Zomato's QIP, the $1 billion QIP itself. Swiggy itself raised about 4,500 crore in via fresh issue. Very recently, last week itself, Zepto went ahead and raised about $350 million from domestic investors. And all of this while the big daddy Amazon has announced its quick commerce foray as well with Tez. So increasing fundraising by competition and increasing competition itself is something that we'll have to track, apart from obviously UBS's positive stance on the food delivery business for Swiggy.
Thank you very much for that. By the way, PSU banks today are holding up in the green. So while the Nifty Bank is absolutely flat, PSU Bank is higher. And remember this whole news flow about the bank guarantees being released for telecom companies. It's also positive for banks like State Bank of India, IDBI, IndusInd Bank, Canara, Axis Bank. They all have exposure to the telecom bank guarantees. And the fear was that if things go south, then maybe some of those bank guarantees could turn into NPAs. And now that is out of the window. So that's a positive on the sidelines. But let's get to the Insurance Amendment Bill. Now that is expected to be introduced in the upcoming winter session of the Parliament. What does this amendment bill bring, and why is it the boldest reform in India's insurance sector? Yash joins in with more. Yash.
Well, Rima, our colleague Sapna Das from Delhi today reported that the Parliament, the winter session of the Parliament, is likely to take up the Insurance Amendment Bill. This has been long awaited by the sector, and as you said, it's one of the boldest reforms that the sector could see. There are 5 important changes which the Insurance Amendment Bill is likely to bring in the insurance sector. The first one and the biggest one is composite insurance license. Essentially, this particular aspect, enables or facilitates cross-entry of insurers into each other's segments. So essentially, life insurance companies, if this gets approved, can operate in the health insurance space. They can sell health insurance policies or any other segment of the general insurance companies like motor insurance, and vice versa. General insurance companies or health insurance companies can also enter the life insurance space to sell those policies. What does it do? Brings greater amount of competition in the sector. The second one, distribution of other financial products. Insurance companies, if the bill gets approved, then can sell other financial products like distribute other financial products rather, like mutual funds, bank deposits, FDs, loans, and so on and so forth. Opens up new revenue streams for insurance companies. The third one, reduction of initial capital to start insurance business. Currently, an insurance company needs to bring about 100 crore to start business. Reinsurance companies, they need to bring 200 crore. That capital is proposed to be reduced, and it will be different for different companies depending on the size of the business. The fourth one, captive insurance license. Conglomerates or business groups can have their own insurance companies limited to serving their own employees. Of course, that will be an important one. And fifth one is relaxing investment regulations. Currently, insurance companies can only invest up to 15% in equity. Other part of the investment has to go in government debt or corporate debt. Now, with this particular proposal, insurance companies will be able to increase their equity investments or increase any other form of investment subject to the regulator's approval.
Okay, all right. Thank you very much for that. So 5 changes which this amendment will really bring about. We'll, of course, track the passage of this one when this is brought to the Parliament in the winter session, as Sapna told us earlier. Yash, thank you very much for that. We actually earlier spoke with Alok Misra, CEO and Director at Microfinance Industry Network, over new lending norms for MFI loans as well. So I just want to sort of play out some of these sound bites because that's a space which has been under immense pressure. Take that break. We'll see you on the other side.
When you talk about portfolio at risk more than 60 days default, that is, typically it will take 60 to 180. That would be somewhere in the range of 3 to 3.5%. We are trying to strengthen the practice of LUC more. One is productive use. That is for the institutions to do loan utilization check and ensure that it is used for the purpose for which the loan is given. And the second question which you asked in the start was relating to how will this adherence be ensured. So let me tell you that we don't, the sector body and SRO, we don't believe in just merely issuing guidelines and leaving it there. In July, we had issued one set of guardrails, and the adherence has been quite positive from the sector. That is what our checks reveal. And these are data checks, empirical data checks.
You're going to be filing your papers at some point, hopefully soon. This is going to be a significant risk factor, is it not? Was this a risk factor when you did this round of fundraise, when you did the domestic financing?
Look, not really. I mean, I think we've got... See,
nobody's asked you these questions?
No, people ask the questions, no doubt about it. But to give you a sense, I think that it's really not about compliance in like the spirit or letter of the law that we are all trying to get to domestic ownership, right? We're realizing, and this is the first time that large internet companies are getting created at scale in India, which is a good thing, right? We should celebrate, companies like Zomato and Swiggy that have created tens of billions of dollars of value, and most of that, especially in Zomato's case, has accrued to Indian shareholders over the past 2 years, right? There are people that, sorry, on a side note, but there are people that probably can retire earlier or can take care of their parents easier because they own Zomato stock, and that's how you build a middle class, right? You own Boeing stock for 30 years and you build a middle class like that. You don't touch it and you create wealth, right? So it's a good thing. But to give you a sense, what we're all realizing as an internet ecosystem is to build real value at scale, right? Tens of billions of dollars without having to, be an Amazon or a Walmart, right? To get to that scale, you want to be an Indian company, and it's looked at very positively, not just by the government, but even by the market, shareholders, and the public at large, right? People trust you more. So, it's not really, to answer your question, it's not really about FDI compliance, FDI regulation, right? We've had a decade of e-commerce that's been built at scale in this country, and we're just a small part of that today, and so are our competitors in this industry.
Now, I'm just trying to understand why it suddenly becomes such a big issue as far as companies like you, and perhaps again, as I'm pointing out, we don't know. There's been no official comment from Zomato, but HDFC has foreign holding, and it's in the banking space. Why are you guys getting so concerned about this?
There's a difference between financial services and what we're building, which is commerce, right? We're employing. Obviously, HDFC is one big example. There are obviously lots of examples of large Indian companies, right? Like the Tatas and the Reliances of the world. But that's the feedback that we've gotten, right? In general, if you look at companies, in the Nifty 50, right? Most of them are, Indian owned, and most of them have, that's been the broad example. Obviously, there are exceptions, no doubt about that. But yeah, look, I think, you're right to say that, why has it become an issue suddenly? I think we're expecting that, we will scale, we will create value.
So is this a preemptive move, is my question?
Yeah, look, candidly speaking, I don't think raising this financing is going to change one thing or the other, right? I don't think that it's going to change something for tomorrow morning. It's more a long-term track, right, where over the next 6, 9, 12, 15 months, we keep building Indian ownership.
So what will be the ownership? How much do you dilute with this round? How much do you hold between you and Cavalier? What will the foreign shareholding be, and what will the domestic shareholding be?
Yeah, so, we are, we will own, by the time we go public, we'll own about 20-ish%, right? And there are a couple of, pieces that we're making, a couple of things that we're closing, this flip from Singapore to India, and just, getting ready even just from a legal perspective to go public in a couple of quarters. But yeah, we'll own around 20%, right? Which I think is decent, right? So like if you build a large company, that'd be great. But back to answering the key question.
Welcome back. Looks like it's going to be a flat finish for our markets. 10 minutes left, more than 5 minutes left for markets to close. Jay Bala from cashthekiosk.com is with us on the show. Jay, we've had 2 nice days on the trot, and today we've moved sideways. What are the technicals telling you about the near term?
Hi, Rima. Good to be here. See, the market's counter-trend bounce that started from 23,265, that seems incomplete. And the emphasis is on the word counter-trend bounce. So well, from a very short-term perspective, I anticipate the market to drop to somewhere close to 23,800 and then rise up to somewhere close to 24,400, maybe even 24,800. But that kind of bounce will probably lull the marketplace into a complacency, thinking that buy the dip is back. But what lays ahead from a slightly higher time frame, what I said on October 1st, that still remains in play. The focus is on the June 4th, 2024 low. That's where this market is heading. The next leg is likely to be equally sharp or even more sharper than what we saw from the end of September. So the objective for market to decline to 21,280 remains the focus for the market.
Okay, all right. So you're retaining that call, Jay, that we are heading to the general election, counting day, intraday low. Okay, that's a big one. And what makes you sure of that call? I mean, are you seeing something coordinated across global markets, maybe with the US 10-year, gold, etc.? Or do you see this as a bit of a more isolated move here in India?
Fair question. This would be, Reliance, the 10% of the market is saying that recent low it registered about 1220 and change. That's not the final low. So that's been the marker for me for some time. I've been saying that since August 20th, that Reliance underperforming is not good for the market. And if you look at HDFC Bank, today's high was a fresh 52-week high, and the market is not able to hold that. That's not a positive sign. Not yet a bearish sign yet, but if this were to finish negative today, that will be again not a positive sign for the market. From a global picture, the dollar index is doing something very unique. It went to a 52-week low and then came back to a 52-week high in 34 sessions, and that's very, very unique. That only other time that's happened is during non-normal time, which is during the pandemic. Other than that, in the last 30-year history, this has never happened. So that's telling you something very, very unique. And if you look at the US 10-year yields, it's likely to pull back somewhere close to 390, 380 bips, and then exceed the October 2020 to 2023 high of about 500 bips and change. And that's on a path to 800 bips in the long term, which I've been saying since 2021. So there's no change in that. And the US equity markets, it's likely to complete finishing sequence. It needs to top. The topping formation isn't there, but NVIDIA is starting to crack. If NVIDIA starts to trade below 132, the biggest macro for the world, that will confirm the global equity markets are also turning, and that will put additional pressure for the Indian equity markets.
By the way, the mid-cap index was up nearly 0.5% just about 30 minutes back, and now it's completely flattened out. Pull up the mid-cap index there. You've had that fall starting 3 p.m. The small-cap index, though, continues to maintain its gain, so that's still up close to about 0.9%.
A letter of award coming in for RVNL, 625 crores from the South Central Railway. That's the sort of award coming in for RVNL. Stock, of course, did very well. All railway and PSU names did very well yesterday. Jay, any specific trades, stock-specific names?
Yeah, I have two for today, Prashant. One short and one long. The short is on Ashok Leyland. The drop from 264 it registered in September. It dropped from there. It dropped to 202 in a trending fashion, and the bounce from there on to today's high is looking like a counter trend bounce. Hence, the stop loss at about 242 with a price objective of about 197, and a conditional long on Voltas. Voltas, the recent high it saw in September, it looks like an unfinished price structure. So, but the reason why I'm making it conditional is because of the overall market conditions. If Voltas were to cross 1715 on an intraday basis, that will mark the beginning of a rise to fresh 52-week highs. But if 1622 were to break before 1715, this is a cancelled trade, and you want to wait for 1715 to get taken out, and then consider price objective of 1975, maintaining 1622 as a stop.
Okay, all right. So those are individual trades as well. Jay, by the way, and we can talk about this more in our next chat. When you talk about the dollar index, should we look at and some other dollar proxy? Because dollar index is 50-60% euro, right? So that kind of reflects maybe euro weakness more than, so maybe something else. I don't know. And that especially now because the growth differential is so stark and is widening.
That's right. Fair, very, very fair, Prashant. Euro makes it about 57% of the dollar index basket, and the next comes to is JPY and the GBP. So I have a long-term call on the Euro USD cross. I'm expecting the Euro USD cross to drop to somewhere close to 0.8, and that's been my call since November 2022. And but the other equation that's probably playing out is the USD CNH cross. And that's probably, an anticipation of tariffs. Maybe they'll, make the Chinese market competent by depreciating the USD CNH. What does it mean to the Indian markets? The USD INR is behaving like a peg currency. So, it's more tracking more the USD CNH rather than the dollar index basket. And, if the rupee remains strong, the cushion that the markets get by the depreciating rupee, the assets still remain overvalued. But had the rupees been depreciating, the fall for the Indian markets would have been shallower. But since the rupee is strong, the depreciation has to happen proportionately for the Indian markets.
Absolutely, and the point is well taken. It's like a not a proxy, but yeah, I mean, the dollar against the Chinese currency and dollar against the rupee, I mean, tracking very, very closely. And for good reason as well. Thank you very much, Jay. Actually, stay with us. We're going to come back to you in just a bit for more. Market ending absolutely flat. I mean, it's 0.12% lower, 24,193. The Nifty Bank is unchanged, 52,178. As Rima said, the mid-cap index did come off in the last 30-40 minutes. The small-cap index ends about 0.8% higher. Market breadth is strong. I mean, it's nothing exceptional, but 1450 stocks are up and about 990 stocks are lower at this stage. The Adani Group's names came under another round of selling pressure. So out of the Nifty, you had Adani Enterprises, Adani Ports, which were lower. But you look at Adani Green, which, by the way, is made a fresh low today, by the way, since the entire sort of latest episode started. And you look at Adani Energy Solutions as well. So this pack did come under another round of selling today. Auto names was the other pack. I mean, large cap auto. Look at something like a Mahindra and Mahindra, maybe, look at Bajaj and Maruti, etc. The auto index itself was down about 1.2% and individual names are up on your screen as well.
Okay, with that, we're going to wrap on closing bell. From the entire team, thank you for watching. Don't go anywhere. Markets Forward comes up next.
Is it, I don't really look at it as a risk factor, right? We are today, like, we're not only FDI compliant, but we've got a long precedent of FDI compliance, right? Before us, well before in this industry, in e-commerce. We are anyway moving towards being a domestic company, but that doesn't mean that tomorrow we become a domestic company, business model will suddenly change, we're constrained. No, that's not the thought process. Business model will stay the same, even as a domestic company. But, today these large IPOs, hopefully if you become a large company, what does this preempt, right? This preempts us, I hope, right, and then maybe be optimistic, but in the next 12, 24, 36 months, I think we'll be like a 15, 20, $25 billion company. I don't know when, I don't know if it's 3 years, 2 years, or maybe longer, but it seems like that scale is going to come. And that's what we're preempting, right? We're preempting that, saying that we would like that large-scale value to accrue to Indian shareholders, and now we have an opportunity to do so. So I think that's true for Zomato as well. They started as like a largely foreign-owned company, and over time moved towards Indian ownership. A lot of that value scale happened there. Similar with I'm sure Swiggy over the next couple of quarters. But for the first time, we have that opportunity, and so all of us are taking that option.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18
A volatile session, but a quiet one. The Nifty ending near the day's low with the broader market outperforming, small caps especially. Nifty stayed below the 24,200 mark. Tech stocks and FMCG led the charge, while autos and utilities were lower.
The union government is likely to allow 100% FDI in the insurance sector. Sources say composite licenses also likely to get the green light as the government hopes to amend the laws in the current winter session of the parliament.
A fresh new tariff threat from the president-elect Donald Trump in the US roils global markets. Trump pledges to impose an additional 10% tariff on China and a 25% tariff on close US allies, Canada and Mexico. Blames all three nations for not doing enough to stem the flow of drugs and illegal migrants into the US. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to get you up to date and ready for the next trading session. I'm Prashant. With me, my colleague Rima. Rima, hi.
Hi. So how do you classify today's trading session? Quiet, flat, sideways?
Quiet, right?
Quiet, right?
Sideways, quiet. I mean, especially because Friday was up 2%, the Nifty was up 2%. Monday, the market was up.
But we woke up to like heavy news flow of Trump tariffs, etc., and the tweets.
And that's the thing, right? I think we should expect more of it. And he's just getting started. He's not even president yet. He's president-elect. So 20th of Jan when he takes over. Yeah. And he said, well, on day one, I'm going to do this. Yeah. So I think we should expect more. But just a quick, a couple of things as we look at the market and what happened today. So as I said, absolutely quiet. And the levels, etc., don't move. The target, resistance, whatever you're going to call it, is the 40-day exponential, which the market has failed to take out yesterday and today, 24,340. Today, of course, there was no question. Nifty Bank resistance zone is 52,680, 52,817. Here again, I mean, we didn't come anywhere close to it. For both the Nifty and the Nifty Bank, I mean, you know, the gap area that we saw, after the gap which was formed after the Maharashtra elections when we opened, I mean, I think that should come into play. But sectorally, a lot happened. I mean, you had at least 5 sectors which moved more than 1% up or down. Defense, IT, FMCG on the upside, auto, pharma, energy on the downside. And as I said, I mean, it's essentially, it's quieter. It's going to be quieter in the US because of the Thanksgiving holiday and a half a day later this week. But that's only later towards the fag end of the week. But in any case, I mean, because it's holidays, generally trading activity in the US is going to be lower, smaller. But I think markets will be not on the edge, but generally, I mean, I think everyone is prepared that, as I said, as I began by saying, expect more from US President-elect Donald Trump in terms of tariffs and what his agenda is going to be when he takes over in the middle of January 2025. Rima.
So watch the tweet before the ticker. Well, on the Nifty, we closed below the 24,200 mark. Quiet, flat, just mildly down about 0.1% on the benchmark indices. But it's not bad, considering we had a 1,000-point rally over the prior 2 sessions. The mid-cap index also ends absolutely flat, but it sold off in the last 30 minutes. From the day's high, the mid-cap index was down close to about 0.8%. The small-cap index, though, managed to hold on to its gains, ending with a gain of nearly 1%, and that helps skew the advance decline ratio in favor of the advancing stocks. In terms of sectors, as we spoke, IT did well, so names like Infi, Wipro, TCS on the front foot. On the back foot were auto names like Bajaj Auto, Tata Motors, M&M, and the entire Adani Group stocks were under pressure. Remember, Moody's has changed the outlook on 7 Adani Group companies from stable to negative, so that weighed on the sentiment. We'll discuss all these in greater detail. Let's also tell you what we have for you on our show today. The top movers and shakers, Vivek is here with that list. A few defense stocks took the spotlight following JP Morgan's brokerage commentary. While Zomato shares also saw an uptick post its QIP launch. We'll get to that. And also, as we wrap up the show, the key market events to watch tomorrow. But as always, it's over to Vivek now for all the stock movers.
Well, good afternoon and thank you so much for that. First on our list of gainers today has to be the top Nifty gainer itself. Shriram Finance, yesterday also a very sharp up move today, very strong management commentary coming in. Stock up over 7% in just the last 2 trading sessions. The next stock, of course, has to be from the telecom pack. Idea, very big relief coming in from the government. It opened up very, very strong, cooled off a little bit, but despite that, ended higher by almost 7.5% to 8%. Now, the entire pharma pack today was under pressure, but amongst the mid-cap space and some of the smaller pharma stocks, there was actually quite a bit of buying activity that went on throughout the trading session. So names like Emcure Pharma that saw upgrade coming in from Kotak, names like Biocon, Granules, Laurus, Glenmark, all of these stocks managed to end with pretty strong or significant gains. The other stock on the radar was Triveni Turbine. It ended up as the top gainer as far as the NSE 500 index was concerned. Volumes too quite strong. And Apollo Tyres, both in the F&O space as well as the broader markets, did see buying activity throughout the session. So Apollo Tyres was the one that ended higher by almost 3.5%. But on the other side, the entire auto pack today, so quite a bit of selling pressure. All of the auto stocks, in fact, ended with cuts. Bajaj Auto down almost 3%. Torrent Power within the broader end of the markets. And remember, the entire power pack has seen quite a bit of a sell-off from the recent highs. Power demand has come down. On the back of that, Torrent Power down today quite significantly. BSE, that was the other stock from the broader end of the markets. Yesterday, there was some support in terms of the stock entering the MSCI, but today down almost 6%. Remember, some of the clearing corp regulatory proposals will indicate that there will be some EPS cuts coming in as far as exchanges are concerned. And lastly, amongst the broader end of the market, this was mainly some of the stocks that did see some selling pressure.
All right, Vivek, thank you very much. That's a lowdown of what moved and where, up or down. Let's move across to Jay Bala of CashTheChaos.com and Sudeep Bandyopadhyay, Group Chairman, IndiTrade Capital. They're with us now to take some questions. Jay, for viewers, just recap the view on the markets. You are, we have seen a decent rebound from the lows, but you're saying, well, it's a rebound waiting to be sold into.
That's right, Prashant. We had discussed this a few weeks back also on Markets Forward. I said the same thing. The markets are likely to bounce, but that bounce is likely to get sold. And this is looking like a counter-trend bounce. Although right now, the high that we saw yesterday, the high that doesn't seem sufficient for the counter-trend bounce to complete. I would like to see a shallow dip to about 23,800, 23,750, and then bounce back to fresh swing highs past Monday's high. So that I am anticipating that to be about 24,400 to 24,800, and then the selling to resume. And the banking index is behaving very choppily too. 52,475 was the resistance that projected. Today's high was about 3 points higher than that. And if that were to get exceeded, I think a maximum of 52,950. So and the price action of HDFC Bank is not encouraging. The only two banks that are strong for the banking sector is the HDFC, SBI. ICICI is middling. The rest of the banking space are quite weak. And so if HDFC were to collapse, it will put a lot of pressure on the banking index. And that's the reason why I've been saying sometime when the next leg begins, it will be the banking stock which will be leading the way down.
Okay, thank you very much for that. Let's get to the defense stocks because that was the sector of the day. Brokerage firm JP Morgan has projected strong growth for India's defense production and exports. So they've initiated coverage in 3 stocks, BEL, HAL and Mazgaon Dock Shipbuilders. Nimesh is here with the details.
I remind us, so all these stocks are budging in trade on the back of the JP Morgan note. On BEL, JP Morgan has a target price of 340. On HAL, they have a target price of 51.35. Suggesting potential upsides from current levels, meaningful upsides. And also they have a neutral rating on Mazgaon Dock with a target price of 42.48. And now, as far as the sector is concerned, JP Morgan believes that the sector presents a very long runway of structural and value accretive growth due to multiple reasons. The first reason is very high and increasing capex. Now, they estimate $150 billion of capex over the next 5 years versus $85 billion in the previous 5 years. They also see a very large export opportunity. So they see a 46% CAGR for Indian companies in terms of growth over the next 7 years, and that could be quite meaningful. And also there is a huge opportunity of domestic manufacturing, focus on high ROCs as well as strong cash flows. Now, given that the stocks have pulled back very sharply from the recent highs, JP Morgan believes that it's a good entry point for these incumbents because they provide a good 15 to 17% EPS CAGR and an ROE between 23 to 33%. So on back of this, initiating report on 3 names with a very strong buy on both BL as well as on Hindustan Aeronautics.
Sudeep, Nimesh, thank you very much for that. Coming back to you for more, but any thoughts on these names? Any of the 3 names that Nimesh mentioned?
Well, Prashant, I've been positive on BEL for quite some time, and I believe defense electronics is one space which I think is going to get into a zone where it will continuously surprise us on the positive side. And they're talking about the export opportunity, and I strongly believe the opportunity is humongous in defense electronics. Also remember the others like HAL is into aerospace. Mazgaon Dock is into shipbuilding and other things. Whereas BEL, being in defense electronics, does serve Army, Air Force, and Navy. All three segments of the defense forces, whether it's India or other countries. So the opportunity for a BEL is going to be significantly higher, is what I believe. And it's been a very well managed company for a very long time. A strong balance sheet, strong performance on a continuous basis. From a long-term investor's point of view, acquiring BEL at current level is absolutely fine.
Okay, so BEL is your bet. Let's talk about Zomato. It launched a $1 billion QIP. One would assume the stock would come under pressure, but it instead closed up with a gain of 2.5%. Nimesh, explain what happened.
A reminder, the stock ended higher largely because I understand there was a very strong demand in the QIP of $1 billion. In fact, the feedback is that the demand was close to 3 times the base book. So that's the reason why you've seen a big reaction on that stock. Well, the floor price was quite low, almost a 7.5% discount. But looks like the QIP placement will happen at a higher price. So that's the news part. Now, what is the implication of this? One, after this QIP, the sense is that the FI holding will fall below 50%. That's going to be quite critical for the e-com business. Now, what I understand from sources, we had broken the story a month back as well, and even then we had said that after the QIP issue, once the FI holding falls below 50%, the company is expected to write to RBI and cap the FI limit at 49%. That's going to be quite critical. However, that will have an impact on the MSCI as well. So Jefferies had written a note when we broke the story a month back, and they said that if this becomes a domestic company, which is going to be positive for e-com, there will be an implication of the stock getting exited from the MSCI. So that's something to track for Zomato. Additionally, while the QIP is done, I also understand there's going to be a large block very soon where a strategic investor could see a clean out trade. So even that would mean that the FI holding falls below 50%. So that's the near-term trigger for Zomato. The QIP done, they've got the $1 billion. I think now the next thing would be one, the clean out trade from the strategic investor, and the fact that they look at capping the FI holding at 49%.
It's a question I think we've discussed. Nimesh, thank you very much for that. Swiggy, there's Zomato, there's Zepto, which has done a fundraise. There's Amazon Taze, which is going to be sort of launched soon. So quick commerce, I think 2024, one of the big stories, of course, has been the rise of quick commerce as a viable, very much here to stay kind of business model. Jay, Swiggy, of course, there's not very much history, but Zomato, chartically, how is this one looking?
Yeah, if you look at the price structure of Zomato from the September highs and to present, the decline from 297 to 240 is also overlapping. The rise from 240 to 280 now, that is also overlapping. So this can happen only if markets are actually finishing a topping pattern. So I would expect Zomato to cross the 297 high registered in September, but that will be the final high for the stock in this leg of the move. But the medium to long term is actually quite positive for the stock. But it needs a good deep correction to somewhere close to about 170. That will make it quite bullish. Maybe even shallower correction could be about 200. So 200 to 170 would be a good correction for the medium term. And the stock looks bullish for the medium and long term, but short term it's looking toppish.
Short term toppish, good over the medium term, long term. Let's get to the other big story. The Insurance Amendment Bill is expected to be introduced in the upcoming winter session of the Parliament. What does this bill bring about, and why is it an important reform in India's insurance sector, perhaps the boldest ever? Yash is here with the details.
Well, Rima, you said the boldest reform in the history of insurance sector, and indeed promises to be one of those. As far as the Insurance Amendment Bill is concerned, there are 5 important aspects which this bill, if approved, brings to the sector. The first one is composite insurance license. A lot being spoken about composite insurance license. Essentially, it allows insurers to make a cross entry into each other's segments. What does that mean? If this indeed gets approved, then life insurance companies will be allowed to sell health insurance policies or any other segment of general insurance like motor insurance. Also, on the other side, health insurance companies and general insurance companies can also underwrite and sell life insurance policies. What does this do? It increases the competitive intensity in the sector as more players look to enter each other's space. The second one is as far as the distribution of other financial products is concerned. Right now, of course, insurance companies have their distributors to sell their products, but once this gets approved, insurance companies will also be allowed to sell other financial products like mutual funds, bank FDs, loans, credit cards, so on and so forth. The third one is initial capital needed. The proposal is to reduce the initial capital which is required to start an insurance business. Currently, entities have to bring a minimum capital of 100 crore to start insurance business and 200 crore for reinsurance business. That is proposed to be reduced and not have one fixed number, but that number of initial capital will depend on the size of the business which the company intends to take. The next one is captive insurance licenses. Now, this is one very interesting concept which could come with this particular bill. This means that conglomerates, large business groups could be allowed to start their own insurance entities, their services being limited to their own employees. So that will be one very interesting amendment. The last one is relaxation of investment regulations. Currently, of course, there are limits to how much an insurance company can invest either in equity markets, government securities or private debt. With this particular approval, the ball could move into the regulator, that is IRDAI's court, to essentially give approval to an insurance company to invest more in either equities or debt or on the private debt if they want to do so on a case-to-case basis.
But yes, the FDI bit is separate, right? I mean, that's a different thing, but that will also get done, is what we understand. So the 100%, moving up to 100%.
Correct. That's what our colleague Sapna has reported. The 100% FDI proposal is out of the insurance amendment bill, but it is a separate aspect which the government is considering. Raising the FDI limit in the insurance sector from 74% to 100% remains to be seen whether it's through automatic route or a case-by-case approval route.
All right. Well, lots of changes coming as we wrap up this year and head into 2025. Yash, thank you for that. Sudeep, any thoughts here?
Well, I think, Prashant, is a very interesting kind of bunch of developments. Insurance industry needs expansion significantly. There is no two ways about it. And IRDA has been talking about it for quite some time. And they've been mentioning that it needs significant amount of incremental capital to be invested in the industry. And for that, I think one of the measures they want to take is allow 100% FDI. The other measure, which I think will increase competition and efficiency, is allowing cross selling of products by life insurance companies of general insurance and general insurance companies of life insurance. I think that's also a very good development. I'm not so sure about the the distribution of mutual fund, bank deposit, loans, etc., how that will pan out. But other two developments, one is 100% FDI and allowing life insurance companies to sell general insurance and general insurance companies to sell life insurance products, definitely will increase efficiency and increase penetration as far as the insurance industry is concerned.
Okay, all right. Well, banks sell insurance products, but that is under a bit of a cloud, as we've been reporting. Why not insurance do the same for banking products, right? I mean, I don't know if that's the logic. But thank you very much, Sudeep and Jai. Great speaking to both of you. And it's a pleasure having you here on CNBC-TV18. We'll take a quick commercial break here. We'll come back with D Street Chatter with Nimesh. And we'll also tell you the events to watch out for as we come back tomorrow. Stay with us.
India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
Welcome back. You're watching Markets Forward. It's time now for our segment D Street Chatter. Nimesh is here to get us all the insight. Nimesh.
Hi, Rima. Extremely range-bound day of trade, but there is a lot of action in the broader market names and a lot of stocks are buzzing as well. So the first stock on my list is Connex Micro, a small company, but that's been buzzing off late, thinly traded as well. But the big buzz is that the company is likely to bag a large order very soon. So that's the trigger for Connex Micro. The second name is BEL. We highlighted the JP Morgan note, but additionally, I understand there is very strong buying from larger FIs in BEL today. The third name is Muthoot Micro. Again, a small company, but buzzing in the last couple of days. The volumes on the higher side. And after a very long time, some bit of FI interest seems to be back in that particular name. And the last is Akum Drugs. That stock's seen a big derating in the last couple of months. There was a massive selling which is going on. I understand the selling pressure from that private equity fund is largely over. And after a long time, some bit of buying interest seems to be back from larger FIs in Akum Drugs as well in today's market.
All right. Busy season for Nimesh is starting now once again after the earnings season is over, right, Nimesh? Lots of fundraise, deals, QIPs. So we'll keep you abreast with all of that. Well, let's get you the key corporate commentary that we had over the course of the day here on CNBC-TV18. The Microfinance Industry Network, which is an SRO, self-regulatory body, has announced a slew of changes to tighten lending norms. The CEO and Director, Alok Misra, told us that portfolio risk is somewhere between 3 to 3.5%, and the focus is in returning to better discipline. Efforts are being made to strengthen the loan utilization checking practices. He added that they are hopeful the sector issues will be settled by January of 25.
Shriram Finance Management says for FY25, the company is forecasting an AUM growth of 17 to 18%. They expect net interest margins to remain stable at 8.7%. They also anticipate double-digit growth in the gold loan portfolio, supported by the addition of more branches. They added that they will maintain cost below 2% following a 1.8% print in the prior year.
Okay, in the infrastructure space, Afcon's Infra was with us in the morning, and the management said that there has been a lull in ordering activity due to the Maharashtra elections, but they're expecting ordering activity to resume in full force soon. The company has already secured 2 major road projects from the government here, and several bids are still pending with results which are awaited eagerly.
Okay, and before we wrap, we'll bring you some of the key market events to watch out for. Mangalam is here. Mangalam.
Well, the stock that we'll be watching out for tomorrow will be M&M, because tonight post-markets you will have the launch of the electric SUVs BE6E and XEV9E. The pricing of that, etc., would be in focus. The other one that we'll be watching out for is NTPC Green Energy as well. Lists tomorrow. Apart from that, there is an MK FinShift Global Investors Conference where both Zaggle and Fino Payments will be presenting. So any details coming out of that would be crucial to track. And post that, we'll have a bunch of macro data to watch out for, namely from Wall Street. We have initial jobless claims for the US. We have the Q3 GDP, core PCE coming in, along with the November meeting FOMC minutes. So all those factors would be crucial.
All right, Mangalam, thank you very much for that. Well, with that, it's a wrap here on this edition of Markets Forward. Programming continues with more news and updates on the other side. Thanks for staying with us.
India's largest startup platform. It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
ответ на применение американского и британского дальнобойного оружия 21 ноября текущего года российские вооруженные силы нанесли комбинированный удар по одному из объектов оборонно-промышленного комплекса Украины. В боевых условиях было проведено в том числе и испытание одной из новейших российских ракетных систем средней дальности.
From the chair, all I said, you know it more than anyone else. I'm hurt.
The Adani bribery case is affecting the entire country.
Nothing is going on. Khadge ji.
Sir.
As a
team.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The bulls take a breather after a two-day sprint. The Sensex and the Nifty end with modest losses after a volatile session. The rupee holds largely steady against the dollar as the impact of a global dollar rally is offset by banks selling the greenback. A fresh tariff threat from U.S. President-elect Donald Trump roils stock markets worldwide. Trump pledges to impose an additional 10% tariff on China and a 25% tariff on close allies, Canada and Mexico. Blames all three nations for not doing enough to stem the flows of drugs and migrants into the U.S. Israeli airstrikes in Gaza and Syria kill over a dozen people, even as hopes rise that Israel may call a temporary truce with Hezbollah. Israel's cabinet is likely to discuss a 60-day ceasefire deal, but the deal sees opposition from some far-right ministers in the Netanyahu government. Stocks of Adani Group companies fall after fresh downgrades to its shares and bonds from rating agencies Fitch and Moody's. Sources say Adani Wilmar is looking to delay a stake sale, adding that it may seek SEBI for more time to meet the 25% public float norms. The government may soon allow 100% FDI in the insurance sector. Sources say a composite license mechanism may also get the green light, adding that the government hopes to amend the laws in the ongoing winter session of Parliament. Sources say the government has approved a proposal to waive the bank guarantees that telecom companies were required to furnish for spectrum acquired before 2022. The move will be a huge relief for Vodafone Idea and a significant boost for Airtel. Food aggregator Zomato launches an 8,500 crore rupee qualified institutional placement at a floor price of nearly 266 rupees a share. The exercise will change Zomato's shareholding pattern to give it more domestic investors. Maharashtra Chief Minister Eknath Shinde tenders his resignation to the governor, will remain caretaker chief minister until a new leader is sworn in. The Mahayuti stakes claim to form the new government, but there's still no clarity on the next chief minister. Parliament marks the 75th anniversary of the adoption of the Indian Constitution. The President and the Vice President address MPs from all parties in the Central Hall, call on political parties to put the nation first. At least 5 security personnel have been killed in Pakistan and dozens injured in clashes with supporters of jailed former Prime Minister Imran Khan. The army has been deployed on the streets with orders to shoot at sight, even as Khan supporters attempt to march towards Islamabad demanding his release. Well, we have a lot coming up for you, but a quick snapshot of the day's market action. The bulls took a breather today after a two-day sprint, and early gains on the large street were erased in what turned out to be a volatile session. The Sensex and the Nifty ending with modest losses, though, with the Nifty dropping below 24,000 today, so just flat at close. That was the story for both the Sensex and the Nifty. The mid-cap index closing just about in green, and the bank stocks lost ground today as well. So a flat close, but coming off of its intraday lows and its intraday highs as well. The Indian rupee, meanwhile, managed to hold steady against the dollar. The rupee remains above the 84 mark. India's 10-year bond also held steady in trade today. That was the money and the bond market snapshot for you. Shares of Adani Group companies back under pressure after recovering some lost ground in the last couple of trading sessions. Downgrades from rating agencies Moody's and Fitch over the bribery allegations in the US have led to the decline today. According to a Bloomberg report, promoters of Adani Wilmar are looking to delay a stake sale to meet the 25% public float norms. Currently, the promoters hold more than 75% stake in Adani Wilmar and have time till February of next year, that's Feb 2025, to pare their stake. Let's see if the regulator gives them additional time. The big story that is moving the markets worldwide. US President-elect Donald Trump has threatened to impose 25% tariffs on close allies Mexico and Canada on day one of his presidency. Making the announcement via Truth Social, Trump blamed both nations for failing to stem the flow of drugs and migrants into the US. In a separate post, Trump also pledged to impose an additional 10% tariff on China for not acting against the flow of illicit drugs. Trump's proposals are a culmination of his trade rhetoric during the election campaign trail. Now, several economists have warned that tariffs could stoke inflation and disrupt global trade. Let's take a look.
U.S. President-elect Donald Trump on Monday pledged a 25% tariff on all products from Mexico and Canada from his first day in office. Trump said on social media that tariffs would remain in place until the two countries clamp down on drugs, particularly fentanyl, and migrants crossing the border illegally. The threatened new tariff would appear to violate the terms of the U.S.-Mexico-Canada Agreement on Trade, which took effect in 2020 after Trump signed it into law. That deal continued the largely duty-free trade between the three countries. The president-elect also accused China of not taking strong enough action to stop the flow of illicit drugs crossing the border into the U.S. from Mexico. He said his government would impose an additional 10% tariff on goods from the country as a result. Trump has previously pledged to end China's most favored nation trading status and slap tariffs on Chinese imports in excess of 60%, much higher than those imposed during his first term. In response, the Chinese embassy in Washington said, quote, "No one will win a trade war or a tariff war." Mexico described the current trade deal as a, quote, "framework for certainty for investors," and there was no immediate comment from Canada. Economists say that Trump's overall tariff plans would push U.S. import duty rates back up to 1930s-era levels, stoke inflation, collapse U.S.-China trade, draw retaliation, and drastically reorder supply chains. They say tariffs are paid by the companies that import the products subject to the duties, and they either pass on the cost to consumers or accept lower profits. Trump frequently refers to countries paying as a consequence of his tariff plan, saying on Monday that Mexico and Canada will, quote, "pay a very big price." In 2023, the U.S. accounted for 75% or more of the two countries' exports.
Trump fired his first salvo at China. Apple CEO Tim Cook stressed on the tech giant's commitment to the Asian country. Speaking at an event in Beijing, Cook said that Apple could not do what it does without its Chinese partners. Cook was on a visit to China to attend an expo and met with top officials in the country.
This is my third trip this year, and it's so wonderful to be there to see the intersection of technology and agriculture. And it feels wonderful to be a part of it. China, we're very committed to China. That's the reason I've been here 3 times.
I'm thrilled to be here, and I'm so proud that Apple has an exhibit here with our partners. Oh, I value them very highly. We could not do what we do without them.
Tim Cook in China. The other big global story, Israeli forces continue to attack southern Lebanon, killing at least 31 people in the last 24 hours. The Israeli military launched fresh airstrikes hitting residential and commercial buildings in Beirut, as well as the port city of Tyre. Israel's defense officials reiterated their stance of targeting Hezbollah strongholds in the region. This comes amidst reports of an Israeli cabinet meeting today to decide on a 60-day truce with the Hezbollah. Far-right ministers who are part of the cabinet have already opposed any ceasefire deal. Meanwhile, parts of northern Gaza have also come under heavy attacks from Israel. Overnight, at least 11 people have been injured in a series of attacks by Israeli aircraft in the region. Israeli forces have also bombed Syria, allegedly killing 2 civilians in an attack on multiple bridges near the Lebanese border. The Israeli military said it was targeting Hezbollah's weapons smuggling routes. The global call for ceasefire between Israel and Hezbollah has gained momentum. European Union's top diplomat Joseph Borrell has said there is no excuse for not implementing a ceasefire deal.
It is tragic that we could not get this war to an end. But this must happen. And let's use this tragedy that we have seen in Lebanon and Gaza in order to avoid more sufferance for the people in the region. We must pressure the Israeli government and maintain the pressure in Hezbollah to accept the U.S. proposal for a ceasefire. This was agreed.
Oil prices rose marginally after a sharp decline, which was triggered by the prospect of geopolitical tensions in West Asia easing amidst talks of a ceasefire. However, the uncertainty surrounding broader regional stability continues to lend underlying support to energy prices. Escalating conflicts in Russia, Ukraine also pushed prices higher. Well, back home, the union government is likely to allow 100% FDI in the insurance sector. Sources say the government may amend the insurance laws in the current winter session of Parliament. Sapna joins us now with the details. Sapna, FDI perhaps to 100%, a big boost for the insurance sector.
Well, it is likely the government, may like to bring some amendments to the insurance bill, and that would be in relationship to the raising of the FDI cap from the current 74% to the 100%. Now, these are proposals that have been discussed in the past as well, and it may just be feasible that the ongoing winter session of the Parliament may see some action on this front. Having said that, the sense that we are being given is that probably global investors would be interested in coming in with a full 100% ownership, maybe even singly. So keeping that in mind, I think there would be a bit of messaging on the part of the government also in terms of giving a boost to the entire insurance sector. Second aspect, of course, could be possible that the insurance amendment bill may also incorporate proposal of composite licensing for the insurance companies. Now, there has been a lot of discussion on this in the past as well. 2 odd years, the regulator also has played a very important role on this front. So that might also see some light of the day. Last but not the least, insurance agents or intermediaries, where the FDI cap already has been raised, but they are unable to sell multiple policies or multiple companies, probably that relaxation will also come in. Of course, we need to wait and watch and see what other delegated legislation could follow once the amendments have been cleared by the cabinet and the bill has been brought to the parliament. But this is what the position is as of now.
Sapna, many thanks. And speaking at the CNBC-TV18 Global Leadership Summit just a few days ago, the IRDA chairman, Debashish Panda, had said that this is an opportune time to increase FDI in the insurance sector to 100%. Take a look.
This has become the opportune time for, having 100% FDI. So what will help potentially to the 100% is that it will play out in the sense now the players will come with 100% FDI. They can plan their business independently. They can decide on their growth plan. They can decide what kind of business they want to write.
Well, that's the IRDAI chief. And staying with insurance, what are the amendments to the Insurance Act that have been proposed and how will they impact industry? Yash is standing by to explain. Yash.
Well, Shireen, the Insurance Amendment Bill possibly would be one of the boldest moves in the recent history that has come about as far as the insurance sector is concerned. What it does is that it brings 5 important changes to the dynamics of how the insurers in the country operate today. The first one is with respect to composite insurance license. What composite insurance license does is that it allows cross-entry of insurance companies into each other's segments. What that means is life insurance companies, if an approval comes for composite insurance license, can sell health insurance policies, or they can also enter into other segments of general insurance industry, case in point, motor insurance. This plays on the other side as well. Health insurance companies and general insurance companies, are permitted then to sell life insurance, underwrite and sell life insurance policies as well. What this does is that it increases the competitive intensity with more players coming into each other's segment in India's insurance space. The second one is multiple distribution of various other financial products. Right now, of course, it's insurance intermediaries can only sell insurance products, but if the approval to insurance bill comes through, then they will be allowed to sell other financial products as well, like mutual funds, bank deposits, loans, credit cards, so on and so forth. What it does is that it opens new revenue streams for insurance companies itself. The third one is a reduction of the minimum capital required to start insurance business. Currently, any entity wanting to start insurance business in India has to bring a minimum capital of 100 crore for insurance and 200 crore for reinsurance. that is proposed to be reduced, and it won't be a fixed number. Essentially, the number of minimum capital will depend on the size of the business that the insurance company plans to bring as far as Indian jurisdiction is concerned. The fourth one is captive insurance license. Now, this is a very interesting concept, because if an approval for this comes through, then major conglomerates or business houses will be allowed to start their own insurance entity with their services or the insurance policies being limited to their own employees, making the space very, very interesting. The fifth and the final one is relaxation of investment regulations. Currently, insurance companies can only invest up to 15% into equity markets, about 60-65% in the government debt and balance on the private debt. But with this thing, the power will come in the hands of the regulator, that is IRDAI, in terms of giving approvals to insurance companies and increasing their equity investments or investments in any other segment. It's not just the industry which is waiting for the insurance amendment bill. The regulator has also been keenly watching this one and is awaiting a final approval on this one. This is what IRDAI chairperson told CNBC-TV18 in a very recent interaction which we had at the Global Leadership Summit.
I would expect the moment it comes, it is welcome. The earlier, the better. So that is something, will be known to all of us as and when it happens.
Well, lots happening in the insurance space. Moving on, food aggregator Zomato has launched an 8,500 crore rupee qualified institutional placement at a floor price of nearly 266 rupees a share. The indicative price has been set at 252 rupees a share, which represents a 10% discount to the stock's closing price today. A total of 3.8% equity or 33.65 crore shares are on offer. The exercise will change Zomato's shareholding pattern to give it more domestic investors. Remember, this is something that Zepto is attempting to do as well with its latest fundraise of $350 million from domestic investors. Now, the Delhi High Court has granted a stay order on a debarment notice issued by Solar Energy Corporation against Reliance Power. The SECI had issued a show-cause notice to Reliance Power and its subsidiary for allegedly issuing fake bank guarantees and had barred the company from participating in government tenders for 3 years. Automaker Hyundai India received a show-cause notice from the Maharashtra Tax Authority over allegations that it claimed excess input tax credit between FY20 and FY21. The tax notice worth 5 crore rupees also includes interest worth 2 crore rupees. The company said the notice will not have any impact on its operations in India. Well, big relief for telecom players. Sources say the Union Cabinet has approved the proposal to waive bank guarantees. We also learned that the waiver will apply for spectrum acquired before 2022. Shares of Vodafone Idea surging on the back of this development. Ashmit joins us now with the details. Ashmit, good news certainly coming in for the likes of Vodafone Idea.
Well, big relief coming in for all telecom players. Cabinet approving the decision to grant a waiver for all bank guarantee requirements. A big relief coming in for all telecom players, for Vodafone Idea to be specific. So what is this relief that has been granted? What does it translate into? Well, bear in mind that in 2021, the government had made a decision that for all subsequent auctions, there would be no requirement by telecom companies to furnish a bank guarantee. So whether that's 2022 spectrum auctions, 2024 spectrum auctions, no bank guarantees were required. Now, subsequently, a demand fell from the industry that if the government was open to the idea of waiving off of bank guarantees, why not waive it entirely, even for pre-2022 spectrum auctions? And that is something that, in fact, found traction with the DoT. The DoT had prepared a cabinet note, sent it, placed it before the cabinet, and late last evening, we understand, the cabinet has granted its approval for waiving off of bank guarantee requirements even for pre-2022 spectrum. Now, this comes as a huge relief, especially for players like Vodafone Idea that were looking at bank guarantees north of 25,000 crore rupees, looking at liquidity issues. They're able to get relief on that. But just to clarify, this is not a company-specific measure. This relief that has been granted is across the sector for all players. Jio as well as Bharti Airtel also likely to benefit, but not as much as, of course, Vodafone Idea.
Ashwat, many thanks. We will head into a break, but up next, the suspense over the next Maharashtra Chief Minister continues. Eknath Shinde to continue as the caretaker Chief Minister till a new leader is sworn in.
And a leader, you are aware that my ruling on this issue has been given. I would seek your earnest cooperation, particularly in the background that matters to you more than anyone else, that we are in the 75th year of adoption of our
Sir, 75th year है, उसमें मेरा भी हिस्सा 54 years है, तो मुझे कोई सिखाने की कहने की बात नहीं।
सही, एक बार आपको अनुरोध करूं।
मैं आपसे
एक सेकंड। No, please take your seat. No, in all humility, from the chair, all I said, you know it more than anyone else. I paid you the highest compliment.
Okay,
Still
sir.
you are taking exception.
Thank you very much. Thank you.
No, sir.
Thank you.
I'm hurt. This is hardly an approach. I have commended his contribution.
Thank you.
I have praised it, and the same.
Sir, ये बहुत ही important मसला
What I
है।
have to say, sir? Not on 267.
267.
No, that my ruling is over.
No, it's a very important, sir. ये देखिए,
No,
ये
you are questioning ruling of
sir,
the chair.
if you suspend today's business, we can explain because the Adani
1 second, sir.
regarding this bribery case is affecting the entire
Nothing
country.
is going on record.
And
nothing is going on record.
No. Entire
Nothing
country.
is going on record. Nothing is going on record.
Consistently,
Nothing is going on record.
Modi ji is supporting him.
Nothing is going on record. Nothing is going on record. No, sir.
Modi ji is supporting him. And दुनिया में
List of matters raised with permission. Srimati J.B. Mather Isam.
Well, death, taxes and changes are the only constants in life, but the other constant in life is the IPL. And while 4,000 miles away in Perth, it was raining runs and wickets, it was raining crores in Jeddah in Saudi Arabia, where the IPL auction is currently underway. The other big constant in the IPL, though, is that the most expensive player tag keeps shifting and raising the bar higher every season. This time around, it was Rishabh Pant, who was bought by the Lucknow Super Giants for a whopping 27 crores. Shreyas Iyer by the Punjab Kings for 26.75. I'll talk about the other Iyer in this list in just a bit, but Punjab Kings also splurged 18 crore for Yuzvendra Chahal, the Indian leg spinner. A lot of talk about foreign players, the big moolah they get, but not playing the full season. This time around was no different. Josh Butler going for 15.7 crore to the Gujarat Titans, and Trent Bolt and Jofra Archer for 12.5 crores each to the Mumbai Indians and to the Rajasthan Royals respectively. Uncapped the big money retentions, of course. I talked about the other Iyer in this list, and that is Venkatesh Iyer, who was retained by the Kolkata Knight Riders for 23.75 crore. Virat Kohli for the RCB for 21, and Arshdeep Singh, the fast bowler, retained by the Punjab Kings for 18 crore. Uncapped players have drawn a lot of attention because of a certain Mahendra Singh Dhoni, but the actual uncapped players who have not played for India received a fair share of bids as well.
SR Group co-founder Shashikant Ruia passed away at 81. Ruia co-founded the group in 1969 and grew it into a global conglomerate. He had been suffering from prolonged illness and passed away in Mumbai. The Reserve Bank Governor Shaktikanta Das was admitted to Apollo Hospitals in Chennai this morning. In a statement, the Reserve Bank has clarified that Governor Das was doing fine and has now been discharged. The statement added that there was no cause for concern. Aviom India Housing Finance has warned its creditors that payments could be delayed. In a letter to creditors that was accessed by CNBC-TV18, the company said that this was due to an ongoing audit following the discovery of fraudulent transactions. Ritu is here with more details. Ritu, take us through what's been uncovered.
Well, Shireen, Aviom India Housing Finance has informed its creditors of an ongoing National Housing Bank audit which follows fraudulent transactions that have come to light from a recent inspection, and that could lead to a delay in repayment to its lenders. Now, we've accessed this letter that Aviom sent to its creditors, where it reveals that NHB's inspection found signs of financial irregularities Specifically, some mutual fund account statement seems to have been tampered with, and the company admitted that this could lead to a restatement of its financial data for the past 3 financial years. Now, the company has already filed a criminal complaint with the Economic Offences Wing as on the 19th of November, and its board has also initiated an internal investigation with independent advisors. Now, AVOM's short-term liquidity is also under pressure, with about 35 crores in what it calls sticky receivables and delayed capital raising efforts, which has stalled discussions with any potential investors. But the company is exploring options like equity infusion, debt realignment, and structured finance solutions to navigate this particular issue. Now, keep in mind, AVOM has assets under management of about 1750 crores as of FY24, which isn't too large from a systemic point of view. Domestic lenders include the likes of HDFC Bank, SBI, LIC Housing, and so on. And the total exposure to these domestic lenders is of only about 130 crores. But with the fraud coming to light, the larger concerns really are around whether this is going to lead to a further risk aversion from banks when it comes to lending to NBFCs. And the company also has outstanding NCDs of about 200 crores. And that impact on retail investors down the line also remains to be seen.
All right, Ritu, many thanks for joining us. The big national story, it's been more than 72 hours since the BJP Shiv Sena NCP alliance registered a landslide victory in the Maharashtra Assembly elections. However, the suspense over the next Chief Minister continues. Today, Chief Minister Eknath Shinde submitted his resignation to the governor. As per protocol, the term of the current Maharashtra Assembly ends today. Shinde will function as the caretaker CM till the next leader is sworn in. Sources tell us Eknath Shinde's Shiv Sena is unwilling to cede the CM's post to the BJP, despite the latter winning more than twice the number of seats. The BJP seat tally and a nearly 90% strike rate is its best ever performance in Maharashtra. Both camps are holding their cards close to their chest, insisting that a decision be taken unitedly.
तीन पार्टी की सरकार है, महायुति की सरकार है, 14 करोड़ जनता के लिए सरकार आने वाली है। भाई जब महायुति की सरकार बनती है तो उसको थोड़ा टाइम लगता है। एक पार्टी की सरकार थोड़ी है कि आज क्या बना लेंगे। भाई थोड़ा समय जा रहा है, लेकिन जनता के हित में, महाराष्ट्र के हित में है। महाराष्ट्र को आगे लेके जाने के लिए है। हमारा केंद्रीय नेतृत्व और महाराष्ट्र के तीनों नेता बैठेंगे और मुझे लगता है योग्य निर्णय होगा। ऐसा निर्णय होगा कि महाराष्ट्र की जनता के लिए, विकास के लिए डबल इंजन सरकार जो चलेगी वो देश के हित, महाराष्ट्र के हित में काम करेगी।
सीएम साहब ने जो रिजाइन दिया है वो सीएम पद का तो है और पूरा मंत्रिमंडल का है। इसके बाद हमारे जो 3 लीडर है, एकनाथ शिंदे साहब है, देवेंद्र जी है, अजीत दादा है, वो पीएम साहब के साथ और अमित शाह साहब के साथ बात करके उनके मार्गदर्शन के नीचे हम सरकार बनाएंगे। हमारी महायुति कॉन्क्रीट है, मजबूत है, उसमें कोई दिक्कत नहीं है।
Well, who will be Maharashtra's next Chief Minister? That question remains unanswered for now. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Do stay tuned. We're back in a moment with more.
The fast bowler from J&K was bought by RCB for 6 crore. Shashank Singh for the Punjab Kings for 5.5 and Naman Dheer by the Mumbai Indians for 5.25 crores. So, while the Border Gavaskar Trophy is underway in Perth, it is raining crores in Jeddah, and the focus is on the IPL as well.
Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, the commodity prices remain volatile as the dollar index continues to hover near a one-year highs. The U.S. President-elect Donald Trump has announced that he will impose a 10% additional tariff on Chinese goods and a 25% tariff on all goods from Mexico and Canada. This is expected to strengthen the U.S. dollar further and put more pressure on commodities. Other factors impacting the commodity market include geopolitical uncertainties linked to the Ukraine-Russia war and Israel-Hezbollah, as well as the anticipation of a Fed rate cut in the month of December. When we take a look at silver, the precious metal has been on a bullish trajectory for the last few months. It has, though, seen a sharp decline of 10% in the past month following the U.S. elections. To discuss the outlook of silver, we are now joined by Michael Durenzio. He's president and CEO of the Silver Institute. Michael, hi, thank you so much for being with us. First of all, on what does Trump coming as the U.S. president mean for various commodities, especially silver? We have seen commodity prices very, very volatile. How are you reading into this?
Well, thank you, first of all, Manisha, for the opportunity to join you today. Look, it's anybody's guess how this is going to affect the commodities complex, right? You know, when he was elected in 2016, it affected it to a certain degree. But you're right. The dollar is important as it is the currency that is used by so many nations across the world. And if it continues to rise, as it has since his election, it could have an impact on precious metals prices, and including silver. Now, look, it's not good news when you hear the word tariff, right? And you look at the high number he wants to put on China. Will that affect Chinese industrial demand? Potentially. That's a big part of the silver equation these days. It's a investment metal and it's an industrial metal. And right now, we'll just have to wait and see how this affects silver.
Oh, well, absolutely. Michael, we do understand that all of silver in the global markets and 60% of that use really comes in from the industrial markets right now. So when you look at the global markets, how much would you say China comprises of when it comes to industrial demand for silver?
Well, we just sort of looked at these numbers recently. We put out a press release 2 weeks ago looking at the interim prices and so forth of the complex since our World Silver Survey in April. We think that, you know, China is going to be the leader again this year with respect to industrial demand. If you just look at their electrical and electronics component alone, that's expected to hit a new high of about 210 million ounces, which is roughly 6,600 tons. And to put that in perspective, just 2 years ago, their demand was about 3,900 tons with respect to just that one category. We do think globally, however, that certain components are going to rise over the year.
What is your sense on the Indian demand now going forward? Because here as well, while the investment demand continues strong, I mean, if silver ETFs is anything to go by, we've seen very, very strong AUMs come into that one. How would you look at the Indian demand investment, that is, vis-a-vis the global investment demand in silver?
Well, in terms of global investment demand, I mean, India is really keeping us in the game right now because we are projecting about a 15% decrease this year in terms of physical investment, and we're talking coins and bars. But on exchange traded products, we're looking at our first annual inflows into these products this year, the first in 3 years. And that has come along with the expectation of further Fed rate cuts. There have been some periods of dollar weakness, and the falling yields have benefited silver investment. At the end of October this year, Manisha, we're looking at global holdings in ETPs to be up about 8% from year-end 2023. And India is really leading the way with respect to this market. Now, we have the SLV, we have the PSLV, but let's face it, India's ETP market is relatively new. And there seems to be robust demand coming from your country. Thank you.
Well, the numbers do look good, and with the way the conversations are here in India, there are more and more people absolutely joining into that new product here. You spoke about the US Fed rate cut expectations, and that probability has continued to decline for the month of December. But as we get into 2025, what is your sense? Because the size and the speed of these rate cuts is something that the markets are getting very uncertain about.
Yeah, I don't know about December, and you're right about that. I think the game has changed a bit there, but we'll have to wait and see. But those that are paid to analyze the Fed, those that are in that market, the analysts are still projecting at least 2 to 3, if not more, cuts in 2025, and that will be great for the global precious metals complex. Traditionally, when the rates go lower, people are looking to get out of certain investments and go to hard assets, of which silver is one. And we're looking forward to a very good 2025. I mean, face it, 2024 has been great for silver. We're up about 27% on the year. And quite frankly, the silver price has been quite resilient.
So going forward then, Michael, what's your sense on prices? Because we've been reading those reports suggesting 36 and 38 and even $40 an ounce in the next year, or perhaps 2026. How is the Silver Institute looking at those numbers?
Well, we try to shy away from giving price projections, but when you look at a number like that, Manisha, we're very excited. That's a great number. If you get to 36, 37, 38 next year, you're looking at an average price probably about 32, 33. And the market really would appreciate that. Obviously, the silver members, our members would appreciate that. But quite frankly, those banks that you mentioned, not by name, that are making these projections are doing it for a reason. And the reason is that silver continues to be a valuable resource. And its future is extraordinarily bright with the green revolution.
Michael, what is the kind of deficit that we're looking at in this year? I mean, this is the 4th straight year of a deficit. Are we anticipating a deficit in 2025 as well?
We are indeed. We are in 2025. Yeah, we think the deficit is going to continue. This year, we're projecting it at about 182 million ounces. That will make the 4th consecutive year of deficits. And while I don't have an exact number for 2025 just yet, we are projecting that it will be a 5th year of deficits in the silver market.
What's the kind of physical buying that we've seen in silver? I mean, that has been quite interesting, because somewhere when the silver prices continue to run up, there was these reports that it's not just India, but a lot of West seems to be buying into silver as well. And then, of course, Michael, we've heard about silver-backed crypto and a lot of crypto buying as well. And then this whole competition between precious metals and crypto. How have you read all of that?
Well, it's an interesting question, Manisha, and quite frankly, while we do project there will be a decrease in physical demand this year with respect to bars and coins, we just think that it has to improve. I mean, look at the numbers were not great for this year. We're talking about a 15% down to a 4-year low, but we think that, taking India, for example, we think they're expected to enjoy higher bar and coin sales thanks to bullish price expectations and, of course, a cut in the import duty on silver bullion. So that's going to help as we go into 2025. With respect to the crypto and the gold and silver issue, look, crypto is doing rather well. I mean, they're if you just take a look at Bitcoin itself. But you're right, there are a lot of innovators in that space that are using gold and silver as a backstop to these crypto devices or mechanisms. So we think that silver and gold will have a role in that space going forward.
A final question then, Michael, and a lot of people do say that the silver run can perhaps continue in 25 and 26 and 27, and then perhaps supply would catch up with the kind if those 2-3 years also see a run up coming in. Do you see more investments in mines? Do you see more silver supply coming into the market in the next 2 or 3 years?
Well, look, we are calling for just a very modest 1% increase in mine supply in 2024. And that's primarily due to some operations that were shuttered or under maintenance in 2022 and 2023 coming online again this year. Look, it's going to be really difficult to meet the demand requirements of silver from newly mined supply sources. There just aren't any new deposits out there. As you know, only 30% of silver comes to the market from what's known as a primary silver mine. The rest is the byproduct of lead, zinc, gold, and copper operations. So until those ramp up, there'll be a supply and demand deficit in the market. But you did mention down the road 2025, 2026, and so forth. We'll just have to see.
Well, that point is well taken, Michael. And as always, thank you so much for taking time out for CNBC TV18. So, well, yes, bullishness could continue in case of silver prices. 2025 could be a fifth straight year that we will be looking at a deficit in the global markets when it comes to silver. But with that, it's time for a short break. But don't go anywhere. We will discuss the outlook on agriculture commodities on the other side of this break. Welcome back. We're discussing the impact of global uncertainties on the commodity market. Let's talk about agriculture commodities now, on how will Trump's hardline tariff policies affect these commodities and what are the global factors to watch out for. Joining us now to discuss the outlook is Sumit Gupta. He is CEO of Asia Business at McDonald Pills. Sumit, hi, thank you for joining us. And I want to start with China, because China does matter when you talk about commodities, because either they are the major producers or consumers or importers of various commodities. Now, with all these tariffs coming in on China, how are you reading commodities and which ones would you keep an eye on?
Hi, Manisha. Good afternoon, and thank you for very much for having me on the show. Actually, your question entails a lot of information, because you have started talking about the Trump, tariffs, and trade. And these are the three components which are going to keep international markets very volatile in years to come. And as you have mentioned, because of the possible imposition of the tariffs, the global trade flows are set to change, and it is going to have a profound impact on India. And specifically coming from the point of view of China, which is a major producer and consumer of the commodities, and which is at the center of the trade war, we are going to witness for sure extremely volatile commodities. And what does traders want? They want volatile markets. One thing everybody is going to do in the days to come is to open their Twitter account right in the morning and see what Trump has tweeted.
Sure.
But everything aside, we expect that because of this trade war situation, where potentially Trump is talking about tariff on Chinese product, import of Chinese product. The one weapon which China has used last time was to put tariff on soybeans out of US dominantly, which impacts the heart and soul of the American farmer, which is the key Republican voting area. But personally, I believe it is those things are already accounted for, because global production is not going to change. The only thing which is going to change is trade flows. Today, for example, US is exporting beans to China and other countries, and potentially with these tariffs, Brazil and Argentina will start exporting beans to China, and US will export beans to the non-Chinese destination. It will have a profound effect on the trade flows, and especially veg oil imports into India. But we are going to live through very interesting times, as you have mentioned, during the duration of Trump, tariffs, and trade wars.
I get those three T's there, Sumit. But also the other factor to look for is the currency markets, isn't it? Because with the strength in dollar index, we've seen other currencies kind of depreciate, including the Indian rupee. How is these currencies going to impact the kind of global trade that India does? Because we import pulses, we import and we export a lot of things as well. Rice has been a latest addition as well. How would you look at currencies vis-a-vis various agricultures?
So, as you have mentioned specifically about the currency, we expect Indian rupee to stay weak, or potentially because as dollar will gain more strength with these tariffs, and the idea going forward is that interest rates in potentially in US will go down. And if Indian rupees depreciate, then it is for sure inflationary for the products that we are going to import, that are products like pulses, vegetable oils, and other products. But coming from the export point of view, I will say it is also inflationary. If we are able, our rupee depreciate, then the rice prices in the Indian market goes up. So Indian inflation for sure, because of this trade situation, is going to go up. It is going to impact food prices adversely. But specifically staying on currency and food price dynamics in India, I will still say India is largely a domestic market. And as if our dream of Viksit Bharat, as we have to achieve by 2047, you are going to see us getting integrated in international market a lot more through proteins, through vegetable oil, pulses, and potentially grains also. So I believe we are going to live through turbulent time. Currency is going to be more volatile than what we have seen in last many years. But Indian economic fundamentals are very good. We don't expect Indian currency to depreciate in a big way, but it's going to be a lot more volatile than it was in last 4 to 5 years. years.
Point taken. The other thing, Sumit, really is about Trump moving in sense of oil and gas, and we do understand that he has a softer corner for fossil fuels, that is crude oil.
Yes.
With the way the world has been moving when it comes to biofuels, I mean, we've seen palm do that, we've seen soy in Argentina and Brazil in some sense with that. For the Indian markets as well, we've seen rice and maize and sugar in some sense onto that. How would you see the future of this?
It is one position if you take, people will tell you that you are anti-climate change or you are not pro-liberal mindset. Because what has happened in form of Trump or what is going to happen is a cultural shift. It's not a politics or it is not a political shift. Because for the first time in human history, we are moving from more efficient use of energy to less efficient use of energy. When I'm saying more efficient, that is fossil fuels are potentially the most efficient sources of energy. And we are moving to solar, wind, and ethanol, and let's say fuel derived from the food. And what I mean to say is potentially Trump is going to be a hawk towards increasing the fuel supply or the crude supply in US. And we have excess supplies world over when it comes to the supply of the crude oil in the world. And we have excess capacities. And with potentially American crude also coming into the global market, it may potentially depress the crude market, provided there is no big macro uncertainty in the world. Because Trump also talks on the side about stopping these global and regional conflicts so that he can bring the prosperity back to US. But staying on crude and commodity dynamics, I believe that usage of food products, especially soybean oil or ethanol, they are more of or sugar into crude for making ethanol in Brazil. They are more of the regional policies to support farmers, and they are going to continue. And it is very difficult for any government to go back on that. And potentially, in most part of the world, you will see these policies which are pro-farmer to continue. They will only change in provided there is a global drought situation or there is a continuous supply shortages. But in absence of that, with the technology increasing yields year on year and demand only increasing at a linear pace, we expect governments to induce food grains and other product demand through friendly policies in fuel.
Fair point that. One final question, Sumit, and this one is on the geopolitics really, and we've seen some crop disturbances this time around, and it has been more to do with weather than anything else within Russia, Ukraine as well. The Red Sea problems have just about continued. The freight charges have been on the higher side for a couple of years now. Maybe the trade across the world has learned to live with that. But what is the outcome that you see of these?
What we have seen between 90s till now is efficient logistics worldwide, benign geopolitical conditions, and which has helped China to grow in a big way. Now it is our turn to grow, and India also look towards more stable geopolitical situation. And we have seen since 2019 post-COVID, we are into a different trajectory, and it has happened every time across the world. When we had a pandemic 100 years back, after that the economic situation worsened, there were a lot more wars because people have to get back to the same trajectory.
Sure.
I personally believe that we have to live through this period of turmoil for a lot longer than anticipated, but I will put it in other contexts that it is good for India. Because right now the conflict is between US and emerging power in Asia, that is China. And whenever you have a conflict like that, you need friends on your side. And China is a population equivalent to India, and Indian population is our biggest dividend. And I believe whenever technology is same, you have need people to throw at a problem. You need big markets, and US is looking towards Indian market. I believe the conflict of US with China is very supportive India. The conflict in Middle East and Ukraine, Russia has helped India to keep the crude prices low. Because of this conflict, only our energy prices are low. And Indian government has done a great job in managing this geopolitics for the advantage of India. And I believe the way we are positioned at this moment, it is going to help India in a significant way. But But
Okay.
yes, logistics costs are going to stay high.
Okay. So what you're saying is that India perhaps has more and positive coming its way rather than negative, and much of the policies, as you said, are more India-centric and regional rather than coming in from the broader part of the world. Sumit, as always, thank you so much for joining us. And with that, it's a wrap on this edition of Commodities Champions. Thank you for watching.
Hello and welcome to News Center. I am Ashmit Kumar. Now, it's been more than 72 hours since the BJP Shiv Sena NCP alliance registered a landslide victory in the Maharashtra Assembly elections. However, the suspense over the next Chief Minister continues. Today, Chief Minister Eknath Shinde submitted his resignation to the governor as per protocol. The term of the current Maharashtra Assembly ends today. Shinde will function as the caretaker CM till the next leader is sworn in. Sources tell us that Eknath Shinde's Shiv Sena is unwilling to cede the CM's post to the BJP, despite the latter winning more seats than twice the number of the seats. Both camps are holding their cards close to their chest, insisting that a decision will be taken unitedly.
कि तीन पार्टी की सरकार है, महायुति की सरकार है, 14 करोड़ जनता के लिए सरकार आने वाली है। भाई जब महायुति की सरकार बनती है तो उसको थोड़ा टाइम लगता है। एक पार्टी की सरकार थोड़ी है कि आज क्या बना लेंगे। भाई थोड़ा समय जा रहा है, लेकिन जनता के हित में, महाराष्ट्र के हित में है। महाराष्ट्र को आगे लेके जाने के लिए है। हमारा केंद्रीय नेतृत्व और महाराष्ट्र के तीनों नेता बैठेंगे और मुझे लगता है योग्य निर्णय होगा। ऐसा निर्णय होगा कि महाराष्ट्र की जनता के लिए, विकास के लिए डबल इंजन सरकार जो चलेगी वो देश के हित, महाराष्ट्र के हित में काम करेगी।
सीएम साहब ने जो रिजाइन दिया है वो सीएम पद का तो है और पूरा मंत्रिमंडल का है। इसके बाद हमारे जो तीन लीडर है, एकनाथ शिंदे साहब है, देवेंद्र जी है, अजीत दादा है, वो पीएम साहब के साथ और अमित शाह साहब के साथ बात करके उनके मार्गदर्शन के नीचे हम सरकार बनाएंगे। हमारी महायुति कॉन्क्रीट है, मजबूत है, उसमें कोई दिक्कत नहीं है।
So the situation in Maharashtra has once again become extremely complicated, and that too despite a massive and a decisive mandate. Now what has happened is all three allies are unable to decide who is going to be the next Chief Minister of Maharashtra. This is what BJP has to say. The sources have told CNBC-TV18 that the BJP has offered Eknath Shinde a union cabinet berth, and they have offered that they are going to make his son Shrikant Shinde the deputy CM of Maharashtra. This is what Eknath Shinde's party has to say. Eknath Shinde's party has to say that the elections were fought on his face. He was the leader of Mahayuti, and the popularity of Eknath Shinde as the CM in the last 2.5 years helped Mahayuti win as many seats, these many seats. That's why Eknath Shinde deserves to be the next Chief Minister of Maharashtra. And RSS is also an extremely important key player here. Remember, it is RSS who secured all these seats for the BJP and Mahayuti as well. So RSS, even before the elections, was clear that if BJP gets even one MLA, a single MLA more than its allies, then the next Chief Minister is going to be from the BJP. Now, all the three allies are, of course, claiming that all is well in the alliance. But the fact is, the results were out on 23rd November, but Maharashtra is yet to get its new CM.
Right, so the suspense there continues. Moving ahead now, and what would come as a big relief for telecom players, sources have said that the Union Cabinet has approved the proposal to waive bank guarantee requirements. Sources have told us that this will pave the way for telcos to receive bank guarantee waivers for spectrum acquired before 2022. Telecom Minister Scindia had earlier said that a waiver, if any, would apply for the entire sector. The Cabinet has already waived the requirement for bank guarantees for spectrum acquired prospectively through auctions. That's 2022 and 2024 auctions. Now, the Cellular Operators Association has welcomed this move and said that the move will help reduce financial burden on the industry. The association added that this decision will enhance cash flow, free up capital, and enable capital expenditure in the industry. And well, for more on this, we're now joined by Balaji Subramanian, Vice President of IIFL Securities. Mr. Subramanian, thank you so much for joining us. First question, in terms of impact, what would be the bearing on the three telecom players with respect to waiver of bank guarantees? How much do they stand to benefit now with getting more liquidity, with getting their bank guarantees back for the pre-2022 spectrum?
Thank you for having me on the show. As far as this waiver is concerned, obviously the biggest beneficiary will be Vodafone Idea, because considering the large payouts that they face once the moratorium on spectrum payments is lifted from October 1st of 2025, the kind of bank guarantees that they would have had to post was almost 25,000 crores. And that number is much lower for both Jio and Bharti, around 3,000 to 4,000 crores each. That is because they have already prepaid a significant portion of the liabilities pertaining to the earlier auctions. So the biggest beneficiary will be Vodafone here. And in the case of Vodafone, it also assumes importance because they have been looking to raise debt funds for the past few months. They are looking to raise 25,000 crores of debt, and typically any lender measures its exposure to a corporate using the sum of funded exposure and non-funded exposure. Here, bank guarantees form a portion of the non-funded exposure. So if banks do not have to, provide guarantee to Vodafone Idea, that would mean that they would be having more capital to lend to Vodafone Idea in case they decide to go ahead and lend. So that means the debt raising process of Vodafone Idea also receives a boost.
Sure. Let me ask a follow-up question that does this action by the government on the policy front perhaps seem like an afterthought? In 2021, the government had clarified its position that, look, we're comfortable with the idea of not having bank guarantees prospectively. Should this have been something that was done back in 2021 and not wait till the end of 2024 to grant this relief?
So, that is something which can be always, debated. The thing is that, you end up taking a more incremental approach because back in 2021, no one really knew how things would pan out 3 years down the line because the AGR curative petition was dismissed in the interim. And there is also this uh, increasing trust on the government to ensure that there are 3 private players in the market. So I think, they could have always done it even 3 years back. But, these things, typically when a government looks at these things, it will be more incremental in nature rather than provide, use up all the bullets in one shot.
Right. Also, just looking at it from a face value, this decision that has been taken by cabinet, on face value, yes, it's applicable across the sector, but it's not lost on any of the stakeholders that this move benefits mostly, majorly, Vodafone Idea. Having said that, what does this do for the finances of Vodafone Idea, or does it require further policy impetus from the government? Is it required more perhaps in terms of a greater government stake, in terms of perhaps AGR relief? Are there more impetus required from the government to stabilize the ship, so to speak, for Vodafone Idea?
On the last earnings call of Vodafone Idea, the management indicated that lenders are awaiting clarity on 2 matters. One is the bank guarantee waiver, which has now come through. The other one is, what the government does on the AGR burden itself. The company had mentioned on the call that they have made representations to the government on the merits of the curative petition that they had filed in the Supreme Court, even though, the court gave an unfavorable verdict. So they said that, some of those arguments are, still relevant, and they have requested the government to look into it. So, of course, we don't know what can be the kind of relief which the government can give, because, on one hand, you have to, it is a balancing act. On one hand, you have to ensure that Vodafone Idea remains a reasonably competitive third player, while on the other hand, you can't, risk the, you can't run the risk of, getting a contempt of court this thing. So I think the area where there is a clear flexibility for the government is to potentially extend the moratorium by a few more years. So that means that, of course, the cash burden may not go away. It might happen 3-4 years down the line, but at least that will give some headroom for the company to mend its finances, raise debt, stem its subscriber loss, and complete its capex program.
Right, Mr. Subramanian. It's again a tricky task, a tricky balancing act for the government as well as for Vodafone Idea, taking a decision, one, of course, on the bank guarantee waivers, and the other, of course, on the AGR front. A decision is still awaited. We had questioned the minister last month. He hadn't given any clarity, had refused to comment on whether any AGR relief is in the works. Mr. Subramanian, thanks once again for joining us and sharing your perspective. But speaking of the telecom space, India is set to drive the 5G market in the coming years, with estimates indicating that subscriptions will go up to 270 million by the end of this year. And this number could swell to over 970 million by the end of 2030. A report by Ericsson Mobility has highlighted that data consumption per user is expected to grow exponentially to 66 GB per month. Betting on this growth, Ericsson Consumer Labs is now making a pitch for telecom companies to roll out differentiated premium plans for selected users. I caught up with leaders at Ericsson for a peep into the telecom crystal ball. Take a look.
Gaming is another big area. You have about 142 million paying gaming users in India that care about latency. That's another area. Content creators. We have about anywhere between 80 to 100 million content creators and influencers in India. Again, all of them care about uplink speeds to ensure that the videos go out in time. We are able to live stream and in high quality. We see that India by far is one of the biggest markets for Gen AI today. We see phenomenal sort of usage.
When you look at such peak demands, such uplink as well as downlink demands, Is there a case then in such a situation to be where you have infrastructural spends required to deploy such differentiated networks? Is there then a case to be made that perhaps that burden should be shifted equally between the telecom operator on one hand and some of these large traffic generators on the other?
I think, as we have said, I mean, the opportunity is, for differentiated connectivity lies for all the players in the ecosystem, right? Whether you are big tech or you're a telecom operator, and the opportunity is much more in this space of network APIs, right? So, big tech can gain a lot. Big tech has global applications that they want to work across different networks, and they want a consistent experience for their users across these different networks. And now that with our new JV that we have, where we are aggregating all these network APIs, we are providing an opportunity also for the big tech players to actually play in this ecosystem. So we are inviting them to kind of ensure that they are part of this sort of ecosystem. So rather than this fair share, sort of argument, I would rather say that we're trying to be much more inclusive out here to ensure that everybody in the ecosystem can actually play in this area.
Last 1 year, more than 150 million subscriptions have been added in India. Right, and this is not going to stop. We are 1.1 billion subscription market today, and we expect to grow up to 1.2, 1.3 billion by 2030. So what we are expecting is that more and more of new 5G devices will come into the market, and I think India being a big market, what we are seeing is that the price ecosystem of the devices is also changing.
Do you see satellite comms acting as perhaps a headwind that perhaps could offer an alternative to the users, to the consumers?
So first of all, I think satellite has always been complementing the land networks, whether it was wireline or wireless. And I think this will continue to happen. Gradually, we were talking about big satellites, now we're talking about LEO and GEO satellites. So a lot of satellites are coming into it. But what sort of services get adopted by the consumer is a big question. Like what we are forcing is, basic services like voice, SMS, and maybe new services like IoT. That could be a pickup point because there is a device ecosystem onto it. Talking about subscribers going to, taking out a satellite communication for their day-to-day operations, day-to-day data consumption, I think the price points and the market stability will talk about it in terms of future. How does it appear?
Well, with that, it's time now for slipping into a short break. But coming up, the government may soon allow 100% FDI in the insurance sector. Sources say a composite license mechanism may also get the green light. A special discussion when we come back. Welcome back. You're watching News Center. Now, India's insurance sector is set for a raft of changes. The government is likely to greenlight 100% FDI in the sector. Currently, 74% FDI is allowed in insurance. Speaking at the CNBC-TV18 Global Leadership Summit a few days back, the chairman of insurance regulatory body IRDAI said that this is an opportune time to hike the FDI limit. CNBC-TV18 Sapna Das is reporting that the government is also likely to make a slew of changes to the insurance laws, paving the way for composite licenses. Before we go any further, here is the IRDA chairperson, Debashish Panda, on allowing 100% FDI. Take a look.
This has become the opportune time for having 100% FDI. So what will help potentially to the 100% is that it will play out in the sense now the players will come with 100% FDI. They can plan their business independently. They can decide on their growth plan. They can decide what kind of business they want to write.
In fact, that interview was taken by my colleague Yash Jain, who's joining us now with a special guest to discuss this crucial development even further. Yash, over to you. Take it away.
Thanks, Ashmit. Joining me now to discuss this further is Nilesh Sathe, former member, life insurance at the Insurance Regulatory and Development Authority of India. And what we're discussing here are two different subjects. One is, of course, the proposal to increase FDI in the insurance space from 74% to 100%. And second one is equally crucial, the Insurance Amendment Bill. To start with the proposal on FDI, Mr. Sathe, since we are speaking about taking the FDI to 100% from the current 74% in a sensitive sector like insurance, I want to understand from you, in your sense and your reading, should this approval be given through automatic route or, through an approval case-by-case basis by the government? And the second question is that when this FDI limit was raised from 49 to 74%, not much happened in terms of action and interest from foreign guys. Now, when the proposal is expected to be raised to 100%, do you expect significant interest to come from foreign insurance players? And could this be in the form of fresh licenses or acquisition of stake in Indian insurers?
Yes, it will happen in both. Because the existing players are also keen on increasing their stake to 100%, one. Second is there are many life insurance companies and general insurance companies in the world which are much, much bigger, which have not entered the insurance area in the world, in India as of now. So they are also waiting for the 100% stake to enter. Just take example of Berkshire Hathaway, United Health, Ping Insurance of China, and so on and so forth. There are many insurance companies which are much bigger. They are awaiting 100% FDI approval because you know what happened, if you remember, Yash, when it was made to 49, there was slight amendment where the Indian ownership and control was required. Now that is something which has created a problem. So the foreign insurance companies probably are of a view that if Indian ownership and control continues or is again restored, then they are not interested. Although it was removed when stake was increased to 74%, but still from 26 to 49 when it was done, this is something which came in the way of foreign insurance companies entering the insurance market.
And to your understanding, should this approval be given on an automatic basis or should it be a case-by-case approval mechanism which should be put in place?
No, it should be on automatic basis because even for 74% or 49%, it was on automatic basis. So why there should be a change? We should not keep changing our policies back and forth.
Correct. A word on the Insurance Amendment Bill also, and the most important aspect under that bill is composite insurance license, which allows cross-entry of insurers. Do you think a very stringent process of approval should be put in place? Because, underwriting a life insurance policy is a lot more complicated than underwriting a health insurance policy, and hence a cross-entry should go through a stringent examination. And do you expect significant shift in terms of the players, entering the other side of the business as well?
See, some of the players are too keen on entering, like LIC. LIC agents are marketing insurance products of other general insurance and health insurance companies. So if at all, and they have a strong agency base. So if at all they enter this market, obviously their agents will sell their own products instead of going somewhere else. And again, there are many insurance companies which are keen on marketing the products of other lines of business. So there is definitely a scope. And they have got everything in place. See, accounting is in place, risk, all criteria are in place, outsourcing is in place. So what is required is only separate accounting of general insurance and life insurance business. Once that is done, and which is very easy to do nowadays, it's not difficult. So, and if you remember, before 1971, when the four general insurance companies were carved out, New India and others, LIC was doing this business. LIC was doing general insurance business. But that time, of course, the business was very, very small. What is important today is, because of IT, it is easy to keep accounts separate, and it is not difficult to manage these businesses by insurance companies.
So, of course, not difficult to manage the two businesses, and there could be a significant shift. One point under the insurance amendment bill is also reduction of the initial capital to start business. With that particular proposal and the approval there, do we run the risk of certain non-serious players also entering the insurance space, considering that the initial capital requirements could come down significantly?
See, nothing can be ruled out. But yes, you tell me one thing. Before nationalization of insurance companies into LIC, the regulator was not strong. The provisions were not in place. The investment norms were not in place. Now everything is in place. So it is very difficult to, bypass any of these rules and regulations. And let us give a chance. I'll give you an example. Dubai has got 68 insurance companies. What is the population of Dubai? And out of that, 60 are in profit. UK has got more than 400 insurance companies which are working. What is the population of UK? 1/7 of India. Why we cannot have, or we should not have, more insurance companies? And that is possible if line of business wise or region wise licenses are given and the capital requirement is reduced. Although it provides only 100 crores for life insurance and general insurance and 200 crores for reinsurance, you will find that all the insurance companies, without exception, have more than 1,000 crores of capital. Because to do more business, you need more capital. So to start with, there is no need to have such a huge amount of capital. If you are doing a business which has got a short tail, as we call it in technical term, means like motor business, where the claim is going to come in a year or two, or maybe in case of health, in a year or two. Why do you need so much of capital? If less capital is given, see, capital is always scarce, especially in developing countries, it is very, very scarce. So if at all option is given to start insurance companies, take example of all these distributors of cars. They can have their own insurance company and they will have their own client base. What is wrong in that?
Correct.
And controls can be established. Now regulator is very strict on this.
Correct. I mean, the regulator has also been saying that to cater to a population of 1.4 billion and counting, we need many more insurance companies of different sizes to enter, and I think the capital requirement will be an important step in that direction. But of course, there are many more interesting points under the insurance amendment bill also, and all of those will be very keenly watched, potentially being tabled in the parliament session and having an approval and how things pan out for the sector post that. But thank you, Mr. Sate, for your time today. And with that, it's a wrap on this edition of News Center. More news and updates lined up as we come back from this short break.
Thank you. PSU banks will do reasonably well over the next couple of years at least, because they will continue to experience very muted credit costs because, they've been late to the cycle of the cleaning up. So the recovery cycle for them will continue to feed through to lower credit costs over the next couple of years. The defense or electronics manufacturing areas, stock prices have taken a huge beating, and now they might be approaching, some sensible valuations. I haven't, dabbled in that area yet, but yes, it does look interesting.
It's the Vahan registration data, the all-important numbers that all the companies have been talking about. If you remember, after the Q2 results, most companies in their commentary did mention about that more than
Well, in the last 2 years, you pick up any major research report, all of them getting centered around expectations of a very strong growth in India's insurance sector. Now, two important things to note here. A, this sector is already growing at about 15 to 18% each year. And B, it's not a small sector by any means. Just in FY24, the insurance companies in India collected a total premium of 7 lakh crore. Now, as far as the reforms are concerned, there's another very common thing amongst the research reports coming out. They all list the regulatory reforms in the last couple of years as one of the top 3 reasons driving this change in the industry. Today, with us is the man behind, a lot of these reforms which have brought such strong changes in India's insurance industry. Mr. Debashish Panda, the chairperson at the Insurance Regulatory and Development Authority of India.
First of all, thank you for understanding and appreciating the changes that have been brought around in the insurance sector. I think if you look at the Indian context, yes, the market is growing. Insurance, there is a felt need for insurance even growing also across sectors. And therefore, and it's also true that insurance was a low priority need. But in recent times, we have seen that there's a rise in the per capita income, the middle class is widening, the purchasing power has got enhanced, the millennial population who understand risk and insurance better are keen to buy insurance. All of this also has led to the share in the discretionary spend increasing. And that is benefiting also in terms of spending in financial products, which includes insurance. We have also seen that the sector has got, particularly the health sector or the health segment, further impetus by the COVID-19. Overall, the financial awareness is on the rise. Yes, much more to do, but yes, it is on the rise. Now, the second thing that is happening, what is or necessary to be done, is that the industry now needs to harness the economic and the demographic shifts. And also simultaneously, you have to instill trust in insurance in the minds of the policyholders or the prospects. And that could be only done by creating a delightful experience for the policyholder. I mean, it should start right from the solicitation till the settlement of claims, the entire life cycle of the product. So what have we done? What was necessary to be done was to facilitate the insurance sector to create such an experience. The regulatory framework has been made more enabling and more supportive. And the foundation of insurance for all rests on making insurance simple, making it available, making it accessible, and also, most importantly, making it affordable. So how we have done this, I would actually put it in 4 blocks. Allow me to answer this question so that the context or the perspective is set. So what we did was we divided our goals into 4 building blocks. 1, to refine the present. 2, leverage technology and data. 3rd, how do we reach out to the last mile, the last household and the last person? And how do we make ourselves future ready in order to achieve the vision of insurance for all by 2047.
There's a lot of criticism, of course. There are, of course, things like, 60% of the healthcare expenses still happening out of pocket in India. More than half of the vehicles still not having a valid motor insurance policy, accident insurance policy probably being the last priority for small and medium enterprises. What would be that one line that you would want to, tell your critics or the skeptics here of this aspiration of insurance for all by 2047?
First of all, we have to be aspirational. We are a huge country with a population which is young. So we have to have aspirational targets and goals. But as I just answered, why we are confident that we will be able to achieve what we should be achieving, that is insurance for all by 2047. We have worked to a plan, we are working to a strategy. So the ones I explained just now, those 4 pillars, that will take us to insurance for all by 2047. And just to repeat, refining the present, that is the new architecture, the regulatory architecture, then leveraging technology and data, third, reaching out to the last mile, and fourth, by being future ready, because we have to also make sure that the sector remains stable at all points of time, the policyholders' funds are protected and kept safe and secure at all points of time. So all of this are going to pave the way for insurance for all by 2047. And I'm pretty confident that with this roadmap, we will be able to reach there.
Certainly, that's a very positive note that we aspire to achieve. But if you look at the sector today, there are about 27 life insurance companies, 25 general insurance companies, 7 health insurance companies. In your understanding, to cater to a population of 1.4 billion people, do you think the sector needs consolidation and larger, insurance companies, lesser and larger insurance companies? Or do you think we need a lot many more insurance companies of different sizes right now?
See, I think it will be a combination of all. The market will churn. There will be eventually consolidation will also happen. The smaller ones who may not achieve the scale despite having been there for a sufficiently long period of time in the market, there could be consolidation. Then at the same time, you will see new players entering into the field because of the strong economic growth of the country, the revamped regulatory architecture, then thirdly, the purchasing power being enhanced, the widening middle class. So all of these are drivers of growth, and it's bound to happen. And we see that there is a lot of interest being evinced by the global investors to come and invest into the in the Indian insurance industry.
Out of 27 life insurance companies today, only 5 are listed on stock exchanges, which means they've gone public. Out of 25 general insurance companies, we just have 2 companies which are listed. What would be your take on insurance companies going out in the public and listing and making people a part of their growth story as well, especially for the companies which have spent some time in the industry and are sizable in terms of the kind of business that they do?
No, I fully agree that, you see, listing would be a natural progression. Once you achieve the scale, size, or the age, you got to list the company, and it should happen. Listing also brings in a lot of benefits in terms of better disclosures, more value for the policyholders, more value for the investors. It would enhance the customer confidence. It would, even open up access to raising more capital, and it would support growth, innovation. So all of that follows with the listing of a company. So the number of companies which are listed, in life we have 4, in general we have 3, in the standalone health insurance space we have 2, and the recent one, I think today, Niva Bupa is getting listed. Then we have 1 reinsurer. So yes, the total number is 10 at the moment, and we are in engagement with the industry that once, the criteria of either the age or the scale criteria, and we are nudging them to go for listing. And I expect that you will see in the coming months and years more companies, going for listing, or at least preparing that roadmap.
What is the criteria in terms of age? Should it be 10 years, 12 years that the company should consider listing?
No, as I said, age, you also look at the scale. Maybe you look at the AUM, what is the total size of the AUM for life insurance. So it's not one or the other, but we will look at all of this and then shortlist that these are the companies which are ready to go. But you also see people, I mean, there are companies who haven't attained that age also have gone and listed. So the whole idea is to keep nudging, but those who have attained size, scale, and also the age should go for listing. So that is what we would be doing in the coming future. And we are already started engaging, and we'll have more intense discussions also on that.
One question as far as the foreign direct investment in the insurance sector is concerned. Now, when the FDI was raised to 74% from 49%, that did not garner a lot of interest from foreign players. Now, what do you think? What is your view, the regulator's view, on increasing the FDI limit in insurance from 74%? Should it be taken to all the way at 100%? And do you think, are you hopeful that if it is taken to 100%, there will be very strong interest coming from global players to have their own insurance company in India solely by themselves and hence bring a lot of foreign capital?
You see, FDI, obviously we will look at FDI because you need a lot of, this is a capital intensive sector, as you understand clearly, and insurance is not different from the banking or any other sector. Rather, the insurance sector is about 400 to 500 times more leveraged. So now, given that the insurance sector is poised for a substantial growth, and you yourself said in your opening remarks that they are growing at from between 15 and 18% growth annually. And there are certain reports also, you know, there's, I think, the Swiss Re report, which clearly says or forecasts that the insurance premiums in India will rise by more than 7% in real terms over the next 5 years. And that would outperform the global average of 2.4%. And for the emerging markets, it's around, I think, 5%. And for advanced market, 1.7%. So if that is the kind of scale and size in which the Indian market would grow, obviously adequate growth capital will be vital to harness this potential. So therefore, if we depend only on the domestic resources, so, you know, then the crowding out effect will play out. So therefore, we have to perhaps look at FDI also. And if 100% FDI is allowed, along with the growth capital or the required capital, it will also bring in global expertise. It will bring in, you know, capacity, technology. So all of that will definitely bound to happen. So perhaps this has become the opportune time for, you know, having 100% FDI. So what will help potentially to the 100% is that it will play out in the sense now the players will come with 100% FDI. They can plan their business independently. They can decide on their growth plan. They can decide what kind of business they want to write. They can infuse the capital very promptly and easily because they don't need to depend upon their domestic partner. So all of this will also be a concomitant benefit which will accrue. And therefore, you know, we need to perhaps think about. But however, I'm sure that the government will take a decision on this at the appropriate time.
Numbers that matter the most are retail sales, and taking the cues from there, we have here tried to analyze the Vahan registration data for the month of November. Let's see what those numbers indicate. In a nutshell, on the demand perspective, it's a continuation of what we saw in the month of October. Two-wheelers remain the biggest outperformer, followed by tractors, whereas demand for passenger and commercial vehicles remains muted. Now let's come to the numbers, and before we talk about that, do remember the comparison numbers are for the entire month, whereas for this month the data is for 25 days so far. So starting with two-wheelers, the pickup in rural demand seems to be reflecting in the numbers of Hero MotoCorp. Total registrations for Hero MotoCorp have already surpassed the numbers of October and are just 3% lower than November 2023. For TVS Motor and Bajaj too, the registration details are looking healthy, and the numbers are already at par with what we saw last month and are down just 4% and 11% respectively against November 2023. Royal Enfield, while it's currently underperformer amongst two-wheelers, but the data of last few months indicates that Royal Enfield sees a surge in registrations during the last few days of the month. The next in the list are tractor segment. Here too, registration trends are looking healthy with 5 days to go in this month. For M&M Tractor, And registrations are down less than 10% both month-on-month and year-on-year. And for escorts, the decline is slightly steeper in comparison to M&M. It's down in the range of 15 to 17%. Shifting to the segments where demand concerns remain are passenger and commercial vehicles. With only 5 days to go this month, most companies are seeing sharply lower registrations. The numbers are down in the range of 40 to 52% month-on-month and are down 21 to 40% year-on-year, with Maruti and Tata Motors looking the weakest. Before ending, it's important to remember that the comparison numbers both month-on-month and year-on-year cover the full month, while the current data for November represents only 25 days. This gap means significant changes could still occur in the remaining days of the month.
When you talk about portfolio at risk more than 60 days default, that is, we typically it will take 60 to 180.
I want to ask you one question, which is around a news that recently appeared. The group of ministers on GST, suggesting removal of GST when it comes to health insurance as well as term life insurance. Now, especially health insurance as a portfolio to companies, the loss ratios there are increasingly increasing. Even if the GST cut comes through, and the benefits of that GST cut, let's say in a situation, are not passed on to the eventual policy holders, as a regulator, would you nudge and ask insurance companies to give full benefits of the GST cut, a potential GST cut or a removal of GST on health insurance to the eventual policy holders?
I think that we'll be able to react when it happens. But typically, these decisions will happen at the government, considering that whatever cut happens, if it happens, then the benefit passes on to the customer, right? So obviously it could be implementation of the new GST rates sans the ITC, which is the input tax credit. Then the entire benefit passes on to the customer. So it'll be good for the sector in the sense there may be a big impetus for health and life term. So, however, I'm sure the government will take a decision in the overall interest of the public and also the economy.
Three most important things, Chairpersons, are awaited in the Indian insurance sector. The first one is, of course, composite insurance license. The next one is risk-based solvency. And the third one is IFRS. Out of these three, composite insurance license is, of course, in the hands of the Parliament in terms of a final approval. But the other two are in the hands of the regulator. I want to understand the timing on these two things. One, do you expect the composite insurance license, the approval for it, to come in the winter session of the Parliament and for it to be applicable from 1st April 2025? And the other two things, IFRS and risk-based solvency, those are in your hands. By when do we see them getting applicable?
So the first question you have yourself answered. So I will not go into that as to when it will happen. So as far as the amendments are concerned,
your expectations, sir?
I would expect the moment it comes, it is welcome. The earlier, the better. So that is something will be known to all of us as and when it happens. The second issue regarding the risk-based capital regime and the IFRS, and also I said a risk-based supervision framework, which we are trying to establish for a more robust and resilient risk and prudent risk management framework. So we are in the middle of the journey, in the sense the first qualitative impact study has already been completed as far as the risk-based capital framework is concerned. The results are with us. We have recently had a meeting only 2 days ago, the 11th and 12th, with the life insurers, with the general insurers and all the reinsurers, to see the results and share the findings of those results. So we are, as I said, in the middle of this journey. We will be looking at a little more deeper into the various kind of risks that were factored in this first QIS. There may be a need to tweak them and bring in new risk parameters as well. And then the QIS 2 will be done sometime in the next 3 to 4 months. And so if I have to indicate a tentative timeline, then probably, I mean, it's not a hard and final one because, this will evolve. This is a very complex process. We need to take all the stakeholders also on board and make sure that the transition is also a smooth one and as painless as possible. But in the long run, we do understand that the risk-based capital regime is a more efficient way of utilization and allocation of capital. So obviously, everybody will benefit in the long run. So the timeline would be for the risk-based capital, a parallel submission could start in the financial year 26 and the full-scale rollout in the financial year 2027. As far as the IFRS is concerned, again, work is in progress. So it is more of a principle-based approach you would understand and appreciate. So again, what recently we have commenced the gap assessment study. So the experiences were shared in the last 11th and 12th meeting that we had this November. And based on that, further work will start or is already started. So what we are expecting, again, a very tentative kind of this thing I'm making at this point of time, not hard and fast, that the parallel run should start somewhere in 25, 26. And, the full-scale implementation could happen in the year 27, financial year 27, 28. So that is the tentative timelines that we are trying to set for ourselves along with the industry partners. And as far as the risk-based supervision framework is concerned, 25-26 is our target, and somewhere in the financial 25-26, we would like to start rolling out the risk-based supervision framework.
We just have one domestic homegrown reinsurance company, that is GIC-RE. And what that does is that a lot of money, funds from India are still going to cross-border reinsurers outside the borders of the country. Second thing, what has been happening is that insurers are taking more and more, retaining more and more risks on their books. Does the situation of insurers retaining more and more risk because of lack of reinsurance capacity concern the regulator at this point of time? And to get more domestic homegrown reinsurance companies, what's the plan?
What has the regulator done? The regulator also has taken several steps to completely change the reinsurance landscape. One, from the ease of doing business, and two, also making it more attractive. How? Number one, we have, what we have done is that the cross-border insurers, the FRBs, the entire ecosystem now are allowed to obtain lead terms, and also the placement will also be made commensurate with the codes, and everybody will be allowed. So it's more of a level playing field. So while on one hand we are trying to increase the capacity of the sector, we are also trying to enhance the technical competence, parallelly attracting more number of players, and as I said, ease of doing business, and also a level playing field. So obtaining lead terms, there were certain restrictions we have removed, and also placement, also we have eased considerably, meaning the order of preference which existed earlier for placement of the reinsurance business has been reduced from 6 levels to 4 levels.
Correct.
Today, after the GIC, which is the only domestic reinsurer, all the FRBs and the offices which have been established in IFSCA, Gift City, Gandhinagar, which are called the IIOs, they are at the same footing because they will invest 100% of the premiums within the country, and therefore they are given the same order of preference, right? So I think now the CBRs, the cross-border reinsurers, will get attracted to come to the Indian market. They will obviously get a better deal if they go to the Gift City IIOs, because there are some additional benefits that they will get. However, they can also come to the domestic tariff area given the new dispensation that has been provided both in submission of lead terms and in placement of business, and they are being kept at par as far as the allocation or the placement is concerned in the order of preference. So furthermore, we have also revised the requirement of the capital, the assigned capital. We have brought it down from 100 crores to 50 crores. And furthermore, if there is a surplus capital lying in the Indian entity, then that can be repatriated so that it could be used elsewhere. That flexibility has also been provided, which was being demanded by the reinsurers. Even the regulatory returns and the application process for the FRNs, all of that has been rationalized and made easy to a large extent. So the entire ecosystem has been revamped, and that makes it more attractive for the CBRs to set up offices or shops in the GIFT City or in the DTA. So we feel that going forward and in the months and years to come, we will see more CBRs coming and establishing their shops in India.
You've been at that position and you've initiated so many structural reforms in the sector in the recent past. Your term ends in March 2025. Straightforward asking you this question, if the government is open to offering you an extension when it comes to the position of IRDAI chairperson, would you be open to accepting it and extending your term?
So that's a very, let me tell you that it's been a privilege and an honor to serve in this role, you know, and with a wonderful teamwork at IRDAI and equal measure, the response of the stakeholders, I think we have been able to achieve what we have made in the last 24 months. So I think the momentum and the energy will actually propel the future growth. So we have collectively embarked upon the journey towards insurance for all by 2047, and I'm sure that we will be there, and therefore a lot of more work is required to be done. However, at the end of the day, I would say that institution matters, not the persons. So thank you very much, Yash.
Thank you so much to you, of course, to have this interaction with us on an important day. I wish you all the best for, of course, the changes that are in progress. We'll be keenly watching on some of these most important reforms and how they play out on the sector. Thank you so much and appreciate, taking the time out today for this important interaction.
Be somewhere in the range of 3 to 3.5%. We are trying to strengthen the practice of LUC more. One is productive use. That is for the institutions to do a loan utilization check and ensure that it is used for the purpose for which the loan is given. And the second question which you asked in the start was relating to how will this adherence be ensured. So let me tell you that we don't, the sector body and SRO, we don't believe in just merely issuing guidelines and leaving it there. In July, we had issued one set of guardrails, and the adherence has been quite positive from the sector. That is what our checks reveal. And these are data checks, empirical data checks.
ответ на применение американского и британского дальнобойного оружия 21 ноября текущего года российские вооруженные силы нанесли комбинированный удар по одному из объектов оборонно-промышленного комплекса Украины. В боевых условиях было проведено в том числе и испытание одной из новейших российских ракетных систем средней дальности.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The bulls take a breather after a two-day sprint. The Sensex and the Nifty end with modest losses after a volatile session. The rupee holds largely steady against the dollar as the impact of a global dollar rally is offset by banks selling the greenback. A fresh tariff threat from U.S. President-elect Donald Trump roils stock markets worldwide. Trump pledges to impose an additional 10% tariff on China and a 25% tariff on close allies Canada and Mexico. Blames all three nations for not doing enough to stem the flows of drugs and migrants into the U.S. Israeli airstrikes in Gaza and Syria kill over a dozen people, even as hopes rise that Israel may call a temporary truce with Hezbollah. Israel's cabinet is likely to discuss a 60-day ceasefire deal, but the deal sees opposition from some far-right ministers in the Netanyahu government. Stocks of Adani Group companies fall after fresh downgrades to its shares and bonds from rating agencies Fitch and Moody's. Sources say Adani Wilmar is looking to delay a stake sale, adding that it may seek SEBI for more time to meet the 25% public float norms. The government may soon allow 100% FDI in the insurance sector. Sources say a composite license mechanism may also get the green light, adding that the government hopes to amend the laws in the ongoing winter session of Parliament. Sources say the government has approved a proposal to waive the bank guarantees that telecom companies were required to furnish for spectrum acquired before 2022. The move will be a huge relief for Vodafone Idea and a significant boost for Airtel. Food aggregator Zomato launches an 8,500 crore rupee qualified institutional placement at a floor price of nearly 266 rupees a share. The exercise will change Zomato's shareholding pattern to give it more domestic investors. Maharashtra Chief Minister Eknath Shinde tenders his resignation to the governor, will remain caretaker chief minister until a new leader is sworn in. The Mahayuti stakes claim to form the new government, but there's still no clarity on the next chief minister. Parliament marks the 75th anniversary of the adoption of the Indian Constitution. The President and the Vice President address MPs from all parties in the Central Hall, call on political parties to put the nation first. At least 5 security personnel have been killed in Pakistan and dozens injured in clashes with supporters of jailed former Prime Minister Imran Khan. The army has been deployed on the streets with orders to shoot at sight, even as Khan supporters attempt to march towards Islamabad demanding his release. Well, we have a lot coming up for you, but a quick snapshot of the day's market action. The bulls took a breather today after a two-day sprint, and early gains on the large street were erased in what turned out to be a volatile session. The Sensex and the Nifty ending with modest losses, though, with the Nifty dropping below 24,000 today, so just flat at close. That was the story for both the Sensex and the Nifty. The mid-cap index closing just about in green, and the bank stocks lost ground today as well. So a flat close, but coming off of its intraday lows and its intraday highs as well. The Indian rupee, meanwhile, managed to hold steady against the dollar. The rupee remains above the 84 mark. India's 10-year bond also held steady in trade today. That was the money and the bond market snapshot for you. Shares of Adani Group companies back under pressure after recovering some lost ground in the last couple of trading sessions. Downgrades from rating agencies Moody's and Fitch over the bribery allegations in the U.S. have led to the decline today. According to a Bloomberg report, promoters of Adani Wilmar are looking to delay a stake sale to meet the 25% public float norms. Currently, the promoters hold more than 75% stake in Adani Wilmar and have time till February of next year, that's Feb 2025, to pare their stake. Let's see if the regulator gives them additional time. The big story that is moving the markets worldwide. US President-elect Donald Trump has threatened to impose 25% tariffs on close allies Mexico and Canada on day one of his presidency. Making the announcement via Truth Social, Trump blamed both nations for failing to stem the flow of drugs and migrants into the US. In a separate post, Trump also pledged to impose an additional 10% tariff on China for not acting against the flow of illicit drugs. Trump's proposals are a culmination of his trade rhetoric during the election campaign trail. Now, several economists have warned that tariffs could stoke inflation and disrupt global trade. Let's take a look.
U.S. President-elect Donald Trump on Monday pledged a 25% tariff on all products from Mexico and Canada from his first day in office. Trump said on social media that tariffs would remain in place until the two countries clamp down on drugs, particularly fentanyl, and migrants crossing the border illegally. The threatened new tariff would appear to violate the terms of the U.S.-Mexico-Canada Agreement on Trade, which took effect in 2020 after Trump signed it into law. That deal continued the largely duty-free trade between the three countries. The president-elect also accused China of not taking strong enough action to stop the flow of illicit drugs crossing the border into the U.S. from Mexico. He said his government would impose an additional 10% tariff on goods from the country as a result. Trump has previously pledged to end China's most favored nation trading status and slap tariffs on Chinese imports in excess of 60%, much higher than those imposed during his first term. In response, the Chinese embassy in Washington said, quote, "No one will win a trade war or a tariff war." Mexico described the current trade deal as a, quote, "framework for certainty for investors," and there was no immediate comment from Canada. Economists say that Trump's overall tariff plans would push U.S. import duty rates back up to 1930s era levels, stoke inflation, collapse U.S.-China trade, draw retaliation, and drastically reorder supply chains. They say tariffs are paid by the companies that import the products subject to the duties, and they either pass on the cost to consumers or accept lower profits. Trump frequently refers to countries paying as a consequence of his tariff plan, saying on Monday that Mexico and Canada will, quote, "pay a very big price." In 2023, the U.S. accounted for 75% or more of the two countries' exports.
Trump fired his first salvo at China. Apple CEO Tim Cook stressed on the tech giant's commitment to the Asian country. Speaking at Invent in Beijing, Cook said that Apple could not do what it does without its Chinese partners. Cook was on a visit to China to attend an expo and met with top officials in the country.
This is my third trip this year, and it's so wonderful to be there to see the intersection of technology and agriculture. And it feels wonderful to be a part of it. China, we're very committed to China. That's the reason I've been here 3 times.
I'm thrilled to be here, and I'm so proud that Apple has an exhibit here with our partners. Oh, I value them very highly. We could not do what we do without them.
Tim Cook in China. The other big global story, Israeli forces continue to attack southern Lebanon, killing at least 31 people in the last 24 hours. The Israeli military launched fresh airstrikes hitting residential and commercial buildings in Beirut, as well as the port city of Tyre. Israel's defense officials reiterated their stance of targeting Hezbollah strongholds in the region. This comes amidst reports of an Israeli cabinet meeting today to decide on a 60-day truce with the Hezbollah. Far-right ministers who are part of the cabinet have already opposed any ceasefire deal. Meanwhile, parts of northern Gaza have also come under heavy attacks from Israel. Overnight, at least 11 people have been injured in a series of attacks by Israeli aircraft in the region. Israeli forces have also bombed Syria, allegedly killing 2 civilians in an attack on multiple bridges near the Lebanese border. The Israeli military said it was targeting Hezbollah's weapons smuggling routes. The global call for ceasefire between Israel and Hezbollah has gained momentum. European Union's top diplomat Joseph Borrell has said there is no excuse for not implementing a ceasefire deal.
It is tragic that we could not get this war to an end. But this must happen. And let's use this tragedy that we have seen in Lebanon and Gaza in order to avoid more sufferance for the people in the region. We must pressure the Israeli government and maintain the pressure in Hezbollah to accept the U.S. proposal for a ceasefire. This was agreed.
Oil prices rose marginally after a sharp decline, which was triggered by the prospect of geopolitical tensions in West Asia easing amidst talks of a ceasefire. However, the uncertainty surrounding broader regional stability continues to lend underlying support to energy prices. Escalating conflicts in Russia, Ukraine also pushed prices higher. Well, back home, the union government is likely to allow 100% FDI in the insurance sector. Sources say the government may amend the insurance laws in the current winter session of Parliament. Sapna joins us now with the details. Sapna, FDI perhaps to 100%, a big boost for the insurance sector.
Well, it is likely the government, may like to bring some amendments to the insurance bill, and that would be in relationship to the raising of the FDI cap from the current 74% to the 100%. Now, these are proposals that have been discussed in the past as well, and it may just be feasible that the ongoing winter session of the Parliament may see some action on this front. Having said that, the sense that we are being given is that probably global investors would be interested in coming in with a full 100% ownership, maybe even singly. So keeping that in mind, I think there would be a bit of messaging on the part of the government also in terms of giving a boost to the entire insurance sector. Second aspect, of course, could be possible that the insurance amendment bill may also incorporate proposal of composite licensing for the insurance companies. Now, there has been a lot of discussion on this in the past as well. 2 odd years, the regulator also has played a very important role on this front. So that might also see some light of the day. Last but not the least, insurance agents or intermediaries, where the FDI cap already has been raised, but they are unable to sell multiple policies or multiple companies, probably that relaxation will also come in. Of course, we need to wait and watch and see what other delegated legislation could follow once the amendments have been cleared by the cabinet and the bill has been brought to the Parliament. But this is what the position is as of now.
Sapna, many thanks. And speaking at the CNBC-TV18 Global Leadership Summit just a few days ago, the IRDA chairman, Debashish Panda, had said that this is an opportune time to increase FDI in the insurance sector to 100%. Take a look.
This has become the opportune time for, having 100% FDI. So what will help potentially to the 100% is that it will play out in the sense now the players will come with 100% FDI. They can plan their business independently. They can decide on their growth plan. They can decide what kind of business they want to write.
Well, that's the IRDAI chief. And staying with insurance, what are the amendments to the Insurance Act that have been proposed and how will they impact industry? Yash is standing by to explain. Yash.
Well, Shireen, the Insurance Amendment Bill possibly would be one of the boldest moves in the recent history that has come about as far as the insurance sector is concerned. What it does is that it brings 5 important changes to the dynamics of how the insurers in the country operate today. The first one is with respect to composite insurance license. What composite insurance license does is that it allows cross-entry of insurance companies into each other's segments. What that means is life insurance companies, if an approval comes for composite insurance license, can sell health insurance policies, or they can also enter into other segments of general insurance industry, case in point, motor insurance. This plays on the other side as well. Health insurance companies and general insurance companies, are permitted then to sell life insurance, underwrite and sell life insurance policies as well. What this does is that it increases the competitive intensity with more players coming into each other's segment in India's insurance space. The second one is multiple distribution of various other financial products. Right now, of course, it's insurance intermediaries can only sell insurance products, but if the approval to insurance bill comes through, then they will be allowed to sell other financial products as well, like mutual funds, bank deposits, loans, credit cards, so on and so forth. What it does is that it opens new revenue streams for insurance companies itself. The third one is a reduction of the minimum capital required to start insurance business. Currently, any entity wanting to start insurance business in India has to bring a minimum capital of 100 crore for insurance and 200 crore for reinsurance. that is proposed to be reduced, and it won't be a fixed number. Essentially, the number of minimum capital will depend on the size of the business that the insurance company plans to bring as far as Indian jurisdiction is concerned. The fourth one is captive insurance license. Now, this is a very interesting concept, because if an approval for this comes through, then major conglomerates or business houses will be allowed to start their own insurance entity with their services or the insurance policies being limited to their own employees, making the space very, very interesting. The fifth and the final one is relaxation of investment regulations. Currently, insurance companies can only invest up to 15% into equity markets, about 60-65% in the government debt and balance on the private debt. But with this thing, the power will come in the hands of the regulator, that is IRDAI, in terms of giving approvals to insurance companies and increasing their equity investments or investments in any other segment. It's not just the industry which is waiting for the insurance amendment bill. The regulator has also been keenly watching this one and is awaiting a final approval on this one. This is what IRDAI chairperson told CNBC-TV18 in a very recent interaction which we had at the Global Leadership Summit.
I would expect the moment it comes, it is welcome. The earlier, the better. So that is something, will be known to all of us as and when it happens.
Well, lots happening in the insurance space. Moving on, food aggregator Zomato has launched an 8,500 crore rupee qualified institutional placement at a floor price of nearly 266 rupees a share. The indicative price has been set at 252 rupees a share, which represents a 10% discount to the stock's closing price today. A total of 3.8% equity or 33.65 crore shares are on offer. The exercise will change Zomato's shareholding pattern to give it more domestic investors. Remember, this is something that Zepto is attempting to do as well with its latest fundraise of $350 million from domestic investors. Now, the Delhi High Court has granted a stay order on a debarment notice issued by Solar Energy Corporation against Reliance Power. The SECI had issued a show-cause notice to Reliance Power and its subsidiary for allegedly issuing fake bank guarantees and had barred the company from participating in government tenders for 3 years. Automaker Hyundai India received a show-cause notice from the Maharashtra Tax Authority over allegations that it claimed excess input tax credit between FY20 and FY21. The tax notice worth 5 crore rupees also includes interest worth 2 crore rupees. The company said the notice will not have any impact on its operations in India. Well, big relief for telecom players. Sources say the Union Cabinet has approved the proposal to waive bank guarantees. We also learned that the waiver will apply for spectrum acquired before 2022. Shares of Vodafone Idea surging on the back of this development. Ashmit joins us now with the details. Ashmit, good news certainly coming in for the likes of Vodafone Idea.
Well, big relief coming in for all telecom players. Cabinet approving the decision to grant a waiver for all bank guarantee requirements. A big relief coming in for all telecom players, for Vodafone Idea to be specific. So what is this relief that has been granted? What does it translate into? Well, bear in mind that in 2021, the government had made a decision that for all subsequent auctions, there would be no requirement by telecom companies to furnish a bank guarantee. So whether that's 2022 spectrum auctions, 2024 spectrum auctions, no bank guarantees were required. Now, subsequently, a demand fell from the industry that if the government was open to the idea of waiving off of bank guarantees, why not waive it entirely, even for pre-2022 spectrum auctions? And that is something that, in fact, found traction with the DoT. The DoT had prepared a cabinet note, sent it, placed it before the cabinet, and late last evening, we understand, the cabinet has granted its approval for waiving off of bank guarantee requirements even for pre-2022 spectrum. Now, this comes as a huge relief, especially for players like Vodafone Idea, that were looking at bank guarantees north of 25,000 crore rupees, looking at liquidity issues. They're able to get relief on that. But just to clarify, this is not a company-specific measure. This relief that has been granted is across the sector for all players. Jio as well as Bharti Airtel also likely to benefit, but not as much as, of course, Vodafone Idea.
Ashwat, many thanks. We will head into a break, but up next, the suspense over the next Maharashtra Chief Minister continues. Eknath Shinde to continue as the caretaker Chief Minister till a new leader is sworn in.
From the chair, all I said, you know it more than anyone else. I'm hurt.
The Adani bribery case is affecting the entire country.
Nothing is going on at all.
Khadge ji. Sir,
as a very senior parliamentarian and a leader, you are aware that my ruling on this issue has been given. I would seek your earnest cooperation, particularly in the background that matters to you more than anyone else, that we are in the 75th year of adoption of our
Sir, 75th year है, उसमें मेरा भी हिस्सा 54 years है, तो मुझे कोई सिखाने की कहने की बात नहीं।
सही, एक बार आपको अनुरोध करूं।
मैं आपसे
एक सेकंड, no, please take your seat. No, in all humility, from the chair, all I said, you know it more than anyone else. I paid you the highest compliment.
Okay,
Still
sir.
you are taking exception.
Thank you very much. Thank you.
No, sir.
Thank you.
I'm hurt. This is hardly an approach. I have commended his contribution.
Thank you.
I have praised it, and the same.
Sir, ये बहुत ही important मसला
What I
है।
have to say, sir? Not on 267.
267.
No, that my ruling is over.
No, it's a very important, sir. देखिए,
No,
ये
you are questioning ruling of the chair.
Sir, if you suspend today's business, we can explain because the Adani
1 second, sir.
regarding this bribery case is affecting the entire
Nothing
country.
is going on record.
And
nothing is going on record.
No, entire
Nothing
country.
is going on record. Nothing is going on record.
Consistently,
Nothing is
Modi ji is supporting him.
Nothing is going on record. Nothing is going on record. No, sir.
Modi ji supporting him. And दुनिया में
List of matters raised with permission. Srimati J.B. Mather Isam.
SR Group co-founder Shashikant Ruia passed away at 81. Ruia co-founded the group in 1969 and grew it into a global conglomerate. He had been suffering from prolonged illness and passed away in Mumbai. The Reserve Bank Governor Shaktikanta Das was admitted to Apollo Hospitals in Chennai this morning. In a statement, the Reserve Bank has clarified that Governor Das was doing fine and has now been discharged. The statement added that there was no cause for concern. Aviom India Housing Finance has warned its creditors that payments could be delayed. In a letter to creditors that was accessed by CNBC-TV18, the company said that this was due to an ongoing audit following the discovery of fraudulent transactions. Ritu is here with more details. Ritu, take us through what's been uncovered.
Well, Shireen, Aviom India Housing Finance has informed its creditors of an ongoing National Housing Bank audit which follows fraudulent transactions that have come to light from a recent inspection, and that could lead to a delay in repayment to its lenders. Now, we've accessed this letter that Aviom sent to its creditors where it reveals that NHB's inspection found signs of financial irregularities. Specifically, some mutual fund account statements seems to have been tampered with, and the company admitted that this could lead to a restatement of its financial data for the past 3 financial years. Now, the company has already filed a criminal complaint with the Economic Offences Wing as on the 19th of November, and its board has also initiated an internal investigation with independent advisors. Now, Aviom's short-term liquidity is also under pressure with about 35 crores in what it calls sticky receivables and delayed capital raising efforts, which has stalled discussions with any potential investors. But the company is exploring options like equity infusion, debt realignment, and structured finance solutions to navigate this particular issue. Now, keep in mind, Aviom has assets under management of about 1750 crores as of FY24, which isn't too large from a systemic point of view. Domestic lenders include the likes of HDFC Bank, SBI, LIC Housing, and so on. And the total exposure to these domestic lenders is only about 130 crores. But with the fraud coming to light, the larger concerns really are around whether this is going to lead to a further risk aversion from banks when it comes to lending to NBFCs. NBFCs, and the company also has outstanding NCDs of about 200 crores, and that impact on retail investors down the line also remains to be seen.
All right, Ritu, many thanks for joining us. The big national story, it's been more than 72 hours since the BJP Shiv Sena NCP alliance registered a landslide victory in the Maharashtra Assembly elections. However, the suspense over the next Chief Minister continues. Today, Chief Minister Eknath Shinde submitted his resignation to the governor. As per protocol, the term of the current Maharashtra Assembly ends today. Shinde will function as the caretaker CM till the next leader is sworn in. Sources tell us Eknath Shinde's Shiv Sena is unwilling to cede the CM's post to the BJP, despite the latter winning more than twice the number of seats. The BJP seat tally and a nearly 90% strike rate is its best ever performance in Maharashtra. Both camps are holding their cards close to their chest, insisting that a decision be taken unitedly.
तीन पार्टी की सरकार है, महायुति की सरकार है, 14 करोड़ जनता के लिए सरकार आने वाली है। भाई जब महायुति की सरकार बनती है तो उसको थोड़ा टाइम लगता है। एक पार्टी की सरकार थोड़ी है कि आज क्या बना लेंगे। भाई थोड़ा समय जा रहा है, लेकिन जनता के हित में, महाराष्ट्र के हित में है। महाराष्ट्र को आगे लेके जाने के लिए है। हमारा केंद्रीय नेतृत्व और महाराष्ट्र के तीनों नेता बैठेंगे और मुझे लगता है योग्य निर्णय होगा। ऐसा निर्णय होगा कि महाराष्ट्र की जनता के लिए, विकास के लिए डबल इंजन सरकार जो चलेगी वो देश के हित, महाराष्ट्र के हित में काम करेगी।
सीएम साहब ने जो रिजाइन दिया है वो सीएम पद का तो है और पूरा मंत्रिमंडल का है। इसके बाद हमारे जो तीन लीडर है, एकनाथ शिंदे साहब है, देवेंद्र जी है, अजीत दादा है, वो पीएम साहब के साथ और अमित शाह साहब के साथ बात करके उनके मार्गदर्शन के नीचे हम सरकार बनाएंगे। हमारी महायुति कॉन्क्रीट है, मजबूत है, उसमें कोई दिक्कत नहीं है।
Well, who will be Maharashtra's next Chief Minister? That question remains unanswered for now. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Do stay tuned. We're back in a moment with more.